And the Supreme Court, in its official statement, said that the responses were noted from the consultee judges at the Apex Court. Now, Chief Justice of the relevant High Court and Justice Verma himself, the Collegium will review these responses before passing any resolution. Okay, and with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. As of now, the Nifty implied open indicating a 99-point uptick from previous when we started the show, 114-point uptick. So a bit of a decline on that front. Still, a gap up start is what we're watching out for. But up next, you have Bazaar Morning Call, so don't go anywhere.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi, and Nigel is back from his holiday. Guys, good morning.
Hi, morning. Good to have Nigel back, fresh from the mountains, and we've got the market primed up for your return.
Well, that's right. I had a great vacation. I was away in the mountains, and the joys, the simple joys of life, right? fresh air, clean water, sourcing your wood for the evening. I'm feeling refreshed, and I think you guys should try it as well. In rural India, I mean, there's so much to look at. I lived in a small village in Uttarakhand for all of 7 days. Market action was great. I'll tell you what, I had a really good time.
All right. Well, it's the mountains always refreshing.
Yeah,
absolutely refreshing. Well, I'll just quickly run you through what you need to know as we begin this new week, because the last week was a fantastic one, the market started on a sort of very strong note and then kept building on it. And it's unlike what we've seen for many months now. So let me start there with just a quick sampling of what we saw. We basically were up 5 days in a row. Well, you'll say, well, so what? 5 days in a row? Well, it was the first in 7 months that we've had 5 days up. This is, of course, the market topped out in late September. And after that, it's essentially been extremely tough trading days. Last week, we got a bit of a relief. Actually, not a bit of a relief, a fair bit of relief. So gains kept broadening. That's the other point. Small caps and mid caps joined in. It looked like large caps only, but then mid and small caps rallied hard. Just to put the numbers up in terms of what we've done now from the lows of the 3rd of March, they're up on your screen. The Nifty is up about 6%. The Nifty Bank is up about 6%. Mid-cap index is up 10.5%, and the small-cap index is up 13%. So these are massive moves coming through in terms of what we've seen. Now, let's just sort of come back to the local markets with levels, etc. in a bit. But let's recap the global setup as well. So for global markets, while we were having this, rocket of a time, it was quiet. And last week, macro-wise, also not very much. It's not as if the dollar, all the moves in the dollar yields, etc., happened till the end of the week before last. Last week was not very big in terms of moves at all. Nasdaq on Friday specifically, 0.5% higher. Dollar index has been creeping up 3 days in a row now. We are back above the 104 mark. Now, of course, as we look ahead, it's essentially, the countdown to the tariffs day, which is the 2nd of April, reciprocal tariffs day. Remember, 1st of April is when Trump's team is going to present to him the review of America First policy, and the 2nd of April is when the reciprocal tariffs are to be announced. There is enormous amount of uncertainty around what is coming, right? And this is in various ways, whether they're going to go everything on the table, whether they're going to do a phase-in, which is they start small and then maybe the impact is dented, which countries, etc., etc. Recent comments have been suggestive of the fact that the Trump team is saying that tariffs will be more blunt than they will be precise. Trump has again and again said, I think over the weekend also, he put out a post saying 2nd of April is going to be US Liberation Day. So, he's kind of obviously building it up. But there are also headlines over the weekend. And this is with regards to, I think Bloomberg carried a story, quoting sources, of course, that tariffs may be more targeted than previously expected. Actually, the story goes on to say that there may be some exemptions as well. I think the Wall Street Journal also picked up that story. We just don't know so far till the last Friday, the message being that it's going to be broad-based, going to be big. Now they're saying over the weekend, at least news reports, source-based news reports are saying perhaps maybe more targeted. And there is a huge amount of uncertainty. Remember, the market's done extremely well here, and now you're running into this big event. Will we see some pause? Will we see, the market wait and see, and then let's decide? It's possible. And I think that would be wise as well. The next upside level, in any case, as I've been saying for at least 2 weeks now, the market's headed higher. The next level on the upside is 23,500. 23,600 is a 38% retracement of the entire fall that we've had from the highs to the low. But between where we left off and 23,600, 23,497 is the immediate resistance. The February high then comes up, which is 23,807, which is also going to be an important resistance. So 23,500, 23,600, and then 23,807. Support stands at the 40-hourly exponential moving average, which has also been pulled higher. That number stands at 22,960. And the Nifty Bank is basically back at the February highs. The resistance here is 51,085 and 51,883, which is the 50% and 61.8% retracement of the fall. And support here also is at the 40-hourly exponential, which is 49,555. So, I would say the way to kind of tackle from here to then, to post 2nd of April, is going to be maybe right before the 2nd of April or maybe even before that. By the way, I think the uptick that we're seeing is also correlated with the S&P, and that is because of the weekend Bloomberg story. The S&P mini futures are up 0.5% after that weekend story hit, that the tariffs may be more targeted. But as I said, we just don't know. And maybe closer to the 2nd of April, you may get a bit of a wobble. People may hold back. Very, very natural for that to happen. And if there are large numbers which are put on the table, the market takes a dip, which then perhaps may be a bit of a buying opportunity. But it's all up in the air. The market's done very well. And I think we'll have to just see what comes our way in terms of tariffs, etc. 100 points higher on the GIFT Nifty. We'll see if those gains hold. Guys.
Absolutely. And the GIFT Nifty this morning is also higher because US futures are substantially higher. There's a 0.5% upwards bid already on all the futures, S&P 500, Dow and the NASDAQ. And some of this has to do with a statement that Mr. Trump made on Friday. Then there was analysis over it over the weekend. He basically said that there can be some flexibility, but basically it's reciprocal. So his usage of the word flexibility got people a little excited in terms of whether there will be back and forth, there will be negotiation, where sort of April 2 is maybe not end of the world kind of a day. They've anyway said they start with one particular tariff number assigned to every country, and maybe then there's some scope for negotiation and quote-unquote flexibility. Anyway, as markets await that, Asia is very flat this morning, absolutely no major directional moves anywhere, whether you're looking at Japanese equities, China, Hong Kong, it's all extremely flat. Let's get some of those markets up on the screen. So not much happening. By the way, Mr. Trump also said that at some point he will be interacting with the Chinese leader this week, Mr. Xi Jinping. We don't have timelines to that, but he said that he will be talking to Xi Jinping this week. So that's also something that the market's going to watch out for. Ahead of that, equities are very, very quiet. The currency market saw more of a move, given the fact that the dollar has managed to inch back to 104. That led to a bit of a downside pressure finally on the euro. Some profit taking given the huge surge. Remember, last week the euro was above 1.09 as well. So from there, it's cooled off a little bit. The yen's also seeing a bit of a recovery move. Brent is the only concern for the Indian market in terms of the global cues, because by the time the US actions shut on Friday, the figure was 72 on the screen once again. It's come off a little bit right now, and that's because there's some chatter about how OPEC Plus will rein in overproduction, and also the fact that these additional sanctions that have come in on Iran that the US has announced, they could take about 1 million barrels off the market. So that's that's the reason behind that upward move on Brent prices. Now let's come to the fund flow picture. Look at the bazooka buying in cash on Friday. Nigel's going to talk about the F&O space in just a bit. That's 7,400 crores of net buying. Remember the days we were being slammed with 8,000 crores of selling? Well, these things turn, and it seems that they have, at least for now, 7,470. Domestic institutions were actually on the sell side, about 3,200 crores. The comeback last week has been fierce, ferocious and strong, and the bulls will see if they can build above that. Small cap index 8.5%, mid cap index 7.7%. Nifty Bank up over 5%, and the Nifty itself up over 4% last week. So can we get to more? A lot of the average, the daily moving averages, 20 and 50, they were already taken out last week. The 100-day comes into play right now, which is at 23,521. So it's looking very, very good. Let's see if the bulls can build on it. Very quickly, some stocks and news. Motilal Oswal Financial Services, the promoter entities, Mr. Motilal Oswal himself, Mr. Ramdev Agarwal and the foundation, they'll be selling a small quantity in the market, but they've clarified that this is for philanthropic purposes. There's UCO Bank, which has launched a 2,000 crore QIP. And watch out for Apollo Hospitals, that a slightly complex deal that was happening with Kaimed, the promoter entity, where they've merged with 24/7 with Apollo Health Co. Now, Apollo Hospitals, the listed entity, is buying 11.2% stake. So let's just go over the details and we'll see. That will definitely keep the stock in focus as well. But Nigel, we got the bulls fighting again, the animal spirits fired up, waiting to welcome you back.
Well, that's right. There are two big cues that I'm going to be tracking from here on. So the first cue is going to be the FI numbers. That's going to be important. In Friday's trading session, as you all said, there was a big bazooka buy number, but that was skewed because of the FTSE rebalance, that we saw. So that's going to be one factor. The FIs, well, they seem to have reduced their selling. You don't want to see a return of the big net sell number, and hopefully that turns into buying. So that's going to be point number one. Point number two is going to be Liberation Day. That's on April 2nd. And then we get clarity with regard to tariffs, counter tariffs, and reciprocal tariffs as well. So these are going to be the top cues in the near future itself. Now, the power of short covering, that was on display on all of last week. And that's why, I've been making this point non-stop that a net short market actually is a blessing in disguise. And just take a look at the way it's moved. If you look at the short positioning, this is the FI net short positioning. It has halved. in the last 1 week or so. And coinciding with that, you have a 1,000-point rally on the Nifty. Beautiful looking graph, right? So you have a 1,000-point rally on the Nifty, while the FI net short positions have halved. All of this in a matter of a week. And that's the reason that you say that a net short market actually could be a blessing in disguise. That's the way it's played out. Well, let's move on to a couple of other cues then. Just take a look at the FI positioning, both on index futures. Well, the swing factor here is close to around 80,000 contracts in a single week. Because they've added longs, they've covered shorts, close to around 80 to around 90,000 contracts. Even on stock futures, if you look at it, there's close to around 2 lakh contracts swing out here. Because they've added long positions, they've asked us net long on stock futures, but they've covered some shorts and they're built on to the longs as well. Which brings us to what's the positioning on index futures? Well, I recall that the net short positions were around 85%, 85%. That's come down to around 68%. So the bulk of that short covering, majority of it, just in the near term, seems to have played out. And that's what the FI positioning is at. But look at the clients. They are the ones that have got it right. And in this bounce, they've gradually been reducing their long positioning. They were at around 1.3 lakh contracts on the long side. That number has come down to around 51,000 contracts, which makes you wonder, with so much of uncertainty just in the near term, maybe booking some profit at the higher levels may not be such a bad thing, going by what the clients are doing. That's the important option data. Well, the 23,000 put added close to 37 lakh shares. The premium's close to around 30 rupees or thereabouts. You just punch in that number and you'll get the near-term support. So both the Nifty and the Nifty Bank, all eyes are going to be on the 200 DMA now. Can they get to that mark? These are the important mark. That's where the 200 DMA comes in at. This is the important support for the Nifty going by the options data. And that's where the 50 DMA as well comes in at. And if you're looking at the Nifty Bank, we have seen these, it's revisited these lows in the last couple of trading sessions. So this becomes the important support zone. 200 DMA on the upside. And these are the levels that you want to look on the downside as well. Stocks that I'm looking at, well, I'm looking at IFB Industries. This is the stock that has halved from the recent peak. In October, it was close to around 2,300 rupees. It's come down drastically. Now, what's happened is it's conquered the 20 DMA. The 50 DMA is a little distance away. But in the last week, there were 2 sessions where you have massive delivery-based buying with close to 80 to 90% of the total traded volume was delivered. So I'll keep an eye out on this one, IFB Industries. Is it good for more? After seeing a halving of the share price on the top, we'll keep an eye out on this. Good delivery-based buying and some technical levels getting taken out as well.
Okay, all right. So let's straight away believe that the extent, timing and scale of reciprocal tariffs will determine the outlook for Asian stocks. He says they have been cautious on Asia ex-Japan equities in general, but they continue to believe that they appear attractive for investors willing to look past near-term uncertainties, given recent underperformance, modest valuations and light foreign investor positioning, with a scenario of softer US dollar likely to bring some relief for Asian central banks to be able to embark on rate cuts to support local economies. He says a significant drawdown in Asian stocks on such tariff announcements might turn out to be the point of peak pessimism, where risk-reward becomes decisively more favorable for Asian equity investors to use those drawdowns as an opportunity to build longer-term positions. Buy the dip seems to be Nomura's view.
All right, Matt Orton is now with us, Chief Market Strategist at Raymond James Investment. Matt, good to have you with us here. Good morning. What do you think? Is it, or do we just don't know? As someone put it well last week, whatever comes on the 2nd of April, for India specifically, the hit is not direct because we're not a big trading partner with the US, one way or the other. The hit is indirect, which is not less painful or anything because of global growth. But let's just start with at the beginning. I mean, what is your sense? Is it going to be a big one? Is it going to be phased in?
Hey, good morning, Prashant. Always great to join. And I think we might still have a surprise on April 2nd. I've been telling clients while my long-term thesis with respect to growth and overall markets still remains fairly optimistic, I'm cautioning against leaning into the rallies that we're seeing globally, particularly if we see more of a relief rally in the US, simply because there's a lot that we still don't know. There's been so many starts and stops with respect to tariffs, it's really hard to believe a lot of the headlines that we're hearing from the administration. And I actually think that rather than reciprocal tariffs, which are very painstaking and difficult to put into place and are going to require more time, I think April 2nd is really going to be more about penalizing tariff villains or perceived tariff villains around the rest of the world. So I think India might be in store for perhaps some tariffs that get put in place. But to your point, I don't think it greatly will impact the Indian market. And so for me, what's a really important cue to look for is, can Indian markets continue to push higher in light of some tariff volatility? Whenever markets that are rebounding, if you can rebound through bad news, that to me is a very good confirmation that a bull market is starting to form again. So that's what I'm going to be paying attention to on April 2nd.
Okay, fair point, Matt. And we've seen some signs of that, right? Even when the US market was faltering, India managed to hold on pretty okay in the last 2 weeks or so. So, if you are willing to put some more money to work here in India, and let's say if there's no major disappointment on April 2, then what would you buy in this market?
Yeah, Surbhi, we've talked about a lot of the companies that I favor that I still really like. Higher quality investments that I've been leaning into, like ICICI Bank. I know this is one we talk about quite a lot, but it is, I think, one of the highest quality Indian assets. It's been able to see through some of the challenges with respect to loan growth. Its private banking business, I think, also provides a very good diversifier. So this is one, if you don't own, it's had a really big rally. So maybe look for a little bit of a pullback to add some exposure. But another bank that I have my eye on is HDFC. I've always liked their asset manager, but the bank itself, I think the market is a little bit too pessimistic on their ability to push through margin expansion. And again, I think the Indian consumer is in good shape, and especially with growth on the rebound, I think their ability to grow loans is underappreciated by the market. So I'd look into that. And another pullback I'd look for is Interglobe. This is a name I'm a little bit upset that I've missed. It's one that I've been looking at for a while, just given the operational efficiency of the management team, but their ability and their growth plans to hit 600 new aircraft by 2030, that's still well on target. Their ability to manage costs through large-scale orders, that is well in place. So that's another name that I view as high quality and leans into the idea that people are traveling more, the consumer is doing well, and as growth rebounds in India, I think this is one to look at on pullbacks.
All right. Hi, Matt. Morning. Always good to hear your thoughts. So what's the view on global equities, though? The US markets have seen some profit taking from the top. The European market has done very, very well. So in terms of developed markets, what do you like? And from the emerging market basket, you have liked, I think, LATAM, select parts of LATAM. China has done quite well as well. And India has underperformed. So when does India feature in the emerging market pecking order? Developed markets and emerging market. Go ahead, Matt.
Yeah, so I'll start first with developed markets, Nigel, because I think what I'm looking for is perhaps a little bit of a rebalance. Europe, I think, has outperformed significantly, and rightfully so, given that things have gone from really, really bad to perhaps looking better. And I think the fiscal stimulus you're seeing out of Germany has been necessary for so long, but it's not the only thing that matters. Europe still needs a weaker dollar. Europe still needs to find a way to better coordinate financing and giving money to businesses to actually form. So right now, I like global banks. I think leaning into banks in Europe and around the rest of the world makes sense. I think looking for pullbacks in European defense companies, that makes sense. And Japan, honestly, has been forgotten in the developed market perspective, but Japanese markets actually have the strongest earnings acceleration. And that to me is very, very important looking forward. So Japan, I think, looks very interesting from a global market perspective. On the emerging market side, India is finally bouncing. Like I said before, if we get confirmation and this rally continues past April 2nd, I think we're going to see a lot stronger gains going forward. So it's definitely one to keep on your radar. Latin America has done well. I think there's been some reforms put in place. I want to see again how April 2nd plays out, especially for markets like Brazil that do trade quite a bit with China, what that impact could be. But what I like about Latin America is that they do produce a lot of food. And in light of tariffs, their demand across the rest of the world, if there are tariffs or difficulties trading U.S. agriculture, they're going to benefit the most. So that's another region that I think can continue to perform well, especially commodities and agriculture, as they'll be the supplier to the rest of the world, maybe if the U.S. loses a little bit in the short term with respect to tariffs. But markets overall, I think, are in a good place. Don't chase, wait to be opportunistic, and hopefully in a few weeks we're going to see stability and maybe a little bit less volatility, which should help sentiment rebound.
All right, Matt, thank you very much. Always a good conversation. and appreciate your time here on CNBC TV 18. Well, let's quickly run you through what's lined up here over the next 2.5 hours or so. So 8:35, we get you an exclusive chat with Ramesh Damani on markets and macro trends as he's seeing them. 9 o'clock, we will have Sumit Kumar of JM Financial Institutional Securities to discuss key trends in the real estate space. 9:20, Manishi Ray Chaudhary of Emmer Capital Partners. He's a market master. 9:30 in the morning, KEI Industries will be with us to discuss the impact of the Ultratech Cement and Adani Group's foray into the cable and wires space. Stocks last week did suffer once again. We have the management of BSE chatting to us from location at 9:40. There is a fair bit happening. It's almost cat and mouse between BSE and NSE with regards to expiry days. 9:50, some more market conversation. We'll play out more sound bites from Mr. Damani coming up. And towards the end of the program, we'll have Lata join us on It's the Economy in conversation with Sanjay Agarwal of AU Small Finance Bank. So lots lined up.
Well, time for a quick break, but we have a lot of stock-specific action to track today in our special Top 10 segment. For the time being, I'll run you through the list. We're looking at GSPL, GAIL, DLF, Godrej Properties, Hindustan Copper, Kotak Mahindra Bank, Power Mech Projects, Alembic Pharma, and EPAC Durable. All of them will be reacting to positive news flow, while UCO Bank will be the lone one that will be reacting to negative news flow. Take that mandatory break, come back. We'll get into further detail on all of these names.
Yolsuzluk operasyonu üzerinden milletimizi provoke etmeye kalkıştılar. 4 gündür milletin huzurunu kaçırma, insanlarımızı kutuplaştırma adına ne varsa hepsini yapıyorlar. Önlerine gelene hakaret etmekten, sadece görevini yapan polislerimize saldırmaya, yolsuzluk ihbarlarını araştıran yargı mensuplarımıza gözdağı vermekten, sokak terörüyle milli iradeyi baskı altına almaya kadar ne ararsan bunlarda her şey var.
Wait.
Welcome back. Let's pull up the implied open again. It's slightly better than actually most of the regional markets around us, and that's because maybe it's latching on to the positivity from Wall Street futures, which are all up and about. The hope is that the 2nd April event is not going to be as catastrophic as the markets had originally thought. So therefore, there's some green that we're seeing. Let's see if it turns out to be indeed as good. But there are lots of interesting stocks worth keeping on your radar. So let's get to our team for the CNBC TV 18 list of top stocks to watch this Monday morning. Guys, morning to all of you. So Darshan, I'll start off with you. Is there some fresh development on, oil and gas tariffs or pipelines? But why are you watching out for these stocks?
So natural gas regulator, that is PNGRB, has put out a draft on its website, and this draft is of the certain changes that industry has requested. And on that, PNGRB has sought comments by April 11. Now on that, some of the brokerages have written note. First one is Citi. it says that major changes are fuel costs and that price of contractual LNG can now be claimed. And for this, GAIL can be the biggest beneficiary. Second change is less stringent volume assumptions once volumes cross 75% of the threshold. If it is done, then this can benefit GSPL. CLSA says regulations could lower operational expenditure for IGL and MGL. Also, it can GAIL and GSPL, if certain changes that have been requested by industry committee, if it's approved, that can benefit, and tariffs for GSPL and GAIL can increase. Also, there might be an increase in cost of gas users, including industrial customers of Gujarat Gas. So overall, if the changes are approved, it can be positive for GAIL, GSPL, MGL and IGL, and can be a bit minor negative for Gujarat Gas.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's hop across to Vinny. She's here to tell us about DLF. Morning, Vinny.
Good morning. So we're keeping an eye out on DLF because on Friday they had some analysts meet and met some of these analysts. Now, some positive commentary that has come in from the company. They expect these new sales booking are also expected to continue to remain healthy on these steady lines. And overall, in the next 5 years, they're planning to launch around 1,14,500 crore of new launches that is planned. Of this is the target that they've given previously, right? So of this, as of now, 35% has already been launched in this 9-month period of FY25 that we've seen. In FY26, 15% of this target also is what they're looking at will be launched in FY26. So interesting pipeline in terms of launch is what DLF has planned over the next few years. Now, other than that, even the annuity portfolio rentals are expected to cross 10,000 crores, which is twice the levels that we're watching out for as of now. So yes, in the next few years, doubling in terms of the annuity portfolio. They aim to achieve group net debt zero levels and positions by FY30, and this is something that they're focusing on in terms of payout ratio. 50% of the profit over a period of time is the target price. So that is why DLF, we are expecting a bit of a green here.
All right, Benny, let's stay with the real estate space and talk about Godrej Properties as well. Take it away.
So Godrej Properties, we're seeing that they've acquired a 10-acre land parcel. This is in Bangalore. So furthermore, expanding their position in Bangalore is what the company has been doing. This is around revenue potential 2,500 crore rupees. This will be focusing in terms of residential properties as well as some high street retail is what the company has highlighted as well. So a couple of things that will be happening here. Positive expected here as well.
Okay, all right. So buying a big chunk of land in Bengaluru. Got it, Vinny. Thank you very much. Let's bring in Hormaz. Hormaz, morning. You're watching out for Hindustan Copper and Kotak Mahindra Bank. What's happening?
Morning, Surbhi, and some change of guard taking place at both of these companies at the higher level. We'll start off with Hindustan Copper, where Sanjeev Kumar Singh, who is the Director of Mining, has assumed charge of the as Chairman and Managing Director of the company, and he has been appointed for until June of 30th of 2026 or until further orders. And Ghanshyam Sharma, who ceased to hold the additional charge of post of Chairman and MD, who was in the post until then, but he will continue as a Finance Director and CFO of the company as well. So Hindustan Copper should be on your radar, as well as Kotak Mahindra Bank, who has elevated Bhavnesh Lathia as the new Chief Technology Officer, and he's been the Chief of Customer Experience and Head of Technology in consumer banking since August of 2022 at the bank, and he has over 27 years of experience in global technology products and platform management among key services. So both change of guard coming in at Hindustan Copper and Kotak Mahindra Bank. Expect some green there as well.
Okay, all right, Hormaz, always on the ball. But Hormaz, final one on UCO Bank. What's the news flow there?
Welcome back to you, Nigel. But yeah, UCO Bank, in line with most of the PSU banks launching QIPs, we saw Indian Overseas Bank launching one. UCO Bank too, a 2,000 crore rupee QIP is where they have launched a floor price of 36.07, an issue price of 34.27, which is a 9% discount to Friday's close. And it is one of those few PSU banks where the government shareholding is in excess of 90%, 95.4 to be precise, as of the December quarter. And the stock already from its 52-week high is down almost 40%. So some supply coming in terms of the QIP. Expect some red tick there as well.
Okay, all right, Hormaz, got it. Thank you very much for that. Let's go to Vivek. He's watching out for a bunch of other names as well this morning. Vivek, morning to you.
Well, good morning. Quite a few stocks on the radar on the back of news flow. First on the list is Power Mech Projects. They received quite a large order almost 579 crore worth of order wins that the company has received from BHEL. This particular order pertains to construction of civil, structural as well as architectural works, and this particular order pertains to the 2 into 800 megawatt thermal power plant at Jharkhand. Remember, the order book at the end of Q3 FY25 stood at over 57,900 crores. Alembic Pharmaceuticals is the other stock on the radar. A positive conclusion as far as the US FDA inspection of the API 3 facility at Karakhadi is concerned. It was a scheduled good manufacturing practice inspection. Company completed the all of the inspections. Form 483 did not have any observations. So some positive news are coming from Alembic. EPAC Durables is the other stock on the radar. The company has gone ahead and received the approval for getting the disbursement of the second incentive under the PLI scheme for white goods. Now, the total quantum of this particular incentive that the company is expected to receive is 30 crore rupees. So again, some positive news are coming in for EPAC Durables as well.
Okay, all right. Thanks, Vivek, very much for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them this morning are JSPL, GAIL, DLF, Godrej Properties, Hindustan Copper, Kotak Mahindra Bank, Power Mech Projects, Alembic Pharma and EPAC Durables. The only stock that has some negative news flow around it is UCO Bank, and that's because of the impending fundraise. All right, let's now shift focus to commodities as well. We have Manisha Gupta joining in with a roundup of all the latest action. Manisha, good morning, good Monday morning to you. So while we await all the details on tariffs, over the next couple of days, what are you watching out for today?
Oh, well, yes. So some profit taking finally coming in, and that is because the dollar index is now trading at a 2-week high. That has led to some decline coming into the market. In any case, you had COMEX holding at record highs when it comes to gold holdings. Copper almost hit a record highs in the previous week. So there is some bit of a decline coming in here. But as markets are looking at geopolitical tensions, tariff concerns, we are also looking at Iran sanctions coming up. OPEC also looking to increase production going forward is what really seems to be putting crude oil prices under slight pressure. When it comes to metal prices, as I said, copper did hit an all-time high in the previous week. So this is one metal that continues to outperform, up 28% in this year until now. But we have seen, while the base metal prices are trading up, the ferrous metals have seen a bit of a profit taking coming in. You have steel, iron ore prices in China trading at a 2-month lows right now. So even as the Chinese government has talked about cutting production, but when you look at the housing investment, that has been lower to multi-month lows. Markets also are still awaiting for stimulus measures coming in from China. Until that comes, you could be looking at further pressure coming in for ferrous metals.
All right. Thank you very much, Manisha, for that. So it's metals and commodities in focus. Well, we'll take a quick commercial break here. We're going to come back, Prakash Devan, on stocks and what to watch out for as we start this Monday morning.
the third time now the Miss World beauty pageant will be held in India, as the city of Hyderabad is gearing up to host what is literally the world's most popular beauty contest. Miss World 2025, the 72nd edition of...
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. For starters, the GIFT Nifty is suggesting that the implied opening will be higher by close to around 80 to around 90 points or thereabouts. So that's going to be good. 100 points for a century to kickstart trade. Prakash Diwan, our market expert, joins us on the show. Hi, Prakash. Well, the market seemed to have got its mojo back, and we didn't mention this earlier, but today marks 5 years of those COVID lows when we visited around 7,500. And boy, oh boy, today we are at 23,000 odd. So the market itself has moved up by close to around 3x. We have stocks that are in fact at up 1,000, 2,000, 5,000, 11,000% as well in these last 5 years. So it's been a big rally. But let's talk about the recent past. We have seen that stocks have done quite well. Any one particular stock that you believe that still has potential from here on? The last time around you spoke about Welspun Corp. You'd spoken about Nalco as well. Both of them have bounced off their recent lows. What's on your radar this time around?
Good morning, Nigel. Great to see you back. So I think, the market's kind of very clearly ripening for some sort of value discovery through a sector rotation framework. And if you look at the recent moves, some of the stocks like Interglobe Aviation, which I spoke about while you were away, it's something that's been so resilient even in this entire downfall. And thanks to the softness in crude, thanks to the improvement in pricing power, load factors, whatever have you, it's kind of bounced back and made new highs. What's going to happen is this is going to continue to other names in the sector, other subsectors within that. So let's say hotels. I think if you ask me one stock that I see as very well poised in terms of fundamentals and the technical demand supply, it's ITC Hotels. It's absolutely a no-brainer because given the asset base, given the kind of revenue build-up that you've seen after, which you potentially will see after it kind of starts reporting its standalone numbers. It's made an amazing move in the recent past, but I think there's much more to come. The ownership levels are far lower than what a large hotel business, the second largest hotel business in India would need. So, once ETF money starts coming back, well, as and when it happens, I'm not sure whether it happens 3 months down the line, 6 months down the line, but these are stocks that you need to kind of build on your portfolio. And yeah, you spoke about metals. I think metals is a phenomenal rally in the making. Even ferrous, not just non-ferrous, so the likes of Vedanta, Hindalco, Nalco, even Hindustan Copper for that matter. I mean, it's in the news for some change in leadership, but I think globally the setup seems to be the same. But everybody's waiting for this 2nd April, this thing to go, overhang to go. Once there is clarity, I think things will start looking up on the metal side.
Okay, all right. Morning. Good to have you, Prakash, with us. A lot of these construction companies, not just construction EPC, but even other companies, order wins have been coming in. Kalpataru, this morning we're looking at names like NCC, Power Mech, etc. So basically everybody is getting orders, whether you're in road EPC or transmission, etc. What are you most optimistic on? This is also your end of year phenomena, obviously, or people have to finish their spends, adjust their books. But what would you buy, if anything?
Good morning, Surbi. So, you're right. While March end kind of typically seems to be a phase where, a lot of these bundling up happens to meet the deadlines. But remember, the government's spend, as articulated in the budget in Feb, is something which will start coming into effect 1st April onwards. And this is one sector that would probably seem very resilient from a sector perspective. You may not have tariff impacts impacting it so much. You may not have issues related to capital costs given the softening of interest rates. My sense is EPC names, and especially a lot of turnkey EPC, is something which will start making some money for investors. You'll be surprised, while L&T is the poster child of this sector, you have NCC, which is the 2nd largest order book currently available. And the beauty is that they've started diversifying beyond the Telangana, Andhra belt. It's much more wider, much more complex in terms of the orders that they're taking. So, and a great balance sheet to boot. So it's very well poised to take on most of the good companies, most of the larger EPC players are. But as a sector, it doesn't give you that kind of thing, because the moment something goes wrong in terms of capital expenditure, either from the private sector or the government side, or there's some sort of a slowdown or a blip, these companies get impacted the first. So you'll have to be a bit careful selecting that. But I think from the current situation, if I look at NCC, definitely, not just because it's in the news today, but even as I said, it has the second largest order book, fairly juicy orders, good margin profiles. If you aggregate all of that, it definitely does make for a little bit of a presence in the portfolio. But of course, you'll have to see the risk reward that it comes with being an EPC play.
Okay, all right, Prakash, stay with us. Surbhi, I wanted to ask you, you had a chat over the weekend, I think, so on, with one of the best voices to hear on the market, Mr. Ramesh Damani as well. Tell us more about that chat, and I can't wait to listen to snippets of it, but give us your brief, takeaways.
Well, this is part of Market Cafe, so we thought, we'll start the second season of the series, and who better than Mr. Damani,
Absolutely.
who kind of was gracious enough to give us some time. And usually these are longer-term conversations about bigger cycles, and we sat down to try and understand the impact of Trump 2.0 longer term on markets, whether anything is changing for us as investors. But if you have him, then you have to ask about current markets as well. Sneak in some questions, right? So Mr. Damani is actually fairly optimistic. And he said in this conversation that the bull run has actually resumed. And unlike a lot of us, when we are constantly looking at these FPI flows on a day in, day out basis, he says he's not very worried about them at all. He doesn't, pay too much attention to FPI flows. Here's why.
What happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time. And that has profound changes in the world, because whether we like it or not, America is the most important, most significant player in the world today, whether politically or economically. But the fact that they were turning inward meant the world would be a very different place. So while I keep hoping that the past is prologue, that what happened in the 40 years that gave us so much prosperity and peace and, a good standard of living will continue, I feel that the world is about to change. And I think as investors, we have to be the first to notice that.
So it's not so much about left, right, or center. It's not so much about your, political stance. It's more about whether you are inward or outward looking, from what you're saying, whether you're integrated. And that's under cloud. I mean, the whole globalization era and that boom, that itself is under a bit of a question mark in this new world that we're in, right?
The good news is, the bad news is that, yes, it's under a cloud right now. It's under a very serious cloud. That's why I told you the axis was changed. The good news that is my personal belief and my personal call that these are irreversible changes, that you could delay globalization by another 3 years or 4 years. I doubt if it's even that long. You can delay a world where, the strong prey on the poor, which is what is happening now with the spheres of influence, as Donald Trump is calling it, that Russia controls Europe, we control North America and South America, and China controls Asia. So all that is being questioned as we speak right now. But I think it will delay globalization, it will delay the international system. It cannot deny it, because the human arc works towards progress. And it's very hard for me to believe that we will go back to a mercantilist policy, a tariff-based policy, as Trump is advocating. Either he will change, or democracy and the people's aspirations will force him to change. So while we are going through a very difficult period right now for the global economy, I don't think it's going to be the lasting change in the world. The lasting change is towards free markets, prosperity, trading.
Is US exceptionalism, for the time being at least, is it ending? Do you see the US market topping out?
I think Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. See, this is what he's trying to do if you try to sort out all the madness and see what the Colonel is trying to do. He believes that American manufacturing has been hollowed out. America imports almost all its critical stuff other than technology from China, from Vietnam, from Philippines, from India, from other countries in the world. So this is what they've done. They first reduced the tax rates in America. They made the corporate tax rate 15% or so. They're job-owning the Fed to cut the interest rates. And they're building tariffs so that domestic industry can do well. So they want to bring back manufacturing and manufacturing jobs. That is the constituency that elected Donald Trump to America. Now, unfortunately,
it may not even be most cost effective, which is the debate raging right now.
It is absolutely not. And that's the whole point I'm making, that when economics meet reality, economics is going to win. It's just, it's like when the Titanic hit the iceberg won. So economic reality is economic reality. You can't make jobs in America or pay people in terms of inflation when the same product will be available for 30-40% cheaper if you import it. It goes back to what Adam Smith said about specialization in the world. I think America, for all the leadership and intellectual leadership it's shown to the world, is losing that moral supremacy that it had in the world as the one superpower in the world, the one defender of democracy.
That's sort of getting me to the next question. So if you're saying that for the time being, maybe there are some speed breaks on the whole American equity story. What we've seen in the past, well, the last many, many years, that every time they say, America, sneezes, the world catches a cold. So if that were to play out, and let's say the American economy starts slowing down, American equity market starts faltering, in the past, we've seen everybody falls. Could it be different this time?
No, we will falter. I mean, there's no doubt about it that America is such a big, important economy that America squeezes the rest of the world, catching the cold. It's very true, particularly in emerging markets. But I personally feel that given that these are now considered permanent changes in the world. So you see what's happening in the world. China, India, Russia created their own trading bloc called BRICS. France has already made a declaration that it would now be the nuclear armament of Europe.
Yes.
So these are important changes in the world. So if America wants to go backward, the world will move on. The world will figure out different alliances, different prospects to take. And no doubt that they will move on. It is to America's detriment to realize that they were the centrifuge force in the world, and they are relinquishing the space.
Aside of India, just for a second, if I were to ask you, which is the other market that you would like? Maybe you will take exposure, maybe not, but a market where you see there's serious potential outside of India.
I mean, I haven't, to be honest, the only two markets that focus are India and America.
US,
the most important markets screen. But just going through the data, I would say Europe would already be starting a bull run, which is then I can't understand coming.
A European bull market.
Or European bull market when it's facing the moment of crisis. But you remember in 1991, India faced this moment of crisis. And the index was below 1,000 there.
Yeah.
Sometimes bull markets are born out of that.
Out of crisis. So that's Mr. Damani. Okay, that's a different part of the conversation than what we had originally intended to play out. But this is where he's really talking about how these are tectonic, seminal changes. And when asked which would be his favorite global market aside of India, he actually calls out Europe because what's happening there is something you simply cannot ignore. More coming on the Indian market from Mr. Damani in just a bit. And of course, this is the next season, season 2 of Market Cafe. You can catch that entire conversation as we get towards the end of the week. Well, for the time being, it's back to the here and now. Now, the market has bounced back from lows with the Nifty registering its best week since February 2021. Prashant is putting some context to these numbers. Great comeback, Prashant, for the market.
Absolutely. And, the market sniffs out changes. As they say, it's the collective, right? And the collective usually senses what is coming in, what has happened, and what is ahead as well, more often than not. So this is what we've done. And I think as we start this new week, ahead of this tariff deadline, etc., it's important to just look at where we've come so far. And what I've done is I've just looked at how much we've come off the lows. The low was made on the 3rd or the 4th of March, if you look at, depending on what you look at. But more importantly, I've also looked at where we are from the top. So the Nifty is bound 6. It's about 11% away from the high. Nifty Bank is bound 6, about 7% away. Mid-cap index is bounced 10.5, 15% away, 13% bounce for the small cap, 18% away from the highs. This next graphic kind of just looking at history, and this came to us from Nuvama. And, just kind of sometimes looking at history gives you a sense of that, well, this has happened before. It's not unusual. It does happen with, it's a frequent thing. And in this case, it's a 2-year cycle. So look at this. 2016, Brexit, 23% fall for the Nifty, ILNFS, 15% fall, COVID, Russia, Ukraine, tariffs. The last one, of course, which is this one, from the high to the low, the Nifty lost about 16%. We've regained about 6% of this fall. Let's move on, look at sectors, similar kind of numbers, how much we've bounced, how much we're away. This is, of course, sorted from sectors which have bounced the most. Metals comes right on top as the dollar index has sold off. 16% bounce from the lows, 10.5% from the highs. The CPSE index, which was the first to start to sell off aggressively, it's bounced 15%, but still 20.5% from the highs. Oil and gas, again, a lot of PSU here. And of course, there's Reliance as well, 12.5 bounce to 23% away. Real estate, again, big casualty, 10% bounce, 25% away. Stocks have really taken it hard. And then you got the PSU Bank, the Pharma Index, 10 off the lows and 10 off the highs. And look at these three sectors. Autos, not very much at all, right? 9% bounce, but 21% away. That's a large space. FMCG started falling, of course, much before. It didn't really perform with the rest of the market in a meaningful way. Just a 6% bounce, 20% away, and the IT index is still pretty much at the lows that we've seen. Just look at stocks if you can quickly move along. And these are the NSE 500 stocks, the group that I've used. The low is as of the close of the 3rd of March, and I found 40 stocks which have bounced over 20% from the 3rd of March close. Just a sampling, right? A lot of the defense names, basically a lot of manufacturing, industrial, capital good names. Kirloskar, NLC, Welspun, JSW Infra, KEC International. Capital markets, another theme. 20% plus bounces, K-Fintech, Novama, CAMS. There is, of course, DOMS, Amber and Spark, which come up as well as bounces that we've seen. Stuff which remains beaten down. But to put this in context, these are not names which started falling when the market started falling. They've been falling for some time. But Devyani, Sapphire, all consumer names, Metro, Vedant Fashions, Campus Activewear are names which still remain pretty much at lows. Small bounces, MapMyIndia, a lot of the IT names, Infosys, LTI, Mindtree, Wipro. And of course, I just leave with these two last names, Indocent and KEI. KEI management joins us a little later today as well. But these are news related in terms of what we've seen come through over the last few weeks or so. I mean, that's the picture. A very smart bounce, but some numbers and some context to that bounce as we've seen so far. What we'll do is we'll take a quick commercial break here. We'll come back. Prakash, of course, is with us, but we'll also get our technical experts joining in with some here and now trading ideas. Stay tuned.
Be held in Hyderabad between May 7th and 31st, with an opening ceremony scheduled at the Gachibowli Indoor Stadium on the 10th, while the grand finale is all set to be held at Hyderabad's High-Tex Convention Center on the 31st of the month. Now remember, it's the reigning Miss World, that's Kristina Pliskova from the Czech Republic, who won the title in 2023, who will be crowning her successor in Hyderabad. It's not the first time that the event is being held in India. The maiden Miss World to be held in India happened back in 1996 in Bengaluru, while the 2023 edition, which is also the last edition of the Miss World pageant, was held in Mumbai just a year and a half ago. Nandini Gupta, who is the reigning Miss India World, will take on 139 competitors from across the world, or contestants rather, as she hopes to have a go at the Miss World title this year. However, the event is not without its own share of political controversy. The Bharat Rashtra Samiti, which remember is the principal opposition party in Telangana, had raised concerns with Hyderabad's conducting of the event, with BRS leader KTR or KT Rama Rao also saying that a wasteful expenditure of 200 crore rupees was being spent towards conducting the event in Hyderabad this year. In fact, KTR also made comparisons between this event and the 2023 Formula E racing event, which took place in Hyderabad under the BRS government, which also, remember, is under the lens of the Anti-Corruption Bureau in Telangana itself. However, no specific cost estimate has been attached to the Miss World pageant by the existing or the incumbent government of Telangana. However, it isn't the first time that the pageant has run into controversy. The maiden Miss World pageant to be held in India back in 1996 also saw multiple protests from conservative groups in Bengaluru and beyond, saying that the event would go against the traditional family values that India held dear. Subsequently, the swimsuit round.
Welcome back. Let's now get a quick technical perspective of the market, figure out some trading ideas as well. We've had a great pullback and rebound last week. Will it continue? Mitesh Thakkar and Sudarshan Sakhani are with us. Gentlemen, good morning and a happy Monday to all of you. It is a happy Monday, right? Because the indices between Nifty, Bank Nifty, Mid Cap, The pullback last week was between 4% to 8% on the small cap index. So lots of momentum. So let's find out how are you approaching it right now. Mitesh, I'll go with you first.
Good morning, sir. So, I have been talking about targets around 23, 550, 600 on the Nifty. And we might be very close to achieving them. In case we clear that, I think 23, 750 is the next level which I'm watching. Similarly, on the Bank Nifty, the first target of 50,500 was cleared on Friday, and 51,600, 700 next target areas. So both the indices, despite a very good rally and a very good week, still suggest that there are more upsides which are left. What can happen is that, yes, you can get an intraday decline or a profit booking kind of a pullback. But I would believe that the directional bias in the short term is on the upside. So all declines would be.
Fix your feed. I think that's a line that's freezing up. Allow us a minute. Let me ask Sudarshan that question as well. Sudarshan, so playing on the long side for this week, what are the levels also, both Nifty and Bank Nifty? How to do this?
Yeah, good morning. See, we have been on the long side when the markets crossed 22,000. It's been a dream run. I think most traders who have got this, the traders who have got this up, who have actually made money, which is, 1 year's money in 20 days. It was so good. There was never a pause. There was never a sense that this uptrend is going to sort of get an ending or do anything else. Nothing. That continues. Now the markets will pause at some time, will stop this up move, but it's not today. We don't have any message from the market that it's willing to stop. And this actually becomes, very terrifying for most traders who have put targets, who have said, okay, this market will go to 22,500, 22,700, and now they see it going 1,000 points higher. So if you are in this market, stay long. If you are not, buy every small dip intraday to go long. You can't think the market and say, okay, you can't go higher. We don't know. It could. So the trade is buy every dip.
Buy every dip is a trade. Okay, got it. Stay on, gentlemen. We'll come back in just a minute, take a quick break, come back with some of the trading ideas that one can work with today. Also, Sumit Kumar, real estate research analyst at JM Financial Institutional Securities, is going to be joining in to talk about trends in the real estate sector.
Edition was pushed out of India into the island of Seychelles in the Indian Ocean. But be that as it may, the 2025 edition is all set to see 140 of the world's most beautiful women descend in the city of Hyderabad, as the most stunning one among them all is all set to be crowned Miss World 2025.
Just going by the numbers of transactions which have been announced in India's insurance sector, it clearly has been the most eventful week in the life of Indian insurance sector. In the last 7 days itself, a total of 5 large deals have been either announced or they've been consummated. Let's go by the date. On March 13th, Baba Ramdev's Patanjali Ayurved, along with the Dharampal Satyapal or the DS Group, announced acquisition of about 98% stake in Magma General Insurance, valuing the company at 4,500 crore rupees. Adar Poonawalla will be selling nearly 75% stake in Magma General Insurance to Patanjali Ayurved. Also, Patanjali Ayurved will have about 74% stake in the company. They will pay about 3,330 crore rupees, and the DS Group will own about 24.5% stake for about 1,100 crore rupees. The next announcement came on March 17th. Bajaj Finserv and its promoter companies announcing acquisition of 26% stake held by Allianz in both life and general insurance joint ventures. Bajaj Finserv and its promoter companies will be paying about 13,780 crore rupees for a 26% stake in Bajaj Allianz General, valuing the company at 53,000 crore rupees. The deal being done at about 4.9 times FY24 price to book value and 2.6 times FY24 price to GDPI. Also, Bajaj Finserv and its promoter companies will pay about 10,400 crore for a 26% stake in the life insurance entity, valuing that company at about 40,000 crore rupees. This deal being done at about 1.84 times price to embedded value on a
Welcome back. You're with us on Bazaar Open Exchange, and of course we're coming to you from the CNBC TV 18 Motilal Oswal studios. Let's quickly get to the stock ideas that you can work with this morning. We've got Mitesh and Sudarshan both with us. So let's quickly come to the stocks now. Mitesh?
Yeah. I have all buy calls in line with my market outlook. So a buy on Indus Towers with a stop at 341 for targets of 365. Coal India managed to clear important weekly averages, so that's the buy. Keep a stop at 398. Look for targets of 420. IEX is a buy with a stop at 170 for targets of 178. And IRFC is a buy with a stop at 127 for targets of 137.
Okay, all right. So those are individual kind of trading ideas which are coming through. Sudarshan, what about you?
Yeah, good morning. See, one of them is the same as Mitesh. I also have a buy on Indus Towers with a stop at 342, roughly the same stop. Ipca Labs is a buy with a stop under 1393. Tata Elxsi is a buying opportunity, the stop under 53.55. Another IT stock, Redrasoft, Vsoft, is a buy with a stop under 397. There is a theme that seems to be, the undercurrent is that after the large caps, the small and the mid caps are now slowly picking up. So it's a good idea to focus on them.
Okay, all right. Thanks very much for that. Those are trading ideas. We'll speak again. There's a minute to go as far as the pre-open is concerned, 9 o'clock. L&T is the next one that we're going to focus on. And Vivek is telling us why large bids apparently for a very large order. Vivek, tell us more.
Well, good morning. Well, this is what we are picking up from reports, and these reports are from Middle East Infrastructure Journal. So, what the reports are indicating is that L&T has likely emerged as the winning bidder, and this is for a project. It's a very large project. Close to $4 to $4.5 billion of spend is what is expected for this particular project, and this project is from Qatar Energy. Remember, Qatar Energy is currently increasing its current LNG capacity from 70 metric tons per year to 126 metric tons per year, and this particular bid is for a project for expansion of North Field as well as the South Expansion project. Now, we understand that L&T has gone ahead and emerged as the winning bid, and the total size of this bid, even if you take the lower end of the range, is close to $4 billion, slightly northwards of 30,000 crore, one of the largest order wins that L&T could witness. Now, a couple of things that we need to keep in mind. Number one, what was the winning bid of L&T, and what is the size of that particular bid? Also, what will be the scope of work as far as L&T is concerned, and whether they get the complete order package. In certain cases, we do see that the packages are split into multiple components. Remember, we reached out to L&T. L&T did not offer us any comments at this point of time, but we understand that this particular order win, given that it has come in before FY25, likely to be booked within FY25 itself. So in the next, till March 31st, you could hear some development coming in from L&T as far as this particular bid is concerned. At the end of Q3, the order book of L&T was 5.46 lakh crore, almost 20% year-on-year growth, and the company had given an order inflow guidance of close to 10%. Company very well poised to go ahead and significantly beat the order inflow guidance that they had given at the start of the year. Watch out for L&T. This is a significant development.
All right, Vivek, thank you very much for that. So L&T should be in focus, but let's ask Prakash as well. Prakash, you heard Vivek outline the news around this one. What do you think?
Prashant, irrespective of this news, I think L&T stands to be one of the best beneficiaries of globalization on the infrastructure side. The other thing I just want to add, because we don't have much time, the difference between the L&T of the past and the current and the future L&T is that they can cherry pick orders or contracts where they make very juicy margins, which was never the case in the last decade. So you'll have a very different margin profile emerging out of this 5.5 lakh crore odd book. And that's the beauty, because they're spoiled for choice given their expertise and salience. So definitely something which in the near to or the long term would benefit tremendously in terms of outperforming the broader markets.
Prakash, if you can have those graphics, and by the way, I think you were on closing when I put those numbers up, the bounce, etc. One particular, if you can pull the capital market plate up, K-Fintech and the other ones which have bounced nicely, Novama, etc. Any thoughts on this space? We have the BSE management come up a little later at about 9:40. Will be interesting. That's another one. That's another name where we've seen a fair bit of re-rating, a fair bit of sell-off from the top as well, and now a bit of a bounce. What do you think, Prakash? What's your favorite idea, rather?
Yeah, no, so from that universe, if you look at the broking houses are going to find it extremely difficult to continue growing, and the base effect will start going against them at some point in time. Right? But it's businesses like KFintech, CAMS, which continue to kind of, grow as AUMs grow, as new dematerialization comes into picture, and there's a lot of work on the back end. But I like KFintech given its propensity to diversify beyond the domestic market. They've made some very good inroads. The new plan that they have, the program that they've launched for Southeast Asian funds is something which could kind of pave the way for a very different revenue stream. So a bit, soft at this point in time. All of them, whether it's broking, whether it's the depositories or the, brokerages, the exchanges itself. But till the NSE IPO happens, Prashant, this is going to be, there's not much of fireworks that you would expect. But I believe that's kind of, getting to be, people are getting excited as progressively steps are being taken towards that particular large event. But till then, I would probably only look at a KFintech.
Okay, all right, Prakash Devan, thank you very much for being with us. It's good to get some of that context and that perspective. We will chat again soon. We have with us Sumit Kumar, real estate research analyst at JM Financial Institutional Securities, joining in for a quick chat. Sumit, we'll come to some of the registration numbers out of Mumbai in just a bit and your overall views. But I want to start with DLF because on Friday they had this analyst call. I'm guessing you must have sort of also participated, or you would have gathered your inputs. Anything new that came out of it?
First of all, good morning to the team and good morning to all viewers on the show. I think no major surprises in the DLF analyst meet. They highlighted the recent performance and outlined the growth plans for both the businesses, the residential and the annuity piece. In the residential business, they intend to sort of maintain that same pre-sales rate close to around, say, 210 billion, which they'll be achieving in FY25. And in the annuity side, they expect to grow their rentals almost 2 times from their current exit run rate of 50 billion to around 100 billion. So these things were already known, no surprises. And I think over the next 3-4 years, there is a significant amount of cash inflow into the company, which is basically 5,000 plus crores of rentals. You make almost 80-85% margins on that. And obviously, they've sold roughly close to 300 billion of inventory in the last 15 months, 4-5 quarters. So all of that, a large part of it is already sold. They just need to execute and collect, and hence, the cash flow position, the balance sheet looks extremely robust and healthy. And we do have a sort of constructive view on the name.
Okay, so constructive on DLF. Got that. There's been some chatter about whether the fact that the equity market cooled off, and now it's revived again, so these things turn very quickly, but there was some chatter that this cool off in equities, whether that will put a bit of a dampener on premium housing, especially in very hot markets like NCR or Mumbai. Did you pick up any evidence of that at all in the last 1 or 2 quarters?
So yeah, there is a wealth effect to to real estate where people sort of go towards physicalization of their savings and wealth. That is a trend, but at least in the last 3-4 quarters, or in fact in Q4, what we've seen is there is no let up in demand. I would say the hyperactivity, the speculative activity, euphoria has died down a bit, and that has been because of price growth has moderated. In my view, volume of take or absorption at all good launches, major launches by grade A listed developers have seen a good response. There have been a number of launches in Gurugram itself in the last quarter. in Sector 31, in Sector 54. There has been one launch in Sector 44 in Noida as well. What we have seen is that during the EOI process, the subscriptions were like 2 times, 3 times in FY24, last part of FY24. These EOIs were getting subscribed massively. That subscription levels have come down to reasonable levels. It's now like a 1.25, 1.5 times. And the developers end up selling 75, 80% of the sales of the inventory that is open up for sale. So there are no sellouts right now. Price growth has moderated a bit, and that's actually good for the sector, if you ask me, because we don't want to get into a uncomfortable territory where prices are rising rapidly and sharply, but because that brings in speculative activity, and also, the end users actually take a backseat because of that. So I think it's looking healthy. Volume offtake remains robust. Pricing growth has moderated from, say, 11% in FY23 and 16%.
Sorry, if I can just Sumit, hi, if I can just come in.
Reasonable levels.
Yeah. Sorry, if I can just come in. What are your top sort of published top 2-3 ideas?
So definitely in the residential segment, we would like to back, the people with a track record and a brand name. We like DLF and Macrotech in this space.
Okay.
And on the office side, we would prefer Embassy Office Parks as, our top pick there.
All right, Sumit, we'll chat again. Thank you very much. Short on time, just running into market open, 6 minutes away. Let's quickly get you the 9-10 calls as well. Sudarshan and Mitesh are back with us. Sudarshan, what do you have?
Well, consider buying Tata Elxsi. Tata Elxsi is a buy with a stop under 53.55.
Mitesh, what about you?
I'll go with the buying on IRXC for targets of 137.
Okay, all right. So those are trades which are coming through from both Mitesh and Sudarshan. IRFC up on your screen as well. HCL Tech, let's just put the spotlight on a few names now. HCL Tech is one. Rima is here to tell us more. Rima, morning.
Hi, good morning. So CLSA today has upgraded HCL Tech to an outperform from a hold rating. Their target price stands at 1,811, which is a 16% upside from current level. Now, CLSA says that HCL Tech has been one of the fastest growing IT companies in FY24 and FY25. And in all likelihood, the company is likely to have a podium finish in terms of revenue growth, even in FY26. So it's still going to be the fastest growing IT company next year. They also said that the company has managed to close the valuation gap with TCS despite having lower profitability. Remember, HCL Tech operates at lower margins versus TCS, and that's because the company has been focusing on increasing the the FCF free cash flow yield. The dividend payout has also gone up. CLSA, though, is assigning a 10% discount to HCL Tech vis-a-vis TCS. They've lowered the valuation multiple, given the correction that we've seen in the stock price. But there is an upgrade, and the target price at 1,811 is a 16% upside from current levels. Back to you.
All right. Thank you very much, Rima, for that. So we'll see how much higher HCL Tech gets. There's an upgrade, as Rima points out. City gas distribution companies are the next set we want to put the spotlight on. Sudarshan is here with reasons. So, morning.
Morning, Prashant. So it's for all the city gas companies as well as other gas companies, because PNGRB has put out a draft of certain changes that it's been planning in natural gas tariff regulations, and PNGRB has sought comment by April 11. On that, some of the brokerages have written notes. First one is City. It says major changes are: first, fuel cost, price of contractual LNG can now be claimed, and because of this, GAIL can be the biggest beneficiary. Second, less stringent volume assumptions once total volumes cross 75% of the threshold, which can benefit GSPL. CLSA says regulations could lower operational expenditure for city gas companies like IGL and MGL. Also, GSPL and GAIL, after the changes can be implemented, tariffs for GSPL and GAIL can increase and can be positive for these two companies. Also, there might be a hike in cost of gas users, including industrial customers of Gujarat Gas, so that can be minor negative for Gujarat Gas.
I got that. I think Mitesh is still with us. Mitesh, out of these names, I mean, HCL Tech, the city gas companies, MGL, IGL, etc., anything comes up?
Prashant, HCL Tech is oversold but yet to give a reversal. In fact, that's the case with the entire IT pack. Though I suspect with the markets picking up so strongly, some kind of short covering and bounce back is due there as well. But for the time being, there are other stocks which interest me compared to the IT pack. So in the short term, I might avoid them. And on the City Gas Distribution pack, IGL, it's already started a move from 175 to now at about 197, 200 zones. 205 is a pivot, but I think once it crosses that, you might even see 220 over here. That's quite positive. And MGL is also, just on the breakout above its weekly averages. So if it can sustain above these levels of 1400, I would look at even a target of around 1480 to about 1490 on the upside.
Okay, all right. The other one is just if you could briefly look at it. See, Chennai Petro, which had a very nice bounce last week. 30%, I mean, actually from the lows, it's up 30%. That's Chennai Petro. Mitesh?
CPCL, I think, it's a stock. In fact, the entire refinery pack has done well in the last few weeks, and CPCL has also done equally well. Sustaining or getting past 600 was a good event in the short to medium term charts, and I think, now I'm looking at slightly position target of around 750.
Welspun Corp, if you can pull it up into pre-open where it is left off. Again, it's one of those relative outperformers. It didn't correct at all like the rest of the market, and it's now come up very nicely. And Friday evening, we broke the story that the Welspun promoters are looking to get out of the warehousing business, and that's a large business, and bids have been received. So about 0.50 points. Friday, of course, the stock saw a large move. 884 or so is where Welspun Corp is at. I think we're just a few seconds away. Mitesh, thank you very much for joining us, and we'll come back to you with more questions a little later. But let's just look at the Nifty Bank, and where we left off. 165 higher on the Nifty. Oh boy, I mean, this is a strong start once again. The Nifty Bank is up 400 points. So very, very quickly, I mean, you're past the first resistance level, which is, the 22,500 of 23,500 odd levels, and yeah, I mean, okay, not quite there, 23,490. So, but yeah, 23,500 almost there on the board. At least the pre-open showed us that. That's the first resistance, and then of course you start looking at retracements. The first one at 23,600. The 38% retracement to the entire fall. But you're right at the first resistance this morning. 0.5% higher on the Nifty. The Nifty Bank is up 0.5%. So super solid, and a continuation of what we saw last week. Mid-cap index is up about 0.8%. The Nifty heat map coming up on your screens will give you a sense of how we're starting. It's mostly in the green. You've got 41 names higher and about 9 stocks which are lower to begin the day. Surbi.
Absolutely. What a solid start this is. The market now taking the next aim at the 100-day moving average, which comes in around 23,520 thereabouts. So let's see if we get to those levels. Right now, L&T, NTPC, Power Grid, Coal India. So lots of so-called old economy facing names doing really well this morning. Reliance is adding good support for the market. All the financials and banks are looking good. Kotak Mahindra Bank is up and about. There's Axis Bank that's flashing a fair bit of green as well, about 1% up. The SBI is up about 0.8%. ICICI Bank, 0.5%. HDFC Bank, 0.5%. And for a change, actually, IT is not playing spoil sport. There's some green on IT as well. Infosys just about 0.25%. TCS is about 0.5% higher. HCL Tech is 1.5% up. So banks and IT both contributing. Other large stocks like Reliance also contributing. So it's a solid looking screen. In fact, if I talk about the losers, so to speak, not too many names. There's Trent, there's Titan, some profit taking or some weakness in these names, but otherwise it's good. Mid-caps is where the action really is. Look at the list of mid-cap gainers. A lot of these oil and gas stocks like Sudarshan had alerted us right in the morning, because the PNGRB is looking at some consultations around some tariff regulations with respect to pipeline tariffs. So GAIL is one stock that's flying away, 5.5% higher. Even IGL is up and about. GSPL is up about 3.5%. So these could be beneficiaries, and they're looking very, very good. Other newsmakers include a Power Mech, which announced an order win, 6.5% up on that stock as well. So looking good there as well. So the mid-cap screen is alive and kicking. Lots of names, Phenolics Industries, Senco, lots of names on the upside. 1% higher now on the mid-cap index.
It's certainly a good-looking screen, and a continuation of what we've seen last week. So we'll just have to see the cash market buying has to sustain, buying has to come back and then stay, because I think it just in terms of pure covering, short covering on both index options and index futures. I mean that largely has played out. I mean actually, we put those numbers up last week. At the total quantity of shorts, both on options and index futures, have been cut in exactly half, or maybe a little more even. So that leg is played out, and now you've got to have cash buying, which needs to show up as well. And it has been showing up, at least I think 3 days in a row now. FIs have been net cash buyers. Just a few other names, right? I mean, and think even in stocks, I see a little bit of continuation. GAIL is up. The biggest volume-led gainer this morning is GAIL with a 5.5% gain, 185 on GAIL. And of course, IGL is a number 2 spot, 4.5% higher. There is a name like Balu Forge, which is coming up with a 5.5% pop. And the only reason we don't talk about it, not in the first hour anyway, but it's coming up because it's at number 3 position with regards to volumes. Almost 500,000 shares traded with just a few minutes in, couple of minutes in. RailTel is up 4%. K Fintech has been a big recovery. It was up on my plate with the biggest bounces. K Fintech is up another 5%. Power Mesh is up 6.5%, 23.10 or so. Olectra is up 3%, and all these have got decent volumes. Finolex Pipes is another one, 8% gain, coming off very, very depressed. It's not seen a big bounce at all, like some of the other names, but this morning it's up 8% on large volumes. So yeah, I mean, things are just about picking up. AstraZeneca is another one which is up about 6%. It's got almost 9,000 rupee name. EPAC Durables is up 5%, stocks at about 375. There is Midhani, which is up about 5%. Nibe India, which is a defense name. I think Nibe used to be sometime back SME name, is transited to main board, but 4.5% has seen a sharp
correction from 1,700 rupee levels to above 900, back above 900 now. So, yeah, I mean, there's a fair bit happening. On the downside, there is KEC, which is down 2.5%. It's got volumes as well. Mankind is up 2.5%. There is DAM Capital, which is down about 2%. But that's it. I mean, there are more names with cuts, but no volumes apart from what I've mentioned. So mostly all of the volume is on the upside. 10:1 is the advance to decline ratio coming in. Manishi Ray Chaudhary is with us, Chief Executive Officer at Emma Capital Partners. Manishi, good morning. Good to have you with us here. Thanks very much for your time. So, give us a strong view, Manishi. Bull market chalu or I'm just joking. But we've seen a nice bounce, right, Manishi? Yeah. And it's much needed air in the room. So people were gasping, and I think that's good. But what from here, in your opinion? As some have said, that this year is like it's going to be like W. I mean, sharp up, turns higher, sharp turns down, and so on, and so it'll go. Or do you think, as I think Ramesh Damani, and we'll play a soundbite of him a little later, believes that maybe the bull market has resumed? What we saw was a correction, and the bull market has resumed. I mean, now that statement, a bull market, the resumption of the bull market has got implications about how you'd want to think about what will do well, and what kind of positions you can take, etc., etc. Go on.
Absolutely. No, thank you very much for having me here. This is a very interesting juncture that we are in as far as the Indian market is concerned. It is good to see the Indian market performing. It has moved up almost, I think, about 7 to 8% from the recent trough. I think anecdotally, large part of this is because of short covering. There's a degree of fear of being left out, fear of missing out, as they call it. But at the same time, I would, in the near term, maybe in the month of April and early part of May, I would still be a bit cautious about declaring it as the resumption of the bull market for two simple reasons. Number one, we are yet to see the worst of the tariffs. As far as India is concerned, we are going to hit the reciprocal tariff hurdle on 2nd of April. there will be, rapid negotiations around that time or maybe just after to reach some kind of a trade deal. We don't know in what shape and form that would come through. So there's a lot of uncertainty surrounding that. Second, April till first half of May is the result declaration month. And in recent times, during result declaration months, Indian markets performance has not been good. Earnings estimates have always been revised down. And that's partly because almost all the company commentaries that we have seen, they always tend to postpone their timeline for a recovery. Almost all of them, be it in consumer discretionaries or consumer staples or in industrials, they almost always have kept on saying that, okay, the recovery is on the horizon, but it'll possibly take a couple of quarters from now. So that recovery timeline is getting postponed every time we hear them in any of the earnings conference calls. So, I would be a little cautious in the month of April and possibly, in the first half of May as well. But having said that, valuations have come down a bit, both large caps and mid and small caps, more so for the large caps. We have seen FII selling reach almost about 0.6 to 0.65% of the total market cap, which is close to the previous bottom. The previous bottom was even worse. It was about 0.8688%. But all these things put together tells me that we're possibly getting there in terms of a market bottom, but some of the fundamental concerns still remain, and which might impact the market a little bit more, over the next, next 1 to 2 months.
Manishi, hi, morning. So are these fundamental concerns that you're still sort of looking at, are they local in nature or global in nature? Because global, we don't know what happens April 2nd onwards. The local concerns, the growth concerns, do you think that they have pretty much resolved themselves?
The global concerns are there for everyone to see. As I pointed out, they are around these, the tariff war and what kind of negotiations we see after that. The local concerns were earlier all clustered around slowdown in government spending and therefore decline in urban consumption, urban job generation, and also earnings estimates declining. I think the government capex angle that is being sorted out, but the urban employment creation and therefore consumption sentiment recovery, that is yet to be sorted out. And as a consequence, we're still seeing, if you look at Nifty or Sensex or any of the India indices, the consensus EPS estimates are still coming down. I recently published something on this, that if you look at Asia, there are possibly about 100 country sector combinations. There are about 9 or 10 of them which are showing earnings inflections, which are earnings estimates are going up after a long period of decline. None of them are from India. There are 3 from Hong Kong, China. So Chinese industrials, Chinese consumer discretionaries, some of the battery companies like CATL, they're actually showing that trend, upward earnings inflections. Not yet anyone from India. And that is possibly the most important variable that I would look forward to when deciding whether, we're past the worst or not.
Okay, so you're not taking a very clear view whether this indeed is the bottom and if everything is up from here on. I get that point of caution. But in the interim, what's the call on the market in terms of just further cash deployment if people are trying to use this to build up portfolios because dips are that good opportunity? Then what are you most constructive on here in the market?
Our point of view about sector and stock selection hasn't changed much. We were positive on financials, particularly the frontline large cap banks, and our positive stance remains there. Earnings growth forecasts are in the range of early teens over there, but when you compare that to the valuations, which have come down drastically over the last couple of years, I think large cap frontline banks, they seem to be one of the best bets in India right now. I would also talk about consumer discretionaries, not consumer staples. I wouldn't touch the consumer staples right now because they're just too well penetrated and too saturated. Consumer discretionaries, on the other hand, are the foremost beneficiaries of this recent cash injection into the hands of the consumers, about 1 trillion of tax benefits that have gone in. I would definitely be looking at the entire chain of consumer discretionaries like auto components, some of the EMC, the electronic manufacturers, who are the back-end manufacturers for the OEMs. So I think those two would be front and center as far as sector selection is concerned. I would selectively look at industrials also. I think broadly defense spending across the world, I mean, we are seeing that in Europe, but it'll have to increase all over the world. So the defense sector, other industrial sectors geared to infrastructure, those would also do well, but one has to be careful about valuations and the stability of earnings growth in those sectors.
No, I think point well taken. Just a few names here, right, before we go any further. The biggest volume-led gainer now is RailTel. RailTel was not in the mix in the morning when we started. It's up 7%. It's got humongous volumes on it, 332 on RailTel, if you can pull that up. BEML is another one, which is up 6% on huge volumes. Again, I didn't spot it in the morning at least, which is 10 minutes back. Zentek is up 5% higher, 1,500 on Zentek. Again, large volumes. There is IGIL, which is the diamond certification company, 5% higher on IGIL. MTAR Tech from the defense space is up 8%. These are all new names which are coming up with decent-sized gains right now. Global Spirits is another one, which is up 6% on some volumes. And Senco is coming up with about a 5% pop. So it's changed. I mean, the constitution of what is up on large volumes, a lot of it is now kind of rotated and newer names are up there at this point. On the downside, Mahindra & Mahindra is the top volume-led loser. It's down 2% on outsized volumes for this point in the day. There is ITC Hotels, which has picked up some losses, 2.5% lower, 3% actually. Titan is down about 1.5%. A KEC, which was down, we mentioned this in the morning, is down 4.5%. And of course, I mean, then you've got Mankind, DAM Capital, Novama, etc. We mentioned some of these names early on. Manishi, we spoke about, actually, we are speaking with the management of KEI Industries in just a bit from now on the entry of some of the bigger industrial groups into the cables and wires space. The Dia Pack sold off earlier on news that Ultratech is making an entry, and now, of course, you've got the Adani Group coming in as well. Anything you'd like us to ask them?
Well, I mean, industry outlook, the industry used to be a benign oligopoly. There are like top 3 or 4 players who had very nice, cozy market share between them. But whenever a new player, largely a player with deep pockets, enters the market, there's a bit of a shakedown. And in particular for the market leaders of the present era, present generation. So I think a question about their target market shares, not right now, but maybe 5 or 10 years down the line, and the kind of niches that they would like to protect, those would be the most appropriate. And, one doesn't know what the strategy of the new entrants would be. But what would they like it to be, and what would be their counter strategy? That would possibly be an appropriate question.
Absolutely, Manishi, and that's exactly what we'll start with. How are the incumbents gearing up to take on the onslaught from 2 big, deep-pocketed, mighty giants that are entering the sector? We'll discuss this with KEI. Thank you very much for joining in, and let's actually straight away dive into this conversation on wires and cables. It's been all about this intensifying competitive intensity in the cables and wires space. It's now the Adani Group entering after Ultratech announced its foray. These are deep-pocketed entrants. They mean business. So what happens to the current leaders? Well, we have with us Mr. Anil Gupta, Chairman and Managing Director of KEI Industries, joining in. Mr. Gupta, thank you for being here with us. I know these are times where I think, many of the incumbent players would perhaps avoid questions, but so really glad that you could join in today, because this is a concern in the market, right? You've seen the share price, not just yours, you've seen your peers, Polycab, etc. Share prices are off 15-20% since these two new entrants announced their intention. I remember when we spoke with you after Ultratech's entry plans, you were, fairly brave-faced. You said that the scale-up doesn't happen overnight. It'll take time. Now we also have Adani's. Let's start with the market share question. Where are you right now? And realistically, what is the disruption you are gearing up for?
Yeah, good morning for inviting me again. I think I will repeat the same what I said 2 weeks back after Ultratech announced the entry. See, first of all, it will take, I think, at least 4 to 5 years for any new incumbent to build their production facilities and make entry in the markets. Secondly, it takes a bit of time to understand that business. We are already well established. We know the market. We know the business dynamics of this industry for over. I'm leading in this industry for last 45 years. So we know that I've seen at least 4 to 5 economic cycles in this business. So Indian market is growing significantly. And I think as the economy is going to become $7 to $8 trillion by 2030, by the time these players comes and establish themselves, I think market will be more than 2.5 to 3 times from here what it is there. So it will not be difficult for the market to absorb another 2 players. And, this industry is very different from cement or paint-like things where there is a strong consolidation. And,
Mr. Gupta?
Yes.
Sir, allow me to ask some counters as well. The timelines that you're talking about, aren't they very long? I mean, the plans that we've heard, for instance, Ultratech is talking about 1,800 crores over the next 2 years. It won't take them 4 years to bring their product to the market, right? And also, let's set the record straight on market share. I'm going by a broker note, FY24, this particular note, I think it's Morgan Stanley. They said KEI Industries is at 12% market share, Polycab is at 26%, and Havells is at 11%. As we end FY25, what's your market share?
I think we will be around 13%. And we are building up large capacities by putting up a 2,000 crore capex by completing by next financial year end. And I think that will scale up our capacity by around 60 to 70% from the current level. And I'm confident that with our penetration in Indian market and also our growth in overseas markets, we will be able to maintain our margins as well as the growth trajectory of guided 20% over next 4 to 5 years.
Timelines, just to complete that point, you said by FY30 they'll come up with full-scale capacities. But realistically, how long does it take? I mean, I'm sure it takes less than 4 years to set up a cable and wires plant and come to market. What's the real time to market?
If they start planning today, or start putting first brick today. It will take, today. It will take 3 years to build and complete the factory. Then it will take another 1 year for stabilization of the production and the stabilization of the manpower in the plant. So that is around 4 years. That is what I am saying. And then whatever time it takes to establish in the market or put a brand. Customers are not going to, run behind a company just because they are big players. And this is not a product like e-commerce or, a telecom where it is basically capex and then one can lose money on the raw material or commodity or on the operation cost.
Absolutely. And I think take your points on board, Mr. Gupta. Good morning, Prashant here. So at least 3 years from now, when some of this stuff will start to happen, and we'll see how it plays out. But you're not obviously waiting, right? I mean, you're an old player. You're of course also doing a lot of capacity expansion, low tension, high tension, EHV. Sanand is something we've spoken about in the past. Could you give us a sense of your own capacity expansion? What's the cumulative capacity which is coming on stream by when? And what's the asset turn we should expect on that?
See, present asset turn in our company is around 6 times. The new capacity which is coming up at Sanand, initially it is going to have an asset turn of 3, but gradually we will move it up from 3.5 to 4 over a period of 1 to 1.5 years after it is by 27-28. And we are talking of reaching a capacity level of approximately 17 to 18,000 crore rupees by within next 3 years, by FY27 or FY28. And we are also working on a lot of backward integration, and also will be coming up with another capex in next 2 years to scale it up to around 25,000 crore by FY30-31. So that is our plan, and I'm sure that with the kind of growth in the Indian economy, we'll be able to reach that sales level, and also our projection of taking 20 to 25% of our turnover in from the export markets, and there's enough room to for the 2 other players to come in.
Oh, I remember, Mr. Gupta. No, absolutely. I remember last time we spoke, you said the domestic demand is about 1 lakh crores, approximately 1 lakh crores, right? Say the incremental demand in the industry every year is another, 13, 14, 15,000 crores, if the industry is growing by that much. What you told us right now, capacity is basically going to come up in the next 2-3 years, roughly around the time 3 years when a lot of the other capacity will come up as well. Could you give us the total sort of demand, domestic demand by then? And what will, my question is, will the capacity utilization for the incremental sort of demand going to fall short? Will capacity utilization suffer because of all the new capacity which is coming up? Have you run those numbers, sir? Is it possible?
I don't think that, we will be, because we are very established in this business. So, and newcomer will always take time for getting utility approvals or customers' approvals when they enter the market. So I'm sure that we will be able to maintain our growth rate of 20%, projected growth rate of 20% over next 5 years.
Mr. Gupta, just one last question. These tariffs on the US side are going to come into force, right, from the 2nd of April. Any way to think about it for your industry? Any implication at all? I mean, this is largely a domestic-driven story, but any thoughts?
Our, market share in US is negligible. At the moment, I can say that we are doing around 300 to 400 crore a year, and by next year we expect to take it to around 800 crore. So, which is a negligible market share, and I don't think that there is going to be a big impact on our company due to even if hefty tariffs are levied. But I'm also not presuming that India will be enforced too much of tariff by Trump administration. So let us wait. I mean, we can't speculate on that.
All right.
Mr. Gupta, 20% CAGR growth top line over next 5 years. And what's the kind of bottom line growth or rough margins despite all this disruption next 5 years?
See, I will be very conservative. I will still like to maintain around 11% margins, because even if the disruption takes place, so we will be able to maintain this much of EBITDA margins.
Okay, Mr. Gupta, we'll leave it there. So thank you very much for joining us. And second time over, right, on the same topic, but different player who's announced an entry into the space. Thank you indeed. Well, I just want to quickly look at the market. The Nifty will come up. The intraday will tell you that we've come off a little bit from the day's high. But more importantly, we should put up the small cap index, the intraday. Their gains have been pared back significantly. So yeah, there you go. From the high point, I think very sharp fall. And the mid-cap index will come up on your screen as well. There as well, I think there is a pairing of gains which has happened on your screen now. But overall, things are looking pretty good, 0.5% higher. Time for a quick commercial break here. We're going to come back. The management of BSE, MD and CEO Sundaram Ramamurthy with us on the other side.
Welcome back. As promised, we have a very, very special guest with us. The big boss of BSE, Mr. Ramamurthy, is with us here on CNBC TV 18. Thanks a lot, Mr. Ramamurthy, for speaking to us here on CNBC TV 18. And first of all, before we get to business, congratulations to BSE, all the investors, traders, and every Indian as well, as will complete 150 years. It's been a long, long journey from under the banyan tree to Dalal Street. Give us your first take on that.
Namaskar for having me with you today. Yes, it's a very proud moment for the country, the stock exchange, and the investors of this country, and to all people who have contributed to the growth of this wonderful organization. From banyan tree to this place, what you were talking, if you look at it, from few people trading to a pit-based trading to today, a totally democratized access to markets and information is what BSE stands for, thanks to the regulatory developments in India and its journey along with it. At this moment, it is very important for us to stand for a moment and think of all the great contributions, all the great people who have been heading this organization in these 150 years have done for the growth of this company, the growth of the economic development of the market, and making India shine as one of the stars in the entire world.
Indeed, Mr. Ramamurthy, congratulations on that, and all the best for the next 50 years. May it be even stronger for all of you. Well, let's talk about business then. You know, the National Stock Exchange has gone ahead and they've tinkered with the expiry day, right? They have shifted it to Monday. The question is BSE thinking of changing your expiry day? That's going to be the big question. Have you had a look at it? And by when could we hear a response coming in from the BSE in terms of tinkering with the expiry day, or will you all stay status quo Tuesday?
As you may recall, I was working with NSE for a significantly long time.
Indeed.
Since inception of derivatives in various facets of market development, investor protection, investor awareness creation, surveillance, clearing and settlement. Thursday has been a hallmark expiry day for a significantly long time.
Right.
With introduction of multiple products, there were expiry days on all days, which left only BSE to choose Friday at that point of time to have an expiry day. The past has told us clubbing expiry days to a single day does not help in the product serving its utility for the market.
Okay.
The product, for example, Sensex expiry coincided with Thursday expiry for a very long time. And despite multiple efforts, Sensex did not take off.
Yeah.
And when we changed the product specification, the utility of the product was visible. When we made it very close to Thursday, because we had no other choice, while its utility was not coming out in full.
Yes.
The concentration of trading activity on the expiry day was far higher.
Yeah.
And today, when we shifted it to Tuesday, interspersing with time, the concentration on expiry day activity has almost halved, very clearly indicating the economic significance of a product could be well achieved particularly if it is a highly correlated product, by interspersing some amount of days in between, by properly spreading the contract so that people will use it for the desired purpose of hedging themselves against volatility for different periods of time across the week, across next week and across month. That is our thought process. So far as what is going to be BSE's stand is the market feedback that we received from people whom we approached and people who approached us. The point that underlines is that there should be a spread between two expiries. What it should be, how it should be are nuances. We need to see how the market spans out in respect of all this. Since we are having too many other realignments already happening, anything done in a hurry will not help in the product development and economic development. So at this point of time, we are assimilating all the announcements, changes, and we will come out with a stand, what will be useful for the product.
All right, two-part question, sir, on that. What's the probability of you changing the expiry day? Is it high, going by what you have got back in terms of a feedback? Point number one. Point number two is, by when will you respond to this? If there is a change, it appears that for April, there may not be a change. You can correct me if I'm wrong on that. By when do we hear a response from the BSE?
See, I would like to reiterate that BSE's expiry was next to NSE's expiry of Nifty and Bank Nifty for a significantly long time when it was relaunched, notwithstanding that Sensex was trying to find a feet. But only thing what it was not able to achieve is proper economic significance of itself. So whether in the revised situation when BSE Sensex is establishing itself as a clearly important product, what should be the action should be carefully thought about. It cannot be defined in terms of time horizon. It has to be talked about in terms of the entire realignment.
Indeed. But there's a probability you'll look at changing it.
No probability can be ever ruled out. Only ascribing a percentage high or low will be very difficult at this point.
All right, Mr. Ramamurthy, let's tell you then what the street believes. They believe that BSE, the rough market share is in the early 20s, around 22% or thereabouts. And they believe that, in fact, because NSE has gone ahead and tinkered with the expiry day, BSE could lose market share. Do you think that's the case?
So here, I need to clarify to you, as I have always been telling to media and press, BSE in derivatives will not run behind market share. Because we always believe BSE's market share is 100%. Because the product is unique, right?
But investors want to know, sir, because your market share has gone up and you'll have gained significant traction from the time you came at the helm, from the time you all tinkered with your expiry day as well. So the street's fear is you lose market share now. Respond to that.
So the point that I would make is BSE strives very hard to deepen and broaden market. When you deepen and broaden market, what you term as market share is actually a corollary. That is not the main goal. What do we mean by deepening and broadening of market? We want more investors who are eligible to trade in derivatives to trade. We have more FPIs to trade, who have long-term perspective on the Indian market. We have more brokers. We have a farther spread. That's what we will work upon. Whatever product change, whatever product development effort required to achieve this is what we will do. That will by itself result in whatever market share it has to result in. I would also reiterate, BSE's expiry was next to the expiry of two big contracts of this market when it gained its foothold and started growing. So it is very difficult to predict what the market would be in future based on one change. Does that close out any option? Certainly not. Does it create any jitter or fear? No. Because the goal is very clear. The goal is deepening and broadening market.
Okay. All right. Let's drift away then. Let's talk about the SEBI consultation paper that's come out. The fear is that the trading volumes will get curbed and in turn, it could impact your turnover, the average traded quantity as well. Could you tell us what are the key takeaways that you have seen in this consultation paper and also any kind of recommendations, any thoughts on this SEBI consultation paper?
Very good question. The SEBI's role, inter alia, has two important points. One is market development and the second is investor protection. If you look at all the activities of SEBI with regard to derivatives, with regard to anything till now, and particularly with regard to derivatives, what we have been seeing since October, has been to achieve this twin objective. The objective of no regulator will be to curtail the market and make its liquidity dry up. At the same time, along with development, it should also be worrying about investor protection. If you look at all the discussion that is happening, it's all happening in that way. The key takeaway for us is, this is the goal and this is the process. In the process, always there will be some outcome from the expert working group.
Yes.
But SEBI does not feel it is complete without taking the consultation from public. That is the very reason why the consultation paper gets published. Multiple people have given lot of feedback is what we are hearing. How to ensure that there is an open position limit, particularly I think in terms of index derivatives, which is very heavily talked about. How to have an open position limit at a client level, at the same time aid market development. Regulatory process in India is a very healthy and co-created process. Regulators have not ever acted in a silo without consulting market views. So I am sure this time as well, while expert group has come out with a consultation paper to seek and solicit views from the markets, and which has come out in a very big number to the regulators, all these factors will be considered, and the appropriate time, with the appropriate time, the right thing for the market to ensure the twin objective of market development and investor protection will be done by the regulator. That is our strong feeling.
Okay, all right. The market has gone a little bit soft in the last few months, and there's been a bit of a correction as well. There are also curves that could probably be in the offing. What is the fall you have seen in total turnover from BSE if you compare it with averages of the recent past? How much lower are volumes, in the last month or so in comparison to earlier?
In terms of cash market, well, the average daily traded volume has grown up for us. In terms of percentage, market share, it has not grown up significantly. It's hovering around 6.5 to 7%. In between, it touched up to 10% to 10.5%, but it is not growing. There are a host of reasons for it. Some of the major reforms which are in the offing are yet to take off for various reasons. One is common contract note, which has been a huge demand from the institutional players. For various reasons, it has been getting postponed from October to November, now to April 30th. We hope that it should come out. The second is, the next important participant in cash market is retail. For the retail to participate, the mobile apps are very important. Many a times today what you find is the mobile apps provided by the brokers do not afford level playing field. There has been quite a few SEBI interventions in this regard. We hope all of them will fructify. Any directive directly to from the regulators to the brokers will also help in this area. So that is the second thing which is work in progress. If these two happens, people who are liquidity providers will come into the market. We feel there is a huge potential for a complementary growth of BSE in cash market. There again a complementary growth where the pie itself can grow and BSE's market share can grow.
As of now, you're saying BSE's market share is around 6-7% or thereabouts in the cash market, and cash market volumes haven't really got impacted.
No, they have gone up slightly as average daily traded
and that
volume.
was something that you spoke about in the past as well. You said maybe the derivatives market volumes will fall, but you'll see a shift towards the cash market volumes. So you had briefly spoken about this in the past as well. In the derivatives market, what is the volume fall? And if you could tell us, what is your updated market share over there?
So overall, the notional turnover across the exchanges, I think has come down by around 40%, and premium has come down by 17%. While I would continue to reiterate my earlier stand, we don't run behind market share. Our market share is 100%. In terms of what numbers you ask, for your question purposes alone, the notional volumes have fallen down in BSE by around 17%, etc. No, the premium volumes have been stabilized as far as Sensex is concerned. There has not been any significant fall, but that I will call as a catch-up part and also a process of realignment. BankX is not seeing much volumes because it will take time for it to develop as a monthly product as against a weekly product.
Okay, all right. Very quickly, sir, there is that clearing cooperation dispute between the exchanges, and reports suggest there's been a nudge from SEBI to bury the hatchet and move on. Is there any such talks about that with regard to these reports, the clearing cooperation dispute that's currently in the works? And also just one more, since we're talking about NSE, there is this guarantee fund that they have, settlement guarantee fund. And since y'all are growing in terms of volumes as well, do you believe that you'll have to provide on that aspect as well, Clearing Corporation as well as SGF? Please go ahead, sir.
So as of today, BSE has no dues towards any clearing corporation whatsoever.
Right, but now volumes are going up. So will you make a provision in the time to come?
You're talking of SGF?
Yes.
I was replying the earlier question.
All right, okay.
So as of now, BSE does not have any dues to any clearing corporation.
Yes.
What I understand is NSE has some dues to be paid to ICCL.
Okay.
Indeed, the matter has been raised to the regulators by both the parties. I am sure as matured exchanges and clearing corporation, there will be a solution in the offing.
Okay.
With regard to SGF, there is always a problem with regard to SGF because the algorithm is very difficult to predict what could be the SGF requirement. What you could predict, you could provide for.
Yes.
If the algorithm is not conducive, if there is a past for you to sort of rely upon and see what could be the number, that also could be provided for. As you would recall, despite multiple effort by various people in the past, till the last 2 years, BSE has not been seeing any activity either in its exchange or in its clearing corporation. Things are changing a bit.
Okay.
So we need to study how the SGF behavior is with regard to ICCL.
Okay.
If we can find an algorithm whereby we can sort of forecast what could be our contribution, then it could be provided as an expenditure in P&L on a proactive basis, and then it could be substantiating SGF. But it is some time. It is some work in progress. It's not easy.
All right. The other one work in progress is the NSE IPO. Will it be competition or how do you view that? You have been part of the NSE in the past as well. That's been the big buzz.
I'm no longer part of NSE. This is a question well answered by NSE.
Okay. All right. Thanks a lot, Mr. Ramamurthy, for speaking to us here on CNBC TV 18. Congratulations on the 150 years. And thanks a lot for clearing out a lot of those doubts.
Namaskar.
Back to you all in the studio.
All right, Nigel, thanks for that. Very, very interesting conversation there with the BSE talking about overall drop in, of course, F&O volumes as the regulations have been tightened. Their market share now are about 6 to 7% in the cash market, that is, and they're hoping that that will continue to grow. And, of course, looking at more clarity on several regulatory issues. Just a quick word back on the street and look at the rise. I mean, it's a beautiful bounce. That's the BSE stock. Let's pull up the Nifty itself. Days high on the market, looking strong and steady. The market has now conquered the 100-day moving average as well. And once again, it's a wide move. It's across the length and breadth of the market. Most sectors are moving higher. Mid-caps are moving higher. Pull up the mid-cap index. It's up about 1% as well. Bank Nifty is leading from the front. It's up about 1.5%. That's the Bank Nifty move. So big green day once again. And the market's continuing to charge higher. Well, let's play out some more snippets from my conversation with market veteran Ramesh Damani as part of our series Market Cafe. I asked Ramesh about the here and now, whether the market has completed its correction and what the future course is. Ramesh says that the bull market run has resumed and what we saw was simply a small correction in an ongoing bull market. He also talks about why he's not too perturbed about the direction of FPI flows.
The good news would be is that, in my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market.
Okay.
What happened was the first correction in 4 or 5 years. It was particularly severe, and market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. Secondly, more importantly, in the last 60 to 90 days, I put I had the road, rubber meet the road, went and visited a lot of companies, just try to get feedback on what things are in corporate India out there. And almost universally where I went, people are talking about expansion, talking about growth, talking about margins, talking about profitability. So this was more of a market event than an economy event. There's very little leverage in the system. Banks are not leveraged. The stock market is not leveraged. So it was just a correction of valuation, which had probably become excessive, took place. And now we're, resuming the bull market that began in 2021.
Well, that's really good to hear because, yeah, absolutely. I mean, we couldn't really pinpoint an economic crisis or a financial accident which triggered this. It kind of, just happened on its own. On valuations, and that's why it's a little, important to understand both valuations and the power of flows. Domestic investors were pretty much buying throughout it, and yet the market fell because we were being hit by 8,000 crores, 10,000 crores of foreign selling on a daily basis, right? Now they've stopped selling. In fact, now first trickle of buying has come through. So while we can't predict flows, perhaps we can't underestimate the relevance also, right?
You can't. I appreciate that. And a lot of my friends pay a lot of attention to the FI number, which I really don't.
Okay.
Because anytime there's a transaction on the stock exchange, there's a buyer and a seller.
Sure.
So if the foreigner is selling, someone is buying at the other end. Stocks don't go in a zero hole on the ground. I mean, there's always a buyer at the other end of the stock. So things are being bought. Someone who thought it was expensive was selling it or booking profits. Some of the things value and he can make money, so he was buying it. So, that takes it. Of course, it's important. I'm not denying the importance of the FI number out there. But I don't particularly pay too much attention to it. It's just one of the things we look at out there. What we particularly pay attention to is on the ground, what's happening. Is the company, how is the company dealing with the Trump tariff? How is the company dealing with inflation? How is the company dealing with the changing technology environment? I think those are more relevant questions for an investor to ask in a bottom-up manner. And I think that's just noise that you can't control. If you're going to sell tomorrow, how do you control that?
Sure.
If oil spikes up, you can't control that. If Ukraine war ends or does not end, you can't control that. But you can control what you buy. And you want to buy those businesses that are, doing good, bulletproofing themselves. And which is what I've done, which is what's been very successful the last few years.
Fantastic. Take your point completely. There's always a buyer on the other side.
There always is. So, what does it matter?
The color of money doesn't matter. There's someone putting in the money.
Psychologically, it matters, but actually it doesn't matter. The shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on the Lal Street, as everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that, wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital, but they have a right to sell and I don't begrudge them that.
So absolutely, Ramesh. I mean, I completely agree with you. May this wave of domestic money, may it become a tsunami and may it continue for all our sakes. But my question was more sort of regarding valuations and whether so much of domestic money continuously coming in the market, whether that will sort of create its own valuation challenges.
Surbhi, the market has a self-correcting mechanism, which we just saw. I mean, the index fell, 10, 12% from the peak. So it has a self-correcting mechanism built in. When valuations get too high or too stretched, someone on the other side will say sell. And it cannot be absorbed by the market, which is exactly what happened. So why worry about it? Market has a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 50, 70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraints. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market. And market will correct itself. Anytime the valuations of something become excessive, people step in and sell, insiders sell, someone sells, and that creates a buying opportunity.
Okay, so there you hear Mr. Damani sounding optimistic on India as always and saying that this was just a small phase of a correction in an ongoing bull market. Market Cafe Season 2, more from that conversation coming up through the week. With that, let's take a very quick break. We'll come back on the other side and get you the latest on the commodity markets as well. Of course, the equities are roaring. Manisha will join us with the latest from the commodity side.
There was an unsanctioned car show at the park prior to the shooting. The call for the gunshot victims came in at approximately 10:10 p.m., again on 3/21 2025. The investigation so far reveals that there was an altercation between two groups of people, and that altercation escalated to gunfire between both groups. Several other people were also injured in the crossfire.
Welcome back. Equities are doing very, very well this morning. Like we were saying, 200-point rally on the Nifty. But let's find out what's happening with commodities. We have Manisha with the latest.
Well, thank you for that. I'm looking at copper as prices because we've seen very strong gains onto this one. If you look at the last couple of weeks, copper clearly is an outperformer, and it is an outperformer when you look at the overall base metal as a sector as well. I want to put forth on what we've done in various exchanges because that really tells the story. So when you look at the copper prices on LME, we've gained up by 12%, and we are like about $800 away from all-time highs. But when you look at the COMEX copper prices, we are up by 26% and at all-time highs. I mean, if you look at both of these markets, you can see that disparity that the global markets right now are working with in sense of copper there. Well, to begin with, the US is talking about putting tariffs on imports. This could happen as early as in the next quarter or by the end of this year. US imports nearly 45% of its copper requirements, not just in the conventional market, but copper is also now required for generation, AI, energy transition. So copper requirements going forward is going to be quite huge. So with the reviewing of happening on when this import tariff would be put, we've seen that premium build up in case of prices. So when you look at the US prices, we've hit a premium at a record high of $1,400 a ton. So if LME is trading at 10,000, you have copper at US trading at $11,400. I mean, that's the kind of disparity that there is into the markets. Also, when you look at the imports that are happening in case of US are at around record highs. Monthly, you have 70,000 tons of copper imports happening into US, but the last couple of months have seen 150,000, so more than double therein. And also, when you look at the US scrap exports that usually have been happening all of these years, those also seem to have dried up. So all copper, refined, not refined, scrap is staying in the US markets at this point in time. Now that brings you to the rest of the world, and especially China, which consumes nearly 50% of world's copper. Usually, when the copper prices used to run up, China would stop buying, and that would lead to correction into the markets. Now at these higher prices, even if China does not buy, you are looking at all of that copper actually going into the US markets. And then apart from that, Chinese demand is picking up because the manufacturing activity is picking up. You also are looking at more stimulus measures coming in. Also, the Shanghai copper is trading at the widest backwardation in more than a year. That tells you that the copper is more expensive right now and cheaper perhaps going forward after 16 to 18 months. So this is the time that everybody wants copper, and that's showing into the prices. interesting report from Mercuria, which says that the global demand will see a deficit of around 320,000 tons in year 2025. There is a similar report that we also have seen come in from Goldman Sachs, which sees a deficit of 180,000 tons in this year and 250,000 tons in the next year as well. And the last chart should tell you on where markets are anticipating copper prices from here on. So $10,900 of an all-time high is what we saw in copper prices in the previous year. You have ING expecting averages to be lower. Goldman Sachs believes new all-time highs coming in. Morgan Stanley is looking at an average of 9,500. Citi talks about 10,000 in the very near term. And Mercuria continues to be very, very bullish. $13,000 a ton is what they're expecting in case of copper for this year itself.
Okay. All right. Got that, Manisha. Thank you very much. So, copper in sharp focus today. Well, just once again, before we take our next break, let's just dive a little deeper into what's behind this extremely green-looking scream on the large cap space. The gainers. Banks are leading from the front, like I said. So, Kotak Mahindra Bank, Axis Bank doing very, very well. Even the larger peers. Let's pull up HDFC and ICICI. HDFC Bank itself is contributing a lot, 1.5% higher, as is ICICI Bank. Let's pull up the Nifty contribution chart because the banks are one part of it, but there are more legs to this rally. A lot of the other blue chip heavyweight stocks like Reliance, like L&T, they're all participating, which is why things are looking quite healthy. There we go. So you've got the banks. There's also Reliance, there's L&T. On the downside, there's some selling in Titan, which is very, very clear. Let's pull up the Titan chart. It was down 2.5%, almost, last I checked. And of course, M&M is also correcting a little bit. M&M is, along with a lot of other auto majors, has announced price hikes starting April, and that's Titan for you. Very quickly, let's go across to Mitesh for a final roundup of trades. Mitesh, what's the advice now?
So on the Nifty, we're getting close to the level of 23,550, 600, which is where, I suggested could be one target, though eventually we are even looking at 23,750 and 24,000. But I think a good idea would be to take some profits over here. Trail your stop loss is now to about 23,400. And if you get a 80, 90 point kind of a dip, you can re-enter on those longs, which are partly being booked. So I'm still positive. But looking at the magnitude of the rally in the last during the last week and this today Monday first session, I think we are now hitting an important supply pivot. So I think it would be wise to take some profits. Although I think the trading bias remains on the long side, and therefore I have buy calls. But on the index, we are taking some profits. For the timing on the stock side, PNB is a buy with a stop at 94 for targets of 99. And Policy Bazaar is the other one, which I like. That's a buy with a stop just below levels of 1630. So 1628, 1627 could be a stop. And look at a target of around 1755 to about 1760.
Okay, all right. Those are some of the trades. Mitesh, very quickly on banks, still, since that's emerging, banks and financials is emerging as this big trade. What is looking better? The leaders like HDFC, ICICI, would you look at tier 2 names or some other NBFCs? What's your best financial trade?
Well, I believe that, and disclaimer, I have some positions over there. I believe that in the near term, I think it's Kotak Bank which would lead the entire pack. See, Kotak is something, which for the last 3-4 years was sideways. And, we never saw a stock sustain beyond levels of 2050. Starting from way back, from about February of 22. And now we are beyond those levels. So I think Kotak Bank, while there is some target of, some historical pivot around 2170, 80 zones, I'm looking at a target of 2,400 to 2,500 in the next few weeks and months. So very, very positive over there. I think Kotak could do best. That about Axis, ICICI and HDFC Bank also look good to me. And you can add the State Bank of India.
Okay. All right. Got it, Mitesh. Thank you very much for the quick trades. We'll catch up with you later during the course of the day. Let's now focus on the oil and gas space. Remember, Sudarshan, before market opening, had alerted us that there is some discussion about maybe some change in, pipeline tariffs. And this could be beneficial for names like GAIL and GSPL. That's exactly what we've seen, actually. So these stocks have been doing very well today. Just remind us about the issue.
So most of the stocks from gas sector are higher, like GAIL, GSPL, even city gas companies. You can see IGL is up more than 3%, even MGL is currently higher. It's on the back of because PNGRB, which is the gas regulator, has put out the draft on its website proposing certain amendments or changes to natural gas tariff regulations. And because of that, you are seeing a big move in these stocks. Some of the brokerages also have written on the proposed changes. Citi says fuel cost, that is price of contractual LNG, can now be claimed if you go by the amendments that PNGRB has proposed, and that can benefit big time to GAIL. Second, there is less stringent volume assumptions once volume crosses 75% threshold. That can benefit companies like GSPL, and because of this you are seeing a big move. CLSA says regulations could lower operational expenditure for city gas companies like IGL and MGL, and both these stocks are higher, more than 3%. Also GSPL and GAIL, if these proposed amendments are implemented, tariffs for both these companies can increase for natural gas pipeline. And last is, there might be an increase in cost of gas users, including industrial customers of Gujarat Gas. Stock is higher, but this can be a minor negative for Gujarat Gas. So because of these proposed changes, obviously PNGRB has sought that if anyone wants to reply, they can reply by April 11. But for now, on the basis of these amendments, these stocks are trading higher.
Okay, all right, got it. Sudarshan, thanks very much for that. We will take a quick break on that note. On the other side, Lata speaks to the MD of AU Small Finance Bank, Sanjay Agarwal, as the bank clarifies on rumors of the CFO's resignation and also, of course, gives a growth outlook.
yolsuzluk operasyonu üzerinden milletimizi provoke etmeye kalkıştılar. 4 gündür milletin huzurunu kaçırma, insanlarımızı kutuplaştırma adına ne varsa hepsini yapıyorlar. Önlerine gelene hakaret etmekten, sadece görevini yapan polislerimize saldırmaya, yolsuzluk ihbarlarını araştıran yargı mensuplarımıza gözdağı vermekten, sokak terörüyle milli iradeyi baskı altına almaya kadar ne ararsan bunlarda her şey var.
Welcome back. The Nifty Bank is up for the 7th straight day. It is up 8.5% over these 7 days. But how is the health of the banking sector in terms of, the older issues like unsecured loans, MFIs, credit growth, margins? To get a ground check, I have with me one of the most successful small finance banks, AU Small Finance Bank. Joining me is Managing Director Sanjay Agarwal. Sanjay, good morning. Thank you very much indeed for joining us. Well, first, maybe we want to start with a clarification, something you all gave to the exchange. Clearly, the market has not heeded those rumours, but nevertheless, rumours about your CFO?
So, Lata, good morning. Thank you for inviting me again. So, I think, I would only say this, that from last 4 to 5 years, once we have got into the F&O, there is something which is very, I would say, very organized. I don't know where from the whole sources, but I strongly believe that there is certain people, I don't know how to communicate, but there are something there which is very organized, who don't want AU to be successful or who just play on the stocks of us, but they actually don't know about it, that bank is not only about stock market, right? Bank is also about trust, stability. So, and we are handling this from last 4 to 5 years, and to be very honest, Lata, nothing has come out on us, neither from the regulator, neither from any, statutory auditors, the board, we remain very strong in every sense. Of course, there would be some business issues as usual, right? But, people just start talking nonsense about us, that CFO has resigned. The poor guy has been with us from last now 15, 16 years, and
okay, no, I get that. I get your point that, once a stock comes into F&O, there can be this rumour mongering, and maybe you should take it up with SEBI or some such regulator. Let me come back to the main business of the bank. Even the third quarter, we got a bit of a disappointment in terms of the amount of slippages, in terms of the credit cost. Can you tell us how fourth quarter, I mean, we are almost at the end of the fourth quarter. There are only a few days left. So do you see an improvement, a turnaround in unsecured and MFI sectors?
So, Lata, let me give you the entire year story, because this year remained a little tough, in every sense. I would say that it won't be, difficult to say this, that, it's a very reality check happened this year, because our entire system was not there available, so we had a very marginal growth kind of scenario. We had a tough time in terms of our recovery or the asset quality. So that trend continued, right? But I would say the quarter 4 is the best in terms of entire 4 quarters for this year. But the quarter 4, as usual, remained very strong over the years. But that is not happening, right? So, but I'm very happy, because this is the way we always say that the cycles will come, right? And we need to manage all those cycles. So I would say that this year will remain tough, but the quarter 4 has given us a little bit, I would say, the hope that the coming year would be far better than this year.
Look, can you tell us exactly what? I mean, will fourth quarter itself show lower slippages in unsecured and in MFI, or on one of the two?
So, okay. So Lata, we have 4 books, right? One is retail asset, which is around wheels, MBL, affordable housing, gold loans. There, things has remained more stronger in quarter 4 than quarter 3, quarter 2. Our commercial banking piece remain as strong as it was over the years. So we are not seeing many slippages there. But of course, the MFI, remain a concern area, right? And there are slippages happening. But I think the March is showing much promising. So I would say that the MFI pain should be over by next quarter 1 or quarter 2 of next year. We are not so big in our unsecured loans, except the credit card. So in credit card also, it's more about our internal discipline than a market which has given us a little bit pain, right? So there also, I hope that next quarter 1, quarter 2 will see much better performance than this quarter 4.
There was an uptick even in the NPLs in the secured credit book last time. That is in Q3. Is that showing a recovery?
Yes. So I would say the secured retail asset, as people were talking more about it, that there can be a contingent effect. I'm not seeing that at all. Of course, the cost of the credit cost on those assets remain elevated, but it is one of those cycles where it will be like this. But I don't see much challenge in terms of asset quality in those assets.
Okay. You don't want to give us a guidance as to how much the credit cost may be or how much the NPA may be?
I want to always want to reserve this discussion because we are at end of the March. There are still 10 days left, so we already guided, I think, in last quarter call. So I think let's wait for another 10 days and we'll come back to you post yearly result.
Okay. Okay, well, that's a long way. You can give us a little better guidance now. After all, you've finished 70, 80 days of this quarter. What about margins? Have you seen any fall at all in your cost of funds and therefore improvement in margins?
Sorry, Lata.
Margins. Any fall in cost of funds?
For the next year or this year?
This quarter.
Well, I think that's again in the same range. We have actually guided around 5.8, 5.9. So we'll be doing that. So overall, if you ask about this year performance, I think we are in the similar guided range, which we actually promised you a year back. So that is still in that range. We expected our ROE to be in the range of 1.5, 1.6, subject to any kind of extra provisioning we want to do on the MFI or credit card book.
Okay, why AU stood out among the other small finance banks was that you were in a region where there wasn't so much competition from the big banks or NBFCs. The South is cluttered with NBFCs and banks, and so is the West. AU had a moat, but is that moat there anymore? Or do you think competition is much stronger these days?
No, I think I buy this idea, honestly, that we remain strong because we operated in a non-competitive environment. I think competition is there in entire India space, be it North, be it South, be it East, be it West. So I think it's more about our whole execution, which we have done over the years. We were very sure that our retail asset need to grow, and we run actually one of the best books in there. That's a 30-year kind of franchise is there in that whole vertical. We have actually built a deposit franchise. Many people actually don't actually count our performance there, but to cross 1 lakh crore deposits, being an SFB is not a small work, in my opinion. But actually, we have built a brand there, and it's actually applied for the universal license now. But the journey remains very strong, So it's not an easy day or easy working around this space at all, Lata. We need to go and build our strategy every day, do your execution, be a sharp focus on everything. Something will go away, something will come in, but we remain very strong that AU will become one of the most important franchise in the banking industry in years to come.
Fair point. We are looking forward to what RBI has to say about our universal bank proposal. But all those questions on another day. Thank you very much for joining us, Sanjay Agarwal, with the status check on Q4. We wrap up on Bazaar. Chart process coming up.
the third time now the Miss World beauty pageant will be held in India, as the city of Hyderabad is gearing up to host what is literally the world's most popular beauty contest. Miss World 2025, the 72nd edition of the pageant, will be held in Hyderabad between May 7th and 31st, with an opening ceremony scheduled at the Gachibowli Indoor Stadium on the 10th.
Stocks like GAIL, IGL, Mahanagar Gas, GSPL all climb after the Petroleum and Natural Gas Regulatory Board gets suggestions from the industry on tariff regulations. CLSA says this could pave the way for higher tariffs for GSPL and GAIL. The spate of order wins continues, and this morning we have NCC, Power Mech and RailTel, all of them rallying today on the back of order wins. NCC has gotten an order worth nearly 1,500 crore rupees, while Power Mech has bagged an order worth 600 crore rupees. RailTel, on the other hand, has won an order worth 25 crores. EPAC climbs nearly 4%. The government is set to disperse the second round of incentives for white goods under the PLI scheme. DLF2 trades higher today after the company met in its analyst meet and said that their new sales bookings are expected to remain steady. Jefferies remains bullish. They have a target price of 1,000 rupees on the share. You're watching us here on Chartbusters. We come to you live from the CNBC TV 18 Motilal Oswal studio, and what a Monday morning we're having. 200 points on the Nifty, firmly above the 100-day moving average, as well as the 20-day moving average and the 50-day moving average as well. What's important is, can we go past that 24,000 mark in this series itself or not on the Nifty? That's something that we'll track. The Nifty Bank doing a shade better, well above the 200-day moving average for that index, up 1,000 points. And we have the mid-caps, which continue their outperformance, all of them from last week itself. So it's 2,100 stocks which are in the green, for about 560 which are in the red right now. And among the stocks which are in the green, the most notable of them are the ones that belong to the gas space, the oil and gas space. And this because the Natural Gas Regulatory Authority is looking to amend its tariff regulations. It's invited industry suggestions for the same as well by the 11th of April. To discuss this further, we are now joined exclusively by the member at the PNGRB, the Petroleum and Natural Gas Regulatory Board, Mr. Gajendra Singh. Thanks a lot, Mr. Singh, for taking our call. And, that's absolutely the first question. Can we expect an increase in tariffs for gas pipeline following the changes that you've made in this, like the claim of price for contractual LNG, etc.? Because that's what the street is expecting right now.
The PNGRB board's focus is that how we can make the gas uses, how we can boost the gas usage all across country. Particularly the unified tariff, what it was particularly in existing, currently have the 3 zones. Now we want to make it a 2 zone, and in zone 1 tariff, that will be applicable to all CGD all across country. Because the CGD entity, what we are seeing, the growth is, annual growth, if we see, it is 11 to 12%. So our focus is that the CGD entity, which is far-flung area, may be paying a zone 3 tariff, which was very high, 105 plus, and the zone 2 tariff is 85 plus. So all those entities, now they will get benefited. They will get basically the zone 1 tariff. And the 3 zone now get converted into 2 zones. So the focus is that how we can increase the gas usage all across country, because the focus is for CNG and PNG. CNG and PNG, they will get benefited. Yeah.
All right, CNG and PNG will get benefited. I know you have a stated objective of taking gas to 15% of the energy mix by 2030, and these are steps in that direction itself. I have a 2-part question. One, would this lower prices for end consumers, or maybe this benefit could improve the margins for the company itself? That's point number 1. And secondly, are there any further regulatory reforms that we can anticipate in the very near future? What kind of feedback are you expecting from the industry?
No, like currently what we have seen, that we have taken a feedback. There is an industry committee. We have taken their inputs. Based on that, this public consultation document now have published. Now we will take the comments of all stockholders, all stakeholders, whatever the consumers, or the supplier or the traders, everyone will they will give their comments. Based on them, then we will finalize what all basically is to be there will be in final document.
All right, and the volume assumption, relaxation beyond the 75% threshold. Could you elaborate a little about on the thinking about this behind this move?
Yeah, but like normative volume, we were taking 75%, but there are the few entities or there are the few pipelines where it is flowing more than 75%. There we are seeing is whatever the excess volume will be there beyond 75%, the benefit will be passed on 50% to the entity, 50% to the consumers. So that way also there's a thought process that if it gets through public consultation and all other things, then we will take this to the final regulation.
Right. And, I'm looking at a couple of expert notes, analyst notes, and one of them is CLSA, which points out that industrial gas users might actually see a cost hike. Should industries base for higher gas prices, or do you think the long-term benefits will outweigh the near-term costs?
No, I don't think there will be a very big change into the tariff, because what we are saying, there are the number of industry customers which are falling in Zone 3 and Zone 2 may be paying the higher tariff. Or even if you see the consumers which are there in Zone 1, particularly say if you take a consumer of Gujarat and Maharashtra, where they are near the source, but they may be taking a gas from different other places. Like if you're taking a gas from KG Basin, so for them it is a Zone 3. The volume in Gujarat, it's not that they are taking only for Zone 1, they are paying only Zone 1. They are paying even Zone 3 for the volume which is coming from KG-D6 basin or other document or other volumes which are coming from other sources. So in one particular area, whether it is Gujarat, whether it is Maharashtra, which are near to source, it's not like that they are always paying Zone 1. So, and on the Zone 3 side, the entities which are far-flung, which are paying a tariff of Zone 3, 105 rupees plus, they will now have to pay, particularly for CNG, PNG, they have to pay the lower tariff. But yes, as you are saying, the Zone 3 now will come down, Zone 3 will get benefited, Zone 2 will be almost remain same, and Zone 1 will be slightly up. So that way the two tariff will be there, applicable. That's what we have come out. And we'll see how it will go through after having a public consultation.
All right, and finally,
or loading to the industry consumers.
All right, and finally, if you could, to wrap it up for all our viewers, elaborate some of the major changes that you would like to achieve through these regulations. If you could give us one or two broad points, apart from, what we've discussed so far. One is claiming the LNG cost. The second is relaxation of volume, norms beyond 75%. And the third one, of course, is unifying the tariffs between Zone 3 and Zone 2 as well. Any other thing that we may have missed out on?
And only another thing is the isolated field. There are the number of isolated fields where there the tariff was basically now these are the old fields, and what we are seeing the pipeline which were laid there in those areas, they are not getting any returns on that. Somewhere the tariff is almost nil or maybe in a negative. So there we are seeing that at least they should recover their operating costs. So then isolated field, wherever the pipelines are there, and now they have volume is still existing from those isolated fields. So they will get a better tariff, particularly not to that to load to the consumer, but they should have an operating cost recovered.
All right, take that point. Thanks a lot, sir, for joining in and answering all our questions. We leave you with a promise that once after 11th April, you get all the industry feedback as well. You'll join us once again to tell us what was the feedback that was achieved and what were the changes that you had made to this policy as well. Thank you so much for joining us. The street is listening in to what you're saying. With that, we'll slip into a short break. Come back on the other side. We'll get you an exclusive conversation with the leadership of Pidilite discussing the change of guard, the new market forays of the company, and the near-term consumer sector outlook as well. Stay tuned for that.
Grand finale is all set to be held at Hyderabad's High-Tex Convention Center on the 31st of the month. Now remember, it's the reigning Miss World, that's Kristina Pliskova from the Czech Republic, who won the title in 2023, who will be crowning her successor in Hyderabad. It's not the first time that the event is being held in India. The maiden Miss World to be held in India happened back in 1996 in Bengaluru, while the 2023 edition, which is also the last edition of the Miss World pageant, was held in Mumbai just a year and a half ago. Nandini Gupta, who is the reigning Miss India World, will take on 139 competitors from across the world, or contestants rather, as she hopes to have a go at the Miss World title this year. However, the event is not without its own share of political controversy. The Bharat Rashtra Samiti, which remember is the principal opposition party in Telangana, had raised concerns with Hyderabad's conducting of the event, with BRS leader KTR or KT Rama Rao also saying that a wasteful expenditure of 200 crore rupees was being spent towards conducting the event in Hyderabad this year. In fact, KTR also made comparisons between this event and the 2023 Formula E racing event, which took place in Hyderabad under the BRS government, which also, remember, is under the lens of the Anti-Corruption Bureau in Telangana itself. However, no specific cost estimate has been attached to the Miss World pageant by the existing or the incumbent government of Telangana. However, it isn't the first time that the pageant has run into controversy. The maiden Miss World pageant to be held in India back in 1996 also saw multiple protests from conservative groups in Bengaluru and beyond, saying that the event would go against the traditional family values that India held dear. Subsequently, the swimsuit round of the 1996 edition was pushed out of India into the island of Seychelles in the Indian Ocean. But be that as it may, the 2025 edition is all set to see 140 of the world's most beautiful women descend.
Welcome back. On a good day for the markets, let's get in some important corporate conversation. Pidilite's leadership, both the outgoing MD and CEO Bharat Puri as well as the MD CEO designate Sudhanshu Vats spoke exclusively to me about the company's business plans going forward. This after they held an analyst meet last week as well. So let's listen into what they had to say specifically on Pidilite's foray into the paints and also the resurgence in rural demand. This is a CNBC TV 18 exclusive.
We believe we have a right to win in small town and rural India. That's exactly what we're doing. We're steadily making progress, getting our model right. We're still in the southern states, the 4 southern states. We haven't expanded beyond. And we'll get the model right, be clear that this pilot works before we cut, copy, paste to the rest. But as we've always said, listen, paints today is anywhere between 60 and 80,000 crores, depending on who estimates the category. 30% of that is small town and rural. If you're a top 3 player, and frankly, when you go to these markets, there are not more than 3 players there anyway, that itself is a substantial driver of growth for us and also is a much better profit pool than the urban markets.
The obvious question is, what took you all so long, one, in entering this category? Because the obvious correlation was there until then. And what have your learnings about this industry been through the pilot that you've come up with?
I think it is one of the large consumer categories of India, which has also got a promise of growing in double digits. So I think that's a given, whether urban or rural. Now, within that also, to Bharat's point, I think our belief is, and that to the timing there, our belief is that the small town India and rural India, which traditionally had much lower per capita incomes and therefore was traditionally a smaller market, and if I could use the word, marginally ignored market by the existing traditional players because the market was largely urban, was not perhaps ready that much. Our belief is, and you can see that, Mangalam, in many categories, I believe the action is now shifting a lot more to small town and rural India. We believe while this is a smaller pie of the market, as Bharat just told you, 30%, but it may arguably grow faster. Per capita incomes are also uniformly growing now, and therefore there will be more income in the hands of the consumer to be able to indulge in some of these things and to do some of this, more new houses, more areas to paint. So we feel the timing is correct.
What do you believe is your right to win here, apart from the distribution that is there? I mean, is it the promise of a Pidilite brand? Is it Haisha? We're just trying to figure out, why should a consumer buy a Pidilite?
The right to win first is our ability to reach where very few else can. The second is we know the category.
Despite the others being actually quite big and well entrenched in the country.
In the country, yes, but in urban India largely, not in these parts, so on and so forth. The second thing is, at Pidilite, we always start with a better product. So and the wonderful thing is, the moment you say it's a Pidilite product, the acceptance, this whole thing on from the makers of Fevicol, we've had very little resistance. Therefore, I mean, there is a strong equity to start from. I think all of this gives you enough of a right to win. I mean, forget, I can keep adding on other elements of the Pidilite secret sauce, but some of them should remain secret.
Again, it's a larger total addressable market, but it's also margin dilutive, right? The leader does slightly high teens, and that also under threat right now. You have a margin guided band of 20 to 24%. Chances are that it might be margin dilutive.
Let's wait and watch. That's exactly why do you pilot things? To exactly determine all of this? So give us another, by this summer, we will come back to you and tell you, okay, listen, what's exactly what we believe is the paint model, how it should go forward.
You have a fairly healthy cash balance. You are aggressive acquirers. AkzoNobel is on the block. You are one of the people who've bid for it. There are a lot who've fallen out of the bid because of valuations. Where do you stand on that?
We have no knowledge of any such bid. I read about it in the papers just as you do.
After you've made the bid.
On AkzoNobel, when we have something to report, we will. But as we said, listen, Pidilite is a conservative, very clear value-based investor. We never flex our balance sheet. Just because we are cash-rich, debt-free, doesn't mean that we will ever splurge money. So when the right time comes, we will talk about it, but right now we have nothing to talk about.
As an asset, what do you think of it?
I see what I'm saying is that there could be a personal view, so on and so forth, etc. So at the moment, there are enough interested fellows who have lots of thoughts about the assets. Let them give their thoughts.
And about the very near term, the consumer environment that we're in, obviously you guys have done your internal assessment of where Pidilite can be better, etc. But from an environment standpoint, what do you think needs to happen for growth to return, according to you?
See, in our view, growth will return. I think people have underestimated the impact of last year's elections and therefore the slowdown and the amount of time it took for the whole system to crank up, so on. For example, if you look at the first 3 quarters, which is what we've published, we're close to double-digit underlying volume growth, which is what we've always promised. So, I can crib and say that, listen, life could be better, urban could be, of course. But remember, in a country as large as this, there will be ups and downs. But now with this, recent budget announcements where consumers are seeing money in their hands, you're also seeing that the monsoon has been good, so April onwards money will come. Maybe the first quarter will not be a bumper quarter, but I think the India growth story is not going to go away.
The high-frequency data that you see on a regular basis for your company, what does that tell you about the consumer sentiment here and now?
So, Mangalam, I think we've spoken about this earlier as well. What we are beginning to see is a clear resurgence in the rural demand post the monsoon, a little bit. Albeit slow, but we are clearly seeing that pattern. As far as urban demand is concerned, I think in our sectors, Mangalam, and therefore now I'm talking about how we look at it, it has been when it comes to construction, when it comes to home improvement and so on and so forth, the demand has been quite steady. I'm saying the point is it could always be better, as Bharat was just saying. So I'm saying the point is we would want it to be a bit more better, a little bit more buoyancy. But having said that, I think we've been seeing steady this thing, and that's why we've been delivering steady returns as well, steady numbers as well.
And plus, if you look at it, the one thing that makes us also a little more hopeful is the real estate sector turned about 3 years back, at best 4 years back, but mainly 3 years back when you had a lot of things getting completed. We find that we get the maximum benefit of that in T+3, T+4. So a lot of the construction that has happened in urban India, etc., is all going to now come up for what you would call completion of interiors. And that's always, while even now repair and renovation is a larger part of our business than is new construction, this is a good multiplier.
Interesting conversation. In fact, what you can do is catch excerpts of this entire chat all day today only on CNBC TV 18. Take a short break, come back, focus on the markets.
As the most stunning one among them all is all set to be crowned Miss World 2025.
Welcome back. A bunch of stocks doing extremely well. The banks in particular, Kotak Bank has moved to the high point of trade, as has Axis Bank. All the financials actually are picking pace as well. So we have Bajaj Finance and Bajaj Finserv continue their gains from the last couple of trading sessions itself. So let's get you some ideas for profit coming in from our colleagues at Money Control Pro. And today we have Bharat Jinani joining in. Bharat.
The side is Senco Gold Limited. Despite the increase in the gold prices, the jewelry demand is expected to remain strong. Gold having an investment value and Senco Gold's positioning as a lightweight jewelry player bodes well in a rising gold price environment. We expect the company to deliver 18 to 20% growth in Q4. While the margins were affected in 9-month FY25 period, we expect the company to revert back to its historical range of 7% from the next fiscal. A better product mix and operating efficiencies is expected to drive the margin performance for the company. The company is on a healthy network expansion track and aims to open about 18 to 20 new stores every fiscal. The ramp-up of the Sandnes brand, which sells leather bags, perfumes, and lab-grown diamonds, would be an additional growth figure for the company. Additionally, the market shift towards the organized segment is positive for players like Senco Gold Limited. Senco Gold is amongst a few quality and reputed players in the listed jewelry space. At the current market price, the stock is trading at a PE of 23 times FY26 projected earnings. This is a steep 30% discount to another comparable regional jewelry player, that is Sangama Jewelry. Senco Gold's current valuations are attractive, and hence we recommend investors to add the stock.
Add to that, we had the management of Senco Gold join us last week as well on CNBC TV 18, saying that after the big drubbing, the promoters are buying the stock from the open market itself, and we've seen that the stock has seen a fair amount of recovery all of last week from the lows itself. With that, we've come out of time on this edition of Chartbusters. Let's wrap it up. Stay tuned to CNBC TV 18 as Trading Hour comes up next. Thank you so much for watching.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV 18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV 18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV 18 and CNBCTV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business.
Good morning. You're watching Trading Hour. It's a Monday morning. It's a wonderful morning looking at the way the screen is moving. I am Reema Tendulkar. With me is Vivek Iyer, and we're coming to you live from the CNBC TV 18 Motilal Oswal studio. 23,600 on the Nifty. That's what the tape is suggesting. 266 points up on the Nifty. The Sensex now inching towards a 900-point gain. It's been a vertical rally for our markets. Last week, we added on close to about 1,000 points on the Nifty. And this week, on day one, in the first half of the trading session, we've advanced another 260 points. We've practically recovered all the lost ground in the month of February. And every single day, we've been making higher lows. You know, for the last 6 trading sessions, because the markets have been on a winning streak for the last 6 trading sessions, these are the intraday lows. And the technical picture of the market is also improving. The Nifty Bank has comfortably surged past the 200-day moving average of 50,960. Right now, it's 51,700. It's an 1,100-point up move on the Nifty Bank. It's the clear outperformer with a gain of close to about 2.2%. But defense, real estate, the PSU name, CPSE index, these were the laggards from October to February. They've led the rebound in the month of March, and that has continued. Mid-caps and small caps, too, having a solid session.
Good morning, Reema. I can't ask for a better start to the week in terms of the kind of action, price action that we're seeing. Remember, it's the 6th straight session that we're seeing in the green, and it'll be a record of sorts, you know, almost, if you go back almost 4-5 years to see 6 straight sessions, but we still have quite a few hours to go before the end of the trading session. What's doing well? Like you mentioned, Capcool's defense, they're doing well. Larsen, you know, we just reported earlier during the day that they are in line to bag a very large order. That stock is doing quite well. And along with that, the capital goods, the defense names like BL, BHEL, Cummins doing very well in the session today. One stock that cooled off after seeing a strong start was actually DLF. DLF had an analyst meet over the weekend. Slight disappointment in terms of the pre-sales that the company has guided for in terms of FY26, but overall very positive commentary coming to stock high by 1%. And 2 stocks, you know, both Finolex cables as well as Finolex pipes, both of these stocks, especially when you look at the NSE 500 index, both of these stocks doing very well, each up over 10%. On the back of that very strong session, broader end of the market doing very well. And like you mentioned, Reema, market breadth very, very strong.
Let's talk about IT. IT has been the laggard. Now, CLSA has already come out with a Q4 FY25 preview note. A bit early, but the numbers are here now by CLSA. They're saying the uncertainty is priced in. It seems a lot more pessimism is built into the current valuations of Indian IT companies after the recent correction than potential earnings cut. The Nifty IT index in this quarter, quarter to date, as we call it, is down 15%, underperforming the Nifty by nearly 14%. They do acknowledge that given the uncertain and tough macros, discretionary demand could be postponed by 1 to 2 months, and particularly sectors like manufacturing and retail, where the impact of the tariffs will take place, the tariff war, we could see some pain there. So therefore, they've lowered the growth estimate. So across the board for the companies under their coverage, revenue growth estimates have been cut down by 3 to 4%. EPS cuts will be limited because of the INR depreciation. But they're saying even as discretionary demand gets pushed back even further, there will be large cost optimization deals, which will be up for grabs. And here are some of the Indian IT companies are well placed. So they've upgraded HCL Tech. They said HCL Tech led the revenue growth in FY24, FY25. It's likely to do so even in FY26. They also like TCS, Infosys, HCL Tech we spoke about, Wipro and Tech Mahindra. So pretty much the entire large cap pack. They've also upgraded LTIMindtree from an underperform to a hold on the back of valuations. And a quick word on how FY26 is likely to pan out for Indian IT companies. Infi, they expect the company to guide for 2 to 5% in FY26. HCL Tech, 3 to 5%. Wipro gives you a quarterly guidance. So in April, the company is likely to say that Q1 FY26 growth is likely to be 0 to minus 2%. So it's got to be a tough growth here. Growth is not bouncing back in FY26. But CLSA's call is that the current valuations after the recent correction prices in all this pessimism and the postponement of discretionary demand.
Right. Thank you so much, Reema, for taking us through what exactly to anticipate as far as FY26 is concerned for the IT pack. But earlier today, just prior to market open, we told you about a very important development as far as L&T is concerned, Larsen & Toubro. So from reports, this is from a Middle East infrastructure journal, where we understand that L&T has emerged as the winning bidder or the lowest bidder, and this is for a very large project. In fact, if L&T gets the entire project, if the project is not split, this could be one of the largest projects, in fact, the largest project that L&T has received, especially from West Asia. So what is the quantum of the project, or the likely quantum of the project? It's $4 to $4.5 billion, and this particular project is coming in from Qatar Energy. Remember, the bids for the project opened a little while ago, and this particular project is for expansion of the North Field South expansion projects that Qatar Energy is undertaking. Remember, this particular project is part of Qatar Energy's long-term capex plan, where they're looking to increase LNG capacity from 70 million tons per year to 126 million tons per year. We reached out to L&T earlier today. Remember, L&T did not respond. They typically do not respond, to likely order wins. They go ahead and inform the exchanges once the LOI is received. But what is important to note is that, Reema, this particular order win, if it comes in, and if the LOI has been received before the end of FY25, the company will book it in FY25 itself. And this will help the company significantly and comfortably outpace their own order inflow guidance of 10% growth on a year-on-year basis compared to the base of FY24. So it's a very important development. L&T will wait and watch by when the company does inform the exchanges. And the other important thing to watch out for will be whether this particular order or the package is split into different parts. What will be the quantum that L&T has received? But an important development to keep track of as far as L&T is concerned.
Got that. Stock is higher in the large cap space, 2% up. Titan is under pressure. Stock is down close to about 2.5% now. Mangalam joins in. Mangalam, this rapid rise in gold prices could hurt Titan in the current quarter.
Well, that is one. And second is that, all of last week, the stock did extremely well. The reasons the street was searching, and now the stock is lower. So, the reasons people are attributing to this note, which has come in from Ambit this morning, saying that their fourth quarter momentum in terms of growth may moderate. The company in its third quarter earnings call itself had said that, there's a strong start that happened to the fourth quarter, but they flagged a pause after the first 3 weeks of Jan due to the sharp rise in gold prices, which continues all the way up to now as well. Ambit has said that their channel checks suggest weaker revenue growth momentum for Tanishq in both February as well as March. So what this does is puts their 22% to 29% growth built for built for the company by them and the consensus for the fourth quarter at risk, which implies a cut of nearly 2 to 3% in estimates, assuming 15 to 18% growth in the fourth quarter itself. Because of this, the near-term revenue pressures, uncertainty at the margin levels, makes their 50 times FY27 price to earnings valuation also seem a little expensive. So in this consumer discretionary space, they prefer the better bets to play would be via Nykaa as well as Sapphire, not so much Titan, because of valuations and maybe fears of near-term growth moderation.
Thank you so much, Mangalam, for joining in and telling us about Titan, the stock now down over 2%. Let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
Macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Europe, I think, has outperformed significantly, and rightfully so, given that things have gone from really, really bad to perhaps looking better. And I think the fiscal stimulus you're seeing out of Germany has been necessary for so long, but it's not the only thing that matters. Europe still needs a weaker dollar. Europe still needs to find a way to better coordinate financing and giving money to businesses to actually form. So, and Japan, honestly, has been forgotten in the developed market perspective, but Japanese markets actually have the strongest earnings acceleration. And that to me is very, very important looking forward. So Japan, I think, looks very interesting from a global market perspective. On the emerging market side, India is finally bouncing. Like I said before, if we get confirmation and this rally continues past April 2nd, I'm cautioning against leaning into the rallies that we're seeing globally, particularly if we see more of a relief rally in the US, simply because there's a lot that we still don't know. There's been so many starts and stops with respect to tariffs, it's really hard to believe a lot of the headlines that we're hearing from the administration. And I actually think that rather than reciprocal tariffs, which are very painstaking and difficult to put into place and are going to require more time, I think April 2nd is really going to be more about penalizing tariff villains or perceived tariff villains around the rest of the world. So I think India might be in store for perhaps some tariffs that get put in place, but
Welcome back to Trading Hour. Well, markets continue to trade quite strong. A couple of stocks, PFC, we did highlight that there's been a change in the top management as far as PFC is concerned. That particular stock is doing quite well, up over 3.5%. Indigo is the other stock in focus. It had a stellar couple of weeks. Today, it's cooled off a little bit from the day's highest point. That particular stock now at the day's low. SRF is the other stock. That stock too has cooled off a little bit. One stock that's doing quite well, I remember Mangalam just alluded to it a little while ago, is Jubilant Foodwork. That particular stock is now up over 2.5%, and that stock is trading with strong gains. Voltas is the other stock. Remember, on Friday, it saw a very weak session. There was a downgrade coming in from BofA Securities on Voltas. That stock fell almost 3% on Friday, but it's seen a very strong comeback, up over 1.5% today as far as Voltas is concerned. And Policybazaar is the other stock that we're looking at. That stock is having a very strong trading session, up close to 5%, Policybazaar or PB Fintech. But we'll now shift focus to the commodity space. Manisha joins in, and today we are focusing on wheat.
Thank you for that. Well, yes, an important commodity, and you're looking at prices coming off finally, because this is a year that you saw all-time high prices in case of wheat as well. Well, the reason that you have seen prices go up is because there was lower inventory. The government buffer stock was the lowest in many years, and the supplies in the open market in sense of mills and production were also on the weaker side. But now the arrival has started to come in, and there is a government estimate of a record wheat crop this time around at around 115.1 million tons. When you look at the industry, well, various associations have put out their numbers as well, and they are anticipating crop anywhere between 100 to 115 million tons. The reason that the industry is looking at a lower crop, because remember, there was a heat wave in the month of Feb and a hotter March as well, and that could have impacted wheat as a crop there. India did produce 113.3 million tons in the previous year, so the markets are anticipating similar or slightly higher in sense of crops there. Interestingly, when you look at the India's wheat consumption numbers, well, 45 to 47 million tons is consumed as atta itself, 35 to 37 million tons in sense of maida, which is used in bakery and products, etc., and then 3 to 4 million tons as seed and 1 to 2 million tons as feed. So almost 85 to 90 million tons of wheat is what India consumes in various ways, and then there's a lot of product export that also happens. Wheat export in that sense was banned in 2022, and when you talk about wheat imports, well, there's a duty of 40% on that as well, so not too much of international wheat comes into the market as well. But the good point here is that we did see all-time high prices in sense of wheat, and that did add to the food inflation numbers. But with the kind of crop numbers that you're looking at and the consumption numbers, and an estimate that the government will be able to procure quite a bit with the kind of MSP and bonuses that have been announced, at least this concern for the time being doesn't really seem to be a botheration.
Thank you very much for that. Hormus was telling me we're quite close to becoming YTD positive. Wow. If the Nifty crosses the 23,644 mark, so we're about 30 points away from that level, and then we would turn YTD positive, and that in itself would give bulls a lot of comfort. So watch for that level, 23,644, to turn YTD neutral, or at least manage to erase the losses over the first 2 months. A small programming note for all our viewers then. CNBC TV 18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. Scan the QR code now. Submit your entry for the SME Champion Awards Season 2.
I don't think it greatly will impact the Indian market. And so for me, what's a really important cue to look for is, can Indian markets continue to push higher in light of some tariff volatility?
There was an unsanctioned car show at the park prior to the shooting. The call for the gunshot victims came in at approximately 10:10 p.m., again on 3/21/2025. The investigation so far reveals that there was an altercation between two groups of people, and that altercation escalated to gunfire between both groups. Several other people were also injured in the crossfire.
पढ़ें। Welcome back. 23,600 on the Nifty, super strong. Soni Patnaik from JM Financial Services is now with us on the show. Soni, have we run up too much, too fast, or do you think, there is still upside left in the markets? And what is the advice by way of a Nifty or a Nifty bank trade first?
Hi, good morning, Rima. Thank you so much for having me on the show. I think it's quite strong the way we've seen the short covering coming in for Nifty. The put writers are, increasing their base anywhere between 23,300 to 23,500. So Nifty, I think it's still heading towards 23,700 to 23,800 range. Maybe from those range, we can see some profit booking this week. But the advice would be to buy on dips in Nifty towards 23,550 to 23,500 in spot level. So I think that range is an ideal range to accumulate and initiate longs. Keeping a stop loss of 23,400 and a target of 23,700 to 23,800 can be seen. Most likely for this week, this is the expiry range that we can see between 23,400 to 23,800. Similarly, for Bank Nifty, I think it's heading towards a 52,000 mark. So Bank Nifty also looks quite strong. It is holding on to very strong support of 51,400 for intraday. I think put writers are basing themselves at 51,000 and 51,000 put option. Bank Nifty also remains a buy for targets of 52,000 plus levels for this week expiry.
Thank you so much for your views on the indices. Soni, individual stocks, any picks for today?
Hi, good morning, Vivek. So both the buy picks would be on the buy side. The first is from the auto space for Tata Motors, which is seeing a very good consolidation and ready for its up move. So one can buy Tata Motors at current levels, keeping a positional stop loss of 674. The stock has given a good breakout. The first target is 740. Sustaining above that, you can see second targets of 760. The second buy pick is in financial space, which is Chola Finance, which has given a very fresh breakout on daily charts today. So one can buy in Chola Finance at current levels, keeping a stop loss of 1530 and a positional targets of 1650 to 1680 can be seen.
Thank you very much for that. Nifty Auto is one of those few indices not participating in the up move today. The Nifty Auto is absolutely flat, and what's weighing is M&M. M&M is down close to about 2.7%. So that's been a bit of a drag. Thank you, Soni, for joining in. Let's now turn our attention to the exchanges now. Earlier today, we had a chat with Sundar Raman Ramamurthy, Managing Director, CEO at Bombay Stock Exchange, on the F&O contracts, the expiry days, the derivative markets, market share. Listen in to that interesting conversation.
The market feedback that we received from people whom we approached and people who approached us, the point that underlines is that there should be a spread between two expiries. Okay. What it should be, how it should be are nuances. We need to see how the market spans out in respect of all this. Since we are having too many other realignments already happening, anything done in a hurry will not help in the product development and economic development. So at this point of time, we are assimilating all the announcements, changes, and we will come out with a stand, what will be useful for the product.
What's the probability of you changing the expiry date? Is it high, going by what you have got back in terms of a feedback? Point number one. Point number two is, by when will you respond to this? If there is a change, it appears that for April there may not be a change. You can correct me if I'm wrong on that. By when do we hear a response from the BSE?
See, I would like to reiterate that BSE's expiry was next to NSE's expiry of Nifty and Bank Nifty for a significantly long time when it was relaunched, notwithstanding that Sensex was trying to find a feet. But only thing what it was not able to achieve is proper economic significance of itself. So whether in the revised situation when BSE Sensex is establishing itself as a clearly important product, what should be the action should be carefully thought about. It cannot be defined in terms of time horizon. It has to be talked about in terms of the entire realignment.
Indeed. But there's a probability you'll look at changing it.
No probability can be ever ruled out. Only ascribing a percentage high or low will be very difficult at this point. In terms of cash market, while the average daily traded volume has grown up for us, in terms of percentage market share, it has not grown up significantly. It's hovering around 6.5 to 7%. So overall, the notional turnover across the exchanges, I think, has come down by around 40%, and premium has come down by 17%. While I would continue to reiterate my earlier stand, we don't run behind market share. Our market share is 100%. Okay. In terms of what numbers you ask, for your question purposes alone, the notional volumes have fallen down in BSE by around 17%, etc. No, the premium volumes have been stabilized as far as Sensex is concerned.
Well, a very important conversation there with the management of BSE. Well, one particular stock that's now trading near the day's highest point is Kotak Mahindra Bank, up almost 4%, one of the top gainers as far as the Nifty Bank is concerned. Kotak Mahindra Bank doing very well in this session today. But we'll now take a short break. Up next, we'll discuss market fundamentals with Mukul Kochar, Head of Equities at Investec Capital Services.
yolsuzluk operasyonu üzerinden milletimizi provoke etmeye kalkıştılar. 4 gündür milletin huzurunu kaçırma, insanlarımızı kutuplaştırma adına ne varsa hepsini yapıyorlar. Önlerine gelene hakaret etmekten, sadece görevini yapan polislerimize saldırmaya, yolsuzluk ihbarlarını araştıran yargı mensuplarımıza gözdağı vermekten, sokak terörüyle milli iradeyi baskı altına almaya kadar ne ararsan bunlarda her şey var.
Welcome back to Trading Hour. Well, market veteran Ramesh Damani says that the bull market that began in 2021 has resumed and PSU stocks will continue to lead it. He also tells SEBI while he is optimistic about public digital infrastructure companies, he is wary of the consumer tech internet stocks.
Would they continue to lead? Yes, I think they will continue to lead the bull market. There's been some evidence, again, the defense stocks, flashing up as we speak. So I see what has happened that perhaps we don't understand is I think this government understood correctly that there's no public favor in terms of disinvestment in India, privatization. I think successive governments have tried that and it has failed. So they've done the next best thing, which is improve the corporate governance of these companies. So you look at the earnings profile of how the earnings profile has changed of these companies. So that has really helped bring prosperity to the PSU index group. So having said that, yes, I think they will continue to lead the bull market. Where are we investing in the public sector space? Maybe in the construction companies, maybe in some of the other names that we're finding value out there. So that is one sector that we're looking at. I find suddenly and surprisingly for me, a lot of opportunity in the pharmaceutical sector.
Yeah.
Because what I'm finding is that a lot of Indian companies are not doing the CDMO work or the basic generic drug, which is also fine. But they're also building intellectual property, okay, which I find astonishing that India has come that far that you're building actually patented medicines. And so we're investing in some of those companies. And then the third one, which I'm very bullish on over the next 5-10 years, is this public digital infrastructure space. Because I think the one thing India is teaching the world is the India stack, the digital infrastructure, whether it's payments, whether it's transaction, commerce. I mean, anyone who's gone to the airport in recent times know how cool Digi Yatra is, the way you smooth through the airport. So India is way ahead of other countries, and that product will not only be more intensified in India, it will also be exported. So I think there'll be an opportunity in that sector too.
But are there enough opportunities? There are few companies, Protean obviously is one of them, but does the listed market offer enough opportunities to play digital infra?
There are plenty of opportunities. When Infosys went public, there were 1 or 2 opportunities, and more companies came. So there'll be more companies. There are enough right now. You just have to look. And I'm not recommending any particular stock, just to be clear. But I think there will be opportunities in the intellectual property companies in pharma, for example, may be challenged by Trump's order.
That's what I was
But I think they will overcome it. It's just the basis is so cheaper in India that you don't want to give medicines to America, which are already expensive, 3 times more expensive. It doesn't make any sense to me. So that's why they will have to change. The MAGA crowd will have to change ultimately out there. So I think there's enough pickings. The valuations are at your favor. It's almost like the wind is at your back. So if you are willing to invest over a long period of time, this is as good a time to get into it.
And PSUs, just to kind of press on that point a little bit, it's a very wide basket from defense to railways to, it could be financials, etc. Within that, what excites you the most?
Well, I think the problem that a lot of people who didn't like PSUs made was they bunched them all into one category, the PSU basket. And they were, like you said, assortment of companies. In the commodity businesses, they were in the construction business, they were in the defense, they were in the rail. And you can't do that. This is so silly. I mean, I always point that out. I said, and Subi, I just have to remind you, because there's been a lot of press, hatred against PSUs, as you must find when you are anchoring the show.
Yes.
But I go back to 1991 when Manmohan Singh first announced the PSU liberalization policy, and in the speech to Parliament, he said, I will be disinvesting some public sector stocks so that they'll be more efficient. In that basket of stocks, and I'm only talking historical stuff, I bought 3 stocks, among others, but 3 stocks that I bought. A company called CMC, which was in technology, a company called Bharat Electronics, which was in the defense space, and a company in Bharat Earth Movers, which was in the railways and a whole bunch of heavy moving equipment, whatever. If you go back and study the history of those 3 companies, I think today, Bharat Electronics may be 200 to 300 baggers, even today. And more importantly, what people don't understand, there is absolutely no dilution that is taking place in the equity. So the same level of capital, they've sustained the growth. Bharat Earth Movers, it's really hard to believe, was maybe a 50 crore market cap company. Today it's one of the giants in this field. CMC has been merged with one of India's leading companies, TCS. So I had this reference of making a lot of money in the public sector in 90. So when these got disinvested in 2020s, the railways and the defense PSU, we could see they were rich for the pickings. So I would say avoid the mistake of clubbing all of them together, because you get MTNL also along with some
With maybe
National
a
in there.
BEL.
So, but if that's your job, I mean, that is your job as a stock picker. What are you doing? If you're lazy, not going to look at the stocks, then you're being lazy. You're not a good value investor. So that is my call. I'm saying that these individual stocks will do well. What excites me pretty PSU, has told you, some construction businesses excite me, some defense business still exciting.
Okay. In digital infrastructure, it's interesting that you said public digital infrastructure, not overall, internet businesses or internet companies. There's been so much, happening with them. They go up and down, and the great debates rage in the market around a Swiggy and a Zomato, etc. Overall internet, not so much, more digital public infra. Why is that?
More there because that's where the great growth opportunity lies for India in making life easier for the common citizen. In the internet businesses, I am all in favor of them, but I'm not finding great valuation comfort in. They are still at, they are at exorbitant valuations in my belief. So we bought some of them, but we haven't bought all of them.
What an interesting conversation with market veteran on individual sectors that he likes, how he's navigating the PSU's pharma, and how India is becoming a role model for IP and the digital stack. We'll get into a break. We'll come back with more on the markets. This time, our conversation is with Mukul Kochhar. Stay tuned. Welcome back. 23,600 holds on the Nifty. We're up to 65 points. Banks are up nearly 1,000 points with names like Kotak Mahindra Bank leading from the front 4.5% higher. You've got an ICICI Bank up 1.5%. Axis Bank has advanced nearly 2.5%. And we should finally pull up HDFC Bank too. That's participating on the upside with a 1 1/3 percentage point gain. Mukul Kochar, Head of Equities at Investec Capital Services, is joining us on the show. Mukul, it's been a while since you've joined us on the show, so thank you very much for that.
Look forward, yeah. Yeah, thank you very much. Look forward to the interaction.
So first, just tell us, what have you made of the correction that we've seen over the last couple of months and this quick, swift recovery for the last couple of days? Your thoughts on the market setup?
Sure. The correction was set up because, a little bit overvaluation was there in the mid-cap side. And then, China suddenly came into favor and massive outflows took place since October in India. And then money went back to the US. So flows combined with expensive valuations were the trigger. And that is what the correction has been about. What we've been telling people, though, on the other hand, is that fundamentally, India is just looking, nothing has really changed. India is still looking good. On the other hand, we may have been slightly better than last year. For example, FY25 growth across indices is better. Growth in earnings has improved as the year has progressed. The lack of or miss in momentum that was there post the central government slowdown after elections, that has also picked up. Most importantly, our current account is actually looking better as the year has progressed, as services exports have come in their own. Today, as we look at the figures, services exports practically, totally offset the trading goods deficit that we have. That is the basic fundamental aspect of India that we highlight to clients, that when it comes to INR, which is the rupee and the currency, we're on solid footing. And that is going to be the trigger for this turnaround. And that has turned out to be the trigger for this turnaround. Because when the INR becomes, gets on sound footing and INR starts appreciating, FII flows will turn, which was the trigger for the correction last year.
But do you think the FII flows have turned? We've had 3 days of FII buying last week. Was it just a flash in the pan? What are your conversations with foreign investors like?
Yeah, I actually really don't think it's a flash in the pan, because if you think about it, just the fact that FII flows became neutral, because remember, it's just been positive, as you said, for the last 3 days. But the market rally has continued now for maybe 7, 8, 9 trading days. So the rally started without FII participation. Actually, the rally started as FIIs were already selling. Now, if the FIIs turn positive, we could actually get into a self-fulfilling cycle at a time when valuations have become more supportive. In fact, we did our promoter or the annual founder conference 2 weeks back, and a lot of the foreign investors that were there at the conference were net short India. And I would say not net short or underweight compared to their historical weight in India. And this, I think, if the currency also starts appreciating and is an incremental benefit to them, it'll be tough for them to sit this one out.
Right. Mukul, you just briefly mentioned about the conference that you held in the week gone by. Incrementally, what was the kind of commentary that you received from managements? And do you feel that we are now at an earnings inflection, especially given the low base of FY24? Do you think FY26 can be a much better year in terms of earnings?
Yeah. So what is very interesting is that if you're in a bear market, and our conference, honestly, in the first week of March was squarely in the middle of the bear market, promoter, founder commentary or management commentary is as negative as investor commentary, and that's what we saw. Having said that, we even that time were thinking that this will not take time to turn. So, for instance, I'll just give you an example. A lot of concern around the capex cycle, but when we look at the numbers, we could already see that central government spending has already turned in the month of December, January. And by the way, the slowdown that is there in the central government expenditure also, if you look deeper, for example, I just take the example of roads. Yeah, it's not because the government doesn't have money or intent to spend. It's because land acquisition has actually sort of made implementation that much more difficult. So the government is saying, hey, let us focus on completing things rather than announcing new things. So nothing fundamentally wrong there. And, CapEx, concern around CapEx. However, on the other hand, on the positive side, we saw a lot of positive commentary from manufacturing companies, from pharma companies around new molecules like semaglutide that are supposed to come. So, company specific, but broadly negative. Finally, on earnings, when we look at earnings for the 3 quarters gone by, 2 things we can conclude: that FY25 earnings as they stand today are very achievable, as in consensus earnings will likely be beat for FY25. The second thing is looking at, again, the exit quarter, which is the 3rd quarter of FY25. We don't think there's downside to FY26 estimates as well. So post this correction, sell-side analysts have taken their estimates down, and we think earnings, let's say double-digit earnings in FY26 and FY25 are very, very doable.
Double-digit even in FY25, or you just said FY26 double-digit earnings?
Both FY25 and 26.
Got that. What about headwinds in the form of the global headlines, the global trade friction, the resurgence of China, China's technology upending everything that we knew about technology and its greatness? So relatively India looks good, but in the face of, say, US economy slowing down, what if it goes into a recession? There is talk of stagflation. How much of a risk is the global macro backdrop to your mind?
That's a very, very good question. And actually, we get asked that a lot. The simple answer to that is, today our trade linkage to the world is negligible. Yeah. So if we are 3% of the global economy, our trade linkage or manufacturing trade, I'm not talking about services. Services we do quite well. And that is something, because of demographics, because of the value India offers, is already on a strong footing. When it comes to goods trade, we are roughly 3%, or manufacturing, we are roughly 3%. Yeah. Manufacturing in India, let's just say manufacturing in India is roughly 3% of global manufacturing. And that is what is the concern on global slowdown. That is a concern when it comes to tariff. And honestly, when you look at that, look at the commentary of the manufacturing companies, look at the, clear sort of direction from the developed world to create alternatives to China, I think we will get down the global slowdown quite okay. Yeah, because, on one hand, our services exports offer cost benefits as well as, an answer to the demographic challenges in the developed world. On the other hand, our goods exports provide an answer to companies or countries trying to de-link their supply chains from China. So I think both can work very well, even in a slowing global backdrop. So I'm not too concerned, honestly, about global slowdown. I'm actually looking more into how we get through the trade negotiations that are ongoing with US and Europe. And that to me looks like a huge opportunity than a risk.
Mukul, are you particularly worried about the impending retaliatory tariffs that are likely to come into effect from April 2nd? And very quickly, your key overweight as well as underweight sectors.
Yeah, so April 2nd is certainly going to be newsworthy. Yeah, so but I think one should look beyond that. Look at the signals that are coming out of the top members of the Trump government. All of them talk about, let's sit together, let's work out an agreement that works in both our favors. They don't, and they at the same time also say we don't like the status quo because we are big importers of goods and we want to change that. Honestly, if you take out the rhetoric, it's a very reasonable stance to start with. Yeah, and so far India also has taken a negotiation approach rather than playing it out in the media, out in the open, and that is the right thing to do. And that, I think, is sort of finding favor, at least with the current US administration. Let's see how it goes. I'm still hopeful that it will turn out well for India. We are, while we are a large economy, we are number 9 or number 10 in terms of US trade deficit. US is also not threatened by India geopolitically as it is with China. So I think it's in both our countries' interest to deepen trade linkages, and that may actually come out in the second half of the year, even if April 2nd, is, as I said, noteworthy in terms of some negatives there. So I'm still very, very constructive on how this plays out through the year, and it will play out in 2025 itself. That's one.
Sorry, go ahead.
And the second question was around sectors we favor. So sectors we favor is both a combination of the valuation that they stand at, and their competitive position of companies within the sector. So financials, of course, I mean it's sort of semi-consensus today, but we believe that the larger banks, and we've been saying this for the last 6-7 months as well, have improved their competitive positioning over the last 10-12 years. And despite that, they're trading at a discount versus their historical average. And why have they improved their positioning? It's more expensive regulatorily. It's more expensive in terms of technology. They have better cost of funding. Finally, people forget that the larger banks have better products. I mean, very few small banks have a credit card, which is one of the most profitable retail product that a bank puts out. So barriers to entry in the large banks are higher. There's only one success you can make out in a challenger bank, which is Kotak over the last 2 decades. That tells you the industry has very high barriers to entry. And at a time when these stocks are trading at all-time lows, or historical sort of recent historical lows, we are constructive over them. The larger PSU banks as well as private banks. We also like pharmaceutical sector for the kind of cash flows these companies are generating. Also, the fact that pharma capex is come off quite substantially. Even as these companies make low return on invested capital today, we expect this ROIC to improve. And we're not worried as much about the US tariff threat, because you can see that all we export to the US is $8.5 billion. And if you look at the company internals, none of this supply is profit making. So Indian pharma is where they make their profits, US is where and when I say profit, it has to make cost of capital. So if more restrictions are put around imports, I genuinely think that the response would be, let's reevaluate our presence in that market. So there's some sectors we like, and otherwise stock specific like infra, oil and gas, all these sectors are also looking good at this point.
Great conversation. Thank you. Well-rounded one. Thank you, Mukul, for joining on. Look forward to more conversation. Need to get into a break, but as we do that, here is some good news for all our viewers. India's business news leader is now just a click away, introducing CNBC TV 18's all-new app. Get instant access to breaking news, our articles, financial world updates at your fingertips. Download the CNBC TV 18 app from the Apple or the Google Play Store, or you could just scan the QR code on your screen.
For only the third time now, the Miss World beauty pageant will be held in India, as the city of Hyderabad is gearing up to host what is literally the world's most popular beauty contest. Miss World 2025, the 72nd edition of the pageant, will be held in Hyderabad between May 7th and 31st, with an opening ceremony scheduled at the Gachibowli Indoor Stadium on the 10th, while the grand finale is all set to be held at Hyderabad's High-Tex Convention Center on the 31st of the month. Now remember, it's the reigning Miss World, that's Kristina Pliskova from the Czech Republic, who won the title in 2023, who will be crowning her successor in Hyderabad. It's not the first time that the event is being held in India. The maiden Miss World to be held in India happened back in 1996 in Bengaluru, while the 2023 edition, which is also the last edition of the Miss World pageant, was held in Mumbai just a year and a half ago. Nandini Gupta, who is the reigning Miss India World, will take on 139 competitors from across the world, or contestants rather, as she hopes to have a go at the Miss World title this year. However, the event is not without its own share of political controversy. The Bharat Rashtra Samiti, which remember is the principal opposition party in Telangana, had raised concerns with Hyderabad's conducting of the event, with BRS leader KTR or KT Rama Rao also saying that a wasteful expenditure of 200 crore rupees was being spent towards conducting the event in Hyderabad this year. In fact, KTR also made comparisons between this event and the 2023 Formula E racing event, which took place in Hyderabad under the BRS government, which also, remember, is under the lens of the Anti-Corruption Bureau in Telangana itself. However, no specific cost estimate has been attached to the Miss World pageant by the existing or the incumbent government of Telangana. However, it isn't the first time that the pageant has run into controversy. The maiden Miss World pageant to be held in India back in 1996 also saw multiple protests from conservative groups in Bengaluru and beyond, saying that the event would go against the traditional family values that India held dear. Subsequently, the swimsuit round of the 1996 edition was pushed out of India into the island of Seychelles in the Indian Ocean. But be that as it may, the 2025 edition is all set to see 140 of the world's most beautiful women descend in the city of...
Welcome back to Trading Hour. Well, natural gas stocks are surging following industry recommendations to the regulator, which could imply higher tariffs for the company. Sudarshan joins in to tell us more.
So first, talking about the news, on 21st of March, PNGRB, that is the gas regulator, has proposed certain changes to natural gas tariff regulations 2008. Now, as of now, these are the proposals, and PNGRB has sought comments by April 11. Once those comments, once the regulator gets the comments from the industry, then those amendments or changes will be implemented. So what is the objective? PNGRB earlier today morning has spoken to the channel, and it says focus of the changes in regulation is to increase the usage of gas, and it expects CNG and PNG companies to benefit as the amendments that PNGRB has proposed will reduce the number of zones. Currently, we have number of zones that are 3. So PNGRB has proposed to reduce it to 2. And second, CGD entities paying higher tariff. Currently, they are paying higher tariff for zone 3. Now will have to pay the lower tariff. Also, benefits will be passed on if volumes increase and by more than, basically volumes increase by of more than 75%. So because there are certain isolated old fields where even if volumes increase, volumes are more than 75%, these companies do not get the benefits. So now PNGRB in the proposed changes is saying that if volumes increase, these companies may be able to recover the operating cost, and that will benefit companies like GSPL and GAIL. Now, brokerage also have written on this. Citi says, first, fuel cost, that is price of contractual LNG, can now be claimed. That will help GAIL. And second, less stringent volume assumptions once volumes cross 75% threshold. That will be positive for GSPL. CLSA says regulations could lower operational expenditure for city gas companies like IGL and MGL. Also, GSPL and GAIL, if these changes are implemented, can see higher tariffs. And the last point is there might be an increase in cost of gas users, including industrial customers of Gujarat Gas. That will be minor negative for Gujarat Gas.
The entity which is far-flung area may be paying a Zone 3 tariff, which was very high, 105 plus, and the Zone 2 tariff is 85 plus. So all those entities, now they will get benefited. They will get basically the Zone 1 tariff, and the 3 zone now get converted into 2 zones. So the focus is that how we can increase the gas usage all across country, because the focus is for CNG and PNG. CNG and PNG, they will get benefit. Few entities or the few pipelines where it is flowing more than 75%. There we are seeing is whatever the excess volume will be there beyond 75%, the benefit will be passed on 50% to the entity, 50% to the consumers. And only another thing is the isolated field. There are the number of isolated fields where there the tariff was basically, now these are the old fields, and what we are seeing, the pipeline which were laid there in those areas, they are not getting any returns on that. Somewhere the tariff is almost nil or maybe in a negative. So there we are seeing that at least they should recover their operating costs.
Well, the other stock we're looking at is Shyam Metallic. It's up 0.5%, but it's come off nearly 3.5% from the day's high. Nigel is joining in with more. Nigel?
Well, that's right. UBS has written a note on Shyam Metallics, and they maintain their buy rating with the target price of around 1,175. They have broken it up into 2 parts. One is on the aluminium foil part, and also the benefit that they'll get from the 12% safeguard duty. Let's focus on the first part first. They say that the anti-dumping duty on Chinese aluminium foil imports, that's going to hold them in good stead. Why is that? Because Shyam Metallics is the second largest producer of aluminium foil in India. And they're plugging in the numbers. They say that they could get an incremental 125 crore rupees in this division itself over the next couple of years. That's because of this ADD that's been, which has been put into place. And the second factor is they're adding additional aluminium foil capacity. So because of this, the net benefit could be nearly around 125 crores to the EBITDA. The second point they talk about is the safeguard duty. That's a 12% safeguard duty on the imports of steel products. They say this could help them improve the EBITDA per ton for the colored coated sheet part of the business, and this would help their EBITDA as well. So put that together, the stock is mildly higher in today's trading session, with UBS giving it a thumbs up.
Thank you very much for that. And with that, it's curtains down on the show. Thank you very much for watching. Don't go anywhere. Halftime report is up next.
Europe, I think, has outperformed significantly, and rightfully so, given that things have gone from really, really bad to perhaps looking better. And I think the fiscal stimulus you're seeing out of Germany has been necessary for so long, but it's not the only thing that matters. Europe still needs a weaker dollar. Europe still needs to find a way to better coordinate financing and giving money to businesses to actually form. So, and Japan, honestly, has been forgotten in the developed market perspective, but Japanese markets actually have the strongest earnings acceleration. And that to me is very, very important looking forward. So Japan, I think, looks very interesting from a global market perspective. On the emerging market side, India is finally bouncing. Like I said before, if we get confirmation and this rally continues past April 2nd, I'm cautioning against leaning into the rallies that we're seeing globally, particularly if we see more of a relief rally in the US, simply because there's a lot that we still don't know. There's been so many starts and stops with respect to tariffs, it's really hard to believe a lot of the headlines that we're hearing from the administration. And I actually think that rather than reciprocal tariffs, which are very painstaking and difficult to put into place and are going to require more time, I think April 2nd is really going to be more about penalizing tariff villains or perceived tariff villains around the rest of the world. So I think India might be in store for perhaps some tariffs that get put in place. But to your point, I don't think it greatly will impact the Indian market. And so for me, what's a really important cue to look for is, can Indian markets continue to push higher in light of some tariff volatility?
There was an unsanctioned car show at the park prior to the shooting. The call for the gunshot victims came in at approximately 10:10 p.m., again on 3/21/2025. The investigation so far reveals that there was an altercation between two groups of people, and that altercation
Bulls charge ahead on Dalal Street with the Nifty cruising past the 100 EMA with a 270-point surge. Financials lead the charge with the Nifty Bank rising over 2%. The mid-caps see momentum with 3 stocks advancing for every 1 stock declining.
The last 5 months was only a correction in an ongoing bull market, says veteran investor and BSE member Ramesh Damani tells CNBC TV 18 that system-wide leverage remains low and there is no economic crisis in India, which makes him confident of the bull market resuming.
Gas stocks are trading with healthy gains on the proposed amendments to tariff regulations by the PNGRB. The new rules may increase tariffs for GAIL and GSPL while reducing gas sourcing costs for city gas distribution companies.
We will not run behind F&O market share. However, the probability of shifting Sensex weekly expiry can't be ruled out. BSE MD and CEO Sundaram Ramamurthy weighs in on this weekly expiry debate, says F&O turnover is down by 40% across exchanges. That too is a CNBC TV 18 exclusive.
A reduction in FPI selling boosts the rupee to a near 3-month high, even as the dollar recovers some lost ground against the euro and the yen. The rupee rises to nearly 85.80 against the greenback, as against Friday's close of 85.97.
A rip-roaring rally, that's what we're seeing on D Street this morning, continuing from last week, this afternoon rather. 270 points on the Nifty, doing extremely well for the Nifty Bank. 1,000 points on that one, with the mid-caps doing a lot better. 2,000 stocks in the green for about 600 which are in the red. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, Hormaz Fatakia. We come to you live from the CNBC TV 18 Motilal Oswal studio. What a day, Hormaz.
Oh, what a day, what a week it has been, what a good last 6 days we have had, and the Nifty continuing to build on from the recovery that we have seen from that 4th of March lows of 21,964, and we are almost about to turn positive on a year-to-date basis as well. 23,644 is that level, and today's intraday high is 23,643. So we are almost there, about to turn positive yet again on a year-to-date basis for the Nifty, and good going for the broader markets as well. As Mangalam was mentioning, the Nifty Bank is up 1,000 points. The mid-cap and the small-cap indices not too far behind either, and it is some of these gainers, some of the beaten-down names that are doing well in today's trading session as well. The Phenolix Cables is one of them. It was one of the lesser degree of fall that we saw when Adani had announced their foray into the cables and wire space. That stock is among the top gainers on the Nifty 500, 13% higher on that stock. Phenolix Cables is the stock that I'm talking about. There you can see at the highest point of the day is Phenolix Cables. Phenolix Industries too is trading with gains of around 11%. And Sun Pharma Advanced, we spoke about this on Friday, was among the top gainers on the Nifty 500, continues to remain so in today's session as well. Sun Pharma Advanced, Spark is what I was mentioning, SPARC, that too is up over 9% in today's trading session. Some of the other PSU names, be it IREDA, HAL, RailTel, all of them, Bharat Dynamics continuing to do extremely well in today's trading session as well. But the one that is not doing well though in today's session, on the flip side in a market like this, is Titan, and that is after an Ambit note where the brokerage has warned of a slowing growth momentum in the fourth quarter, Mangalam.
Yep, if you remember all of last week, Titan was actually fairly well bid, and this morning it is seeing some bit of pressure. The important part here is Ambit believes that maybe because of rising gold prices, there could be a near-term risk to their demand growth itself, and growth momentum they expect may moderate in the fourth quarter for the jewelry sector itself. In the third quarter earnings call, the company had indicated a strong start to the fourth quarter, but they also flagged a pause after the first 3 weeks of Jan due to a sharp rise in gold prices. So to that, Ambit says the channel checks do suggest weaker revenue growth momentum for Tanishq in both Feb and March, and this puts that 22 to 29% growth built by them and consensus for the fourth quarter at risk, which implies that there could be a cut of nearly 2 to 3% for FY26 and FY27 estimates, assuming a 15 to 18% growth in the fourth quarter as against the 22 to 29% which was assumed earlier itself. And this near-term revenue pressure and the uncertainty on margin puts Titan's 50 times FY27 earnings seem expensive. So they believe the better way to play the consumer discretionary recovery is via Nykaa and Sapphire. Truth be told, Nykaa has been outperforming when it comes to the results as well. And if you look at Sapphire, there has been a wave of up move that we've seen in all the quick service, restaurants and the names out there as well. Case in point, not just Sapphire, which has the lowest, valuation multiple or highest valuation comfort. Look at something like a Jubilant Foodworks as well, which now as we speak has seen a big up move. And Titan's, weakness may be looked at as an opportunity for other gold companies to see a purchase. Case in point again, Senco continues to do well for 5 trading sessions, has been hitting that 5% upper circuit mark. We had the management join here and say that they are buyers in the open market. Kalyan Jewellers, for instance, as well, seen a big gash from the top itself, and at lower levels finding some buyers. Beaten down name, stock up around 4% on that count as well. Titan perhaps may have benefited from some money going out of these companies. Now, these companies may benefit if some money goes out of Titan as well. So we'll keep an eye out on this entire space fairly exciting from a consumer discretionary standpoint.
Indeed, and some bit of profit booking, of course, as you mentioned, right, after the move that the stock had last week as well, 2.5% lower, Titan among the very few losers on the Nifty this afternoon. But moving on, CLSA has come out with a note on the IT sector at their fourth quarter preview, where they say that the uncertainty is already priced in for the sector, and they added that a lot more pessimism is already built into the current valuations than the potential earnings cuts. Rima is joining in with more on this. Rima, what does CLSA have to say?
Indeed, they believe that the uncertainty is priced in because the Nifty IT index has fallen 15% so far this quarter, while the Nifty is only down 1%. So it's underperformed to a great deal, and this underperformance captures the pessimism and the potential earnings cuts to their mind, and even a weak Q4. Now, but they do acknowledge that the tough and uncertain macro will result in a postponement of discretionary demand by 1 to 2 quarters, particularly impacted sectors like manufacturing and retail, where the impact of tariffs will be held. So there will be pain over there. So they've lowered the revenue growth forecast for Indian IT companies by 3 to 4%. So that's pretty substantial. But the EPS impact cut will be fairly limited, 1 to 3% on account of rupee depreciation. So the top line will be under pressure in FY26, but there will be focus on cost optimizations, where a lot of Indian IT companies have a right to win. So they particularly have upgraded HCL Tech to an outperform rating, because they're saying HCL Tech has the capacity to continue to post industry-leading growth even in FY26. They also like the other large caps, Infy, HCL Tech, Wipro, Tech Mahindra. They've upgraded LTI Mindtree to an hold from an underperform rating. And just to put on board, because this is a preview note, this is what they're expecting for the full year in terms of guidance. For Infy, 2 to 5% kind of a top line growth, wider than usual on account of uncertainty. For Wipro, for HCL Tech, 3 to 5% kind of revenue growth this year in terms of guidance. And for Wipro, they will give a Q1 guidance, that's for the June quarter, 0 to -2%. Back to you.
All right, Rima, thanks a lot for that, for talking us through what's looking like in the IT space, the preview coming in from here. But we'll take a short break, and as we do that, let's get you some good news. It's India's business news leader, which is the CNBC TV18 all-new app. It's on your fingertips, via which you can get access to breaking news, in-depth articles, all the financial world updates, all of them at your fingertips. You can download this CNBC TV18 app from either the Apple Store or the Google Play Store, or just scan this QR code, which is there for you on your screen.
To gunfire between both groups. Several other people were also injured in the crossfire.
Welcome back. 23,624 is where we are at the index, seeing some bit of resistance around that 23,650 mark, at least for now. It's interesting to see how the second half shapes up, but some flashes on your screen that Mahindra & Mahindra is in talks to buy out the entire promoter stake in SML Isuzu, and that's a CNBC Awaaz exclusive. And that's the news that's flashing on your screens right now. And they are also expecting a valuation of around 1,400 to 1,500 a share for SML Isuzu. We'll get more details on this as the show goes by. But as of now, the stock of SML Isuzu is seeing some bit of movement, but Mahindra & Mahindra continues to trade around the lows of the day.
You know, it's a very interesting development this happens because SML Isuzu, what we understand, has been on the block for a very, very long time. Earlier, there have been reports that, you know, someone like a JBM Auto may perhaps show some interest in SML Isuzu as well. Time and again, whenever the managements did join us of either SML Isuzu or JBM Auto, we've quizzed them on this itself, with them obviously saying that they're always in talks and there's nothing new to report. So the short point that we understand right now is that SML Isuzu is on the block. JBM Auto may not be the person who is going to buy it. M&M will be the company that will buy it. But it's interesting that if JBM Auto is not the one who is buying it, then does that save them the cash to go ahead and buy something else? That's the reason why that stock too, after seeing a bit of a drubbing, has seen a bit of an up move. So if you pull up something like a JBM Auto, that stock's actually up in double digits, up 10.5% on the news that they are not the ones who are buying SML Isuzu. But between 1,400 to 1,500 per share for SML Isuzu, it's actually a 200 rupee discount to where it's currently trading, notwithstanding the up move that it's seen from lows already. So, you know, it'll be very, very interesting to see how this does go by. But for M&M, they have the balance sheet strength, and at the same time, this falls in line with their expansion plans with regards to the trucks and buses segment as well. Positive from an M&M standpoint, positive from a JBM Auto standpoint, they don't have to pay top dollar. Perhaps a positive from an SML Isuzu standpoint as well, despite it being a near-term negative, because the price is a lot lower than what the stock is trading at right now. So we'll keep an eye out on this development as it moves on. We'll get more details on this as well. But speaking about that, let's talk about the markets in general. Ramesh Damani, the veteran investor, discussed the market rebound and why he feels that the bull market run has resumed. He also told us why he's not too concerned about the direction of FII flows.
The good news would be is that, in my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market. Okay. What happened was the first correction in 4 or 5 years, it was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, you know, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. Secondly, more importantly, in the last 60 to 90 days, I put I had the road, rubber meet the road, went and visited a lot of companies, just try to get feedback on what things are in corporate India out there. And almost universally where I went, people are talking about expansion, talking about growth, talking about margins, talking about profitability. So this was more of a market event than an economy event. There's very little leverage in the system. Banks are not leveraged. The stock market is not leveraged. So it was just a correction of valuation, which had probably become excessive, took place, and now we're resuming the bull market that began in 2021.
Well, that's really good to hear because, yeah, absolutely. I mean, we couldn't really pinpoint an economic crisis or a financial accident which triggered this. It kind of, just happened on its own. On valuations, and that's why it's a little, important to understand both valuations and the power of flows. Domestic investors were pretty much buying throughout it, and yet the market fell because we were being hit by 8,000 crores, 10,000 crores of foreign selling on a daily basis, right? Now they've stopped selling. In fact, now first trickle of buying has come through. So while we can't predict flows, perhaps we can't underestimate the relevance also, right?
You can't. I appreciate that. And a lot of my friends pay a lot of attention to the FI number, which I really don't.
Okay.
Because anytime there's a transaction on the stock exchange, there's a buyer and a seller. So if the foreigner is selling, someone is buying at the other end. Stocks don't go in a zero hole on the ground. I mean, there's always a buyer at the other end of the stock. So things are being bought. Someone who thought it was expensive of selling it or booking profits. Someone was thinking it's value and he can make money, so he was buying it. So, that takes it. Of course, it's important. I'm not denying the importance of the FI number out there. But I don't particularly pay too much attention to it. It's just one of the things we look at out there. What we particularly pay attention to is on the ground, what's happening. Is the company, how is the company dealing with the Trump tariff? How is the company dealing with inflation? How is the company dealing with the changing technology environment? I think those are more relevant questions for an investor to ask in a bottom-up manner. And I think that's just noise that you can't control. The FI is going to sell tomorrow. How do you control that? If oil spikes up, you can't control that. If Ukraine war ends or does not end, you can't control that. But you can control what you buy. And you want to buy those businesses that are, doing good, bulletproofing themselves. And which is what I've done, which is what has been very successful over the last few years.
Fantastic. Take your point completely. There's always a buyer on the other side.
There always is. So, what does it matter?
The color of money doesn't matter. There's someone putting in the money.
Psychologically, it matters, but actually it doesn't matter. The shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on the large street, as everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that, wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital, but they have a right to sell and I don't begrudge them that.
So absolutely, Ramesh. I completely agree with you. May this wave of domestic money, may it become a tsunami and may it continue for all our sakes. But my question was more regarding valuations and whether so much of domestic money continuously coming in the market, whether that will create its own valuation challenges.
Surbhi, the market has a self-correcting mechanism, which we just saw. The index fell, 10-12% from the peak. So it has a self-correcting mechanism built in. When valuations get too high or too stretched, someone on the other side will say sell, and it cannot be absorbed by the market, which is exactly what happened. So why worry about it? It's market has a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraint. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market. And market will correct itself. Anytime the valuations of something become excessive, people step in and sell, insiders sell, someone sells, and that creates a buying opportunity.
Yolsuzluk operasyonu üzerinden milletimizi provoke etmeye kalkıştılar. 4 gündür milletin huzurunu kaçırma, insanlarımızı kutuplaştırma adına ne varsa hepsini yapıyorlar. Önlerine gelene hakaret etmekten, sadece görevini yapan polislerimize saldırmaya, yolsuzluk ihbarlarını araştıran yargı mensuplarımıza gözdağı vermekten, sokak terörüyle milli iradeyi baskı altına almaya kadar ne ararsan bunlarda her şey var.
Welcome back. And just before we went into this break, we were talking about that exclusive news break that CNBC Awaaz had put out with regards to M&M looking to acquire the entire promoter stake of SML Isuzu. And the stock is also seeing some bit of recovery from the lows of the day. Yatin Mota of CNBC Awaaz, who had this news break, is joining in with more details on this. Yatin, what are your sources telling you?
What we gather from sources that Mahindra & Mahindra has initiated talks with Sumitomo, which is the parent of SML Isuzu, for a potential stake buy. Sumitomo currently holds 44% stake and has publicly stated that they would like to exit lower profitable businesses as well as smaller businesses of the group, which includes SML Isuzu. Now, what we are gathering is that Mahindra & Mahindra board is likely to meet shortly in this week for making a decision on the transaction. However, sources also added that the valuation that M&M is seeking for the stake, is broadly 1,800 to 2,000 crores, which would be a slight discount to the current market price. However, when we contacted Mahindra & Mahindra for this particular stake buy story, Mahindra & Mahindra said that they will not comment on the story since it's speculative, and there is a comment still awaited from SML Isuzu. But broadly, what we are gathering is that Sumitomo has accelerated the divestment process for SML Isuzu, and the Mahindra & Mahindra board will shortly meet to consider this particular transaction.
All right, will be very interesting to see how this goes. Yatin, thank you so much for breaking that for us. Mahindra & Mahindra, which was under a wee bit of pressure, has now ameliorated from the lows, currently at the high point of trade, still lower by about 1.5%, but has seen a fair amount of recovery. And SML Isuzu itself, which was trading at a firm premium, has now come off. So the intraday chart of SML Isuzu comes up for you from that big spike after the announcement was made to the price discovery that came by in terms of a valuation that Yatin just spoke about. So the stock has seen a bit of a dip from the top as well. And amidst all of this, the one that continues to gain is JBM Auto, perhaps on the back of not having to spend that kind of money for this acquisition, at least in the near term, some easing on their balance sheet. Take a short break, come back, get you more on the markets and a lot of individual stock specific details. But as we do that, before we take that short break, it's also a good time to get in the FNO perspective on the market right now, doing extremely well. We have, the Nifty up nearly 300 points, the Nifty Bank up 1,100 points. So big moves that are taking place across the board. The Nifty Bank is up 2%. And it's the Nifty Bank which is extremely crucial, because this leg of the rally over the last few trading sessions on the Nifty has been led by the Nifty Bank. Fair and square. It's above the 20-day moving average, above the 50-day moving average. The 100 and the 200-day moving average have been crossed as well. It's just 5% away from its 52-week high. And if you look at the key technical levels, the Nifty has crossed the 50-day moving average and holds above the 100-day moving average today. The Nifty Bank is above all of them. The 200-day moving average, which the Nifty Bank has crossed, which was just under that 51,000 mark, for the Nifty, that mark is at 24,000. So just keep an eye out on that one. The Nifty 200-day moving average, if that was to come by, then 24,000 is the mark that we'll keep an eye out on. We'll also keep an eye out on India VIX. India VIX, even as the markets moved higher, has spiked in expiry week, telling you that maybe from here on, the gains may not be as easy as they were in the last 5 or 6 trading sessions, though where it goes and how it goes is something that we'll most definitely watch out for. The one thing is clear, that the base has definitely moved higher. 23,500 put writers are active, 23,600 put writers are active as well. So we have to be comfortable with life above that 23,500 mark on the Nifty for sure. On the way up, this up move today has been caused further short covering in the 23,500 call and the 23,600 call. What it's also done is it's made some of these 24,000 call buyers a little greedy. So there's been punting at the 24,000 call. Remember last week there was purchase at the 23,300 call for 1.5 rupees, and now the 24,000 call, the ones that expire on Thursday are trading at 32 rupees a premium. So just keep an eye out on that one. And NMDC is the one stock I'm watching out for, may exit FNO ban with the kind of decline that we've seen in open interest here.
I tell you what, the bulls will definitely be comfortable with life above 23,500. And just as Mangalam was describing his FNO setup, the Nifty has turned positive on a year-to-date basis. 23,644 is the level that it had to cross. 23,647 is where the index stands right now. So a 100 beckoning for the Nifty, almost there as well. 23,650 now is where the index stands. Manish Hathiramani of Deendayal Investments is joining us now for a quick chart check. Manish, good afternoon. Thank you for joining in. Is 24,000 all but done now on the index? What are the charts indicating here? And couple that up with your stock recommendations as well.
Good afternoon, Hormuz and Mangalam. Thank you so much for having me on the show. Well, we are nudging very close to that resistance of 23,600 to 23,650. I feel it's a mere formality, but because it's a technical level, we must respect it. If we can keep above this level on a closing basis, I think our next move will straight away be to 24,100. Giving my stock recommendations, I'm working with two buy calls. The first one is on Bharat Electronics, which is for a target of 330, stop loss of 290. After taking support at lower levels of 250, the stock has broken out in a strong uptrend, having crossed multiple short-term resistance levels. We have even now triggered the short-term high of 300, and that should propel the stock to a newer high. The second one is on Reliance Industries for a target of 1405, stop loss of 1210. 1250 was a stiff resistance for the stock, and we have crossed that on the back of good volumes. 1320 to 1330 is the next level of resistance. Once again, because chartical parameters are strong, we expect that the resistance will fly through, and thus the stock can move higher.
All right, Manish, thank you so much for sparing time, joining us with your views on the index and on specific stocks as well. The Nifty 23,650, 300 points higher now on the index. Cannot complain if you are a bull, turning positive for the year as well. We take a short break. Up next, we get you excerpts from their exclusive conversation that Mangalam had with the management of Pidilite on the growth outlook going forward. Stay tuned.
Welcome back. Pidilite is the stock on our radar. The leadership is undergoing a rejig, a transition, and I caught up with the outgoing MD and the incoming MD of Pidilite in an exclusive conversation to sit down and talk about their growth strategies going forward, and more importantly, asking how the company plans to expand beyond their core categories itself and increase the share of growth as well in pioneer categories. Let's listen into this extremely interesting conversation that I had with Bharat Puri and Sudhanshu Vats.
As far as pioneer categories are concerned, we have a very simple 2x2, which is A, channel, and B, consumer. On the other side, the right to win and the customer. When we have at least 3 of the 4 ticked, then it's a shortlisted category. I have 2 of my most senior managers who actually were pulled out of CEO jobs at Pidilite, and who actually scour the world, look at affinity markets a few years ahead of us, so on what could be emerging categories in the home improvement space. Right. They will come with a long list. We will then look and see, listen, this makes sense. Yes, here we have a chance to, for example, create the category. We will then put in a mix and pilot. Normally test product first, then pilot. The wonderful thing is, as you and me speak, we have at least 10 pilots on the market.
Okay.
But those happen below the radar. Once it reaches a certain, meets a certain set of action standards, we then say, okay, ready to be pioneer category. Now the button is pressed. It should be approximately 100 crores in 3 years.
Got it.
It then becomes a growth category. Fortunately, India is a lovely growth market. So for a growth category to become a core category is a much longer runway, because then you have to say that, listen, largely the category creation task is done. It's about now growing the category via innovation or via premiumization or via sales and distribution. So like say things like waterproofing or tile adhesives. I mean, waterproofing, 4 out of 10 fellows are doing any form of waterproofing. Tile adhesives, 1 out of 4 guys are doing any tile adhesive. So until this becomes 3 and as that 4 becomes 8, these will still be growth categories. And the wonderful thing is there are lots more growth categories waiting in the meantime.
Yeah.
Core is clear that, listen, I mean, the biggest mistake any company can make is assume that the core is mature. And a lot of times fellows will say, okay, listen, oh, this is a mature category. Well, there are no mature categories. There are only tired managers. Right?
That's a good one.
So as far as we're concerned, core categories must lead the growth. You must grow 1 to 2 times GDP. Hopefully, when we correlate well to GDP growth. So the core category should grow at GDP, and then your own efforts, whether they're at innovation, whether they're at premiumization, whether they're at sales and distribution, should give you that further multiplier. And when we look back over our last 10 years, I think that's been one of our formulas where from 80-20, core 80-20 to growth and pioneer, we're now pretty much 55-45, 52-40, let's just say 55-45. That itself has given us a flywheel for growth. So every quarter when you come and harass me and ask me, this double-digit volume growth, why are you guys doing it, the others not? And I said, probably the portfolio and the sector that we are in makes a lot of difference.
Now I'll be harassing him a lot more. What has been the success ratio from, piloting to pioneer, from pioneer to, growth, and from growth to core? What is the failure rate among each of these, so that we know, okay, if you're working on 10 ideas, as Mr. Puri said, one of them could perhaps become a core at some point in time?
Yeah. So, Mangalam, it's a great question. While I may not be able to put a number to it, but I'll tell you how we look at this at Pidilite. So, one thing which, and Bharat touched upon it just a little while back, I think one is that we have enormous patience during the piloting stage as well, where we keep doing do, learn, do. So we are never in a hurry to say, okay, this is not working, shut it.
Okay.
Does that mean that everything which we do succeeds? No. But the point is that we are enormously patient. We do a lot of do, learn, do. We take a lot of feedback. So one of the strengths of Pidilite, actually, and not only in developing pioneering, but it's become a part of DNA because of this journey, is that you continuously take feedback and you continuously iterate. So there is this concept of continuous improvement and so much focus on execution that you keep asking, what are the things which have not worked well? How can we make that better? And the focus, Mangalam, compared to many other companies, having had worked with many other very good organizations, I can tell you the focus is first and foremost on seeing what could we have done better. Because most of the time the tendency is, oh, this is not right, the market is sluggish, as we were just talking about, or the consumer is not ready. But the first question you have to ask is that, what have we not done right? So I think that philosophy keeps making. You would see that a lot of our pioneering categories have got into growth. The latest example I could share with you is that of Roff.
Yes.
And it is a very promising growth category, continuing to do very well. But I think we've had many such examples as we.
You have earmarked your growth targets, 10% volume growth year on year, along with the margin band that you've spoken about, growth coming in from core categories, growth categories, pioneer categories as well. When I look at your business, say 5 years from now, and I'm speaking to Sudhanshu, what would you see as the revenue mix of the company? How much of that would come from international? It's 55 core, 45 growth and pioneer right now. How does the revenue mix of the business Pidilite look like?
Yeah, so let me answer at two levels, Mangalam. I think one is we are not very fond of giving out a number, but the mix is a good question you've asked. So I think, when we started this journey and spoke about it 20-80, and now we are close to about 55 core or 80-20, 80 core, 20 growth and pioneer. Now we are 55 core and 45 growth and pioneer. Our sense is this is a near equilibrium. So therefore, because to the question you would ask some time back, which is that, what happens is pioneer becomes core and then, growth and growth becomes core.
Right.
So therefore, there will be a mix of that which will be happening, and we are at a pretty healthy equilibrium in my opinion. 50% give take here and there, a little bit of points. So that is what is the mix, if I could say that. And I think from the point of view of the second thing you said, 5 years out, on the international piece,
Yes.
I think the second part of your question, see, we are currently 10% plus on our international composition. Our thinking is that we will continue to remain focused in emerging markets where we can replicate the success of India and the model of India onto those markets. And these markets, as you clearly know, are South Asia, Africa, maybe parts of Southeast Asia, and we also have presence in Middle East. So I think we will continue to build and strengthen our presence in these markets, drive these markets further, and therefore the ratios will keep inching upwards. Now, what that ratio would be is perhaps unfair for me to at this point and say we are 10% plus, we will keep getting better. We will be an emerging markets multinational company, which is something we have stated. We are steadfast on that journey.
And how much comes in from paints?
That's only astrologers can tell me.
Interesting conversation out there. There are no mature categories, only tired managers. And the question for Pidilite always is, what could we have done better as against looking at the external environment? This conversation is full of such nuggets. What you can do is catch all of this conversation today at 5:30 p.m. only on CNBC TV 18. Take a shot.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV 18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV 18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV 18 and CNBCTV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we
Welcome back. 285 points higher on the index, 1,000 points higher on the Sensex now, and the rally that started from the 4th of March when the index had made that low of 21,964 is gaining strength even further. A 6th straight day of gains now for the index, and it's almost 1,700 points now that the index has gained from those lows. So stocks that have hit a 52-week high in today's trading session. Kotak Mahindra Bank is one of them, 4.5% higher on that stock. Chambal Fertilizers too having a good day at the office today, 3.75% higher there as well. Bajaj Finance continues to make new highs in today's session as well, 9092 now on Bajaj Finance, and at least 5 analysts who have coverage on the stock expecting it to cross 10,000 and beyond, with CLSA now even projecting the stock to hit 11,000 rupees going forward. Some of the other names that have hit a 52-week high include Shree Cement. Of course, Ramesh Damani was alluding to this in his interaction with CNBC TV 18, that despite a falling market, stocks like Bajaj Finance, Shree Cement were making new highs, and that too having a good day today, 1.5% higher on Shree Cement as well. But we take a short break here on Halftime Report. On the other side, Manisha Gupta joins in with Anindya Banerjee of Kotak Securities. Stay tuned.
of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
What happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time. And that has profound changes in the world, because whether we like it or not, America is the most important, most significant player in the world today, whether politically or economically. But the fact that they were turning inward meant the world would be a very different place. So while I keep hoping that the past is prologue, that what happened in the 40 years that gave us so much prosperity and peace and, you know, a good standard of living will continue, I feel that the world is about to change. And I think as investors, we have to be the first to notice that.
So it's not so much about left, right or center. It's not so much about your, political stance. It's more about whether you are inward or outward looking, from what you're saying, whether you're integrated. And that's under cloud. I mean, the whole globalization era and that boom, that itself is under a bit of a question mark in this new world that we're in, right?
The good news is, the bad news is that yes, it's under a cloud right now. It's under a very serious cloud. That's why I've told you the axis was changed. The good news that is my personal belief and my personal call that these are irreversible changes, that you could delay globalization by another 3 years or 4 years. I doubt if it's even that long. You can delay a world where, the strong prey on the poor, which is what is happening now with the spheres of influence, as Donald Trump is calling it, that Russia controls Europe, we control North America and South America, and China controls Asia. So all that is being questioned as we speak right now. But I think it will delay globalization, it will delay international system. It cannot deny it because the human arc works towards progress. And it's very hard for me to believe that we will go back to a mercantilist policy, a tariff-based policy, as Trump is advocating. Either he will change or democracy and the people's aspirations will force him to change. So while we are going through a very difficult period right now for the global economy, I don't think it's going to be the lasting change in the world. The lasting change is towards free markets, prosperity, trading.
Is US exceptionalism, for the time being at least, is it ending? Do you see the US market topping out?
I think Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. See, this is what he's trying to do if you try to sort out all the madness and see what is the Colonel is trying to do. He believes that American manufacturing has been hollowed out. You know, America imports almost all its critical stuff other than technology from China, from Vietnam, from Philippines, from India.
Joining us now is Anindya Banerjee. He's Senior VP Head of Research, Currency and Commodities Interest Rates at Kotak Securities. Anindya, hi. Thank you so much for joining in. And it's a week that has started with some bit of a profit taking in gold and silver. But even before we get to that, and since you follow currencies very closely, the kind of appreciation that we've seen for the rupee, 85.75 at the last count, how are you looking at that?
Thank you for having me, Manisha. Indian rupee is playing a catch-up to what's happening to other currencies again. The US dollar. So US dollar index is down almost 7% from the this year's highs from mid-Jan. So Indian rupee is playing that catch-up, aided by the lack of selling from the FPIs in the equity market, a bit of inflows in debt, and especially we are in the financial year end, and we tend to see a lot of selling from the exporters into the market. So all those factors in combination has created this nice rally in the Indian rupee against the dollar, and it may continue for a couple of weeks more.
And then there are all those reports about rupee going to 89 and 90 and 91 when it just went to 88 are now out of the whack. And as you said, you're looking at more appreciation going in. Is that the kind of scenario that we might see continuing for the rest of this year?
Manisha, this appreciation could be a short-term phenomena because the trade war threat is not over, and the reciprocal tariffs are set to kick in from April onwards. And we continue to expect that the trade war between China and US will intensify in the coming months and quarters, because the whole policy of the Trump administration is America first. So you can't have America first and globalization going hand in hand, because they're completely opposite. So we expect the trade war to intensify, and that can have a negative impact on emerging market currencies. But for the moment, next few weeks, let's enjoy the appreciation in the rupee.
All right, as you say, how are you looking at the gold and silver prices, and gold especially, because we've seen all-time highs and then some, restraint there, trading nearly $30 from those kind of highs. There's been a lot of investment buying, yes, the retail jewelry buying in India, China, not much to write home about. How are you looking at the prices? Is the high for the near term done for this too?
Right. So if we look at the COMEX positioning, so the CFTC report as of last Tuesday, that report clearly indicates that the speculative length has been at record levels. And that is one of the major reasons why over the past couple of sessions, we have seen a profit-taking dip. So we think that a bit of money could be rotating from precious metals into equities, because equities between Jan, Feb, and March had fallen down, and the precious metals has gone the opposite way. So a bit of money could be rotating. That is also causing this correction. But again, the medium-term outlook is quite bullish on gold and silver. So let's say on MCX around 86,000, 86,500 is a very strong base on gold. On silver, around, let's say, 96,000 to 96,500 is a very strong base. So we expect these levels where the long-term investor may come in and accumulate more. And over the medium term, we could see levels of 1 lakh or even 1,03,000 in silver, and 88,000, 89,000 on gold on MCX.
Point taken. I also want to talk about copper, because the kind of headlines this one seems to be making are more sustaining right now. We've seen 12% of gains on LME in this year, and we've seen 25% of gains on COMEX until time in sense of copper. The kind of price disparity that we have started to see
with the US and China, both major consumers for the metal, and of course the rest of the world as well. How are you looking at that making sense to prices? Would you say much has been factored in, and from here on, what fundamentals will you watch out for, and what's your price sense?
Right. So one of the markers which a trader needs to watch now is the spread between LME and COMEX. That's currently hovering around 14% because the market is factoring in the 25% possible tariffs on copper in America. So this spread is very important because over the past 3-4 weeks, what we have seen as a spread has actually increased. The global prices of copper has also gone up. So that will be one particular marker which short-term traders should watch. If that spread starts to contract, it could be a sign that the immediate speculative buying is getting over. But as of now, copper is in a bull run, and we could see levels of 930 or even 940 on the MCX. That's our expectation.
Barring copper, any other metals that you have an eyesight on? Because we've seen aluminum prices hold firm. Zinc also did see some stronger fundamentals come in. At this point in time, slightly directionless in the trade though.
So aluminium has had a fantastic run, as you said, yes. So rather than aluminium, I'd be actually focusing on zinc because zinc has had a bit of a strong consolidation below the levels of 270 on MCX. So we could see levels of 295 to 300 over the next few weeks. So that will be one counter apart from copper where I could look for the upside bets.
A final word then on the crude oil prices, and we've seen 2 weeks of gains onto this one, and this is the third week that we're looking at prices almost holding well. One, of course, is the OPEC and allies. The second is what's happening with Israel and Gaza all over yet again.
Yes, in crude, actually, if you see that we don't have a very strong factor to create a trend, be it up or down. And around the 65, 66 levels, dollar a barrel on the WTI, it has formed a strong base in the last few years. Every time it has come there, it has bounced. So this time too, we have seen a bounce from around those levels. So we could see levels of, let's say, $71, $71.5 on the WTI. But nothing spectacular is expected here. It could continue to be in a broad range.
Okay.
All right, nothing spectacular expected in crude. That should do well for the Indian macros. Thank you so much for joining in, Anindya, and giving your views on a whole host of commodities. Manisha, for taking us through with that conversation as well. As we speak, these gas stocks are doing extremely well. GAIL is up 5%, but the most notable gainer in the last half an hour has been SML Isuzu, which after the news break continues to do well. Was a little volatile. Remember, the valuation that Mahindra is seeking as per Yatin's story is close to 1,400 to 1,500 rupees per share. The stock continues to surge higher and is now above that 1,738 odd mark itself. We call time on this edition of Halftime Report. Stay tuned. Business Lunch takes all the market action ahead.
So this is what they've done. They first reduced the tax rates in America. They made the corporate tax rate 15% or so. They're jawboning the Fed to cut the interest rates. And they're building tariffs so that domestic industry can do well. So they want to bring back manufacturing and manufacturing jobs. That is the constituency that elected Donald Trump to America.
Yeah.
Now, unfortunately,
it may not even be most cost effective, which is the debate raging right now.
It is absolutely not. And that's the whole point I'm making, that when economics meet reality, economics is going to win. You know, it's just, you know, it's like when the Titanic hit the iceberg won. So the economic reality is economic reality. You can't make jobs in America or pay people in terms of inflation when the same product will be available for 30-40% cheaper if you import it. It goes back to what Adam Smith said about specialization in the world. I think America, for all the leadership and intellectual leadership it's shown to the world, is losing that moral supremacy that it had in the world as the one superpower in the world, the one defender of democracy.
That's sort of getting me to the next question. So if you're saying that for the time being, maybe there are some speed breaks on the whole American equity story. What we've seen in the past, well, the last many, many years, that every time they say, America, sneezes, the world catches a cold. So if that were to play out, and let's say the American economy starts slowing down, American equity market starts faltering, in the past, we've seen everybody falls. Could it be different this time?
No, we will falter. I mean, there's no doubt about it that America is such a big, important economy that America squeezes the rest of the world, catches the cold. is very true, particularly in emerging markets. But I personally feel that given that these are now considered permanent changes in the world, so you see what's happening in the world. China, India, Russia created their own trading bloc called BRICS. France has already made a declaration that it will now be the nuclear armament of Europe.
Yes.
So these are important changes in the world. So if America wants to go backward, the world will move on. The world will figure out different alliances, different prospects to take. And no doubt that they will move on. It is to America's detriment to realize that they were the centrifuge force in the world. And they are relinquishing the space.
Aside of India, just for a second, if I were to ask you, Bulls charge ahead on D Street with the Nifty cruising past the 100 DMA with a near 300-point surge. Financials lead the charge with Bank Nifty rising 2%, mid-cap see momentum with 3 stocks advancing for every 1 stock declining. The last 5 months was only a correction in an ongoing bull market, says veteran investor and BSE member Ramesh Damani tells CNBC TV 18. The system-wide leverage remains low and there is no economic crisis in India, which makes him confident of the bull market resuming. Gas stocks trade with healthy gains on proposed amendments to the tariff regulations by PNGRB. The new rules may increase tariffs for GAIL and GSPL while reducing gas sourcing costs for city gas distribution companies. We will not run behind FNO market share. However, the profitability of shifting Sensex weekly expiry can't be ruled out. BSE MD and CEO Sundaram Ramamurthy weighs in on the weekly expiry debate, says FNO turnover is down by 40% across exchanges. That's a CNBC TV 18 exclusive. Strong dollar selling by FPI, an exporter pulled up the rupee to a 2.5-month high. The exporters are in a rush to bring in dollar before the month end, while speculators are finding it very expensive to stay long dollar given month end positioning. Dealers say hello and welcome to this edition of Business Lunch on CNBC TV 18, coming live from CNBC TV 18 Motilal Oswal Studios. I'm Winnie Motiwala. Thank you so much for tuning in as always. Monday, not a bad Monday, right? Yesterday, I beg your pardon, last week actually, all the days that were trading in the green, and now today also that momentum is continuing. You can see at the top of the screen, Nifty up 1.5%, mid and small cap doing well in tandem with the benchmark indices. Nifty Bank also managing to see that outperformance today. Let's see that Nifty Bank, very interesting number there, 2% uptick coming in for the Nifty Bank. And on that note, I'm going to request my directors to actually pull up the contributors for Nifty 50, because that is something that is very, very, very interesting, right? The banking names coming in: Kotak Bank, ICICI Bank, HDFC Bank, SBI, among the top performers coming in for the Nifty 50 and top supporters coming in for the Nifty 50. Look at the contribution in terms of points. So all of that surely supporting some bit of an up move over there. On the flip side, M&M, Titan, Infosys, IndusInd Bank, a bit of a drag coming in on that front. But Nifty 23,600 is what it's managing to hold on to. Continued that momentum in terms of gain that we saw coming in last week. And in terms of top sectors, obviously bank is something that is doing well. Other than that, realty names, that is managing to hold on to do well. So look at Nifty Realty, right? Top gainer, sectoral gainer other than Nifty Bank. And in that, when you're looking at it, we have Lodha, Brigade, DLF also has picked up momentum. Do not forget, on Friday there was an analyst meet. We had some commentary that came in from the company in terms of their launches that they have planned, when do they want to become net debt free completely in terms of gross debt that they have on a group level. So interesting commentary that came in on that front. Did slip into the red but has recovered from the day's lowest point. So yes, that's what we're looking at in terms of a market. A good day coming in.
hoping for this to continue in the second half of the trading session as well. But let's move on, and gas stocks today, that is a trend that is there as well, with healthy gains that are there on proposed amendments to tariff regulations, and this is by the PNGRB. Now, in fact, earlier today, we did speak to Gajendra Singh, a member of the PNGRB, who spoke about the benefits the gas companies will actually receive from this. So listen in to what he had to say.
The entity which is far-flung area may be paying a Zone 3 tariff, which was very high, 105 plus, and the Zone 2 tariff is 85 plus. So all those entities, now they will get benefited. They will get basically the Zone 1 tariff. And the 3 zone now get converted into 2 zones. So the focus is that how we can increase the gas usage all across country, because the focus is for CNG and PNG. CNG and PNG, they will get benefit. Few entities or there are few pipelines where it is flowing more than 75%. There we are seeing is whatever the excess volume will be there beyond 75%, the benefit will be passed on 50% to the entity, 50% to the consumers. And then only another thing is the isolated field. There are the number of isolated fields where there the tariff was basically, now these are the old fields, and what we are seeing, the pipeline which were laid there in those areas, they are not getting any returns on that. Somewhere the tariff is almost nil or maybe in a negative. So there we are seeing that at least they should recover their operating costs.
Okay, keep an eye out on those gas stocks today. They are in focus. But let's move on. And sources tell CNBC TV 18 that the new SEBI chairman, Tuhin Kanta Pandey, will discuss easing disclosure regulations for FPIs in his first board meeting since taking over. Yash is joining in with us to give us more details on what should we be expecting from this meeting today. Good afternoon, Yash.
Good afternoon. So, of course, this is the first board meeting at the market regulator SEBI stable under the new chairman Tuhin Kanta Pandey. 3 most important things that will come up for discussion. One is easing the disclosure regulations for foreign portfolio investors or FPIs. What does this particular proposal entail? Currently, FPIs who have a participation of about 25,000 crore in terms of their AUM in Indian equities have to disclose granular details about, the ultimate ownership, KYC, and all sorts of details pertaining to their investments. The proposal with SEBI is to consider raising this particular threshold to 50,000 crore, which means only FPIs which have 50,000 crore in terms of AUM in Indian equities will have to, supply these granular details or detailed, explanation about the ultimate beneficial ownership and all those, details about the investments with market regulator SEBI. And, the limit will be raised from 25,000 to 50,000 crore there. The second one is with respect to allowing research analysts and investment advisors to charge advance fee from their clients for a longer duration. The longer duration here under consideration is 1 year. Currently, investment advisors can only charge advance fees from their clients for about 2 quarters, and research analysts can do that for just about 1 quarter. The proposal is to raise it to 1 year for both research analysts as well as, investment advisors. The third one is to discuss code of conduct and, various aspects with respect to disclosures for the whole-time members or the members of SEBI, board members of SEBI itself. The fourth one is SEBI may also discuss the budget for FY26 when it comes to today's board meeting. So, of course, important board meeting. All these 4 points will come up for discussion in front of SEBI.
Okay, Yash, thank you so much for that. Keeping an eye out on this and more updates that we'll get you on this tomorrow as well. But on that note, we're going to step into a very short break. Don't go anywhere. We'll be back with more news and updates after this break.
The market that you would like, maybe you will take exposure, maybe not, but a market where you see there's serious potential outside of India?
I mean, I haven't, to be honest, the only 2 markets that focus are India and America. The most important markets screen. But just going through the data, I would say Europe would already be starting a bull run, which is, then I can't understand, coming.
A European bull market.
Or European bull market when it's facing the moment of crisis. But you remember in 1991, India faced this moment of crisis. and the index was below 1,000 there. It's good.
Yeah.
Sometimes bull markets are born out of that.
Out of crisis. Oh.
The good news would be is that in my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market.
Okay.
What happened was the first correction in 4 or 5 years, it was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. Secondly, more importantly, in the last 60 to 90 days, I put I had the road, rubber meet the road, went and visited a lot of companies, just try to get feedback on what things are in corporate India out there. And almost universally where I went, people are talking about expansion, talking about growth, talking about margins, talking about profitability. So this was more of a market event than an economy event. There's very little leverage in the system. Banks are not leveraged. The stock market is not leveraged. So it was just a correction of valuation, which had probably become excessive, took place. And now we're, resuming the bull market that began in 2021.
Well, that's really good to hear because, absolutely. I mean, we couldn't really pinpoint an economic crisis or a financial accident which triggered this. It kind of, just happened on its own. On valuations, and that's why it's a little, important to understand both valuations and the power of flows. Domestic investors were pretty much buying throughout it, and yet the market fell because we were being hit by 8,000 crores, 10,000 crores of foreign selling on a daily basis, right? Now they've stopped selling. In fact, now first trickle of buying has come through. So while we can't predict flows, perhaps we can't underestimate the relevance also, right?
You can't. I appreciate that. And a lot of my friends pay a lot of attention to the FI number, which I really don't.
Okay.
Because anytime there's a transaction on the stock exchange, there's a buyer and a seller. So if the foreigner is selling, someone is buying at the other end. Stocks don't go in a zero hole on the ground. I mean, there's always a buyer.
Welcome back. Thanks for staying tuned into Business Lunch on CNBC TV 18. Now let's shift focus to the Indian rupee that has wiped out all its losses for 2025 thanks to the strong dollar selling by the foreign portfolio investors and by exporters. Now sentiment has changed dramatically on the rupee, and this is coming in after the foreign funds turned buyers of the equities and hence dollar sellers. Lata is here to give us more details on this one. Afternoon, Lata.
Well, first the record. It's the 7th straight day. Erases all gains of all losses of 2025. It is at a 3-month high and it is up 2.5% from the February 10th low when you needed 87 rupees 95 pice to buy a dollar. And today you require a good 2.5 rupees less at 85 rupees around 65-70 pice. So that's the measure of the rise. And actually it coincides with how the Nifty has risen. Nifty also has wiped out all the losses of 2025. Rupee also has wiped out. So the two are pretty interlinked, and the sentiment has changed primarily because sentiment has changed on the stock market. The FPIs who were inexorable sellers from October have now turned, the selling has thinned out and they're turning buyers in some days with some ferocity. So that leaves people with long dollar positions at a loss. They are in a hurry to fold up. One set of people who definitely want to sell out are the exporters. They are the guys with the dollars and who waited for better and better returns and would now be selling in a hurry before March 31st since they have to show the profit. The other lot are people who took speculative long positions on the dollar. Now, you call it some LDFD, last day, first day. When last day of this month ends and the first day of next month begins, the interest, the loss that you will, or rather the rise that you need to see in the rupee for your trade to succeed, your long dollar trade to succeed is some 14 pice. Unless the dollar becomes more expensive by 14 to 15 pice, a lot of people are likely to post losses. And that is one big reason why people are selling out, pushing off their dollars in a hurry.
Okay, Lata, thank you so much for that. Surely keeping an eye out on the Indian rupee as well. On that note, let's move on. And today is actually marking 5 years to the date that the market hit the lows since during COVID-19 pandemic. Now, a remarkable recovery that has been staged since then. Hormaz is here with some numbers. What has happened over there? Hormaz.
It is a phase everybody would like to forget in a jiffy, but has still not managed to, right? On this day, 5 years ago, India went into a complete lockdown to counter the COVID-19 pandemic. And today is also the day, 5 years ago, when the Nifty made its firm bottom of 75.11 and began to rebound from those levels. Now, in the 5 years since then, the index has surged over 200%, which is almost triple. But this is also the phase which is replete with multiple what-ifs, and that comes for buying stocks back then. What if I had bought this share or that share back in the day? Now imagine the money that you would have made. Well, let us tell you how much you would have in case you did buy those shares 5 years ago. Adani Enterprises among the top gainers on the Nifty since then, up 1700%. BEL and Trent, the two new entrants to the Nifty, also up 1400% and 1100% respectively. Completing the list is stocks like Tata Motors and M&M, the two auto outperformers, and all of them had seen decline to levels which you may never see on these stocks again. BEL was at 18 bucks, Trent was at 365, Tata Motors at 63, eye-watering for sure. But it is not as if anything you bought would have given you returns. Although all 50 Nifty stocks are positive over this 5-year period, there are underperformers too. HUL is up only 10% over the last 5 years. Asian Paints is up 50. Nestle is up nearly 70. Now, 50 and 70% are not bad returns at all, but when stocks are up 600 to 1,000%, these definitely rank as outperformers. Now, if the Nifty tripled in value, the broader markets have fared even better. The mid-cap index is up 367% or almost 5x over this 5-year period. Now, 17 stocks on this mid-cap 100 index have returned 1,000% or more during this 5-year period. Now, take a look at the top movers here. CG Power, the turnaround story, up 11,000% during this period. BSE, KPIT Tech, Masgao Dock, Suzlon, all of them among the top performers with gains of anywhere between 25 to 30 times. Now, there were underperformers in the broader markets as well. Now, Paytm is a value destroyer, down 65%. Of course, it listed in 2021, but it still acts as an underperformer. Yes Bank has halved. Bandhan Bank has barely moved. IGL and Biocon have returned only 20 to 25% during this period. The small cap index has also done well, almost up 385% during this period. 21 stocks on the small cap index have returned 1,000% or more during this period. Now, so who are the winners here? Railway stocks. Titagarh, Jupiter Wagons are in this list, along with names like HBL Engineering, Inox Wind, BLS International, all of them seeing gains of anywhere between 35 to 45 times. Now, big underperformers here, PVR Inox, down over 30%, 5 years during this 5-year period. Z Entertainment hasn't moved much either, as has RBL Bank. Bata too is an underperformer in this list. Now, that's the market that we have seen 5 years on. It has created many winners, and if you see the numbers over this horizon, the recent market correction just dwarfs in comparison.
Absolutely, Hormaz. Some of these numbers, surely my jaw just dropped looking at some of these outperformer numbers. 11,000% is for CG Power. I'm just in shock looking at that. But thanks so much for the detail over there. A lot of underperformers, a lot of outperformers coming in as well. On that note, we're going to slip into a very short break. We'll get you more news and updates on the other side.
So things are being bought. Someone who thought it was expensive was selling it or booking profits. Someone who thinks it's value and he can make money, so he was buying it. So, that takes it. Of course, it's important. I'm not denying the importance of the FI number out there. But I don't particularly pay too much attention to it. It's just one of the things we look at out there. What we particularly pay attention to is on the ground, what's happening. Is the company, how is the company dealing with the Trump tariff? How is the company dealing with inflation? How is the company dealing with the changing technology environment? I think those are more relevant questions for an investor to ask in a bottom-up manner. And I think that's just noise that you can't control. The FI is going to sell tomorrow. How do you control that? If oil spikes up, you can't control that. If Ukraine war ends or does not end, you can't control that. But you can control what you buy. And you want to buy those businesses that are, doing good, bulletproofing themselves. And which is what I've done, which is what been very successful the last few years.
Fantastic. Take your point completely. There's always a buyer on the other side.
There always is. So, what does it matter?
The color of money doesn't matter. There's someone putting in the money.
Psychologically, it matters, but actually it doesn't matter. The shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on the large street, as everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital, but they have a right to sell, and I don't begrudge them that.
So absolutely, Ramesh. I mean, I completely agree with you. May this wave of domestic money, may it become a tsunami and may it continue for all our sakes. But my question was more sort of regarding valuations and whether so much of domestic money continuously coming in the market, whether that will sort of create its own valuation challenges.
Surabhi, the market has a self-correcting mechanism, which we just saw. I mean, the index fell, 10, 12% from the peak. So it has a self-correcting mechanism built in. When valuations get too high or too stretched, someone on the other side will say sell, and it cannot be absorbed by the market, which is exactly what happened. So why worry about it? It's market has a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 50,000-70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraint. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market. And market will correct itself. Anytime the valuations of something become excessive, people step in and sell. Insiders sell. Someone sells. And
Europe, I think, has outperformed significantly, and rightfully so, given that things have gone from really, really bad to testing.
Welcome back to Business Lunch on CNBC TV 18. Now let's move on the latest update that we have in the Judge Cash case. The Supreme Court has shared videos and photos of charge notes at Justice Yashwant Verma's house. Ashmit Kumar is joining in with us to give us the latest update on this case. Ashmit?
Well, from the latest over the weekend, we had the Supreme Court releasing redacted documents pertaining to Justice Yashwant Verma and the allegations of cash being found at home. Now, those documents, which contained letters written by the Chief Justice of the Delhi High Court, letters written by the Commissioner of Police Delhi, statements given by Justice Verma, detailed documents, they reveal that there was indeed a fire at 11:30 p.m. at Justice Verma's residence. What they also reveal is that early next morning, there was cash discovered. The police commissioner of Delhi confirms that there was cash. There were gunny bags of half-burned cash notes that was discovered at the location of the fire. However, what they also confirm is that on the morning of March 15th, the half-burned debris as well as the half-burned cash remains were removed. Now, where has it gone? Who has removed them? Where is the cash currently as we speak? Those are questions which remain unanswered. But nonetheless, on the back of that, the Delhi High Court Chief Justice had recommended a deeper probe, following which, over the weekend, the Chief Justice of India, Justice Khanna, has constituted a 3-judge inquiry committee that will be probing these allegations against Justice Verma, as well as the issue of claims, the claims of cash. What's important is that Justice Verma, at least on his part, is saying that all of this smells like a conspiracy to frame me. That's the letter that Justice Verma had written to the Delhi High Court Chief Justice. And in the latest, what we find is that the Delhi High Court today, after this redacted release over the weekend, has now withdrawn judicial work from Justice Verma. So clearly the focus now shifts to this 3-judge inquiry committee that has been constituted by the Chief Justice of India. And of course, to the much larger question, where is all the cash? Where has all the money gone? Back to you.
Okay, Ashmit, thank you so much for the latest update coming in on that front. But let's move on, and stand-up comedian Kunal Kamra's recent comments on Deputy Chief Minister Eknath Shinde sparked controversy and resulted in Shiv Sena workers ransacking the venue where the show was recorded. Sandhya is joining in with us to give us the latest on this one. Sandhya?
So, Vinny, a comedy show, a viral video and a political storm. Kunal Kamra's recent video has sparked controversy in Maharashtra. So this is what has happened so far. Yesterday, the video was uploaded. After that, it was tweeted by Sanjay Raut. In this particular clip, Kunal Kamra joked about Eknath Shinde, his rebellion and the split in Shiv Sena. After that, senior Shiv Sena leaders like Sanjay Nirupam and Naresh Maske issued threats against him. Then another video surfaced where a group of people claiming to be Shiv Sena workers were seen vandalizing the venue where allegedly the show took place. Then Mumbai police filed an FIR accusing Rahul Kanal, a senior Shiv Sena leader, and 19 more Shiv Senics of vandalizing, trespassing, rioting and assault. Later, another FIR was filed and Kunal Kamra was booked, and Mumbai police booked him, accusing him of making derogatory statements against Maharashtra's Deputy Chief Minister Eknath Shinde. Right now, we are outside the venue, Vinny, and another interesting angle which has now come up is that BMC officials are here to inspect the property. This happened after Shiv Sena leader Pratap Sarnaik made a statement that there are irregularities with regards to the construction of the venue, the hotel Unicontinental, and on the third floor of this hotel, the Habitat, the venue, is located. Now the BMC teams are there. They are here. They are inspecting the alleged irregularities. Vinny.
Okay, Sandhya, thank you so much for that. A lot of updates that are coming in on that front. So that is the latest there. Thank you so much for that, Sandhya. But let's move on. And the US delegation held talks with the Ukrainian delegations, eyeing an end to the hostilities between Russia and Ukraine. Later today, the US diplomats will also hold a separate meeting with the Russian to discuss the same matter on this front as well. And here's a special report detailing more.
Ukrainian and U.S. delegations met for talks in Saudi Arabia on Sunday. It's part of a diplomatic push by President Donald Trump to bring an end to Europe's deadliest conflict since World War II. Ukraine's defense minister said they discussed proposals to protect energy facilities and critical infrastructure. And in a Sunday evening address, Ukraine's President Vladimir Zelensky said the day's talks were productive.
Our team is working in a completely constructive manner. The conversation is quite useful. The work of the delegations is continuing.
After speaking with the Ukrainians Sunday night, the U.S. delegation plans to sit down with the Russians on Monday. In an interview with Fox News Sunday, U.S. Special Envoy Steve Witkoff was optimistic about that meeting, as well as working with Russian President Vladimir Putin to end the war.
I feel that he wants peace. I just don't see that he wants to take all of Europe. This is a much different situation than it was in World War II. In World War II, there was no NATO. So you have countries that are armed there. To me, it just does. I take him at his word in this sense.
The White House says the aim of the current talks is to secure a ceasefire on the Black Sea, allowing the free flow of shipping. Bloomberg News, citing people familiar with the planning, reported on Sunday that the U.S. hopes to reach a broad ceasefire by April 20th.
Okay, and in some more international news updates that we have for you all, protesters took to the streets of Turkey's capital, Istanbul, after a court jailed the Istanbul's mayor on the back of corruption charges. The opposition party, European leader, and thousands of protesters criticized the actions taken against him and called it undemocratic. Imamoglu, who is a Turkish president's main political rival, has denied these charges. Okay, on that note, we're absolutely out of time on this edition of Business Lunch on CNBC TV 18. Nifty comfortably above the 23,600 level. Up next, your mid-cap radar to take you through the market action.
And I think the fiscal stimulus you're seeing out of Germany has been necessary for so long, but it's not the only thing that matters. Europe still needs a weaker dollar. Europe still needs to find a way to better coordinate financing and giving money to businesses to actually form. So, and Japan honestly has been forgotten in the developed market perspective, but Japanese markets actually have the strongest earnings acceleration. And that to me is very, very important looking forward. So Japan, I think, looks very interesting from a global market perspective. On the emerging market side, India is finally bouncing. Like I said before, if we get confirmation and this rally continues past April 2nd, I'm cautioning against leaning into the rallies that we're seeing globally, particularly if we see more of a relief rally in the US, simply because there's a lot that we still don't know. There's been so many starts and stops with respect to tariffs, it's really hard to believe a lot of the headlines that we're hearing from the administration. And I actually think that rather than reciprocal tariffs, which are very painstaking and difficult to put into place and are going to require more time, I think April 2nd is really going to be more about penalizing tariff villains or perceived tariff villains around the rest of the world. So I think India might be in store for perhaps some tariffs that get put in place. But to your point, I don't think it greatly will impact the Indian market. And so for me, what's a really important cue to look for is, can Indian markets continue to push higher in light of some tariff volatility?
There was an unsanctioned car show at the park prior to the shooting. The call for the gunshot victims came in at approximately 10:10 p.m., again on 3/21/2025. The investigation so far reveals that there was an altercation between two groups of people, and that altercation escalated.
If the end to the last week was good, the start of this week has been even better. You're watching Midcap Radar live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always is Vivek Iyer. Well, Vivek, every time you wonder that you have run up a little too much, the market defies you on the upside, and now you've turned positive for the year. It's a fantastic start to the week.
Absolutely, Hormuz. That was a very good spot by you. Nifty has turned positive for the year, and it's the sixth straight session where we're actually seeing buying and mid-cap and small-cap indices, both of them well over 1% up in today's trading session, almost 10% higher for the small-cap index in just the last 8 to 9 trading sessions. So it's a very, very strong start. Absolutely nothing to complain as far as the bulls are concerned. But we have quite a lot lined up on the show. Let's start off with the top headlines. Bulls take control on Dalal Street as Nifty turns positive for 2025. Mid-cap seeing momentum with 3 stocks advancing for every 1 stock declining. Nifty Bank outperforms with over 2% gains.
DLF is trading with gains after the company in its analyst meet highlighted that new sales bookings are expected to remain steady. Jefferies remains bullish with a 1,000 rupee price target. Nomura, though, is neutral, while Morgan Stanley sets a target of 910 rupees a share following the analyst meet.
SML Isuzu surges in trade on likely talks of entire promoter stake sale to Mahindra & Mahindra. Mahindra & Mahindra's board is likely to meet this week to evaluate SML Isuzu proposal. That's a CNBC Awaaz exclusive.
Power Mech Projects has also rallied in today's session after the company has announced that it received an order worth 580 crores from BHEL to provide civil, structural and architectural works at the Kodarma project in Jharkhand.
Gas stocks trade with healthy gains on proposed amendments to tariff regulations by PNGRB. The new rules may increase tariffs for GAIL and GSPL while reducing gas sourcing costs for city gas distribution companies. Welcome to Midcap Radar. Well, absolutely nothing to complain as far as the broader end of the markets are concerned. The midcap index up over 1%, the small cap index too, now almost 1.5% higher. The advanced decline ratio, very, very strong. Like we mentioned, a 3:1 in favor of the advances is what we are seeing. And what's doing very well is the midcap banking space, the entire banking space. So names like RBL Bank, Federal Bank, all of these stocks are surging. But Hormuz today, he's moved to the wall. Hormaz, you've been looking at the broader end of the markets. What is it that is standing out? What are the top buzzers there?
Everything is standing out, I guess, if you could put an eye out to it. But yes, the broader markets are doing well, as you just alluded to, with the advanced decline, almost 2,000 stocks advancing for every 700 that are declining. So it's a good going for the broader markets as well. And some of the names that are standing out in today's trading session when it comes to the top gainers include the likes of IREDA, which is the top gainer on the mid-cap index, 8.5% higher there. Kalyan Jewellers, a beaten down name, doing well for itself today. MRPL, PB Fintech also having a good day at the office. PSU stocks in general are having a very good session. We just spoke of IREDA, but the others as well. RailTel on the back of an order win, slightly off the highs of the day, but still up 6%. Bharat Dynamics, HAL, the defense stocks continue to get good bids as well. And Shipping Corporation of India, among the top movers last week, continuing from where it left off, another 5% in today's session. Real estate is another stock, another pocket that is doing well today. Macrotech, Brigade, DLF, Oberoi, DLF, of course, on the back of the analyst meet at the highest point of the day now. Most of the stocks on the Realty Index too trading with strong gains. Among the stocks that are doing well on the back of volumes, and Phenolics Cables was one of them that was the least or among the least affected wires and cables names when Adani announced its foray into this space last week. 12.5% higher on very strong volumes. Phenolics Industries is also doing very well. JBM Auto, on the back of that CNBC Awaaz newsbreak on SML Isuzu, is now up 17.5% on very strong volumes, and Varroc Engineering too, 7.5% higher in today's session. It's difficult to find losers in a market like this, but of course there are underperformers in today's session. Jindal Stainless continues to grind lower on the back of that price target cut from Nuvama today. KEC International is down 4.5%. Suven Pharma, L&T Tech, underperformers, all of them down to the lowest point of the day, Vivek.
Thank you so much, Hormaz, for joining us and telling us about all of the movers in the broader end of the markets. And you can come back to your seat so that we can move on to the show as well. But it's now time to welcome Ruchit Jain of Motilal Oswal Financial Services for a quick technical check on the market. Good afternoon, Ruchit. Thank you so much for joining us. Well, absolutely nothing to complain about. Do you see further upside as far as Nifty and Bank Nifty are concerned?
Yes, hi, very good afternoon, Vivek. Very good afternoon, Hormaz. Well, definitely it's a broader market-based pullback. It's not that certain sectors or certain heavyweights are taking the markets higher. And the prime two reasons, which led to that corrective phase since the month of October, one was the Doro Index and second was the FII selling. They have now turned to in favor of our markets. Well, the Doro Index have corrected from that high of 102 to stable around 103, 104 now. FIIs have also been covering the short positions in the index future, where the long-short ratio, which a couple of weeks ago was around 14-15%, has now improved to 32%. So I think both these factors which were worrying markets, since they have turned favorable, I think we should see a continuation of the momentum. Any dips towards 23,450, 23,400, I think would find now support, immediate support base, whereas on the higher side, we could see this momentum getting extended towards 23,800 levels.
What about specific stocks, Ruchit?
Yeah, so a couple of recommendations, basically finding out sectors which are outperforming. And NBFCs and defense, these are two spaces where I think the momentum should continue, considering that the price up moves have been supported by very good volumes. L&T Finance holdings from the NBFC space is looking quite good, where a consolidation breakout has been seen, that too with rising volumes. So keeping stock below 154, one can go long on L&T Finance with possible targets around 166. Defense as a whole has been doing well since last few days. Mazgaon Dog is looking quite positive over here, because this is one of the stocks which has not corrected that to that extent where we have seen during the corrective phase. And now the stock is hovering around its 52-week high, recent breakout with good volumes. So Mazgaon Dog, I think at current levels is a good buy with stock below 25.50 for potential targets of 28.50.
Ruchit, if you could stay on, one more question. Today, the entire mid-cap, especially private financials, are doing very well. So some of the beaten down names, look at Bandhan Bank, RBL Bank, Federal Bank, not beaten down, but all of them are doing quite well. Do you see further upside in these names?
I think very selective, not in all of them, because what we had seen that those stocks which are outperforming within the private sector banks, the larger names such as Kotak Bank, ICICI Bank, they have taken the leadership. And I think that outperformance would continue. The other names, the names which you said, they have been witnessing a pullback move just because the sector is outperforming. But in case of any correction, a minor corrections also come, and I think the risk reward issue would not turn favorable in these underperforming names. RBL Bank, I think, is only one stock within this all these three names. If I include IndusInd Bank also, where some relative strength has been seen of late. But apart from that, I think if one has to ride the trend within the private sector bank, then one should go with the outperforming names.
Indeed, they should go with the outperforming names. IndusInd Bank still 3% lower in a market like this. Of course, the stock remains in the F&O ban, so that needs to also be kept in mind. Ruchit, thank you so much for sparing time and joining us today. But as we slip into a short break, here's some good news for our viewers, and that is, of course, our CNBC TV 18 app. That is for India's business news leader. That is now just a click away for you. You can download the app to get all the business news updates, breaking news and financial world detailed articles on the app. You can download it from the App Store or the Google Play Store and scan the QR code that is on your screen to get the app. Take a short break, back on the other side.
Both groups. Several other people were also injured in the crossfire.
Welcome back to Midcap Radar. Well, sources tell CNBC Awaaz that M&M is in advanced talks to buy the entire promoter stake in SML Isuzu. Yatin Mota joins us with more details.
Well, sources close to the development tell us that SML Isuzu's parent Mitsubishi is in talks with Mahindra & Mahindra for a potential 44% stake sale. What we gather is that the parent of SML Isuzu has earlier initiated stake sale of this entity, given the fact that the group has a policy of exiting low profit as well as low transaction valued assets across the globe. Obviously, when we spoke to Mahindra & Mahindra, they said that they will not comment on any kind of speculation. However, we gather that Mahindra & Mahindra board is likely to meet later this week to evaluate this proposal of stake sale. When it comes to the valuations, probably M&M is looking at a valuation of close to 1,800 to 2,000 crores in total market capitalization as far as transaction with SML Isuzu is concerned. When it comes to the trucks and buses business, Mahindra & Mahindra wants to add more capacity as well as focus more on the commercial vehicle business. LCV business has been quite successful for them with the market share of more than 51%. So now probably they are looking to focus on the trucks and buses business.
Indeed, Yatin, thanks a lot for that news break. SML Isuzu 2 at the highest point of the day, now 5% higher on the stock. And in the flip side, JBM Auto, as I just mentioned a few minutes ago, is up 17% in reaction to that news break. But moving on, Jindal Stainless is the other one we just mentioned among the underperformers in today's session after Nuvama cut its price target on the stock. Nigel is joining in with more on this. Nigel, what does Nuvama have to say?
Well, that's right. It was first reported on the exchanges on Friday itself that their CFO, Mr. Anurag Mantri, who was one of the key, personnel who took office and turned around the company, he has put in his resignation. And he says that they're looking at new opportunities. So that was one piece of news that came up. You don't want, a rejig at the top. And that seems to have weighed on the stock both in Friday's trading session and even in today's session. Now, Nuvama, they have come out with a note. They have cut their target price to around 723 rupees. That's more than a 100 rupee cut from what they had earlier. And they've trimmed down their EPS and the EBITDA estimates for the next few years by around 5, 10 and 13% odd. The key factor that they're tracking is lower volume and profitability as well. And they met with the management, and here are the key takeaways they had with Mr. Jindal himself. First, they said the company is navigating through rough waters, amid the softer export demand, and also a large number of imports are coming into the industry. So both the parameters are not working in their favor. That is, the export market is challenging and imports are going up out here. Keep in mind, for FY26 itself, the management had guided for very conservatively. 9 to 10% volume growth is what they guided for, with consolidated EBITDA in that vicinity of around 19 to around 21,000 rupees per ton. This implies that the Q4 FY25 EBITDA will be in the vicinity of close to around 16,000 rupees or thereabouts. So it'll be softish. They also say that the export demand is weak, imports are firm. And because of that, JSL, well, they have diverted any kind of exports to the lower margin business. And this in turn will weigh on their margins, which will be a problem on the profitability aspect. And finally, they had guided for some downstream, operations at Jajpur. And that, in fact, that capex has actually been postponed a little bit. So all these factors makes Nuvama a little bit nervous on the stock. And that's why they've gone ahead and they've cut the target price on the stock, clearly weighing both the pieces of news, the Nuvama note, as well as the CFO resignation. Back to you.
Thank you so much, Nigel, for joining in and telling us about all of the details as far as Jindal Stainless is concerned. Down over 5% the session today. But let's now shift focus to the exchanges. Earlier today, we spoke to Sundar Ramamurthy, the Managing Director and CEO at BSE, on F&O contracts, derivatives markets, and whether the BSE will go in for expiry date changes. Let's listen in.
The market feedback that we received from people whom we approached and people who approached us, the point that underlines is that there should be a spread between two expiries. Okay. What it should be, how it should be are nuances. We need to see how the market spans out in respect of all this. Since we are having too many other realignments already happening, anything done in a hurry will not help in the product development and economic development. So at this point of time, we are assimilating all the announcements, changes, and we will come out with a stand, what will be useful for the product.
What's the probability of you changing the expiry day? Is it high, going by what you have got back in terms of a feedback? Point number one. Point number two is, by when will you respond to this? If there is a change, it appears that for April, there may not be a change. You can correct me if I'm wrong on that. By when do we hear a response from the BSE?
See, I would like to reiterate that BSE's expiry was next to NSE's expiry of Nifty and Bank Nifty for a significantly long time when it was relaunched, notwithstanding that Sensex was trying to find a feet. But only thing what it was not able to achieve is proper economic significance of itself. So whether in the revised situation when BSE Sensex is establishing itself as a clearly important product.
Indeed.
What should be the action should be carefully thought about. It cannot be defined in terms of time horizon. It has to be talked about in terms of the entire realignment.
Indeed. But there's a probability you'll look at changing it.
No probability can be ever ruled out. Only ascribing a percentage high or low will be very difficult at this point. In terms of cash market, while the average daily traded volume has grown up for us, in terms of percentage market share, it has not grown up significantly. It's hovering around 6.5 to 7%. So overall, the notional turnover across the exchanges, I think, has come down by around 40%, and premium has come down by 17%. While I would continue to reiterate my earlier stand, we don't run behind market share. Our market share is 100%. In terms of what numbers you ask, for your question purposes alone, the notional volumes have fallen down in BSE by around 17%, etc. No, the premium volumes have been stabilized as far as Sensex is concerned.
The management of BSE there in an exclusive conversation with CNBC TV 18. You take a short break. More on the markets and specific stocks on the other side. Stay tuned.
Yolsuzluk operasyonu üzerinden milletimizi provoke etmeye kalkıştılar. 4 gündür milletin huzurunu kaçırma, insanlarımızı kutuplaştırma adına ne varsa hepsini yapıyorlar. Önlerine gelene hakaret etmekten, sadece görevini yapan polislerimize saldırmaya, yolsuzluk ihbarlarını araştıran yargı mensuplarımıza gözdağı vermekten, sokak terörüyle milli iradeyi baskı altına almaya kadar ne ararsan bunlarda her şey var.
Welcome back. At 23,650 is where the index continues to hold on to 300 points higher as we speak for the index. And a pocket that has been doing well all through the day and has been in focus since the morning are the natural gas stocks that are surging following the industry recommendations to the regulator, which could imply higher tariffs for such companies. Sudarshan is here with more on this. Sudarshan.
So PNGRB, that is the gas regulator, has proposed changes to natural gas tariff regulations, and also it has sought comments by April 11. So what are the changes that PNGRB has proposed? Some of the major changes, if I would like to mention, first one, that price of gas for fuel requirements for the computation of tariff would be on the basis of contracted prices, and this has been a key ask for GAIL, and GAIL is likely to be the biggest beneficiary. Second, it's for the older pipelines which are older than 10 years. For that, pipeline entities or companies can retain 50% of incremental revenue if volumes surpass 75%. Why it is positive? Because in the earlier regulation, the limit was 88%. So if it is brought down to 75%, it would be positive for both GAIL and GSPL, but especially for GSPL. Third, for city gas companies, now PNGRB has proposed 2 zones. So currently there are 3 zones, and to streamline the tariffs, PNGRB has proposed that there would be only 2 zones, and that would be positive for city gas companies, especially MGL. Now, brokerages also have come out with notes. Citi says tariff computation on the basis of contracted prices will be positive for GAIL. Second, reducing volume threshold to 75% will benefit GSPL, and CLSA says proposed changes will reduce operational expenditure for city gas companies like IGL and MGL. Also, GSPL and GAIL can see higher tariffs if these changes are implemented, and gas cost can increase for industrial customers for Gujarat Gas. So this can be minor negative for Gujarat Gas, but overall for gas sector, these changes, if those are implemented, will be positive.
Thank you so much, Sudarshan, for joining in and telling us about this particular very important story. In fact, earlier today, we had a conversation with Gajendra Singh, member of PNGRB, who commented on the benefits the gas companies will receive. Let's listen in.
The entity which is far-flung area may be paying a Zone 3 tariff, which was very high, 105 plus, and the Zone 2 tariff is 85 plus. So all those entities, now they will get benefited. They will get basically the Zone 1 tariff, and the 3 zone now get converted into 2 zones. So the focus is that how we can increase the gas usage all across country, because the focus is for CNG and PNG. CNG and PNG, they will get benefit. Few entities or the few pipelines where it is flowing more than 75%. There we are seeing is whatever the excess volume will be there beyond 75%, the benefit will be passed on 50% to the entity, 50% to the consumers. And only another thing is the isolated field. There are the number of isolated fields where there the tariff was basically, now these are the old fields, and what we are seeing, the pipeline which were laid there in those areas, they are not getting any returns on that. Somewhere the tariff is almost nil or maybe in a negative. So there we are seeing that at least they should recover their operating costs.
The member of PNGRB there speaking to CNBC TV 18. By the way, Phenolics Cables is now up 15%. And seeing some very, very strong moves on the stock there in today's session. 960 now on Phenolics Cables. By the way, some flashes on your screen as well. Varun Beverages has started commercial production of carbonated soft drinks and packaged water at its Kangra facility in Himachal Pradesh. So keep an eye out on Varun Beverages. And Ireda, of course, we just spoke about it at the start of the show. And that's up 9% now in today's session. 169 now on Ireda. 22% surge over the last 7 trading sessions. And good going for that stock as well. Most of these names are beaten down names. Ireda, mind you, is still down 50% from its all-time high, which is around 310 rupees. Honasa Consumers too, another beaten down name, up 6.5% in today's trading session, doing well for itself. And the surge in JBM Auto has somehow rubbed off on the other electric bus manufacturer as well, that is Olectra Greentech, which is also up 7% in today's trading session. So a lot of these beaten down names staging a bit of a comeback on in today's session in line with the recovery in the broader markets. But with that, we call time on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks on the next 30 minutes.
Hello, good afternoon. You've tuned into Your Stocks, coming live from CNBC TV 18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in. A quick look at what the market is doing, managing to hold on to the 23,600 levels. As of now, 1.4% uptick is what we're seeing coming in for the Nifty 50, almost near the day's highest point and still inching up a bit more as well as in terms of a move that we're seeing. Broader market, that also continues to do well. A slight bit of an outperformance versus the benchmark indices for the broader markets. Nifty mid-cap holding on to gains of 1.6%, small cap also holding on to gains around of those 1.6% to 1.8% in that range. So surely keeping an eye out on the Nifty mid-cap as well as a small cap. Advanced decline ratio today clearly in the favor of advances versus declines that we've seen. So yes, advanced decline ratio also on the green side. Nifty Bank, that's the outperformer today. Nifty Bank is holding on to 51,600 levels above that mark, 2% uptick on that front. And Nifty Bank is obviously the top gainer coming in terms of a sector performance. Axis Bank, ICICI Bank, HDFC Bank, all of them have been buzzing in trade today. We have all the sectors as of now that are managing to hold on to that green, so nothing on the red side today. Just a few stocks maybe on the broader end of the market that are trading in the red. But yes, that's how the market setup is looking like as of now. But this is a show where we solve all your stock-related queries, and to solve all of that, we have our experts joining in with us. Today, we have Ashish Kyal, chartered market technician and author at Wave Strategies Advisors, as well as Gaurang Shah of Geoteeth Financial Services joining in with us to talk to us about the markets, what are the stock-related queries that you all have sent us. They'll be answering all of that. Good afternoon, gentlemen. Thank you so much for joining in with us on the show as always. Ashish, we're seeing this gain continue since the last week. Do you think this momentum will sustain through the week this time, or maybe some bit of an up and down that we're watching out for in terms of the markets this week?
Hi, afternoon to you and all the viewers. If you look at the weekly chart and if you look at the last week candle, it has been one of the biggest candles that we saw on the upside since the top of 26,000. So that is suggesting that there is some kind of a meaningful low that the markets have already formed, and we are rallying up on the maybe towards the level of 24,000 or higher. Having said that, over short term, the indicators are overbought. So it's prudent that we have to wait for some kind of a dip. This is one of the steepest rise that we can clearly see in many, many months. And it's prudent to wait for a dip towards the level of 23,400, 23,300 again to enter fresh positions. From the current level, do not try to catch a top here. The rise has been steep and fast, violent. Many call writers have burnt their fingers on the upside. So I think it is buy on dips market from here on. Do not try to catch a top. Use the dip toward 23,300 as a buying opportunity, and we might be headed across 24,000 mark.
Okay. Keep an eye out on that. But let's move on and get started with the queries for today. The first query is coming in from Bonnie Joshi, who's writing to us from New Delhi. He's holding 90 shares of Bandhan Bank. This is at a price of 180 rupees per share. He's asking if he needs to be worried about the accounting probe that the bank has faced recently. Obviously, he's making some bit of a loss on this one. Stock is currently trading at 147. Gaurang, I'm going to take this across to you because somewhere around in Feb also, I think there was some commentary that came in that the management, wanted to shift more towards that secured loan side as well. The MFI concerns that were there, they're trying to allude to that side. But your thoughts on Bandhan Bank, and should the viewer be worried about the situation?
Well, thank you, Vinny, for having me on the show, and good afternoon to all of you all. Bandhan Bank, there has been another issue with the earnings front other than the MFI segment. They had news flows. Top-notch level designated person had to resign. We had a new person coming in. And of course, the MFI exposure is not only limited to Bandhan Bank. We had issues with the other bank also. Having said that, we do have an accumulate stance on Bandhan Bank. Now, the problem with this trade is the investment level of 180. This is a concern because our price target is somewhere close to about 186 and the stock is trading at about 147 or thereabouts. Well, the quantity or the number of share is about 90 odd. That is what I just read on the slide that was there before this one. It would be prudent to accumulate a little bit more, add a little bit more, not at current levels, but maybe closer to 145 or closer to about 140. Even at this level, if the investor has a little bit of high risk appetite, it can average a little bit so that the acquisition cost comes down. but don't average the entire quantity. You can add small quantities, and as and when the stock moves closer to 145 and below, you can add a little bit more so that your investment level comes down, and post that from a long-term point of view, you can get a profitable exit. But earnings are very, very volatile as far as Bandhan Bank is concerned. That's a prudent thing to note.
Okay, so surely keep an eye out on that important factor there as well, when you're looking at investing in Bandhan Bank. Ashish, on the charts and technicals, Bandhan Bank, what's the story playing out there, right? Because last 6 months, around a 20%, 29 to 30% decline that we've seen. Last 1 year also, not a great performance. Anything on the charts that is indicating a positive up move?
Yes, if you look at the charts, there was support around 137 from where the stock managed to bounce back. It is now attempting to fill the gap which was created on 10th of March. And having said that, I think there is a possibility the stock can move on the higher side towards 160 odd levels. So the overall undertone on the chart is positive despite of the negative news. The stock is managing to sustain there. So 160 is what one can play for over short term. And on the downside, maintain a strict stop loss of 140 levels.
Okay, keep an eye out on those levels over there on the technical front as well for Bandhan Bank. Let's move on. And this next query, we have a caller query. We have Ravi Prakash, who's joining in with us from Bangalore. Ravi, afternoon, and go on with your query. What is it on?
Good afternoon, madam. Madam, I have 400 shares of Shriram Finance bought around 585. I'm looking for a long term. Is it a right to invest, to be in this stock for a long term?
Sure. Okay. Gaurang, I'm going to take this to you. The viewer has bought this at 585, currently at 686. For the long term, should they continue to hold Shriram Finance? And, could they look to add some more as well? What is your view?
Recommended, Vinny, but provided you get it at lower level, no point averaging at a price wherein your cost of investment goes up. So, possibly at lower level, and we've seen NBFCs and finance stock rally a little bit. Not at current levels, but possibly on dips, you can definitely average. We have a buy call on Shriram Finance. And we at Geojit also believe, Vinny, that banking and finance, not only for the fourth quarter that we'll be witnessing from 10th April onwards, but also for the next couple of quarters, banking and finance should report very strong numbers, which will possibly have its impact on targets getting revised upwards. So I would advise a hold and average below, at lower levels possibly you can average, is what I would recommend.
Okay, so you're expecting, positive signs coming in terms of numbers for NBFCs and Shriram Finance also going forward. So will be interesting to watch out for not only in Q4 but going forward as well. On the technicals, what is your view coming in, Ashish? What is the suggestion? Continue to hold this one for the long term for the viewer?
Yes, just as a disclaimer, we do have holdings on Shriram Finance in the personal account as well. And the overall tone for this financial sector as a whole, if you look at it, it is bullish because the leaders that are emerging in the past, when there was a sharp fall in the overall broader market, we can clearly see financial sector as a whole did not collapse. And this is the stock and the sector which is now running on the upside as soon as Nifty has started recovering. So overall undertone is bullish, the sector is supporting, and Shriram Finance stock overall looks to be very good. We can expect it to go toward the level of around 900 from a year's perspective. And on the downside, the support for the stock is around 610.
Okay, support 610, 900 levels is what one could watch out for also. I hope that answered your query, Ravi, but thank you so much for calling us and sending us your queries as well. Let's move on, and the next query for today, we have Ramandeep Singh, who's writing to us from Karnal, and he's holding 30 shares of LIC. Price is 615 rupees per share. Wants to know if he should remain invested in LIC for... they've not mentioned the period, but if you could give your view both, Gaurang, for long-term as well as short-term LIC. Given that, the last week we've seen so much happen in the insurance space, so much is changing there as well. So, LIC as a bet, what did you say?
So, it has been an interesting sector. Unfortunately, Vinny, the performance was not up to the mark. And most of the time in this rally that we've seen over the last couple of years, this sector tried to perform, but somewhere it was a sideways performer. Having said that, we have a buy recommendation on LIC, that is Life Insurance Corporation of India. A major change and shift we are witnessing is the approach of individuals towards an insurance product, not as a tax-saving product, but also a product which can financially have backing for the dependence that you have in case if something has to happen to you. What we've also seen, Vinny, is that the sum assured is going up and so is the insurance outgo, which translates into positive insurance premium inflows for insurance companies. Targets for LIC is in excess of 1,000 plus. So if you're a long-term investor, stay invested.
1,000 plus for LIC is the target, and a long-term investor. That's the long-term investor view coming in. Your view on this one, Ashish, are you also expecting to come back to those 1,000 plus levels? By when? What are the other targets that you're keeping an eye out on?
Yes, Vinny, and if you look at a lot has happened over the past 2 weeks, not only with LIC, but the entire market as a whole. A lot changed in just a week's time. So LIC has also showed a very smart recovery from the lows of 730 and now quoting at around 800, 805 levels. The overall undertone looks to have changed on the upside. The near-term target for the stock is going to be around 900, and yes, I do concur that it can eventually cross 1,000 levels as well. So the tone is bullish as long as the support on the downside, which is around 760 level, remains intact.
Okay, keep an eye on those levels over there for LIC. Let's move on and talk about the next query then. We have Abhishek Sharma, who's writing to us from Gurugram, holding 100 shares of Power Grid. This is at a price of 90 rupees per share, making good profit. Stock is trading at 292 right now. Wants to know if he can buy more shares. Your view on this one, Gaurang. He's already making profit on this one. He's bought it at 90 rupees, now at 292. Wants to add some more in terms of Power Grid. Would you suggest Power Grid, or are there other names also that they could look at buying?
No, there are other names, but I think in the transmission and distribution segment, Vinny, Power Grid, which is a government-owned company, has almost about 70-75% share, correct me if I'm wrong, in terms of grid line transmission. India is going to add a lot of new power generating capacities, especially when we are a power deficit country. We are into a peak summer season approaching. We are March. We've already seen temperatures of 35 and 38 degrees in Mumbai. Possibly we enter April, May, temperatures are going to rise, power consumption is going to go up. And as and when you have new additional power generating capacities coming up, you are going to need network of transmission grid lines like Power Grid has. We have been maintaining a positive stance on Power Grid for a pretty long time. If you want to add, maybe add some at current levels, you get dips, you add a little bit more. 356 is the approximate target from a long-term point of view on Power Grid.
Okay, and on the technicals, Power Grid, what would you suggest, Ashish? Can the viewer look to add at these levels right now, or wait for some bit of a correction at least?
See, if the view is from the long-term perspective, then I do not think that he should wait. He can add at the current levels, and possibly if there is a dip over short-term around the levels of around 275 or 280, then add more in that specific zone. So on the upside, the stock can move towards the level of around 325, which is also the highest volume profile area, as we can see on the chart. So the tone is positive. Add here and add more on the dips.
Okay, surely keeping an eye out on that. Keep an eye out on those levels over there. Can add on dips. That's a view coming in from both our experts as well, and a positive commentary there. But on that note, we're going to slip into a very short break, viewers, here. And some good news that we have coming in for you all. India's business news leader is now a click away, introducing CNBC TV 18's all-new Get app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screen.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top.
Welcome back to Your Stocks on CNBC TV18. We still have our experts with us, Ashish Kyal as well as Gaurang Shah, to solve all your stock-related queries. Let's move on, and actually a quick look at the market. You know, Sensex especially 78,000. It's about that mark, so keep an eye out on that one. Finally, we are seeing those levels coming in after a while. So Sensex is something that is managing to hold on to gain almost near the day's highest point. But moving on and keeping it going with all those queries, then this query is coming in from Varuna Sapru, who's writing to us from Jammu. She's holding 70 shares of Ireda at a price of 140 rupees per share, making some bit of a profit on this one. Is asking if this is a good prospect as an investment for her. Short term, medium term, long term, no time frame, but overall, does it make sense to look at Ireda right now? Gaurang, your view coming in on this one. Today, surely the stock is buzzing away in trade, but in the last 6 months has not done much, right? So Ireda, what is your view on this one?
I think a prudent disclosure, Vinny, when the IPO was there way back in 23, if I'm not mistaken, at 32 odd rupees, 32 or 36 rupees, we had come out with a subscribe IPO from a long-term point of view. And from that level onwards, this particular company went up to 280, 300 levels or maybe more. Then a correction in the mid-cap, small-cap universe, and this company also corrected. Incidentally, this morning itself, we have come out with a short to medium-term report on Ireda, where the target price is somewhere close to about 196. This is a Technofunda stock, wherein the stop loss is somewhere close to 140 and below 140. But if you look at the fundamentals, you know, like we were discussing about Power Grid, this is a company which provides financial backup for power generating capacities coming up, especially in the clean and green sector. Company has guided for a very strong order book, and going forward with the kind of projects that are going to come up, this company will end up benefiting of more orders coming into. Execution is also at a very good run rate. So if I have to put both these reports together, the IPO note as well as the short to medium term Technofunda report, I would say hold on to it for a long term. And precisely, if you can extend your time horizon to maybe about a year and a half, 2, that would be very prudent.
Okay. Increase your time horizon to a year and a half too, then that would be a very prudent bet coming in for you. On the technicals, Ashish, what's your view coming in? Last 6 months, it's seen a correction of almost 25%. Now, obviously, she's bought it at 140 rupees. What is your view and suggestion for the viewer?
See, the overall, I think the stock is closed in upper circuit as of now, as we speak. There are no sellers to it. the tone is right now positive. Continue to hold on to the stock here. Over short term, I think we can expect a levels of around 190 on the upside. And on the downside, today's low is going to be very important support, which is 157. So as long as 157 remains intact, I think one can expect a level of 190 on the upside.
Okay, 190 on the upside is what you're watching out for in terms of the levels over there. Let's move on to the next query for today. That is on One MobiKwik. Now, Komal is writing to us from Indore. 90 shares of One MobiKwik she's holding, and this is at a price of 275 rupees per share. Wants to know for the long term if they can continue to hold the stock. Gaurang, do you have a view coming in on One MobiKwik?
Well, Vinny, the IPO was in December of 24, correct me if I'm wrong, in the price band of 265 to 279. This is a dynamic fintech company which provides technological-driven platforms for digital financial solutions, etc. On the IPO note, we had given a subscribe from a long-term point of view. So if you are a long-term investor, keeping my base on this IPO note as a subscriber recommendation, I would request to hold on to your investment.
Okay. Ashish, I know it's not much in terms of charts, but have you, managed to see anything on this front, or does this interest you as a stock or sector?
Not really, because if I look at the stock, there has been a very steep correction that we can clearly see from the highs of 700. It went to all the way toward the low of 236. And it is still struggling to show that a very smart recovery. So my recommendation is it's better to be out from something like this. Maybe Paytm can be a better choice over here. And on the upside, there is an immediate hurdle for the stock at around 357 levels. The volatility is also very high. Volumes are little erratic on the stock. So it's better to be out from here is what I think.
Okay, let's move on to the next query then, and this one is on JSW Steel. Kunal is writing to us from New Delhi, holding 60 shares of JSW Steel. This is at a price of 970 rupees per share. Wants to know whether to hold or sell at the current levels. Gaurang, JSW Steel, these metal names surely are looking exciting. There's so much coming around it in the recent time. Does it make sense to just continue to hold on for some bit of a time?
So, hold for metals, Vinny, I would say 1.5 to 2 year plus, given the kind of, both headwinds and tailwinds. Headwinds in form of tariffs on steel and aluminum, certain steel and aluminum products in the US. Then you have some positive news flows coming in from China. Domestically, we expect an uptick in terms of consumption, and along with that, possibility of a price revision upwards on flat and long products, both HR and CR coils as well. We have a positive coverage on JSW Steel from a long-term point of view. My only concern is that, compared to other sectors, metals will require a little bit of longish investment time horizon compared to others, given the kind of, global headwinds that we are facing. I hope that will be done and dusted very soon.
Okay. That's a view coming in on JSW Steel, but that was the last query for today. So thank you so much, Gaurang, as well as Ashish, for joining in with us, helping our viewers solve all those doubts as well. So thank you so much for that. Thank you so much, viewers, for sending us your queries as well. Keep sending it to us on the email address that will be flashing on the screens, and we will be taking them through the week as well. But that's all the time we have. So thank you so much for tuning in. Up next, you have Closing Bell, so don't go anywhere.
Drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
What happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time. And that has profound changes in the world, because whether we like it or not, America is the most important, most significant player in the world today, whether politically or economically. But the fact that they were turning inward meant the world would be a very different place. So while I keep hoping that the past is prologue, that what happened in the 40 years that gave us so much prosperity and peace and, a good standard of living will continue, I feel that the world is about to change. And I think as investors, we have to be the first to notice that.
So it's not so much about left, right, or center. It's not so much about your, political stance. It's more about whether you are inward or outward looking from what you're saying, whether you're integrated. And that's under cloud. I mean, the whole globalization era and that boom, that itself is under a bit of a question mark in this new world that we're in, right?
The good news is, the bad news is that yes, it's under a cloud right now. It's under a very serious cloud. That's why I told you the axis was changed. The good news that is my personal belief and my personal call that these are irreversible changes. That you could delay globalization by another 3 years or 4 years. I doubt if it's even that long. You can delay a world where the strong prey on the poor, which is what is happening now with the spheres of influence, as Donald Trump is calling it, that Russia controls Europe, we control North America and South America, and China controls Asia. So all that is being questioned as we speak right now. But I think it will delay globalization, it will delay international system. It cannot deny it because the human arc works towards progress. And it's very hard for me to believe that we will go back to a mercantilist policy, a tariff-based policy, as Trump is advocating. Either he will change or democracy and the people's aspirations will force him to change. So while we are going through a very difficult period right now for the global economy, I don't think it's going to be the lasting change in the world. The lasting change is towards free markets, prosperity, trading.
Is US exceptionalism, for the time being at least, is it ending? Do you see the US market topping out?
I think Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. See, this is what he's trying to do if you try to sort out all the madness and see what the kernel is trying to do. He believes that American manufacturing has been hollowed out. America imports almost all its critical stuff other than technology from China, from Vietnam, from Philippines, from India, from other countries in the world. So this is what they've done. They first reduced the tax rates in America. They made the corporate tax rate 50%.
To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Stocks in Asia open higher even as reciprocal tariff deadline nears.
He wants to break us so America can own us.
First in 7 months that we've had 5 days up.
With the election of Donald Trump, is that the world is not going left or right, but America is turning inward.
23,490. So, but yeah, 23,500 almost there on the board.
The fundamental concerns still remain.
A spread between two expiries. What it should be, how it should be, are nuances.
In John 1 tariff, that will be applicable to all CGD all across country.
266 points up on the Nifty. The Sensex now inching towards a 900-point gain.
In a hurry to fold up. A set of people who definitely want to sell out are the exporters.
Advance decline ratio very, very strong. Like you mentioned, a 3:1 in favor of the advances.
Good afternoon and welcome to the last hour of trade this Monday. And what a Monday it has been. The bulls continue to be in absolute control of this market. That momentum that we saw last week, it's only gotten stronger. And now levels are being taken on the upside, like they were being crashed on the... Yeah, exactly. It's the exact reversal of the downside momentum that this market was in the grip of for the last couple of months. But it's a good looking screen, guys, this afternoon.
Well, that's right. And things have turned around, right? In 2025, now the Nifty is positive. We went down to around the 22,000 odd mark. We have bounced up close to around 1,700 points from there. The only question is, can the mid and the small caps as well, which the index itself is down 8 to 10%, can that move into the green year to date? That will make portfolios look very, very good. So it doesn't take away from the fact that today the index is looking good. The Nifty Bank has gone ahead and taken the 200 EMA as well.
Yes.
So it's a good looking screen.
Indeed, 23,700 was crossed today on an intraday basis. YTD positive. In the last 6 trading sessions, the Nifty has gained in excess of 1,300 points. And since last week, that's the last 6 days from when we've had that winning streak, the Nifty has gained close to about 6% The mid-cap index is up nearly 10%. The small-cap index is up 10.5% to 11%. That's the extent of the vertical run over the last 6 trading sessions. The Nifty has crossed a 100-day moving average today. The Nifty Bank has surpassed the 200-day moving average. And it's good to see both banks and IT outperform yet again. In banks, it's Kotak Mahindra Bank, top honors. Axis Bank is higher in trade across the board, actually. Even in HDFC and ICICI Bank is performing. But even IT, IT was the laggard last week, but it's coming back into form. CLSA is saying that perhaps all the uncertainty, pessimism is already priced in, and the Nifty IT index has also moved to the day's high. And you've got names like Tech Mahindra, Wipro, HCL Tech all surging in trade.
Yeah, absolutely. I mean, you can't complain with this market because of the width, the breadth, the depth of the kind of move that we've had. And it's not a flash in the pan because this is pretty much what the story was for the better part of last week as well. On the mid caps, I mean, just some examples. PSUs, that's a theme that's continuing from last week. And there's some serious buying. Last week also, the CPSE index and the PSU index, they were among the best performing parts of the market. And that's continuing today. A lot of names on the railway side, for instance, IRDA, IRDA, look at that stock, 10.5% on the higher side. So it's been looking good. Stocks like RailTel as well. So railways is a theme. Aircon, that's definitely coming back. But even non-PSU mid-caps. Some of the auto ancillary plays are very, very interesting today, by the way. Look at something like JBM Auto. A couple of other stocks, Electra, Greentech, 7.5% up. So there's plenty of stock picking that's going on. And I guess many stocks that are finally recoiling from extremely beaten down levels.
Well, that's right. Now, just a few stocks that were not participating earlier as well. You have Apollo Tyres. Just pull up the intraday chart out there. The stock from the red train has moved into the green. Aarti Industries, another one that had pulled back a goodish bit when we were seeing a correction. That one as well has spiked up. So quite a few of these names have now started participating, as the broader markets look strong. So some of these names actually early in the morning, they were underperforming, but they have pulled back as well. Even Nippon Life, I think we should pull that one up. Nippon Life India, that stock has moved to the high point of the day with a gain of close to around 5.5% or thereabouts. That said, let's get in Mitesh Thakkar back with us on the show. Hi, Mitesh. Good afternoon and good to speak to you after a while, Mitesh. Well, markets are rocking. From 22,000 odd, we're at around 23,700. And now, importantly, we're taking out crucial levels, both on the Nifty and the Nifty Bank. One would hope that the tech index as well, that's actually been an underperformer year to date, that as well participates. Your view on the Nifty first. Where are we headed?
So, Nigel, I think, we've been calling for a rally to 23,500, 600. That level, I thought will be a mild supply zone. That's been cleared very easily. And then we revised our target to 23,750, 24,000. I think we are well on our way. The Bank Nifty also has cleared 51,500 without any kind of a break. We were sitting on a 6-7 day kind of rally and we were running into a pivot point and that's been cleared. The Bank Nifty next level is around 52,010 or rather 52,000. That's being the round number. So I think we still have more upsides left. But what is important is that the way the daily indicators and the weekly indicators have been pulled up with this kind of momentum, even if we get a pullback or a decline, I think the market will get into a sequence of higher highs and higher lows. So I think in that sense, it's a very positive setup. And I would expect more upsides to come in the next few days. On the stock side, I have a buy on Concor with a stop at about 698. Look for a target of around 740 here to begin with. Eventually, higher levels can be looked at. And the other one which I like is REC, which I would recommend buying with a stop at about 436 for targets of 460.
Got that. Let's talk about the sector of the day, and that's some of the oil and gas names. So natural gas stocks are surging following industry recommendations to the regulator, PNGRB, that could imply higher tariffs for some of these companies. Sudarshan is now joining in with the details.
So PNGRB, that is the natural gas regulator, has proposed certain changes to natural gas tariff regulations 2008, and also it has sought comments from key players, and those comments have to come by April 11. So I've taken out certain major changes that PNGRB has proposed. First one is price of gas for fuel requirement that is used for the computation of tariff. Now GAIL has been asking that computation has to be done on contracted prices. Now PNGRB has proposed that change, so it's positive for GAIL. Second change is related to the older gas pipelines. Now for the older gas pipelines, volume assumption that once the volumes cross that limit, and that limit in the earlier regulation was in the range of 80 to 88%. So if any company used to cross that 80 to 8%, then only they could have got certain part of the incremental revenue. Now PNGRB has proposed that limit of 80 to 88% will be brought down to 75%, which is key positive for GSPL, also to GAIL to certain extent. Third is for city gas companies. Currently, we have 3 zones, Tariff 1, Tariff 2 and Tariff 3 zones. That is basically used to quantify the tariffs for these companies source the gas. Now, these city gas companies have been proposing that the number of zones should be brought down to 2. Now, PNGRB has proposed that change too, and this is positive for city gas company, especially Mahanagar Gas Limited. Now, brokerages also have written, City says, tariff computation on the basis of contracted prices will be positive for GAIL. Second, reduction in volume threshold to 75% will benefit GSPL. CLSA says IGL and for MGL, operational expenditure will come down if these changes are implemented. Also, there can be a tariff increase for GSPL and GAIL, and gas cost can increase for industrial customers of Gujarat Gas. So that can be minor negative for Gujarat Gas. Now coming to NTPC, because Macquarie has come out with a note today, and it has maintained outperform call and target is rupees 475. That implies an upside of more than 30% from current levels. Macquarie says it's a compelling play on India's power demand potential, and the pickup in power demand continues to bode well for the company, but there is further clarity which will be needed, and that long-term driver Macquarie is expecting that might come over next 6 months. On the back of this, you are seeing a big move in city gas company. Also, NTPC is higher on the positive brokerage note.
Okay, all right. Sir, thanks a lot for explaining that to us. Well, earlier today, we also spoke to Mr. Gajendra Singh, a member of PNGRB, who commented on the benefits the gas companies will receive. Let's listen in to what he had to tell us.
The entity which is far-flung area may be paying a Zone 3 tariff, which was very high, 105 plus, and the Zone 2 tariff is 85 plus. So all those entities, now they will get benefited. They will get basically the Zone 1 tariff, and the 3 zone now get converted into 2 zones. So the focus is that how we can increase the gas usage all across country, because the focus is for CNG and PNG. CNG and PNG, they will get benefit. Few entities or the few pipelines where it is flowing more than 75%. There we are seeing is whatever the excess volume will be there beyond 75%, the benefit will be passed on 50% to the entity, 50% to the consumers. And then only another thing is the isolated field. There are the number of isolated fields where there the tariff was basically, now these are the old fields, and what we are seeing, the pipeline which were laid there in those areas, they are not getting any returns on that. Somewhere the tariff is almost nil or maybe in a negative. So there we are seeing that at least they should recover their operating costs.
All right, so that was the PNGRB itself talking about what this new policy could perhaps look like. We have Deepan Mehta joining in from Elixir Equities. Deepan, great to have you with us this afternoon as always. So let's start off with exactly this excitement in gas stocks, because it seems that if this new proposal goes through, whatever they're discussing right now, it's not final, but it seems that it could be at least slightly beneficial to stocks like GAIL and maybe a GSPL, maybe even IGL, as the member explained. Any thoughts over here? Do you like any of these gas stocks?
Yeah, good afternoon, Subhi, and thank you for having me on your show. See, generally we've avoided these companies because there's excessive government interference. And now on the transportation side, what is happening is that more and more it is clear that EVs are going to play a central role across India and rest of the world. So from that point of view, also there could be some demand constraints. And also the fact that a lot of the public transportation, especially in metros, the buses and all are going.
Oops, I think we've just lost that line with Deepan. We'll try and get him back. Deepan, sorry, we lost you there. You're talking about how EVs will be a larger sort of thematic threat to perhaps gas demand.
Yeah, that's right. So that was my simple understanding that overall gas demand projections are maybe on the higher side. And secondly, don't really prefer to invest in an industry where there's so much of government interference, and government policies can make such a huge difference in terms of tariff distribution. But there's no doubt that these stocks are extremely cheap. They've underperformed, and there could be a trading rally in these stocks on any positive news flow. So from a trader's perspective, it makes sense. But from an investor's perspective, with a 2-3 year outlook, I wouldn't go in for these gas stocks.
Kotak Mahindra Bank, what a move, Dipan. Afternoon, it's seen 4.5%. The low around the time of the IT ban was about 1642. From that level, it's seen a gain of more than about 30%. What's happening in Kotak Mahindra Bank, and do you think there is more upside?
Yeah, I think, Rima, that across the board, people are looking at banks very closely. And banks like Kotak Mahindra and HDFC Bank were not only impacted by over-ownership, but also a lot of FI selling, considering a high proportion of FI holding is there in these companies. And if you notice, the FI figures have turned positive. So I think I just feel that some amount of money is coming back into these two banks. And looking at the fact that there could be some interest rate reduction, improvement in liquidity in the system. Both HDFC, Axis Bank, ICICI, Kotak, the four large private banks are definitely just about recovering lost ground, getting about some amount of outperformance, which they so deserve as well. So you could always justify buying these companies, but really our preference in the entire lending space is more towards the NBFCs, where growth rates are higher and valuations are still lower. And some additional benefits have come to NBFC in terms of lower risk weightages. So the likes of Bajaj Finance, L&T Finance, Cholamandalam, I think those are preferred over these four large private banks. But nonetheless, I think all the prospects are very good, and investors should be overweight the banking and the NBFC sector.
Okay. All right, got that. Dipan, stay on. We'll have more questions for you in just a bit. And as we welcome in Yatin from our sister network Awaaz, let's put up SML Isuzu. The stock's up about 6%. That's not the story. The stock in this month itself is up 65%. I mean, what a move in a tough 2025 so far for the market. This stock is actually up 24-25%. Like I said, a lot of the price action has happened in the last 3-4 weeks itself. Let's put up maybe a month to date if we can, or even a year to date chart for SML Isuzu. It'll kind of explain the excitement that I'm referring to. So what could the buzz be? There we go. Look at that. 1 month, 52%. That's the stock for you today. Now, what could the buzz be? And this is what Yatin is picking up. Sources at CNBC are saying that M&M could be in talks to buy the entire promoter stake. Yatin, no wonder so much of buzz around the stock. What are you learning?
Absolutely, and earlier also, there have been reports which suggested that Sumitomo, which is holding about 44% promoter stake in SML Isuzu, wants to publicly exit, smaller businesses as well as businesses with lower profit margin. Now, what we are gathering from sources is that M&M has initiated talks with the promoters of SML Isuzu to buy an entire 44% stake. This is in sync with the strategy to probably expand the trucks and buses business. In the small commercial vehicles, we have seen that they have garnered nearly 51% market share, but the trucks and buses business continues to remain a smaller business. With focus more on the trucks and buses business, the board of M&M is likely to meet this week to make a decision whether or not to look at buying that 44% stake from the parent company of SML Isuzu. Obviously, when we contacted Mahindra & Mahindra, they said that as of now, this story is speculative and they would not like to comment on that. SML Isuzu's comments are awaited. But what we also gather is that Mahindra & Mahindra is looking at a valuation of 1,800 to 2,000 crores when it comes to SML Isuzu's acquisition versus the current market capitalization of close to 2,400 crores. But would be interesting space to watch out for, because earlier also we have seen SML's promoters looking at an exit. Whether or not this time M&M could make an offer which could be accepted by the Japanese counterpart is something that we'll be tracking closely.
Okay, all right. Thanks a lot for that. Yatin will keep an eye out on that particular story. Well, Dipan, what do you make of this particular deal? Deal in the works, hopefully gets closer this time around. But how do you see, what's the outlook on both those two stocks?
I mean, imagine how can I comment? If it goes through, then we'll understand the whole implication of this thing. But I don't know. I wouldn't want to comment on this thing, and frankly, I'm not following SML Isuzu also that closely. But
what about for Mahindra?
Is very positive. M&M view is very positive, and I think the correction is a good opportunity. They have become the second largest passenger vehicle manufacturer, and the kind of response to their models is very impressive. And amongst the few Indian companies which have a very coherent EV strategy. So from many angles, a preferred pick within the auto sector is M&M.
Okay. All right. Dipan, if I'm not mistaken, I think you like APL Apollo Tubes from that space, if I remember correctly. You know, JTL is another stock that's now at the high point of the day. They have deployed the DFT, which is direct forming technology. And they are saying that their total VAP will move up to around 50% of the mix. And with this particular capacity enhancement, they'll move to close to around 1 million tons, 9.4 lakh tons approximately. From the pack, do you continue to prefer APL Apollo Tubes, though that is relatively more expensive, or are there other companies that you would like, say a Hi-Tech, a JTL? Would you look at them?
See, Nigel, first of all, the disclosure, we are invested in APL Apollo, so our views could be biased. But this is one company, which has clearly have a differentiated product model, and they are using a lot of impressive brand ambassadors to sell their products. And they are slowly converting a segment which was more commodity into a product type of segment. And with the way the architectural trends are taking place and the modern buildings which are coming in, modern structures, I think there's great demand for very high value-added products coming in through from APL. And last quarter numbers also were pretty decent after a bit of a lull. I know the stock is expensive, but they have very good headroom for growth. And maybe at corrections, you could look at buying into this company. But it's a company which existing investors should definitely remain invested and not get too perturbed about very high P multiples, because the underlying growth rate is pretty decent.
Got that. Let's talk about L&T. That's a big mover today. In fact, so many of the large caps are higher. Reliance Industries is a big contributor on the way up. And you've also got L&T. Now, reports suggest that L&T is the likely winner for a $4.5 million project coming out of Qatar. Vivek is here with the details.
Well, that's right. So L&T is in focus. Remember, earlier today we had indicated about how some of the reports as far as the Middle East infrastructure journals were concerned had actually mentioned that L&T had emerged as the likely winning bidder as far as a very large project from Qatar Energy is concerned. The total value of this particular project is in the range of $4 to $4.5 billion. So it could be one of the largest order wins that L&T could witness if in case the entire order does come into L&T. Remember, Qatar Energy is currently going ahead and increasing its LNG capacity from 70 MT per year to almost 126 MT per year. And this particular bid was for a project for expansion of the North Field South Expansion Project, is what Qatar Energy deems this particular project as. We reached out to the management of L&T. They did not offer us any comments at this point of time. But there are a couple of things that we need to watch out for. Number one, most likely it is possible that L&T will have to go ahead and book this particular order within FY25 itself. What we need to watch out for is the total scope of the work that L&T has. And in case this particular project, the EPCI works that L&T has won the bid for, whether it is split into and given to multiple entities. At this point of time, the report does not indicate that. The report indicates that L&T is the sole bidder that has won this particular project. In fact, just a while ago, Morgan Stanley too has reacted to this particular development. Morgan Stanley says that the size of the contract is valued between $4 to $5 billion. With this, the core order inflow for Q4 has reached over 66,500 crore. FY25 order inflow is now at $2.8 trillion, which indicates that it's an 18% year-on-year growth as far as core order inflow is concerned for L&T, which will significantly exceed the management's own guidance of just 10% order inflow growth. It's an important development, and we need to wait and watch by when L&T informs the exchanges.
Thank you very much for that. Dipan, you've largely had a preference for large caps over mid cap and small caps, but we've seen a pretty fantastic recovery over the last couple of trading sessions. First, give us your view on the markets on the whole, what we've seen, and L&T in particular.
See, now I think the markets have run up a lot and you could expect a correction. But more importantly, for investors who are having a longer term view, I think if the higher top, higher bottom pattern is established, then it'll give confidence that the worst is over. And also we need to get it followed up with good March quarter numbers and some amount of sanity when it comes to Trump tariffs. So broadly, I think unless there is some additional bad news, the markets from a decent bottom and from here on, it will build on this particular foundation. L&T in particular, first the disclosure we and our clients are invested. It's a kind of a must-own stock and like part of your core holdings, the top 4 or 5 holdings. And that's purely because of the kind of order book position it has got and the excellent way in which they have diversified their revenues, not only in India, but also overseas as well. And that gives great earning visibility. There's gradual value being built in the subsidiaries as well. But even if you don't consider the value of the subsidiaries, the existing core EPC business has got great prospects, and with capex cycle improving, government expenditure picking up, and globally, I think more and more opportunities for L&T. All these things put together, risk-return profile, I think L&T certainly is one of our top picks within the EPC space, where there are very few choices which have got good corporate governance and great track record, I would say.
Okay, all right, Deepan, we'll leave it on that note for today. Thank you very much for joining in. Good to get the perspective as always. We do have to take a very quick break, and as we take that break, here's some good news for our viewers. India's business news leader is now just a click away, introducing the CNBC TV 18 all-new app. You can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV 18 app from the Apple Store or from Google Play. You can also, of course, scan the QR code on your screen.
They're job-owning the Fed to cut the interest rates, and they're building tariffs so that domestic industry can do well. So they want to bring back manufacturing and manufacturing jobs. That is the constituency that elected Donald Trump to America.
Yeah.
Now, unfortunately,
it may not even be most cost-effective, which is the debate raging right now.
It is absolutely not, and that's the whole point I'm making, that when economics meet reality, economics is going to win. You know, it's just, you know, it's like when the Titanic hit the iceberg won. So economic reality is economic reality. You can't make jobs in America or pay people in terms of inflation when the same product will be available for 30-40% cheaper if you import it. It goes back to what Adam Smith said about specialization in the world. I think America, for all the leadership and intellectual leadership it's shown to the world, is losing that moral supremacy that it had in the world as the one superpower in the world, the one defender of democracy.
That's sort of getting me to the next question. So if you're saying that for the time being, maybe there are some speed breaks on the whole American equity story, what we've seen in the past, well, the last many, many years, that every time they say, America, sneezes, the world catches a cold. So if that were to play out, and let's say the American economy starts slowing down, American equity market starts faltering, in the past, we've seen everybody falls. Could it be different this time?
No, we will falter. I mean, there's no doubt about it that America is such a big, important economy that America squeezes the rest of the world, catching the cold. It's very true, particularly in emerging markets. But I personally feel that given that these are now considered permanent changes in the world, so you see what's happening in the world. China, India, Russia created their own trading bloc called BRICS. France has already made a declaration that it would now be the nuclear armament of Europe. Yes. So these are important changes in the world. So if America wants to go backward, the world will move on. The world will figure out different alliances, different prospects to take. And no doubt that they will move on. It is to America's detriment to realize that they were the centrifuge force in the world, and they are relinquishing the space.
Aside of India, just for a second, if I were to ask you, which is the other market that you would like? Maybe you will take exposure, maybe not, but a market where you... Welcome back. You're with us on Closing Bell, and it continues to be a solid afternoon of trade. I was just doing the math from the lows, and the Nifty is rebound very, very smartly, about 7.7, I mean, nearing 8% of rebound from the lowest levels that were hit just a couple of weeks back. So it's been good going with the bulls making a comeback. Rajesh Bhatia, CIO at ITI Mutual Fund, is with us now for some perspective. Rajesh, great to have you on. So it's, it's good times all over again, one would imagine, one would hope. But are you in the camp that also feels that the worst of this correction is indeed over?
Well, we'll have to see about that. I think, we should enjoy this bounce and we should not underestimate the extent of the bounce that can happen. But I think from a fundamental perspective, we are still in a slowing economy or a slower growing economy. And that challenge definitely remains. And the second challenge which remains is the uncertainty that has been brought about by the global macro factors. The US is probably trying to engineer a slowdown for their own reasons, but we should not underestimate the impact that can have on global growth, including that of India. So we are already in a slowdown, and if the US also slows down, which they probably want to, then my sense is that that can become a bit of a fundamental challenge. And listen, basically we do require top line growth, translating GDP growth, because given where margins are for the Indian corporate sector, we should not bet on a greater expansion of margins. So to get earnings trajectory, we do need top line growth, which is we do need GDP growth. And that's really what is necessary for the markets to firmly decide that we are on the right track and that a bottom has been made to answer that question.
So it's too early to say a bottom has been made as of now, to your mind. You're not convinced. What about, how would you construct your portfolio in such a scenario now?
Look, what has happened is all inflection points in the market are drawn really by macro factors. And the trigger for the market rise from the bottom has been that the US dollar has retreated and the US 10-year treasury yields have retreated. There is some fear of a slowdown in America. There is a thesis that probably the government itself wants a bit of a slowdown to refinance some part of the fiscal deficit or the spot that they are in. If that be the case, that has led to this rally. I would say that why I'm saying that you should not underestimate this is because those factors are not going to change in a hurry. And the FIs that have come in probably could persist for much longer. So as far as I'm concerned, I'm enjoying this rally. And I've used this opportunity to buy sectors where I think there is strength. So last time also I pointed out utilities, power utilities are the ones where we have added money. We had added money in the private banks sector. I've also used this opportunity to buy digital commerce companies such as digital insurance brokers or payment companies or electronic manufacturing services companies which are leading the space, etc. They may well become trades, I don't know. But as far as I'm concerned, I can see that this is a strong rally and I should participate in it.
Okay. Hi, Rajesh. Good afternoon. Good to see you. Ben, couple of questions here. You're enjoying the rally. I love the sound of that, right? All of us are. Portfolios are feeling better. Your SIPs, mutual fund holdings, everything is looking good. So that's good. Tell us, what was the cash levels you were sitting on, say, a couple of months or so ago? And how much of that have you deployed at current reckoning? What is your cash in books? And utilities is something that you've mentioned in the past as well. But which sector do you believe has run its course? And you would be a little bit skeptical on that particular sector. So 2-point question.
So I run a balanced advantage fund, and at the peak we had more than 65% exposure to equities. We had brought it down to as low as 35-37%. We are now back to 60+% or 60% as far as the balanced advantage fund equity allocation is concerned. So that's to answer your first question, where we do tactical allocation. The second question, where are we seeing weaknesses? Consumer is still weak, auto is still weak, consumer electronics is still weak. IT has probably given some bottoming out because IT stocks have corrected 25% or more. But I guess, they are at now attractive valuations. But those are some of the sectors that I think are weak. One other non-consensus weakness that I see probably can be capital goods. Because I think the leadership of the market probably could change. And capital goods were the leaders of the last cycle. It's possible that I think that capital goods may not do as well in this cycle as you move forward.
Okay, all right. Rajesh, just one more question on tech. That, as you said, has been a relative underperformer, but now valuations are looking pretty okay. And I think CLSA as well pointed out earlier today that most of the bad news appears to be in the price post the recent underperformance. I think my director as well will pull up the Nifty and say the tech index, and we'll see that tech has underperformed just in this year. From the tech basket, Infosys is something that you like. Besides that, what do you like? Would you prefer the large cap names or the mid cap names?
So, I would definitely prefer the large cap names because I think the large cap names all have yields of about 4+%, and they've come to about 20-21 times 27 earnings. I think that's fairly reasonable in terms of prices. Some of the mid caps are still very expensive. Some companies which are in the middle, they are larger capitalization companies, but actually growing at mid cap rates. I would say that those have become attractive as well. Those stocks have corrected by over 30-35%. So that's another category in the IT space that I think we have bought and which we like.
So IT, you're getting a little optimistic on it. That's an interesting call. I just want to, Rajesh, go back to that point that you made on some of the consumer technology companies, I think, right? That's a space that you're looking at. But can you sort of dive a little deeper? Lots of different companies from, beauty and personal care to, of course, food delivery, e-commerce, etc., and also some fintech players which are listed. So what part of it are you most convinced on? Because, for instance, in quick commerce, there's still a lot of cash burn. Companies are still in investment mode.
Yeah. So the fintech part of it, sorry to answer your question, the fintech part of it is where I am where I've added more recently to my exposure.
Okay. All right. So tech you like, some of the consumer tech names you like. Overall on consumer, Rajesh, what's the sense? The seasonal sort of flavors do come in, AC stocks right now, etc. But beyond that, on consumption, Titan, of course, there's been a note doing the rounds today talking about perhaps weakness because gold prices have shot through the roof. What's your overall sense on consumer and what's the advice?
No, so among the sectors that we like, just to reiterate, are private banks, NBFCs, utilities, life insurance companies, telecom. There's enough strength in all of these sectors, and we continue to like them. As you pointed out, we think IT is probably at closer to bottom valuations, and digital commerce companies, particularly in the fintech space. Those are some of the areas that I think at least I'm excited about. As far as consumption is concerned, I'm not really seeing any reason to kind of dive in and become aggressive. So staples, I would say automobiles, none of these, and as you point out, some of the other companies are also pointing out that the demand traction is not very attractive. So, I don't have to be in these spaces. So I'm avoiding some of these spaces for now. And my sense is that there's enough on the other playground to kind of play and to make money. And there's greater predictability, there's greater visibility. That is what I look for. Where can I predict strength in earnings? And that's really where I want to be.
Thank you, Rajesh, for joining us in the conversation today. But confidence is truly coming back in the markets. Look at the way some of these PSUs have rallied. BEL up 22% in the month of March, BPCL 18%, NTPC 17.5%, Power Grid up close to about 16%. So it's been a fairly convincing recovery over the last couple of days. Mount 78,000 scaled on the Sensex. The Nifty's hit that 23,700. From there, it's retraced a bit. So the Nifty is now down to levels of 23,633. So from the high, we've fallen close to about 100 odd points from the top from this session high. But it's still a very, very convincing up move that you can see. Expiry this week on Thursday. We'll slip into a break. On the other side, we'll get you a check on what dealing rooms are saying in our favorite segment, D Street Chatter. We'll also get you a few BTST calls.
Outside of India?
I mean, I haven't, to be honest, the only two markets that focus are India and America.
US,
the most important markets screen. But just going through the data, I would say Europe would already be starting a bull run, which is, then I can't understand coming.
A European bull market.
Or European bull market when it's facing the moment of crisis. But you remember in 1991, India faced this moment of crisis.
Yeah.
And the index was below 1,000 there.
Yes.
Yeah. Sometimes bull markets are born out of that.
Out of crisis. So.
The good news would be is that in my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market.
Okay.
What happened was the first correction in 4 or 5 years, it was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. Secondly, more importantly, in the last 60 to 90 days, I put, I had the road, rubber meet the road went and visited a lot of companies, just try to get feedback on what things are in corporate India out there. And almost universally where I went, people are talking about expansion, talking about growth, talking about margins, talking about profitability. So this was more of a market event than an economy event. There's very little leverage in the system. Banks are not leveraged. The stock market is not leveraged. So it was just a correction of valuation, which had probably become excessive, took place, and now we're resuming the bull market that began in 2021.
Well, that's really good to hear because, yeah, absolutely. I mean, we couldn't really pinpoint an economic crisis or a financial accident which triggered this. It kind of, just happened on its own. On valuations, and that's why it's a little, important to understand both valuations and the power of flows.
Welcome back. Well, let's get in Mitesh. As Rima said before we went into that break, the markets have come off a smidge from the top. Mitesh Thakkar is back with us. Mitesh, you'll continue to hold on to your longs, and also what are the fresh trades you got for us?
I would, Nigel, but I think, as I said, you would want to trail the stop losses now really close because you're also slightly overbought on the hourly charts and you're also hitting some pivot levels, So on the Nifty, my advice is to trail the stop loss about 23,570 on this spot, which is roughly about 70 odd points lower from the current market price. And let's see that, if this move is really strong enough to even run beyond that. But for the timing, I think that's the trading level. On the stock side, I have a BTST on RVL Bank with a stop at about 172.5 for targets of 178. And the other one which I like is, stock which is making a fresh high is Chambal Fertilizers, which I would recommend a BTST with a stop at 614 for targets of 630.
Thank you very much for that. Let's find out how happy dealing rooms are feeling. It's been a good run over the last 6 days. Nimesh is now with us with D Street Chatter. Nimesh.
Hi, Rima. So it's a very strong day, strong momentum in land. It's largely backed by FI buying, as also aggressively short covering. So that's the key reason why even after a big rally last week, we're seeing that momentum continue, and it's largely for the bulls to start with in the news in this particular week. I guess what's happening to now is that it's getting broad-based as well. So a lot of sectors are participating on the upside. From a flow perspective, metals, banking, and IT. These are the three sectors which are well bid by larger institutions today. So there is clearly broad-based happening in terms of sector participation as well. A word on Nifty Bank, that's been a big gainer today, up 2%. And for a change, this is led by private bank stocks. It was only to select private banks. Now it's getting spread to small private banks as well. So a lot of private bank stocks are buzzing in trade. The likes of Kotak Bank, RBL, all are doing good. And there is a bit of buying flow as well from larger institutions. The broader market breadth has also been quite strong for the last many days. The mid-cap index is up another 2%. And a lot of cash stocks are now seeing a bit of catch-up. So the sense is, while this momentum on Nifty will continue until the expiry this week, but now you probably can see a bit of, a pullback into the cash stocks as well. That's the broad sense from a dealing room perspective. Even technically, we're above the crucial resistance level. So maybe till the expiry, this momentum is likely to continue, and you might see further short covering in large cap names.
Okay, all right, got that, Nimesh. What about individual stocks? What's on your radar?
So the first on my list today is IEX. That's been buzzing in trade on back of very strong buy flows. Of course, it's a strong power demand play. But for IEX, the most important trigger is the market coupling, and that is what Street is sensing that it may come very soon. Some clarity is likely, and that's the reason why we're seeing a bit of buzz in IEX today. The second stock, a couple of PSU names, Power Grid and NTPC, both stands out on back of very strong buy flow. So I've been saying for the last many days that there is buying interest in PSUs, and these two stocks stands out in terms of delivery-based buying today. On the flip side, the third name is Shriram Finance. Within a financial name, this is the only stock where there is aggressive selling today. Maybe it could be a one-day factor, but there is very, very strong sell flow from larger FIs in Shriram Finance in today's market. And the last is HDFC AMC. Again, while the stock is corrected sharply from the recent highs, a bit of pullback is visible. There is buying interest as well. And I understand a leading long-only fund has turned active buyer in HDFC AMC of late.
Thank you very much for that. Power demand has been very strong. It was strong in the month of February and even in March. That's what the demand trends seem to be indicating with the soaring temperatures. Some other mid-caps which catch your attention because they're moving up on very large volumes. You've got JBM Auto 16% up, Finolex Cable, 11% higher. Remember last week it got hit when Adani announced its entry into cables and wires. It's rebounded sharply, good volumes. IREDA, MRPL, RailTel 5.5% higher. And then so many banks, as Nimesh was pointing out, it's broadening out across the banks. You've got a Federal Bank, Canara Bank, RBL Bank, Union Bank, all showing gains between 4 to 5%.
Well, that's right. Well, let's focus on BSE then. The stock is a little under pressure in today's trading session. I chatted with the MD and CEO of BSE, Mr. Ramamurthy, earlier today. I just want to bring you the broad, takeaways that I got from that conversation. What he said was BSE will not run behind market share in the derivatives segment, given the change in expiry dates that we have seen. With regard to that, I asked him, are you going to go ahead and are you going to change the expiry date for BSE contracts? He said that they're currently evaluating and all the announcements changes, and they'll come up with a reaction in the due course of time, if at all. So that was the other clarification that they did come up with. On the total turnover coming down, they said the notional turnover has come down by around 40%. That's across exchanges. And the premiums have declined by close to around 17% across exchanges. However, they said that the notional F&O volume for the BSE is down by only around 17%. And the premiums for them are more or less stable. So across exchanges, it's down more, while for them, they believe that it's down by only around 17% and premiums are more or less stable. On the cash market volumes, they say, in fact, it's gone up a little bit. And they'd spoken about this earlier, that some movement from the derivative volumes could be moving to the cash market. They're saying that's happening. And their market share is hovering around that 7% odd mark. Well, on that note, let's listen in to the man himself, Mr. Ramamurthy, and what he had to say earlier today. What's the probability of you changing the expiry day? Is it high, going by what you have got back in terms of a feedback? Point number one. Point number two is, by when will you respond to this? If there is a change, it appears that for April, there may not be a change. You can correct me if I'm wrong on that. By when do we hear a response from the BSE?
See, I would like to reiterate that BSE's expiry was next to NSE's expiry of Nifty and Bank Nifty for a significantly long time when it was relaunched. Notwithstanding that, Sensex was trying to find a feet. But only thing what it was not able to achieve is proper economic significance of itself. So whether in the revised situation when BSE Sensex is establishing itself as a clearly important product, what should be the action should be carefully thought about. It cannot be defined in terms of time horizon. It has to be talked about in terms of the entire realignment.
Indeed. But there's a probability you'll look at changing it.
No probability can be ever ruled out. Only ascribing a percentage high or low will be very difficult at this point. The market feedback that we received from people whom we approached and people who approached us, the point that underlines is that there should be a spread between two expiries. What it should be, how it should be are nuances. We need to see how the market spans out in respect of all this. Since we are having too many other realignments already happening, anything done in a hurry will not help in the product development and economic development. So at this point of time, we are assimilating all the announcements, changes, and we will come out with a stand, what will be useful for the product.
That's Bombay Stock Exchange. But let's talk about IT. It's been a good day for the IT stocks. The Nifty IT index is up close to about 2%. CLSA says the uncertainty is priced in. The Nifty IT index is down nearly 15% this quarter, underperforming the Nifty, which is now, on a year-to-date basis, it's flattened out completely. It's erased its losses. But IT has, clocked in considerable underperformance. And according to them, a lot more pessimism is built into the current valuations than the potential earnings cut. They do acknowledge that the macro is uncertain, so there will be postponement of discretionary demand by 1 or 2 quarters, particularly in sectors like manufacturing, retail, which could feel the pain of the tariff war and the tariff disruption. They've lowered the revenue growth forecast for the IT companies for FY26 by 3 to 4%, but the bottom line impact may be limited because of rupee depreciation. That said, even if discretionary demand is not coming back in a hurry, there will be a lot of cost optimization deals, large deals, where Indian IT companies could fare well. HCL Tech, CLSA has upgraded it to an outperform because HCL Tech has been an outperformer in terms of growth rates for the last 2 years. And even next year, according to CLSA, it's likely that HCL Tech will outperform. But they also like the rest of the large cap IT pack. So they're bullish on TCS, Infy, HCL Tech, Wipro and Tech Mahindra. On LTI Mindtree, they've upgraded the stock, but their rating stands at hold. And just to put on board, because this is a preview note, FY26 growth expectations, the guidance that they expect Infy to give is 2 to 5%, HCL Tech 3 to 5%. So that will give you an indication of the kind of year it's going to be, at least for large cap IT companies, low to mid single digit kind of revenue growth. But according to them, that's priced in after the recent underperformance.
Okay, all right. So that's an optimistic view coming in from CLSA on the IT space. Okay, I think we have Mayuresh Joshi now joining in. Yeah, okay, Mayuresh is with us. Good afternoon, Mayuresh. Good to have you on. So you're wearing the color, I think, of the season, right? The color is definitely turned green. I'm in the wrong color, but mine is more brown than red, to be fair. Let's actually start with this IT call that CLSA has made. The question is, if the market is bouncing back, then would you look at IT right now, considering that at least in the near term, FY26, those growth numbers are still looking, pretty muted at mid-single digit?
Afternoon, Surbi. No, absolutely. I think green is the color to go for, and always remain optimistic on that. But coming to IT specifically that you asked, I think looking at how Q3 numbers played out for the pack as a whole, what is probably happening with Accenture and Cognizant in the US, though a large part of the revenues, a significant part of the revenues are dependent in terms of US government contracts, and that is where I think the disappointment on both these stocks are coming through. We are traditionally outsourcers, and therefore I think the kind of work we are doing, specifically in AI, Gen AI, where there is, again, massive competition coming in from the Chinese counterparts as we speak. I think Q4 numbers are going to be defining for the sector as a whole. And therefore, our take is, with all that is happening from a macro perspective, what Trump does with tariffs on April 2nd, what happens with the corporate discretionary spending, because this is the quarter where corporates will largely decide what kind of spends they will go through. I think all this will get determined in terms of not just numbers, but the commentaries will hold key in terms of the forecasting that will be over the next 4 quarters. And therefore, I think our approach has been pretty simple. These stocks have underperformed. They are probably oversold and they're bouncing back as we speak today. But we will wait out for numbers, whether it's large cap or mid cap IT, see how management commentaries are playing out. And then probably pick and choose depending on how the commentaries have been. So largely, Surbi, to answer your question, sidelines as far as the IT sector is concerned.
Okay, so on the sidelines on IT, got that. Mayuresh, we'll take a very, very quick break actually. Stay on, we'll have more questions for you. As we take this break, let's also leave you with some opinion that we got from Manishi Raychaudhuri of MR Capital.
Earnings estimates have always been revised down, and that's partly because almost all the company commentaries that we have seen, they always tend to postpone their timeline for a recovery. Almost all of them, be it in consumer discretionaries or consumer staples or in industrials, they almost always have kept on saying that, okay, the recovery is on the horizon, but it'll possibly take a couple of quarters from now. So that recovery timeline is getting postponed. Every time we hear them, valuations have come down a bit, both large caps and mid and small caps, more so for the large caps. Frontline large cap banks, and our positive stance remains there. Earnings growth forecasts are in the range of early teens over there, but when you compare that to the valuations, which have come down drastically over the last couple of years, I think large cap frontline banks, they seem to be one of the best bets in India right now.
First correction in 4 or 5 years. It was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. The shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on the Lal Street, as everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that, wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital, but they have a right to sell and I don't begrudge that. Market has a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraints. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market. And market will correct itself. Anytime the valuations of something become excessive, people step in and sell, insiders sell, someone sells, and that creates a buying opportunity.
Europe, I think, has outperformed significantly, and rightfully so, given that things have gone from really, really bad to perhaps looking better. And I think the fiscal stimulus you're seeing out of Germany has been necessary for so long.
Look at that beautiful looking green map. I mean, it's an all green screen, literally almost every single sector on the Nifty tally is up and about. Strong gains, and obviously PSU banks leading from the front. Mayuresh, let's talk about PSUs really. What's your approach? And give us one or two specific names. I mean, stocks that you think can still be bought fresh now that the market momentum has resumed, and the ones where you would advise an exit, basically use the bounce to sell out. Maybe 2 or 3 specific examples there as well.
So, Surabhi, I think from BSU baskets, I think a select few banks and defense companies are probably looking reasonably placed as we see it in markets with India as per our ratings and rankings. And therefore, top of the rack, obviously State Bank of India. You've obviously seen decent numbers come through. The expectation largely is that even considering the base that they are operating out of, numbers should still be reasonable enough, both in terms of advances growth, in terms of keeping their cost to incomes in check. The kind of provisioning that they've probably done on their balance sheet is expected to cover a large part of not just their existing pool of assets, but along with that, the expectations in terms of lower restructured asset, lower slippages will probably mean asset quality check, and therefore return ratios should show significant amount of improvement with valuations and the early stage base that it is operating out of being very, very lucrative. So both from a valuation perspective and the base setting perspective, as we see it in markets with India, very, very appropriately placed. Out of the defense pack, obviously, I think they had got beaten down. Valuations were through the roof. But with the corrections that we've probably seen, valuations have become a lot more saner. The expectations in terms of a few select stocks, and within that particularly Maznau Dock is an example of what we've added in our global portfolios as well, as a clear disclaimer. I think the intention here is with the order book that they probably have, the revenue visibility in terms of the orders on hand seem to be significant enough. The margins at which all these orders have come and are getting executed are reasonable enough as well. And therefore, I think the kind of operating leverage with better execution that shipbuilders can probably deliver can be significant. Again, let's not forget the trigger. Europe is propping up its defense spends. The expectations from a macro perspective as far as the shipbuilding industry is concerned, almost 40% of the entire shipping fleet is more than 20 years old. So if you take that statistics, I think another 3-4 years down the line, a large part of these ships will either get scrapped or need to get refurbished in a significant manner, which means either repair work or fresh ships need to be probably built or commissioned. And therefore, I think these shipbuilders will probably remain in focus as far as the earnings pedigree is probably concerned. I think a few spaces within the PSU universe would be largely, I think, might be power, even though I think as a sector, we like the sector a lot. I think a few stocks within the spaces are still a little bit uncomfortable in terms of numbers. And therefore, I think within this space itself, I think you probably need to just ensure that you have the right stock in your portfolio. Because if you're probably having the wrong stock, you probably might be having stocks which are a little bit elevated. But apart from that, in my opinion, again, I think largely PSU stocks should do well. Generally, dividend yield is something which can be of a huge value add as far as these stocks are concerned as well.
Mayuresh, what about Titan? Ending down with a cut of nearly about 3%. Ambit says that their channel checks seem to suggest that revenue growth momentum has slowed down in February and March on account of the sharp rise in gold prices. And you couple that with valuations expensive, 50 times. How do you feel about Titan?
Afternoon, Viman. Again, I think two things for the business construct as far as Titan is concerned, right? I think they're playing out in the traditional business where I think the studded component is a little bit lesser than its peers. And therefore, I think the margin profile that comes through for Titan is a little bit lesser compared to its peers as well. So I think obviously they're trying to restructure their overall portfolio gaps, including wedding jewelry, including the studded portfolio, which should start propping up the margins over the next few quarters as well. The second element, obviously, I think, as all of us are speaking on the street in terms of lab-grown diamonds, what kind of an effect does that have? Does Titan have a strategy in place? And if that strategy in place is going to be margin dilutive, I think is something to be seen as well. But if you probably look at the lab-grown diamond makers as well, I think they operate generally within a margin of 20-25%. So I think what's the strategy that Titan probably has in this tier of business is going to be extremely critical to note. And last but not the least, I think the way numbers have probably come out with gold prices at elevated levels, obviously the appetite in terms of how volume growth has been. And a large part of the wedding season is now behind us. So to that extent, again, what are the growth dynamics coming through in terms of sheer numbers and absolute numbers at will? I think that probably needs to be seen as well. So in our opinion, again, I think the ratings have come off quite significantly. The earnings have disappointed. The stock might actually underperform unless it starts showing some element of respite as far as the business.
Okay, all right. Hi, Mayuresh. Mayuresh, a quick word on BSE. The stock has come off the recent peak. I spoke to the management earlier today, and they said it's more like wait and watch mode. For the time being, they're holding on to their market share in the cash segment of around 7%. And on the derivative segment, they said interesting to see how things pan out from here on. What's your view? It's not particularly cheap even after the pullback.
No, absolutely not, Nigel. Afternoon to you as well. And again, I think we will wait and watch because I think there has been a significant amount of no valuation still not cheap. And there is a lot of news flow which is happening around expiries, around contracts, so on and so forth. And therefore, I think the ideal situation here is to wait and watch. Within the capital marketplace, our own sense is that the asset managers or asset management companies, whether they are wealth management companies or the pure AMC players, I think they are a little bit better placed. A large part of their asset pool is going to improve over the next few quarters. And therefore, I think with the kind of upfront loaded costs that have already been recognized on their balance sheet, I think anything incremental that probably comes through is going to be margin accretive and accretive from a yield perspective on their overall assets as well. So I think a few of the wealth managers and asset management companies, Nuvama Wealth as an example, or HDFC AMC is something that we've got.
Okay, all right, Mayuresh, we'll just quickly go through the final closing rates and then come back to you in Markets Forward. But what a day it's been. What a solid day. Not just days, right? And once again, I'll look out for the FPI numbers today to see if there's any evidence of a follow-through after over 7,000 crores of buying on Friday. 325 up on the Nifty. It's a solid move, and it's a move cutting across sectoral lines as well. PSU stocks moving higher, power stocks moving higher, IT, banks, financials. So let's look at the names. Kotak Mahindra Bank, almost 5%. NTPC, 4.5%. State Bank of India itself, almost 4% higher. Axis Bank, about 3% on the upside. Then you have some of the PSU names like Power Grid, BEL. These are stocks that have done quite well for themselves. There's buying on financials, HDFC Bank, SBI Life, Most of these stocks, Axis Bank, most of them up and about. Reliance, L&T, all contributing quite well. And today, you didn't even have too much of a complaint from the IT majors. Infosys just at the flat line. But names like HCL Tech, for instance, have done better, 2.5% on the higher side. The weakness was IndusInd Bank. Watch for the selling on this stock as the market's closing almost 3% down. And then there's, of course, Titan and Trent. They're weak hands today. But otherwise, Nigel, what a solid day.
Well, solid day. JBM Auto, that's the one that did well from the broader markets. Power Mech as well was up close to around 15%. Keep in mind, these stocks pulled back when the markets went a little bit jittery, and now they're fighting back. You have Kirloskar Pneumatic. Well, that stock was up more than 10% in today's trading session. IRDA, good move is what we are seeing. Centrum Electronics, I recall that a large fund came in there and they bought a stake close to around a week or so ago. And from there, if I'm not mistaken, the stock has rallied more than 20%. So big move is what we're seeing out there. Vascon, another stock that did well in trade. Alkyl Amines, that's another stock that was up close to around 10%. So a lot of winners actually from the broader markets, and some of them come up for you on the screen. So good trading session is what we saw in trade today. The Nifty goes home with the triple century. The Nifty Bank puts on 1,000 points, and the breadth of the market firmly in favor of the number of stocks that were advancing. Time to slip to wrap up on this show. We'll be back with the markets forward on the other side. Stay tuned.
Only thing that matters. Europe still needs a weaker dollar. Europe still needs to find a way to better coordinate financing and giving money to businesses to actually form. So, and Japan honestly has been forgotten in the developed market perspective, but Japanese markets actually have the strongest earnings acceleration. And that to me is very, very important looking forward. So Japan, I think, looks very interesting from a global market perspective. On the emerging market side, India is finally bouncing. Like I said before, if we get confirmation and this rally continues past April 2nd, I'm cautioning against leaning into the rallies that we're seeing globally, particularly if we see more of a relief rally in the US, simply because there's a lot that we still don't know. There's been so many starts and stops with respect to tariffs, it's really hard to believe a lot of the headlines that we're hearing from the administration. And I actually think that rather than reciprocal tariffs, which are very painstaking and difficult to put into place and are going to require more time, I think April 2nd is really going to be more about penalizing tariff villains or perceived tariff villains around the rest of the world. So I think India might be in store for perhaps some tariffs that get put in place. But to your point, I don't think it greatly will impact the Indian market. And so for me, what's a really important cue to look for is, can Indian markets continue to push higher in light of some tariff volatility?
There was an unsanctioned car show at the park prior to the shooting. The call for the gunshot victims came in at approximately 10:10 p.m., again on 3/21/2025. The investigation so far reveals that there was an altercation between two groups of people, and that altercation escalated to gunfire between both groups. Several other people were also injured in the crossfire.
The Wall Street gains for 6 straight days for the first time since September 2024. The Sensex and the Nifty hit the highest levels in 2 months. Financials gained the most. BSE-listed firms regained 40% of the losses seen between September 2024 and February 2025.
Strong dollar selling by foreign portfolio investors and exporters pulled up the rupee to near 3-month highs. Exporters are in a rush to bring in dollars before the month end, while speculators are finding it very expensive to stay long dollar given the month-end positioning, dealers say.
Gas stocks trade with healthy gains on proposed amendments to the tariff regulations by the PNGRB. The new rules may increase tariffs for GAIL and GSPL while reducing gas sourcing cost for city gas distribution companies. Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we get you up to speed with regard to today's trading action and set you up for tomorrow. I'm Nigel and with me is Surbhi. Hey Surbhi, a super duper trading session. Green is the color that we're getting used to.
We decided that's how we'll welcome you back by a market in a very, very different mood from the one when you had left, right? A week can be a long time. And indeed, what good news for the bulls because that up move really continued today. So very quickly, once again today, the Indian market has been in the outperforming market, just to talk about that. And when you look at the screen, there is no complaint because it's not just the Nifty or a few stocks moving higher. The mid-cap index, financials, all of those pockets of the market have been moving higher. So that was the other good aspect of trade today. In fact, if you talk about the recovery, then the lowest point that we hit in this period of correction was actually on the 4th of March. And from that 4th March low, the market has recovered very, very beautifully. It's recovered almost 8% at the Nifty level and almost 12% at the level of the mid-cap index. Maybe we can get some of those pointers up on the screen. And that's the recovery we're talking about. Let's show the, so that's 7.5% from the lowest point. And it's a very widespread up move, which continued today, Monday as well. Let's pull up the heat map if we can, because whether it's PSU stocks, CPSEs, private financials, public sector financials, talk about real estate, talk about IT, oil and gas, energy, anything and everything was up in this market. So you really can't complain that it's a very narrow sort of manufactured sort of a move. There we go. That's the heat map. And that really explains what's been going on in this market, which is why there's serious momentum as the recovery continues to play along. Of course, we have to see if global markets can play ball. But anyway, today we were outperforming irrespective of what was happening in global markets. And Nigel, not just that, mid-caps also doing well. All in all, it's been a fantastic showing.
Well, that's right. And should be the good news is that everyone was fearing how bad is 2025 going to be. Guess what? After this pullback, in fact, the Nifty is now positive for the year. And just push in another point. In the last 5 years, now it marks, today is the close to the 5-year anniversary since the time Nifty hit that low of around 7,500.
COVID low.
COVID lows. So from in the last 5 years, the Nifty has moved from around 7,500 to around 23,500 odd, which is up close to around 3.1 times odd. There'll be a lot of fear mongering, but in the longer term, I think there are good gains to be made. And year to date now, we have turned positive as well. But let's tell you what's lined up for the show, on the show for you. We start off with all the top movers and shakers. Vivek will be standing by for that. Gas stocks, they traded with healthy gains on the proposed tariff regulation amendments by PNGRB, while Mahindra & Mahindra was in focus in today's session. Stay tuned, we'll get you more on all of these segments. Last but not the least, we'll delve into the key market events to track for tomorrow's trading session. Straight to our first segment though, Vivek is standing by to tell us all the top movers of the day. Vivek, take it away.
Well, thank you so much for that. 6 straight session of gains, so no complaints at all. Overall, very, very strong session where you actually had a lot more gainers than laggards. The first set of stocks that I'd like to highlight, of course, the banks, the entire banking pack. Kotak Mahindra Bank clearly stood out almost 5% higher. And along with that, names like Canara, Federal, Bandhan, RBL, some of the stocks that have seen recently, significant sell-off, all of them bounced back, especially RBL Bank up over 4% in the session today. The other set of stocks that did very well was the capital goods and defense stocks. They continued the rally that they see, that they have been seeing since last week. So names like Cummins, BL, BML, HAL, especially in the last half hour, HAL saw significant up move. And Engineers India, that was another stock that did very well in the session today. L&T was the other stock in focus. There are hopes that the company is going to go ahead and bag a very large order win, waiting for clarification or one particular development from the company is something that's awaited, but still Stock ended higher by close to 2%. The other stock that did very well and continues to recover from the recent lows is Policy Bazaar, almost 3.5% higher in the session today. And in the last hour of trade, a couple of chemical stocks, alkyl amines, there were news reports indicating that there was an anti-dumping duty that's been imposed on key products that the company produces. Alkyl amines ended higher by close to 10%. On the other hand, some of the stocks that saw selling pressure, Titan, there was a report from Ambit saying that growth estimates for FY26 and 27 may have to be revised downwards, stock down by 3%. KFC International, this particular stock, top laggard as far as NSE 500 was concerned. And Jindal Stainless, something that you highlighted earlier, there have been cuts to EBITDA estimates from Nuvama after meeting the management. Low volumes is something that they expect. Back of that stock ended lower by over 5% today.
Okay, all right, Vivek, got it. Thanks very much. So that's the stock action of the day. But it was not just the equity market that was celebrating this big up move. Today was a great day for the Indian currency as well. The rupee has wiped out all of its losses for 2025 thanks to strong dollar selling by foreign portfolio investors in the market and also by exporters. Sentiment has changed quite dramatically on the rupee after foreign funds turned buyers of equities, and hence they have been selling those dollars in the market over here. Lata is here with more perspective on what's been a phenomenal move for the rupee. Lata.
Oh, it's been a blistering set of records for the rupee. It's the 7th straight day of rally. It has erased all the losses of 2025. It is at a 3-month high, and it is up over 2.5% from the low that the rupee touched on February 10th, when it cost 87 rupees 95 paise to buy a dollar, and today at 85.50. It's a long way that the rupee has appreciated. Actually, it's twinning very nicely with the equity markets. The Nifty also has erased all its gain, all its losses for 2025, and the rupee has done much the same. So that explains the reasons. The big reason for the rupee's fall was the inexorable buying of dollars by FPIs. They were selling shares, buying dollars and leaving the country. Now that's turned, and they have turned buyers of equities, which means they are selling dollars. And that's one big reason, of course, why the rupee is gaining in strength. The other reason is that a lot of people are caught long dollars. They are in the wrong side of the trade. A sizable chunk of that are exporters who have to book their profit by March 31st. And they were seeing visions of 87 and 87.5. Now you're barely getting 86 for the dollar. So people are selling out in a hurry. The arithmetic that people say for March 31st, it's called an LDFD. That is last day, first day. That's the day the trade expires, March 31st. If you have to make gains on your dollar positions, the dollar has to become expensive by at least 15 paise, and at the moment that looks like a long shot. So there is quite a hurry to sell dollars. It's a very thin market, and there are hardly any buyers. RBI doesn't seem to be obliging.
Thanks a lot for that, Lata. Well, let's get our guest onto the show. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, and Jay Thakur of ICICI Securities. Hi, gentlemen. Always good to see you all in. Jay, you go first. Blistering rally, right? I mean, 1,700 points and counting from the recent lows. It appears the bulls are fired up. Where do we head from here?
Very good afternoon to you, Nigel, and good afternoon to you, Surbi. Absolutely. I mean, what a smart recovery we have seen coming back into the Indian indices, and I would say the point of time, Nigel, when 22,500, 600 levels were taken off this point of time, we have seen a unidirectional move on the upside, wherein the call writers are caught on the wrong side, and it's not only on the Nifty, but it's across the board, maybe Bank Nifty or the financials, which has helped Nifty to bounce back quite sharply. And I think that now this leg would continue on the upside as far as the Nifty mid cap and small cap is also concerned. I think that till 52,000 levels there on mid cap Nifty is held. Probably till 15,000, 15,500 levels on small cap Nifty are held. I think the upside is still much more pending out there, because we have seen these these indices beaten down quite a lot. They've underperformed the Nifty and Nifty Bank. And also to speak about mid cap select Nifty, I think it's heading towards the 12,200 levels as far as April expiry is concerned. So you'll see further short covering happening there as well. I mean, still much more left out there. So I'm bullish more on the banking financials and Nigel first. Thereafter, I would say, within which now I think that the PSU banks will further outperform the private sector banks. So far, private sector banks have outperformed. So PSU banks should bounce back from here on. It's just the auto IT These are the two sectors which I think would participate less in the overall recovery. Otherwise, most of the sectors are looking quite positive, which can help Nifty to inch towards 24,500 to 24,800 levels going forward.
Okay, all right. Thanks for that, Jay. Well, let's get to the sector of the day then. Natural gas stocks is surge in trade after the recommendations came in to the regulator. The new rules may increase the tariffs for both GAIL as well as GSPL by lowering gas sourcing cost for city gas distribution companies. All those stocks did well in trade today. Sudarshan Kumar joins us to explain all of that to us. Sudarshan, take it away.
So the gas regulator PNGRB has proposed certain changes to natural gas tariff regulations 2008 and sought comments from the major stakeholders, and those comments have to come by April 11. Some of the major changes, first one is price of gas for fuel consumption now, which is used basically for the tariff computation, has to be done on contracted prices. That has been the key ask by major player like GAIL. Now PNGRB has proposed their change that will be positive for GAIL if it is implemented. Second, the major change is related to the older gas pipelines, mainly which are older than 10 years. Currently, if any pipeline which is older than 10 years does volume of in the range of 80 to 88%, then only the company maintaining that pipeline is part of, basically gets the incremental revenue of 50%. Now, the companies have been asking that volume limit has to be reduced. PNGRB has accepted that proposal as far as these proposals are concerned, and now that volume reduction is being seen at 75%. If it is implemented, it will help companies like GSPL and to an extent GAIL as well. Third is for city gas company. Currently, we have 3 tariff zones, Tariff 1, Tariff 2 and Tariff 3. These city gas companies have been asking that number of tariff zones has to be reduced to 2, and PNGRB has accepted that as well. And this will be positive for city gas companies like MGL and IGL. Brokerages too have come out with certain notes, and Citi says tariff computation on the basis of contracted prices will be positive for GAIL. And if volume threshold is reduced to 75%, it will help GSPL. CLSA says operational expenditure for IGL and MGL will reduce if changes are implemented, and GSPL and GAIL, for these two companies, tariffs will increase if changes are implemented, while for Gujarat Gas, gas cost for its industrial customers can increase, and that will be minor negative. But overall, it's positive for gas companies, GAIL, GSPL, and city gas companies, MGL and IGL.
Okay, all right. Got that, Sudarshan. Thanks for explaining that to us. Though this, of course, is still not final. This is still within the realm of, I think, discussion as of now. It is a consultation that's ongoing, but the stocks obviously were quite excited today. Mayuresh, thoughts on MGL, IGL, GAIL, GSPL, any of these that you may track?
So Surbhi, I think GAIL looks a little bit better placed, assuming that if these conditions and assumptions go through. Obviously, the expectations in terms of gas transmission volumes, specifically for FY25, GAIL has retained that at 130 MMS MD. And therefore, the expectations in terms of volumes staying put for 26 and 27 and improving thereafter is a huge value addition, because if tariff increases go through, I think the natural gas transmission business should probably have a better showing. Obviously, I think the LPG and liquid hydrogen segment that GAIL operates, the volumes have been decent enough till the last quarter. The pricing has been decent enough. Realizations close to 55 or 56,000 rupees per kilogram. And therefore, I think the steady state number should continue. Petchem is the only weak link, because there I think demand is coming off, and end user prices, product prices are obviously off because the delta spreads have obviously come off. But again, expectation, I think if all these announcements come through, I think it should reflect positively in terms of GAIL's numbers. And let's not forget the 3% dividend yield that GAIL probably gives out.
Okay, got that. So that's on the gas space. Now let's talk about a potential deal that could be brewing in the automotive space. And because of that, 2 stocks were in focus today. Mahindra & Mahindra, which was down about 1% or so, and SML Isuzu, which was up almost 5%. That's M&M. The other one is SML Isuzu, like I'm saying, that was up in green territory. So what could this potential deal be? Well, sources are telling our sister network Awaaz that the commercial and passenger vehicle manufacturer, that's Mahindra & Mahindra, is in talks to buy the entire promoter stake in SML Isuzu. Yatin Mota is joining in with those details. Yatin, definitely got the market quite excited today.
Absolutely, and earlier also, there have been reports which suggested that Sumitomo, which is holding about 44% promoter stake in SML Isuzu, wants to publicly exit, smaller businesses as well as businesses with lower profit margin. Now, what we are gathering from sources is that M&M has initiated talks with the promoters of SML Isuzu to buy an entire 44% stake. This is in sync with the strategy to probably expand the trucks and buses business. In the small commercial vehicles, we have seen that they have garnered nearly 51% market share, but the trucks and buses business continues to remain a smaller business. With focus more on the trucks and buses business, the board of M&M is likely to meet this week to make a decision whether or not to look at buying that 44% stake from the parent company of SML Isuzu. Obviously, when we contacted Mahindra & Mahindra, they said that as of now, this story is speculative and they would not like to comment on that. SML Isuzu's comments are awaited. But what we also gather is that Mahindra & Mahindra is looking at a valuation of 1,800 to 2,000 crores when it comes to SML Isuzu's acquisition versus the current market capitalization of close to 2,400 crores. But would be interesting space to watch out for, because earlier also we have seen SML's promoters looking at an exit. Whether or not this time M&M could make an offer which could be accepted by the Japanese counterpart is something that we'll be tracking closely.
Okay, all right. Thanks a lot for that, Yatin. Mayuresh, what do you make of this? Will it be a good strategic buy for Mahindra & Mahindra if they manage to close it out? And would it be a big re-rating for SML Isuzu?
Quite possible, Nigel. I think two things. One, I think SML Isuzu has just had a press release, I think a few weeks back, where they've launched their mobility platform, Hitoi.ev. And obviously, they've got a telematics solution backed by the name of Sarathi. They're expected to have 3-4 products rolled out of the same. And therefore, if you look at the product mix that SML Isuzu has, largely into the ICE space, which probably means that the LCV part of the business and the ICV part of the business might actually complement Mahindra's commercial part of the business as well. Having said that, I think the other stuff that they also do in terms of specialized buses, also ambulances or anything related to government contracts, including police jeeps as an example, is something that can actually complement the business for Mahindra & Mahindra. So yeah, I think if this does come through at reasonable valuations, I think it can be a good strategic fit for Mahindra & Mahindra, and obviously a value add for SML Isuzu as well.
Okay, all right, got it. Gentlemen, thank you very much for joining in and giving us perspective on a lot of stocks in the market as a whole. Thanks both Mayuresh and Jay for being with us. We do have to take a very quick break, come back on the other side, and some of the top corporate voices that we gathered during the course of the day and the events to watch tomorrow.
Welcome back to Markets Forward, where last promise, let's take stock of all the top corporate voices that we had all through the day. The Bombay Stock Exchange will not run behind market share in the derivative segment. That's the word that's coming in from the MD and CEO, Mr. Ramamurthy. Speaking to CNBC TV 18 on NSE shifting its weekly expiry to Mondays, the BSE CEO said there's a need for a spread between the two expiries. Remember, BSE's weekly expiry is currently on Tuesday. He also did not rule out the possibility of shifting the Sensex weekly expiry Let's listen in to what he had to tell us earlier today.
The market feedback that we received from people whom we approached and people who approached us, the point that underlines is that there should be a spread between two expiries. What it should be, how it should be are nuances. We need to see how the market spans out in respect of all this. Since we are having too many other realignments already happening, anything done in a hurry will not help in the product development and economic development. So at this point of time, we are assimilating all the announcements, changes, and we will come out with a stand, what will be useful for the product. In terms of cash market, while the average daily traded volume has grown up for us, in terms of percentage market share, it has not grown up significantly. It's hovering around 6.5 to 7%. So overall, the notional turnover across the exchanges, I think, has come down by around 40%, and premium has come down by 17%. While I would continue to reiterate my earlier stand, we don't run behind market share. Our market share is 100%. In terms of what numbers you ask, for your question purposes alone, the notional volumes have fallen down in BSE by around 17%, etc. No, the premium volumes have been stabilized as far as Sensex is concerned.
Okay, that was the top management at BSE talking about their strategy ahead. Now, outgoing Managing Director of Pidilite, Bharat Puri, believes that growth will return to the consumer sector from the second quarter. Puri's tenure at the helm comes to an end this month. Starting the 1st of April, Sudhanshu Vats will take over the reins at Pidilite. Both the outgoing and the incoming MDs spoke with Mangalam Malu on their outlook for the sector, along with some lessons in leadership. Take a look.
What we are beginning to see is a clear resurgence in the rural demand post the monsoon, a little bit. You know, albeit slow, but we are clearly seeing that pattern. As far as urban demand is concerned, I think in our sectors, Mangalam, and therefore now I'm talking about how we look at it, it has been when it comes to construction, when it comes to home improvement and so on and so forth, the demand has been quite steady. I'm saying the point is it could always be better, as Bharat was just saying. So I'm thinking the point is we would want it to be a bit more better, a little bit more buoyancy. But having said that, I think we've been seeing steady this thing, and that's why we've been delivering steady returns as well, steady numbers as well.
Core is clear that, listen, I mean, the biggest mistake any company can make is assume that the core is mature, and a lot of times fellows will say, okay, listen, oh, this is a mature category. Well, there are no mature categories, there are only tired managers.
And the focus, Mangalam, compared to many other companies, having had worked with many other very good organizations, I can tell you the focus is first and foremost on seeing what could we have done better. Because most of the time the tendency is, oh, this is not right, the market is sluggish, as we were just talking about, or the consumer is not ready. But the first question you have to ask is that, what have we not done right? So I think that philosophy keeps making.
Well, and in some more corporate commentary, KEI Industries, the CMD, Mr. Anil Gupta, said that the firm's market share as of FY25 is approximately 13%, and they are investing heavily in capex to build capacity. He added that the company would be able to maintain 20% CAGR growth over the next 5 years, as well as maintain the 11% EBITDA margin, irrespective of new players entering their space.
Okay, and before we go, let's talk about some of the key market events that you should watch out for tomorrow. Vinny is standing by with the list. Vinny.
Yes, so we have few events to watch out for tomorrow. Domestic front, we are watching out for the RBI, which will be holding the OMO. They will be infusing around 50,000 crore rupees, so keep an eye out on that. Delhi budget is to be presented tomorrow, so that's important to watch out for given the new government there. On the corporate action front, IREDA, that's the one we'll keep an eye out on. They will be meeting to discuss and finalize some borrowing plans for 2025-2026. So keep an eye out on that. And lastly, SIS, the board is also going to be considering some proposal for buyback of shares. So on that note, we'll keep an eye out on SIS as well.
Okay, all right, Vinny, thanks a lot for that. On that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
yolsuzluk operasyonu üzerinden milletimizi provoke etmeye kalkıştılar. 4 gündür milletin huzurunu kaçırma, insanlarımızı kutuplaştırma adına ne varsa hepsini yapıyorlar. Önlerine gelene hakaret etmekten, sadece görevini yapan polislerimize saldırmaya, yolsuzluk ihbarlarını araştıran yargı mensuplarımıza gözdağı vermekten, sokak terörüyle milli iradeyi baskı altına almaya kadar ne ararsan bunlarda her şey var.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Nifty turns positive for 2025 after gaining for the sixth session. The Sensex crosses 78,000, hitting the highest level in 2 months. Veteran investor Ramesh Tamani says the last 5 months were only a correction in an ongoing bull market. The rupee regains lost ground for the 7th straight session, hitting the highest level in 3 months. It's wiped out all the losses for the year with the biggest monthly gains in 6 months. Just over a week to go for US President Trump's proposed reciprocal tariffs on key trading partners. A senior US trade envoy will arrive in India tomorrow to hold talks. Wall Street Journal reports that sectors like pharma, auto and semiconductors could be spared, but top 15 nations with a trade deficit to the US could be hit with individualized tariffs. The Indian government proposes to end the 6% equalization levy on online advertising in the finance bill. The move will benefit global tech giants like Google and Meta. The 6% levy has been in place since 2016. Growth will return to the consumer sector in Q2, says the top brass at Pidilite, as the company prepares for a change of guard. Outgoing MD Bharat Puri and his successor Sudhanshu Watts see a clear resurgence in rural demand. That's an exclusive. After PhonePe, fintech company Razorpay is all set to shift its domicile to India as it eyes a public listing. Co-founders Harshil Mathur and Shashank Kumar say the shift comes at a cost, but a small price to pay. That's another exclusive. Resist protectionism and defend globalization, says China to global CEOs at an annual summit. Beijing courts multinational corporations in a bid to attract more investments. Apple's Tim Cook, along with CEOs of Qualcomm, AstraZeneca, and dozens of other companies attend the summit. US and Russian officials hold talks in Saudi Arabia to try and arrive at a broad ceasefire in Ukraine. Washington is eyeing a maritime ceasefire in the Black Sea. Ukraine and US held delegation-level talks yesterday. Kyiv termed the discussions constructive and meaningful. The centre notifies a 24% salary hike for MPs with retrospective effect from the 1st of April 2023. The salary hike from 1 lakh to 1,24,000 per month for sitting MPs. Daily allowances hiked from 2,000 to 2,500 rupees. Former MPs will draw a pension of 31,000 rupees instead of 25,000 earlier. Several surveys have pegged India Inc.'s average salary hike in the range of 9 to 9.5% this year. The Delhi High Court withdraws judicial work from Justice Yashwant Verma after a large stash of cash was allegedly discovered at his official residence after a fire. Justice Verma has denounced the allegations, has hinted at a conspiracy to malign him. Civic authorities in Mumbai demolished alleged illegal structures at the Unicontinental Hotel a day after stand-up comedian Kunal Kamra's video with a joke on Maharashtra's Deputy Chief Minister Eknath Shinde goes viral. The Mumbai police file FIRs against Kamra and 20 Shiv Sena workers who vandalized the venue where the program was shot. Well, let's start with the market action. The Sensex and the Nifty gained for the 6th day. This is the longest winning streak since September of last year. And with this, the Nifty has turned positive for 2025, wiping out the losses so far this year. The Sensex added 1,000 points today. 77,984 is where it closed. The Nifty up 300 points. The mid-cap index bounced there, 670 odd points. And it's a 1,000-point gain for the Nifty Bank as well, closing about 2% higher. Surabhi is standing by to wrap up the market action. Surabhi, back in positive for 2025.
Well, the bull charge continued on the street with another very, very green day, with India outperforming most global markets. It's now gotten a lot of fierce momentum on the upside, almost equal to the momentum on the downside. The market's recoiling like a spring, and there's a deep shade of green across the board. The good news of this pullback is that it's very, very widespread, it's very deep, and it's not limited to just a few set of stocks. And I'll illustrate that as we go forward. By the way, the Nifty has now recovered 7.7 to 8% from the lowest levels that were hit. The lowest point of this correction happened on the 4th of March. And from then onwards, it's a nice, decent 8% pullback on the Nifty and an over 11-12% pullback on the mid-cap index. So let's talk about the recovery today. Like I said, widespread. Almost all Nifty sectors were in positive territory. Financials and PSUs obviously have been leading this charge, and that continued today as well. But even otherwise, I mean, look at IT stocks, look at the PSU index or the CPSE index, look at oil and gas, realty, energy, everything was up and about. If I talk about Nifty gainers, then you'll see this this diverse flavor playing out in the gainers list as well. Kotak Mahindra Bank, SBI, Axis Bank from the financials, NTPC, Tech Mahindra, Power Grid, a lot of PSU and capex related stocks, PSU stocks doing very well as well. HCL Tech had a good show for itself. Tech Mahindra was higher. BEL had a fair amount of green as well. The heavyweights have participated in a beautiful manner in the last couple of days, today included. L&T, HDFC Bank, ITC, Reliance gains between 1% to 2%, depending on which stock you are picking up. The only real noticeable losers, two consumer names stand out over here. Titan was down, Trent was down. These were losses between 1% and 2%. And IndusInd Bank saw some weakness once again. Also, what did Mahindra & Mahindra? It did end slightly negative, about 1% down. But there's news around the company. Our sister network, Awaaz, picking up a lot of buzz that perhaps M&M could be looking to buy out the promoter's stake in SML Isuzu, which is why that stock, SML, was up almost 5-6% today. Let's talk about the mid-cap market now. Like I said, big, broad move here. The advance decline ratio was positive, almost 2 stocks advancing for every 1 declining. The index was in step with the Nifty. Some examples of the gainers included IRDA, RailTel, Federal Bank. A lot of the auto ancillary companies did very well today. So names like JBM Auto, Varroc Engineering, Olectra Greentech, lots of buying in these names. Power Mech, which announced some auto wins, Alkylamines. It's a long list of winners out there. Very positive day once again. Now, we're, of course, going to look out for U.S. markets. The futures, U.S. futures, were decisively higher by the time that we closed out. And there is some hope that perhaps, the U.S. president will show maybe some quote-unquote flexibility on those reciprocal tariffs come the 2nd of April. And that's what markets will track, along with the fact that there has been a return of FPI buying in the market. And if that continues, it could, of course, give a further boost to the bulls.
All right, Surbhi, many thanks. Well, speaking of the bulls, veteran investor Ramesh Tamani says the last 5 months have only been a correction in an ongoing bull market in India. He remains upbeat on the market trajectory from here on. Take a look.
In my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market. Okay. What happened was the first correction in 4 or 5 years, it was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market.
Well, that's Ramesh Tamani. You can catch more of that conversation right here on CNBC TV 18. Let's talk about the rupee also erasing its losses for 2025, and that's thanks to the strong dollar selling by foreign portfolio investors and by exporters. The currency is now close to a 3-month high. It's gained 2.5% since hitting all-time lows in the month of February. Latha is here with more. Latha, so the rupee also rebounding like the stock markets.
Oh, it's been a blistering set of records for the rupee. It's the 7th straight day of rally. It has erased all the losses of 2025. It is at a 3-month high, and it is up over 2.5% from the low that the rupee touched on February 10th, when it cost 87 rupees 95 paise to buy a dollar, and today at 85.50. It's a long way that the rupee has appreciated. Actually, it's twinning very nicely with the equity markets. The Nifty also has erased all its gain, all its losses for 2025, and the rupee has done much the same. So that explains the reasons. The big reason for the rupee's fall was the inexorable buying of dollars by FPIs. They were selling shares, buying dollars and leaving the country. Now that's turned, and they have turned buyers of equities, which means they are selling dollars. And that's one big reason, of course, why the rupee is gaining in strength. The other reason is that a lot of people are caught long dollars. They are in the wrong side of the trade. A sizable chunk of that are exporters who have to book their profit by March 31st, and they were seeing visions of 87 and 87.5. Now you're barely getting 86 for the dollar, so people are selling out in a hurry. The arithmetic that people say for March 31st, it's called an LDFD, that is last day, first day. That's the day the trade expires, March 31st. If you have to make gains on your dollar positions, the dollar has to become expensive by at least 15 pice, and at the moment that looks like a long shot. So there is quite a hurry to sell dollars. It's a very thin market and there are hardly any buyers. RBI doesn't seem to be obliging.
All right, Lata, many thanks for joining us. Now, Assistant U.S. Trade Representative Brendan Lynch will visit India along with a team of U.S. government officials from the 25th to the 29th of March. This visit will be part of the ongoing bilateral trade discussions between both countries. This comes at a time when U.S. President Donald Trump is set to impose retaliatory tariffs on all countries from the 2nd of April. Now, speaking at the Oval Office last week, Trump hinted that he could take a flexible approach. He said, and I quote, "I don't change, but the word flexibility is an important word. Sometimes it is flexibility, so there'll be flexibility, but basically it's reciprocal," end of quote. Now, a report by the Wall Street Journal suggests that Trump may implement a tailored approach with these tariffs and will focus on a group of nations that have been referred as the Dirty 15, and this may include India and China. Sectors like pharma, auto and semiconductors could also be spared. The term, coined by U.S. Treasury Secretary Scott Bessent, pertains to roughly 15 nations that have trade imbalances with the U.S. India currently ranks 11th on the list. The report has also highlighted that other nations may be subject to softer duties and individual tariff rates set on a country-by-country basis. So that is something to be watchful of. Now, the government has proposed to end the 6% equalization levy on online advertising in the finance bill. This move will benefit global tech giants like Google and Meta. Timsy is standing by with the details. Timsy, this has, of course, been a big bone of contention for a lot of the large tech companies, largely US-based tech companies. Take us through the proposed amendments.
Well, as you rightly said, Centre has moved amendments to the Finance Bill 2025, and as per the amendments, the proposal is to remove the 6% equalization levy under the direct taxes, which were being charged on online services, primarily online advertising. Remember, this is popularly known as Google tax, which was introduced in 2016, and now, as per the proposals, it implies that the 6% levy which was being charged to the consumers of online advertising will now be removed completely if the proposal gets the Parliament approval. Reduction in this tax burden is actually going to benefit sales of advertising space, especially by online giants such as Google and Meta. And just to remind our viewers again, this is equalization levy which was introduced in 2016, and since then US has been opposing this decision of India, seeking a reversal, a complete reversal of the levy. Experts claim that this move is part of India's piecemeal duty reduction commitment to the US post the recent bilateral talks. Now, what is to be seen is how do these global giants, especially Google and Meta, react to this move, and also what is the impact on India and US trade relationships. Back to you.
All right, many thanks, Timsy, for joining us. Outgoing Managing Director of Pidilite, Bharat Puri, believes growth will return to the consumer sector from Q2. Puri's tenure at the helm comes to an end this month, starting the 1st of April. Sudhanshu Shuvatz will take over the reins at Pidilite. Both the outgoing and incoming MDs spoke with Mangalam on their outlook for the sector, along with some lessons in leadership. Take a look.
What we are beginning to see is a clear resurgence in the rural demand post the monsoon, a little bit. You know, albeit slow, but we are clearly seeing that pattern. As far as urban demand is concerned, I think in our sectors, Mangalam, and therefore now I'm talking about how we look at it, it has been when it comes to construction, when it comes to home improvement and so on and so forth, the demand has been quite steady. I'm saying the point is it could always be better, as Bharat was just saying. So I'm thinking the point is we would want it to be a bit more better, a little bit more buoyancy. But having said that, I think we've been seeing steady this thing, and that's why we've been delivering steady returns as well, steady numbers as well.
Core is clear that, listen, I mean, the biggest mistake any company can make is assume that the core is mature, and, you know, a lot of times fellows will say, okay, listen, oh, this is a mature category. Well, there are no mature categories, there are only tired managers.
And the focus, Mangalam, compared to many other companies, having had worked with many other very good organizations, I can tell you the focus is lot first and foremost on seeing what could we have done better. Because most of the time the tendency is, oh, this is not right, the market is sluggish, as you know, we were just talking about, or the consumer is not ready. But the first question you have to ask is that, what have we not done right? So I think that philosophy keeps making.
And you can catch that very interesting conversation with the outgoing and the incoming MD of Pidilite, Bharat Puri and Sudhanshu Vats at 5:30 p.m. and 10:30 p.m. on CNBC TV18. The Competition Commission has investigated 35 cases of cartelization in the last 5 years. The competition watchdog said that out of these cases, 5 were related to the health and pharma sector, 4 were linked to the railways. The CCI has also investigated cases pertaining to cartelization in the financial sector, coal, power and civil aviation. So those are the probes underway by the competition watchdog. China's premier has told global CEOs to resist protectionism and defend globalization at an annual summit. This as Beijing courted multinational corporations in a bid to attract more investment. The summit was attended by Apple's Tim Cook along with CEOs of Qualcomm, AstraZeneca and dozens of other companies. The corporate leaders have said that they are bullish on China and are doubling down on their investments.
The size of the population, excellent infrastructures that are second to none, investment power and a highly skilled workforce, great education and great work ethics. So all of those are extremely positive elements that will continue to make China a growth engine to the world economy.
China is one of the most important innovation markets. Meanwhile, we see genuine innovations happening in China. And that's what we are doubling down on. We continue in our investment in China.
While global CEOs there in China. Time for us to head into a break, but up next, civic authorities in Mumbai demolish alleged illegal structures at the Unicontinental Hotel. That's a day after stand-up comedian Kunal Kamra's video went viral. That and more when we return. The centre has notified a fatter paycheck for MPs with retrospective effect from the 1st of April 2023. Now, salaries for sitting MPs have been hiked by 24% from 1 lakh rupees to 1,24,000 rupees a month. The daily allowance has been hiked from 2,000 rupees to 2,500 rupees. Former MPs will draw a pension of 31,000 rupees instead of 25,000 rupees earlier. Now, several surveys have pegged India Inc.'s average salary hike in the range of 9 to 9.5% this year, so substantially higher there for our parliamentarians. The Delhi High Court has withdrawn judicial work from Justice Yashwant Verma after a large stash of cash was allegedly discovered at his official residence after a fire. Justice Verma has strongly denounced the allegations, has hinted at a conspiracy. A 3-member committee has also been constituted by the Chief Justice to probe the matter. Ashmit is standing by now with more. Ashmit, several unanswered questions still remain, especially on the initial statement released by the Delhi police. Ashmit, I was just asking you, there are several unanswered questions that remain, especially with regards to the statements made by the police.
Indeed, a number of questions still remain, Chief, amongst them being that who shot the video, where was this video shot, what was the location of this video that has been shot, that has been circulated. We were aware the Supreme Court, the Commissioner of Police shared this information, shared the video, but these details are not known as to who, when and where was this video shot. Also, another key question, what is the quantum of the money? Ever since the story got reported, we've been hearing figures ranging all the way from 1 crore to 50 crores. There has been no estimate. There was no effort made by the Delhi police to account for how much actual cash was lying there. The police said 4 to 5 gunny bags worth of Indian currency. No estimate given by the Delhi police. Number 3, where did the cash go? The police confirmed that on March 14th, the night, the cash was there in 4 to 5 gunny bags. However, the police then also reports that on the morning of March 15th, cash had been removed along with other debris. Who took this cash? Where has it gone? Since then, since the morning of March 15th, no one has seen the half-burnt cash. So where exactly did it go? The Delhi police will have to give some answers. Also, questions with respect to who exactly can access the storeroom. There are different versions coming in from Justice Verma, from the Delhi High Court Chief Justice, as well as from the police. Who exactly can access these rooms? These are multiple questions that await clarity as to how this entire issue, how this entire incident went about. And it is in pursuit of that the CJI has constituted a 3-judge bench to investigate this matter. That 3-judge committee will then be submitting its report to the Chief Justice, who then will take a call on whether or not to remove him or whether to impeach him. That's a decision that the CJI will take. And in the interim, the Delhi High Court has withdrawn all judicial work, has stripped him of all judicial duties. Meanwhile, there are statements coming out of the Allahabad Bar Association. They've already said we're not a trash bin. They're now saying that there should be an FIR lodged against Justice Yashwant Verma.
All right, Ashmit, many thanks for joining us. Now, the Mumbai civic body has demolished alleged illegal structures at the Unicontinental Hotel. This a day after stand-up comedian Kunal Kamra's video, which was supposedly aimed at Deputy Chief Minister Eknath Shinde. Mumbai police also filed FIRs against Kamra and 20 Shiv Sena workers who vandalized the venue where the program was shot. Santhya joins us now with the latest. Santhya.
A comedy show, a viral video and a political storm. Kunal Kamra's latest video has sparked an outrage in Maharashtra. On Sunday, Kunal Kamra's recent act went viral. In one of the clips, he joked about Maharashtra's Deputy Chief Minister Eknath Shinde, his rebellion and the split in Shiv Sena. Shiv Sena leaders and Shiv Sena workers took offense to this particular video. The video was also tweeted by Uddhav Thackeray faction's Sanjay Raut. Later, a video surfaced where a group of people who claimed to be from Shiv Sena were seen ransacking and vandalizing the habitat, the venue where reportedly the act took place. By Monday morning, Mumbai police detained over 10 people and an FIR was filed against 20 people, including Shiv Sena's Rahul Kanal, for trespassing, rioting and assault. Later, Mumbai police booked Kunal Kamra and accused him of making derogatory statements against Maharashtra's Deputy Chief Minister Eknath Shinde. In the meantime, the Habitat team, the place where the act reportedly took place, issued a statement that they are shutting down till the time they figure out a way to operate without putting their people and their property in jeopardy.
Santya, many thanks for joining us. In international news, at least 21 Palestinians have been killed after Israeli forces continue to bomb Gaza. The renewed assault has come hours after forces bombed the Nasser hospital in the enclave, killing at least 2 people. This included a Hamas leader. US and Russian officials held talks in Saudi Arabia to try and arrive at a broad ceasefire in Ukraine. Washington is eyeing a maritime ceasefire in the Black Sea. Ukraine and the US also held delegation-level talks yesterday. Kyiv has termed the discussions as constructive and meaningful. Protests across Turkey continue to intensify this after the main rival to the country's President Erdogan was formally arrested and charged with corruption. Tens of thousands of protesters taking to the streets for the 5th day. They were seen waving Turkish flags and chanting in front of police. Officers also fired water cannons at some protesters and used pepper spray. Canada's newly appointed Prime Minister Mark Carney has called for snap elections in the country on the 28th of April. Carney will now face Conservative leader Pierre Poilievre. Carney said he needed a clear, positive mandate to deal with Trump's tariffs and his threats to Canada's sovereignty. Pope Francis has returned to the Vatican after surviving a 5-week battle in hospital against double pneumonia. The 88-year-old Pope has also made his first public appearance since February the 14th before being discharged from Rome's Gemelli Hospital. Doctors have said the pontiff will need a further 2 months of rest at the Vatican. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Do stay tuned. We're back in a moment with more.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV 18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV 18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV 18 and CNBCTV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the money.
Presented by Policy Bazaar.
CNBC TV 18, the Policy Bazaar Insurance Show.
Did you know that once you purchase an insurance policy, you actually have a window of time to review, rethink, and even return the policy to the insurer if you are not happy with it? Sounds great, right? But here's the catch. Many policyholders either don't know about the benefits or they aren't sure how to use these benefits effectively. Recently, there's been a call from the government to extend the free look period from the existing 30 days to 1 full year. But what would that mean for the policyholders like you and me? Would it truly offer greater protection, or could it come with unintended consequences? In today's discussion, we break it down for you how the free look period works, why is it important, how you can use it to protect yourself from mis-selling or forced selling of insurance, and what recent regulatory changes could mean for your insurance decisions. To decode this with us today, we are joined by Mr. C.R. Vijayan, the former Deputy Secretary General, General Insurance Council, Muruga Ganesh, the Chief Operating Officer at Star Union Daiichi Life Insurance, and of course Vivek Jain, Chief Business Officer, Life Insurance at Policy Bazaar. To start with, I mean, the first question itself, and this would be for Vivek, I just want to understand first things first, what exactly is a free look period in a very, very simple language for policyholders to understand? How does it work? And do policyholders get the entire premium which they've paid, or is there some deduction when a policy is returned under the free look period?
So yeah, Yash, simply put, a free look period is a 30-day window post you receive the policy, and that can be in the physical form or it can be in the digital form in your email. After that, you have a 30-day window to review your policy to understand if the benefits of the policy are in line with the goal with which you had bought the plan, be it a savings plan or a protection plan or a health insurance plan. In terms of refund, yes, within 30 days, if you decide to not continue with the policy for whatever reason, you don't like the features or it doesn't align with the requirements that you had, you can get a free look cancellation done, where you will get a full refund minus the deduction of any stamp duty, any medical examination charges, and maybe a proportionate of the mortality or the protection charges. But that's done on a pro rata basis, that if you've used the policy for 15 days, maybe that charge for only 15 days will kind of get deducted. But otherwise, you will get the remaining amount as a refund.
Mr. Vijayan, I want to come to you and just to decode the point on free look further. Why, according to you, does a free look period exist in the first place itself? I mean, what does it provide to the policyholders? Also, is there some sort of understanding which has emerged in the last many years? How many people tend to exercise the free look period, and what's the awareness around it? Are people actively looking at it, or it's not, people are not made aware about it as much as we think?
Let's understand one thing, that insurance policy documents is received by a customer after he pays the premium, because insurance premium has to be paid in advance. So once he gets the documents, then he goes through that, very rarely. But if they do and find out that it is not exactly what they had paid the premium for, yes, there is a necessity to have a period by which they can correspond with that insurance company, try to get clarifications, and if they're not satisfied, to say that I'm surrendering this policy, or I don't know whether to use the word surrender, that I use the principle of free look period and then buy another policy. That is one thing. As to the numbers, I have no idea. But let's understand one thing. In India, or possibly in the world, insurance is a push product. It's not that people go and buy an insurance. People are sold an insurance policy. Now, maybe after COVID and now with the advancement in digital age, a lot of insurance policies are purchased digitally. And, major pioneering institutions like Policy Bazaar, for instance, where you can see the conditions, compare the premium, compare the conditions to various other policies, and then buy a policy. I don't think those kind of policies will be given up because of the free look period.
Mr. Ganesh, I want to ask you one question. To your experience, what are the common reasons why people exercise the free look period that you've come across? And importantly, how can insurers address these concerns upfront so that we can minimize the instances where a policyholder reaches the point of returning the policy itself?
There are about 3% customers who are exercising the free look option, and largely the reasons are personal reasons, emergency reasons, and medical emergency. And there is also an IRR comparison between some other product, and they were thinking some loan option was available from first year. When they go through, it is not available in the policy document. And there are also people wanting to exercise a surrender and higher surrender, higher loan options. Especially in unit linked, they discover some charges are attached which they were not aware at the time of buying the policy. So these are largely the reasons. Now, how an insurer can proactively prevent this is a very good attempt. Now, there are two things which are happening in the industry level. One is we have to underwrite first and take the premium later. This is called a policyholders protection guidelines, which has come in now, and which we are supposed to underwrite first and take the premium later. If this is done, largely all those buying process would have been completed. And the second thing is now the video PIVC, the video pre-insurance verification call, is being mandatory by a lot of the bank assurance partners, and also for many lean channels. We are making the video confirmation of the customers very, very compulsory before issuing the policy. If these two things are done, a lot of these apprehensions, these reasons can be weeded out before we issue the policy.
Vivek, I want to understand one thing from you. The language of the insurance policy document, that is again very technical in nature, which makes it difficult for a layman to understand, how should a policyholder sort of go about that language, the words, what's given in it, what's in it for him. In that context, what are the red flags that one policyholder should look out for during the free look period to decide whether to continue with the policy in the first place or cancel that policy?
To simplify the policy document that we get right now, IRDAI had come up with something called a CIS, which is a customer information sheet, which lists down the key benefits and the key points of the policy. I think that is something that can help to simplify and understand the key points about the policy. Having said that, I think it is still difficult for a person, for a layman to understand all the nitty-gritties of the policy. So I think basically one should be very, very clear the goal with which that policy is getting bought. Again, like it can be a protection goal, both term insurance or health insurance, or it is a saving goal or a growth money investment goal, right? And they should kind of check a few basic things that are there, which is in protection, the sum insured that they have opted for, the policy term that they have opted for in a term insurance, and maybe the exclusions that are there or waiting periods that are there in a health insurance plan. On the savings side, I would say they should look at is the plan a market-linked plan where the returns will be based on how the fund performance is, or is it a 100% guaranteed return plan wherein the give and the get, basically the premium that the customer will pay and the maturity amount that the customer will get is defined. So at least these basic checks are something that everybody should run, and does that align with the goal with which you're buying the policy? That has to kind of tie up.
My next question is to Mr. Ganesh again. I just want to understand so that the policyholders also get a look onto the other side of it. How does, insurance companies handle the refund processing when it comes to a policy which comes through a free look period? What goes into it and how do you decide, whether a policy merits to be taken when it's returned or not?
One option which is given to customers, in as good as in a medical emergency, personal emergency, they can take back the money. And we refund the money, almost entire industry, the refunds the money within 7 days, and that is the turnaround time with the regulatory stipulated is brought down from 15 days to 7 days now. It's a very tight situation for the insurer to handle this within that 7 days time. If there be any delay, then we have to pay a penal interest also on the number of days what we delay. So fair amount of insurance companies settle this within the 7 days time.
Mr. Jain, I just want to understand one part from you, and this is regarding certain complex insurance products again, be it ULIP, annuities, or even health insurance policies which have a waiting period. What's the scope of a free look period when it comes to such complex insurance products? How do you go about it? What should policyholders expect in such products?
The free look rule is the same. It applies the same as 30-day free look period is there on all the three products, be it ULIP, annuity, or health insurance. So see, ULIP plans are market-linked plans, insurance plans, where you have some mortality charge for the life cover that you have, and you also have you also get market-linked upside. So the policyholders should be very, very clear that this is a market-linked plan where there will be some fund management charges, there will be some mortality charges. Some ULIPs may have other charges. Generally, online ULIPs don't have admin and premium allocation charges. But they should know that this is a market-linked plan and the returns can vary basis the fund performance. When it comes to annuities are typically bought for pension. Basically, where you kind of get generally pension for life, and that is kind of guaranteed. So they should know what is the guaranteed pension that they can expect throughout their lifetime. For a health insurance product with waiting period, I think they should clearly go through, policyholders should clearly go through which diseases or which pre-existing diseases have a waiting period of how many years. So I think these are the things that they should look out for in the policy copy to decide if they want to continue with the policy or not. So I think, again, just being clear on what is the product that they have bought, that is very, very important. And that applies to all the products.
Understood. If I could come to you, Mr. Vijayan, with my next question, how can insurers really differentiate between the people on one hand who try to play the benefit of free look period and are, not genuine cases in the right sense, as against genuine policy holders who've actually been missold some policy? I mean, this holds a lot more relevance for health insurance, where the contract duration itself is about a year right now.
If you look at the IRDA guidelines, it says that this is applicable to those policies which are issued for 1 year and not less than 1 year. So that was when the 30-day waiting period was there, a free look period was there. Now, when if it is increased to 1 year for free look period, obviously there was an earlier IRDA regulation which said that it will be applicable only to health insurance policies which is not less than 3 years old. So let's wait and see how it unfolds once the new regulations come in. Having said that, now, to differentiate between a fraudster and a genuine person, well, you know how to do that, because if somebody keeps on complaining that my policy is not good, my policy is not good, he could more be a genuine person than a fraudster kind of a character. But the insurance awareness level in India is very pathetically low. So how many people read their policies? I know in my family itself, there are many people who don't read the insurance policies issued to them. So in that case, the number of people who may come for a cancellation of a policy during free look period, I mean, I was told someone has mentioned 3%, and it could be around that level and not more than that.
As you've been hearing, it's been a very interesting discussion so far. But let's also quickly take a very, very short break. More on the other side of this very short break. The discussion continues as far as free look period for insurance is concerned.
CNBC TV 18, the Policy Bazaar Insurance Show.
digital architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
I've just requested that the Governor General dissolve Parliament and call an election for April 28th. And she has agreed. We are facing the most significant crisis of our lifetimes because of President Trump's unjustified trade actions and his threats to our sovereignty. Our response must be to build a strong economy and a more secure Canada. President Trump claims that Canada isn't a real country. He wants to break us so America can own us. We will not let that happen. We're over the shock of the betrayal, but we should never forget the lessons. We have to look out for ourselves.
CNBC TV 18, the Policy Bazaar Insurance Show.
Welcome back to the Policy Bazaar Insurance Show. We continue our discussion on insurance free look period and how policyholders should look at it, and of course, under what conditions should they press the button on it. Mr. Vijayan, to start the second segment of our discussion with you, just a very curious question at this point of time. Now, if at all, assuming hypothetically, as the government has called out, the free look period does get extended to about 1 year from the current 1 month on the health insurance side. We also have the caveat of long period or long-term health insurance policies, 3 years, 5 years coming into play. In that situation, if a claim is taken within the free look period of, let's say, 1 year, what happens then? Let's say a claim is taken, the claim is honored by the insurance company to whatever extent, and then after that the policyholder comes and says, no, this is something that I was promised, this is something that is not there as per my policy, and hence I want to return the policy. What happens in a scenario like that?
My understanding is that in case where a claim has already been lodged and taken, then there is no question of cancelling that policy. Even today, we do not allow a policy to be cancelled if claim has already been taken. So I don't think that could be a. But there are concerns. For example, I take a health insurance policy and later on find that it is only a critical illness policy. So that is clear mis-selling, and that is where I reserve the right to cancel the policy in the free look period.
To Mr. Ganesh now, with a 1 month free look period, or even if this gets extended for a year as we were discussing, wouldn't insurers only allow return of policies if mis-selling or forced selling is established? Second part of that question, should the onus on establishing mis-selling be on the policyholders, or should the onus be on the insurer that there hasn't been a mis-selling on the other side?
We must currently prevail with the options given to customer even on any grounds, the personal emergency or in medical emergency, whatever it happens. So we shouldn't be only talking about if the mis-selling is established, only FLC has to be exercised. That option is a discourageable feature. And having said that, now, insurance is an emotional decision. A customer suddenly gets an idea, he gets a desire, and immediately discusses this with a salesperson and buys it. All these things can happen within 1 hour also. Or a good sale happens in about, say, maybe 3 days as well. And those sales are all prevailing. Large part of this, the mis-selling or, it has to be, substantiated by the insurer only. Because with the new guidelines in place where video verification we have to do, and we have to adhere to the new policyholders protection interest guidelines where we take the premium after underwriting the policy, then the ownership completely lies with the insurer. To establish a fair selling, instead of asking the customer to approve a mis-selling, we have to establish a fair selling. We adopted all these things. There is a welcome calling, there is a video recording. So for these reasons, you accepted all the terms and conditions. Here we go, right? But however, my advice to policyholders is also to keep some evidence, the age-old practice of if there is a white paper document, discussion document given, or a mail exchange between them, they should preserve that document with them as an evidence where, when they see the actual policy and when there is a discussion document, is a large variation, then they can dispute and then establish the mis-selling.
Very important point. But Mr. Vijayan, I want to speak to you on the policyholder side. If, insurance companies, of course, come across such cases on a very regular basis. For an insurer, that might not be the case. And he will need some hand-holding when it comes to establishing mis-selling, if that has been the case. What would be your advice to an insurer in terms of, to the insured, if he has to go about establishing the fact that he's been mis-sold a policy?
First of all, selling a policy, the agents have to be trained, because as I mentioned earlier, digital selling or online selling, there may not be much of mis-selling, but in case of normal agent-driven policies, there could be mis-selling. See, today the agency license is issued after a training by the Insurance Institute of India, and they're doing a fantastic job. But then these trainings are not company-based, company-specific trainings. So that is one way that possibly agents can be better educated so that they explain to the customer in a better way than, what we understand currently is being done in certain cases. But insurers have to be, if they find a pattern saying that in a particular area, there are more cases of policies being cancelled because of during the free look period, then one has to understand why that happens. And these kind of things can be found out, and proper training and proper inside the company as well as for the distribution network can be arranged.
Mr. Jain, just to put a question to you, can insurers put conditions or hidden clauses? Have you come across such instances which then eventually at the time of this testimony reduce the effectiveness of the free look period itself? And if yes, how can consumers protect themselves from such practices?
No, insurers cannot put any hidden clauses in the free look period. And because it is something that is mandated by the regulator, that the full refund of premium has to happen, just deducting the stamp duty charges and maybe the medical examination charges, as I said earlier, and only the used component of the protection. Basically, if the policy has been active for 20 days or 15 days, that prorated charges of protection that you have used, only that can be deducted by the insurance company. So there cannot be any hidden charges or any hidden terms and conditions that an insurer can apply.
Mr. Ganesh, do you think an extended free look period could increase instances of mis-selling? The distributor, just to earn some commission, could say, convince a policyholder to buy a policy as by positioning it as easily refundable or returnable to the insurer, and then that actually plays out to be the case.
I don't think a mis-selling will happen because the customers have become very, very wiser. The available information on the websites and also in comparable platforms like Policy Bazaar, and you can just on a strike of a button, you can just see all policies in comparison to what I'm buying. So the information sources are very high. The mis-selling may not go up because of the extended free look period. It is not a selling tool. We must understand when we are talking about the 3% policy holders who are exercising this option, whether the learning is from the 97% of people who are making a right sale. My only advice to the policy holders also to cooperate. While mis-selling may not go up, the policy holder also has to spend an adequate time in as good as buying an asset. If he's buying a 1 crore worth asset, he will not just go cut a check and come back. He will go for a site inspection. So many things he will do, discuss with the family. Some customers, this 3% audience might be a little overconfident, and we must understand and empathize only two reasons. I would like to say this psychologically, people do this mistake from the customer side or the policyholder side, either out of innocence or ignorance. Innocence is what I don't know. This can happen. Ignorance is I know, but still the seller told me I bought it because he might give me a good policy. We shouldn't be penalizing the customers because of this. Having said that, the mis-selling instances will not go up even if you extend this for 1 year, where there is no necessity for extending for 1 year is my simple submission to who is thinking on those lines.
With that, I would want to take this opportunity to thank all our panelists, Mr. Vijayan, Mr. Ganesh, as well as Mr. Jain. And with that, we come to an end of this episode where we've tried to focus on something which the government wants to do with respect to increasing the free look period, giving more relaxation to policy holders when it comes to returning their policies if they think they've been missold or force-sold any policy, and how insurers should also ensure that the genuine cases get entertained, the fraud cases or the not so genuine cases are kept aside so that the genuine ones don't suffer. As I said, it's the end on this episode of the Policy Bazaar Insurance Show. We will return soon with another interesting topic, another interesting discussion, and some new other interesting guests on the next show. Till then, stay safe, stay insured.
CNBC TV 18, the Policy Bazaar Insurance Show.
Out for each other.
first correction in 4 or 5 years. So it was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day.
Hello and welcome to News Center. I'm Parikshit Luthra. This chronology of events could evoke a sense of deja vu in the minds of viewers. A comedian cracks a joke aimed at a politician, his supporters vandalize the venue, and multiple FIRs are filed. The story we are tracking today is no different. Shiv Sena workers vandalized the Indian Habitat Center at Unicontinental Hotel yesterday, hours after a video of stand-up comedian Kunal Kamra singing a parody song targeting Maharashtra Deputy Chief Minister Eknath Shinde went viral. The clip is a part of Kamra's latest show, Naya Bharat. He had performed the gig close to 2 months ago. Senior Shiv Sena leader Sanjay Nirupam even alleged that the booking money for the show came from Matoshri, the residence of Shiv Sena Uddhav Bal Thackeray chief, Uddhav Thackeray. But that wasn't enough. An FIR was filed against Kamra on the basis of a complaint by a Shiv Sena MLA. The police did arrest 12 Shiv Sena workers for their acts of vandalism, but they were granted bail. This morning, Mumbai's civic body demolished alleged illegal structures at the hotel where the gig took place. BMC conducted the demolition drive at the behest of Transport Minister and senior Shiv Sena leader Pratap Sarnik. As expected, Kunal Kamra is at the centre of a political slugfest in Maharashtra. Chief Minister Fadnavis condemned his comments, while Uddhav Thackeray said there was nothing wrong in what Kamra actually said.
स्टैंड-अप कॉमेडियन कामरा इन्होंने एक गीत के माध्यम से महाराष्ट्र के पूर्व मुख्यमंत्री और विद्यमान उप मुख्यमंत्री श्री एकनाथ शिंदे जी को अपमानित करने का प्रयास किया है। ये गलत है, हम इसकी निंदा करते हैं। ऐसी चीज़ों को सहन नहीं किया जा सकता। कामरा को मालूम होना चाहिए कि 2024 के चुनाव में जनता ने निर्णय कर दिया है कौन गद्दार है कौन खुद्दार है।
कुणाल कामरा ने मुझे नहीं लगता कुछ गलत कहा है। गद्दारों को गद्दार करना ये किसी पर हमला करने की बात नहीं है। जो गद्दार है वो गद्दार है। इस हमले से शिवसेना का कोई संबंध नहीं, ये गद्दार सेना ने किया है। इसका कोई शिवसेना से लेना देना नहीं है। जिसके खून में गद्दारी है वो शिवसैनिक हो ही नहीं सकता।
Joining me now is Senior Supreme Court Advocate Vikas Singh. He's also the former Additional Solicitor General of India. Thank you for joining us on the show, sir. Mr. Singh, what's your view? Let's just talk legally first before we get into the specifics of the case. Can an act of a comedian, which is a dig at a senior serving minister in the Maharashtra government, the Deputy Chief Minister, someone who's also been a Chief Minister in the past, can it be construed as an act of indecency, immorality, something which is an exception to Article 19(1)(a) of the Constitution, which guarantees the right to freedom of expression?
Well, according to me, anything which a comedian says or anything which is said for the purpose of comedy can never be something which can be said to be indecent. Comedy always has a certain amount of satire or a certain amount of, element of bringing a certain new way of putting things, and this has been accepted all over the world. That a comedian, if he tries to make humor by giving this kind of either an example or pulling somebody's legs or showing somebody down, can never be said to be an act of a criminal act. And we have always, been in favor of free speech. And free speech always means that the right to speak even something which is obnoxious or even something which is not palatable to everyone is inclusive in the right to free speech. And in my view, something which is not palatable to somebody is not, and by giving him, by foisting these criminal cases, you are actually giving him undue publicity which he doesn't deserve. If whether somebody laughs on his jokes or doesn't laugh on his jokes should be the end of what he does. The fact that you are making it so big is only unnecessarily giving importance to a comedian, which he does not deserve in law. So I think this is something which our administration should be more tolerant as far as, what a comedian says, and just ignore him rather than, making a criminal case out of it.
So, Mr. Vikas Singh, how do you see the manner in which the Maharashtra government has reacted? On one hand, you had members of the Shinde Sena, which went on a rampage. They vandalized the hall, the auditorium where this comedy act took place. Those people have been arrested, given bail. 35 Shinde Sena leaders are on have an FIR against them right now. An FIR has also been filed against Kunal Kamra. The police is looking out for him. How do you see this reaction, and will this reaction even stand in a court of law, even at an early stage?
So according to me, this reaction definitely will not stand in a court of law, and nobody has got a right to vandalize a place. And people who have taken law in their own hands and resorted to arson or vandalizing that place have definitely committed a criminal act. And it is no justification that because their sensibilities or because their emotions have been hurt, they have a right to go and take law into their own hands and start ransacking a place or demolishing things or making this kind of taking law into their own hands. So I think they will definitely have to face the music of having done this. And as far as Kunal Kamra is concerned, he is reputed to be doing these kind of things for the purposes of getting a wider publicity. And by registering these cases, you are actually falling into his hand and giving him that extra publicity which he doesn't deserve. I mean, what people who would not have also heard what he said on that particular show will get to know because of the cases being registered. So I think this is something which is being completely blown out of proportion. And a comedy should remain a comedy. The purpose of the comedy is whether it makes people laugh or doesn't make people laugh. It is definitely not something which can be said to be violative of any section of the penal code so as to register a case against him.
All right. Mr. Singh, I'm going to request you to stay on with us. I want to come to you for a final comment and also on another story that we are tracking. We're going to come to the case of Justice Verma in just a bit. It's another burning issue that has raised a lot of questions, but I want to bring in my other guests also on the Kunal Kamra controversy before we move on to that story. Sanjay Hegde is with us, and I also believe Desh Ratan Nigam is on the program as well. Sanjay Hegde, thank you very much for joining us. Give us a sense of how you see this moving, the options available to Kunal Kamra at this juncture. Kunal Kamra has said there is nothing to apologize. He's not going to apologize for whatever he said. He has shared the clip himself on social media.
Well, I don't think the Maharashtra government would be well advised if it was to pursue any prosecution against Mr. Kamra. The courts would come down heavily on such a limiting of freedom of speech. The Kamra has faced various authorities, various courts, and has so far not apologized. I do not think our leaders exactly get what freedom of speech means. Freedom of speech protections are available to every citizen, not necessarily for popular speech. Nobody needs protection to say that Mr. Shinde is was a great CM and is doing a very good job as a deputy CM. Free speech protections are required for what is unpopular speech. If you cannot stand in the middle of a town square and criticize the government of the day without fear of violence or arrest or things like that, then you are not necessarily living in a free society. Today, whatever Kamra has said has led to violence on the part of a political party, which is part of the government of the day. The government of the day has failed in its constitutional duty to assure freedom of speech to all its citizens. Yes, there are restrictions on freedom of speech, But what are the restrictions? They are again to be applied only through the process of law. If you don't like what Mr. Kamra has said, please file a defamation.
All right. Let me also get in Vikas Gupta at this stage. Advocate of the Delhi High Court is also joining us on the program. Mr. Gupta, under Article 19(2), reasonable restrictions to the right to freedom of speech include anything which harms the sovereignty of the country, security, friendly relations with foreign nations, public order, decency or morality, which is defamatory, which is indecent, something which threatens the sovereignty and integrity of the country. Do you think what has happened today in Maharashtra sets a bad precedent for the future?
Of course, Parikshit, two very eminent lawyers have spoken a lot about freedom of speech and its restriction. I just would like to add one dimension to it, In democracy, satire is part of democracy. And we have all grown up every day morning looking up at newspapers, and the cartoonists would come up and write about the present-day government, about the Prime Minister, about the Council of Ministers. And we've all grown up taking these satires in a very healthy manner in a democracy. I don't know if in the last couple of years, any kind of satire or any kind of humor has been used as to settle political scores by political parties, which is a very dangerous signal, Parikshit, as far as democracy is concerned, as far as freedom of speech and expression is concerned. During the elections, all these politicians treat human normal citizens as gods. And once the elections are over, they take over as gods and don't consider the public at all. So I think it's a very disturbing thing. And even police should take cognizance of the fact that on these kind of complaints, they should refrain themselves from registering a FIR. As they normally do, they don't register FIR on every complaint. And I think the police, commissioner police, they must act independent of the government, and they must send instructions down the line that for registering the FIRs against such kind of satire should be completely, has no place in a democratic setup.
All right. I'm going to take a short break, but there's lots happening. And the other important issue is the case related to Justice Verma of the Delhi High Court. Yes, the Delhi High Court has withdrawn judicial work from Justice Yashwant Verma after a large stash of cash was allegedly discovered at his official residence after a fire. A special discussion when we return. I request all our guests, Vikas Gupta of the Delhi High Court, Sanjay Hegde, Senior Advocate, Supreme Court, and Mr. Vikas Singh, Senior Advocate, all of you to stay with us. We'll be right back.
But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. The shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on the Lal Street, as everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that, wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital. But they have a right to sell, and I don't begrudge that. Market is a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in, and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraint. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market. And market will correct itself. Anytime the valuations of something become excessive, people step in and sell, insiders sell, someone sells, and that creates a buying opportunity.
Europe, I think, has outperformed significantly, and rightfully so, given that things have gone from really, really bad to perhaps looking better. And I think the fiscal stimulus you're seeing out of Germany has been necessary for so long, but it's not the only thing that matters. Europe still needs a weaker dollar. Europe still needs to find a way to better coordinate financing and giving money to businesses to actually form. So, and Japan honestly has been forgotten in the developed market perspective, but Japanese markets actually have the strongest earnings acceleration. And that to me is very, very important looking forward. So Japan, I think, looks very interesting from a global market perspective. On the emerging market side, India is finally bouncing, like I said before. If we get confirmation and this rally continues past April 2nd, I'm cautioning against leaning into the rallies that we're seeing globally, particularly if we see more of a relief rally in the US, simply because there's a lot that we still don't know. There's been so many starts and stops with respect to tariffs, it's really hard to believe a lot of the headlines that we're hearing from the administration. And I actually think that rather than reciprocal tariffs, which are very painstaking and difficult to put into place and are going to require more time, I think April 2nd is really going to be more about penalizing tariff villains or perceived tariff villains around the rest of the world. So I think India might be in store for perhaps some tariffs that get put in place. But to your point, I don't think it greatly will impact the Indian market. And so for me, what's a really important cue to look for is, can Indian markets continue to push higher in light of some tariff volatility?
Welcome back. You're watching News Centre. Delhi High Court has withdrawn judicial work from Justice Yashwant Verma after a large stash of cash was allegedly discovered at his official residence after a fire. Justice Verma has strongly denounced the allegations and has hinted at a conspiracy. A 3-member committee has also been constituted by the Chief Justice to probe the matter. If the charges are found to be true, the Chief Justice of India can direct Justice Verma to resign. If he refuses to resign, the CJI can recommend the Parliament to impeach him. We still have with us Senior Supreme Court Advocate Sanjay Hegde and Delhi High Court Advocate Vikas Gupta, and also Vikas Singh of the Supreme Court, Senior Advocate as well. Let me begin with you, Sanjay Hegde. A lot of things have happened over the last 3 to 4 days. While judicial work has been withdrawn from Justice Verma completely, Justice Verma himself has denied all allegations about the large sums of burnt currency being found. He has said in his defense that this is baseless, preposterous. That was a room with free access even to the CPWD. The CRPF was adjacent to it. And why would someone keep large stacks of cash openly in a storeroom like that? And this is completely odd to think about. So the question that also comes to my mind is that the debris was removed from there. Who removed the debris? Under whose instructions? Those are very clear questions. Do you think we need answers to that as well? And also, where is the video footage? Who were the people? If there were people from the fire department who made that video on camera, where is that footage? Has it been seized under IT rules?
Those questions will no doubt come out during the course of an inquiry. You're right about who ordered the cleaning up. You must remember that Justice Verma was out of town then. He comes back on the night of the 15th, but on the morning of the 15th itself, the debris has been cleared. It does not appear that there is any evidence which links Justice Verma with orders to clear the debris. And the debris is also not cleared in a way that everything is disposed of. It is just thrown outside and the sweepers are finding it days later also. So it does not look like too much thought went into the process of cleaning out that place. Now, you're right. We all have seen one video which the Supreme Court has put up on its website. Were there more videos? And has that video been officially, has that video complied with the requirements of the CRPC and the IT Act in terms of its provenance? Is a question which may be relevant in an inquiry, and also if there are criminal proceedings later.
Right.
There are only
Mr.
three
Hegde-
possibilities. Just 1 minute. There are only three possibilities. One is that the money belonged to Justice Verma. Two, that somebody is framing him. Three, that somebody used the judge's premises, knowing that it was fully secure, it would not ordinarily be questioned, and then the fire happened. Which of these three occurred should be a matter of a full, fair investigation and then made public as soon as possible.
Right. The other question that I'd also like to ask you is that when it comes to the registrar of the Delhi High Court,
the first proposal was to increase in terms of the FPI regulations, liberalization in terms of increasing the threshold under size criteria in the additional disclosure framework. So you recall that FPI regulations were changed in 2019, where we had this Press Note 3 things was brought in as a size criteria of 25,000 crore. And subsequently on August 24, 2023, also there was also regulatory change on concentration criterion in relation to the MPS and SAST regulations. So therefore, additional disclosure was required. And now, these things were fixed in 2022. The average trading volume in the cash market has increased 122%. So taking into consideration of that, the board has decided to revise based on public comments and recommendations of FPI Advisory Committee. So this size criteria is now being taken from 25,000 crore to 50,000 crore. But please note that the concentration criteria remains the same. That is 50%. So irrespective of the size, the 50% concentration criteria remains, and in case 50% is breached, then additional disclosure will be required. So that is the first decision. The second decision was in terms of AIF regulations. So Regulation 17A of SEBI AIF regulations, there, we have this category 2 AIFs, which are required to hold a majority of their investments in unlisted securities. Now, there have been recent changes to SEBI listing obligations and disclosure requirement regulations, in which we require that the entity that has issued listed debt securities can issue fresh debt only in listed form. So therefore, there has been an apprehension from the industry that the adequate unlisted debt may not be available. So there was also a request from their side to provide alternatives. So keeping in view the credit risk, because AIFs typically can take greater risk. So you have a liquidity risk as well as a credit risk. So in terms of credit risk, we have ratings. So some of the listed bonds which are in A category or below, they could be considered as relatively having greater risk. So they are also being allowed to the AIF in addition to the unlisted debt securities. So that is a decision. I think it is also an ease of compliance and ease of business for the AIF industry, because even if they are holding some unlisted debt, there is an apprehension that they may also get listed subsequently. So therefore, they will be falling short of the 50% requirements of unlisted debt, which is currently obtaining in case of AIF regulation. So this has been done again in consultation with the concerned committee, AIPAC, by the SEBI. The third decision, again relating to ease of compliance, is in relation to advance fee to be charged by investment advisors and research analysts. So IA and RA regulations were earlier rationalized to address many concerns of the industry, and these have been welcomed. However, there have been concerns regarding some of the fee-related provisions, in particular the provisions which restricted collection of advance fee. And this was restricted to 2 quarters by the IA-RAs, to 6 months by IAs, and 1 quarter for the RAs, research analyst. So this has been now again considering the ARRIA and ARIA, taking into consideration their representations, and through this again the committee process, the board has decided to relax it, and now IAs and RAs may charge fees in advance up to a period of 1 year. Earlier, IAs and RAs were allowed to charge advance fee for a maximum period of 2 quarters and 1 quarter respectively. And please note that this is only for this fee restrictions, etc., what we are talking about is only in respect of individual and HUFs, not being accredited investors. The issue is that accredited investors and the institutional investors are very well in a position to negotiate fees and have contracts, longer-term contracts as well. But it's the individual and HUFs that temporarily we are providing this protection of a fee and fee limits and also mode of payment, as well as refund and other things. But this move to extend that to 1 year is also sensible in terms of longer-term advice that they would then require, because we also want, SEBI also wants morely, trying to have long-term equity exposure, long-term investments rather than short-term speculative activities. Another proposal in that light is also, again, ease of compliance thing. We had actually taken a board decision earlier on December 18, 2024, in which SEBI Merchant Bankers Regulations 1992, SEBI Debenture Trustee Regulations 1993, and SEBI Custodians Regulation 1996 were sought to be amended. And there was one issue which related to creating a separate legal entity in case we have, they are taking up some unregulated activity, which means an activity which is not regulated by either of the regulators, maybe any of the regulators, either SEBI or RBI or any other regulator. Then in that case, we needed to, we required them to hive off in next 2 years into a separate entity. Of course, we had given certain dispensation in terms of sharing of resources, etc. However, we have taken an internal review, and we feel that the alternative approaches may be possible in order to mitigate the risk, at the same time creating the ease of doing business for them. So therefore, it has been decided that we will come back again to the board for a revised proposal. Till that time, we will not operate the earlier decision which was done, which was taken on December 18, 2024. So then we have, these are basically the ease of compliance and ease of business measures. There is one measure relating to governance. And this provision is relating to appointment of public interest directors, cooling off period for key management personnel and directors, and the appointment process for specific KMPs in market infrastructure institutions. So based on the feedback received from various stakeholders regarding appointment of PIDs on the governing board of MIs without the approval of the shareholders, the process for appointment of PID were reviewed. Similarly, this cooling off period issue was reviewed. governance of MIs, the various KMPs, their issues were reviewed. And after the review, the board has taken the following decisions. One, the existing process for appointment of PIDs, which requires prior approval of SEBI but does not mandate shareholder approval, shall continue. Second, if the governing board of an MII decides not to reappoint an existing PID after his or her first term, it must record the rationale for this decision and communicate it to SEBI. Third, cooling off period for KMPs and directors of MIIs moving to competing MIIs. For that, the governing board of an MII may prescribe a minimum cooling period for its KMPs and directors, including managing director and PIDs, before joining a competing MII. SEBI will no longer prescribe a cooling off period for PIDs transitioning from one MII to another. So far as the process for appointment of specific KMPs in MIIs, the appointment, reappointment or termination of specific KMPs, which includes compliance officer, chief risk officer, chief technology officer and chief information security officers, namely CEO, CRIO, CTO, and CISO, by whatever designation called in Vertical 1, which belongs to critical operations, and Vertical 2, which belongs to regulatory, compliance, risk management, and investor grievances side, shall require approval of the managing board of the MIIs, which was hitherto with the nomination and remuneration committee of the MII. So therefore, it's being upgraded that instead of only the NRC, it has to be through the governing board of the MIIs. And a process is also being prescribed through a selection process, which then MII has to appoint an independent selection committee, which will then report to NRC, and then the NRC makes recommendations to the governing board. So therefore, that process is getting strengthened for all these four category of officers. This was on the governance side. And now I think the issue on SEBI governance itself. So the day I had joined, I had mentioned that we'll come up with our plan, how we will handle the conflict of interest and other issues. So today the board has decided to constitute a high-level committee to undertake a comprehensive review of the provisions relating to conflict of interest, disclosures pertaining to property, investments, liabilities, etc., and related matters in respect of members, that includes the chairman and officials of the board. As you know, we have there is a code of conduct of 2008 in respect of members of the board, including chairman. And there is also ESR, Employee Service Regulations 2001 for the employees. There are issues related to conflict of interest. There are also issues relating to disclosures, also property, investments, liabilities, how it is to be reported. So the high-level committee needs to be constituted away from SEBI, an independent committee. The SEBI will provide the secretariat help. Best practices will be studied. HLC will comprise of eminent persons and experts with relevant background and experience in constitutional, statutory, regulatory bodies, government, public sector, private sector, and academia. The names of HLC members will be announced in due course. The objective of the HLC is to comprehensively review and make recommendations for enhancing the existing framework for managing conflict of interest, disclosures, and related matters towards ensuring the high standards of transparency, accountability, and ethical conduct of members and officials of the board. The HLC is expected to submit its recommendations within 3 months from the date of constitution, which shall be placed before the board for consideration. Thank you.
Thank you, sir. We will, just a humble request, we are meeting sir for the first time. I'm sure everyone wants to ask a lot of questions. A small request, let's start with one question each. And if you don't mind, we can also introduce ourselves. Thank you so much. Please, let's just go around the line. Thank you so much.
Thank you, ma'am. Ankur Mishra from ET Now. Thank you, sir, for giving the opportunity. And since it's your first conference after you have taken over, so I would want to start with a broader question. You have mentioned about FPI's ease of doing business. Conflict of interest too came in this board meeting. What is your larger message to the stakeholders, if you can start with that?
I think there is no larger message except that we have a very robust institution, and we'll carry it forward in terms of, the best outcomes that we can have. We have 3 mandates in SEBI. One is investor protection. Secondly, we have to develop the market. And third, we have to regulate it. Now, all these mandates, is a very big task that we have. And I think with the team that we have, which I find very, very robust team, and which is another team, several teams which are outside, with whom we work very intensively, we can always, create the best of the framework in order to meet our mandate.
Sir, just one quick thing, ma'am.
Sir, Brajesh from Money Control. Sir, my first question is, you said here that you have taken back this approval of this hiring of merchant bankers and other businesses. So what is the reason behind that?
No, what we are saying is that if there is an alternative approaches exist in order to ease the business, we will explore that. Because everything what we do has a certain cost. So we have to, if the risk can be mitigated otherwise, then we will explore those things as well. Hiving of entities would mean that you have to create new, is a certain cost which you have to incur. So whether we can do it, and secondly, there is also an issue of level playing field. Like, for example, what in that proposal was that, maybe the banks which are regulated by the RBI, there the hiving off will not be done. The banks which are not regulated by the RBI, their hiving will be done. In some respects, it's a non-playing field also. So I think we have to be a little more nuanced and clear on whenever we are doing regulatory changes. Going forward, our effort would be to have, we do have consultative mechanism, but we will also be more mindful of, whether we are unnecessarily creating a burden, extra burden on the industry, if we can achieve the same objective otherwise. Right? It's the way, so effective regulation and optimum regulation is our goal.
Lata Venkatesh, CNBC TV 18. Thank you for the opportunity. Mr. Chairman, you have raised the threshold for disclosures from 25,000 crore to 50,000 crore. Can you give us an idea of how many entities and how much amount of funds therefore escape, disclosures? Also, in this 50% which you have not changed, 50% exposure to one stock, can you give us the final data on how many entities did not disclose and therefore had to wind up, or how many of them, because of your rule, changed? They were given a cooling off period, so how many of them changed? What is the net amount of funds that had to close down or were affected?
See, there are many exemptions also. Like, for example, many of the funds, sovereign funds, government, largely public funds were also in any case exempt from this. So basically widely held. Now, it is not to say that disclosures are not there. There are disclosures which are required as per the PMLA. So KYC and PMLA disclosures, well, in any case are applicable for every FPI. It's only that more granular exposure is that we are talking. So let us not say that in fact, there's a very detailed KYC and there is very detailed exposures. But if you are really going down to more granular exposure, is that what is there? So I don't think that there would be very many, but the question is that if you set a limit, business start operating at that level. So the question is, I think the capital is needed. So there is no need to artificially restrict the capital to 25K crore when, markets have grown.
At the moment, there's no number between 25,000 and 50,000 who immediately get excused. As well, that 50% question, sir.
Well, some of them, who may be operating at 25K level, then can now bring more money. It's like, as I said, that, people start operating. Up 10% rakho, 9.99 mein aa jayega. It's like.
Hi, good evening. This is Menaka Doshi from Bloomberg. I want to go to the last point that you made in terms of the approval by the board to set up a high-level committee on the conflict of interest disclosures and related matters. Is this a tacit admission that there were some violations, in the recent past that have required you, after so many years, to revisit this issue of conflict of disclosures by those serving at SEBI?
I don't think we can look at it that way. We are saying that 2008 was the last, this was there. So it requires an update. Now, why not now?
Why not 6 months ago or 6 months later?
Well, you can always ask a question, For every decision that I'm taking, we are taking it today, you can say, why not 6 months earlier?
So no connection to research?
So, of course, you could say that, there was a certain trust that needs to be built up, if so to say. And secondly, people in our organization and the outside, they need to be clear that things are fine. There is no such thing. There is no tendency to hide, and we don't want to do that. But we need to have a framework. See, the point is, if you don't have a framework, how do you know which one to be disclosed, how to be disclosed, how you might, if you have a complaint to make, how do you make a complaint, where does it go, how does it get mitigated? It's important that we look at these issues and what are the best practices around.
Sir, forgive me for pressing the same point, but we were told there were frameworks.
I'll not, we'll not get into the question.
Good evening, sir. This is Sajid here from NDTV Profit. Can you give us a change in the policy framework in which SEBI will now be operating? What I mean to say is that, you used to set up a committee, then a discussion paper used to come out, and then, you used to create industry standards board, they will recommend something, and then a policy used to come out to a discussion paper, and then it goes to the board. Now that you have gone back on the merchant banking thing, because it went through the same process, is there a change in the way policy will be framed in SEBI going forward?
It will not be changed. In fact, same is a very robust process. SEBI has, I think, one of the best processes around when we have a consultation papers, we have public comments, we have a committee, and it has gone through all that thing. But it's a question of again taking a measured thing. When the committees are there, maybe a little bit of a more pressure of time. Sometimes they can, because it's a question of also a time for deliberation. Now, if suppose something comes to this thing that whether there is a possibility of doing this, so why not do it? So in that case, before we really actually issue the regulation, it is better to take a little bit of more time and just refine it before it is issued.
So you're saying currently is not the case?
No, it is the case. As I said that, there is in particular cases, if we have this, that, certain decisions will require a review, we may take a review.
Hello, sir. Thank you so much for doing this. This is Yash Jain from CNBC TV 18. One clarification and one question. As far as the clarification is concerned, you've said SEBI will not be the authority to decide the cooling off period when it comes to transitioning of PIDs between exchanges. Is it fair to assume that if one exchange says there is no cooling off period at all that is required, you would be all right with that? The question is, when you're taken over also, you had spoken about how along with domestic investors, FPIs are also very, very crucial for the Indian markets with respect to the capital that they bring in. One step has been taken with respect to, the disclosure norms being relaxed for them. What more are you looking at? Is it largely on the policy side? Is it on the taxation side, or something away from both these points that you're looking at to make Indian markets more, friendly for foreign portfolio investors also to find them attractive here? Thank you.
I think you have asked two questions, two very different questions, but I'll take it. The first question relating to, this cooling off thing. Now, cooling off thing, what we found is that you don't have any cooling off requirements for MDs, for example, or the KMPs. But we have imposed a cooling off for PIDs. Now, public interest directors are very important people, and they are, as I said, SEBI's also eyes and ears, so to say, protecting, and therefore we are exempting the shareholder approval on that. Because I think some of these organizations, the shareholders could be, presumably, suppose they may also move from a business motive. But here the PIDs have no such, because they are not even approved by the shareholders. So we should not make it difficult for the PIDs to move, because PIDs also are not necessarily in a very big supply. So right now, we have no, sort of restriction sometimes for the other ones, MD, KMPs, but restriction only for PIDs. We just wanted to make it uniform. PIDs are in no way, one PID, in fact, if it moves from one MI to another, it's welcome, because it's from one MIA also, he's actually bringing in investor protection from one and to taking investor protection to another MII. So to that extent, I think nothing will be lost, really. Yeah, on FPIs, as I said, that FPIs have to really decide where they want to go for what return. And I think things change and they can decide. What we will say is that we are providing, the kind of regulations, etc., which will really facilitate. We are in no way wanting to, sort of scare anybody away or things like that. And we are willing to engage as much as we are willing to engage with all domestic capital as well. So, engaging with people with capital and making markets, strong, that is also, one of the goals SEBI has.
Hi sir, this is Yatin Mota from CNBC Awaz. Sir, speculation के matter पे पूछना चाहूँगा. When you talk about speculation in the derivative markets, exchanges have been recently changing days of expiry to probably compete with each other. There is one of the exchanges which has recently got capitalized, looking to again come with the future and option framework. So on the matter of speculation, what is the regulatory stance? Would these frequent changes in day of expiry taken into cognizance by the regulator? And in the matter of the cash segment, Bhatia sir has done a commendable job to shell companies, wherein we have seen orders from the regulator, wherein, market capitalizations were manipulated, wherein sales were zero, promote holding was zero. And there is still a lot of these shell companies in the marketplace. So, in the matter of investigation, is SEBI looking at further, clamping down on such, shell companies, because enforcement agencies have taken this order, and had a raid on certain premises in Ahmedabad. So both on the derivative side and the capital market side, how are you really looking at the speculation part, which has been increasing day by day?
Well, I'll just reply this thing briefly, and will ask my colleagues also to supplement. First of all, futures market F&O is important for us. It's important for any market because, so it's not something which it's required for hedging, it's required for market making, for price discovery. What we have really been saying is that when we had a problem with index options on expiry day. I think that was a huge problem because it was coming on a single day and with this thing. And then we also had this issue of, how do we really measure our exposure, where I think certain, nuanced position is required. So a certain steps were taken for a while. And then we have also put out a paper, and on which we have received some 800 suggestions. And we are fully engaged with various things. And incidentally, there is a detailed discussion with market participants and the relevant people in SEBI while drafting that paper as well. So I would like to ask Mr. Anant Narayan to further elaborate on that.
There was an unsanctioned car show at the park prior to the shooting. The call for the gunshot victims came in at approximately 10:10 p.m., again on 3/21/2025. The investigation so far reveals that there was an altercation between two groups of people, and that altercation escalated to gunfire between both groups. Several other people were also injured in the crossfire.
yolsuzluk operasyonu üzerinden milletimizi provoke etmeye kalkıştılar. 4 gündür milletin huzurunu kaçırma, insanlarımızı kutuplaştırma adına ne varsa hepsini yapıyorlar. Önlerine gelene hakaret etmekten, sadece görevini yapan polislerimize saldırmaya, yolsuzluk ihbarlarını araştıran yargı mensuplarımıza gözdağı vermekten, sokak terörüyle milli iradeyi baskı altına almaya kadar ne ararsan bunlarda her şey var.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Nifty turns positive for 2025 after gaining for the 6th session. The Sensex crosses 78,000, hitting the highest level in 2 months. Veteran investor Ramesh Tamani says the last 5 months were only a correction in an ongoing bull market. The rupee regains lost ground for the 7th straight session, hitting the highest level in 3 months. It's wiped out all the losses for the year with the biggest monthly gains in 6 months. Just over a week to go for US President Trump's proposed reciprocal tariffs on key trading partners. A senior US trade envoy will arrive in India tomorrow to hold talks. Wall Street Journal reports that sectors like pharma, auto and semiconductors could be spared, but top 15 nations with a trade deficit to the US could be hit with individualized tariffs. The Indian government proposes to end the 6% equalization levy on online advertising in the finance bill. The move will benefit global tech giants like Google and Meta. The 6% levy has been in place since 2016. Growth will return to the consumer sector in Q2, says the top brass at Pidilite, as the company prepares for a change of guard. Outgoing MD Bharat Puri and his successor Sudhanshu Watts see a clear resurgence in rural demand. That's an exclusive. After PhonePe, fintech company Razorpay is all set to shift its domicile to India as it eyes a public listing. Co-founders Harshil Mathur and Shashank Kumar say the shift comes at a cost, but a small price to pay. That's another exclusive. Resist protectionism and defend globalization, says China to global CEOs at an annual summit. Beijing courts multinational corporations in a bid to attract more investments. Apple's Tim Cook, along with CEOs of Qualcomm, AstraZeneca, and dozens of other companies attend the summit. US and Russian officials hold talks in Saudi Arabia to try and arrive at a broad ceasefire in Ukraine. Washington is eyeing a maritime ceasefire in the Black Sea. Ukraine and US held delegation-level talks yesterday. Kyiv termed the discussions constructive and meaningful. The centre notifies a 24% salary hike for MPs with retrospective effect from the 1st of April 2023. The salary hike from 1 lakh to 1,24,000 per month for sitting MPs. Daily allowances hike from 2,000 to 2,500 rupees. Former MPs will draw a pension of 31,000 rupees instead of 25,000 earlier. Several surveys have pegged India Inc.'s average salary hike in the range of 9 to 9.5% this year. The Delhi High Court withdraws judicial work from Justice Yashwant Verma after a large stash of cash was allegedly discovered at his official residence after a fire. Justice Verma has denounced the allegations, has hinted at a conspiracy to malign him. Civic authorities in Mumbai demolished alleged illegal structures at the Unicontinental Hotel a day after stand-up comedian Kunal Kamra's video with a joke on Maharashtra's Deputy Chief Minister Eknath Shinde goes viral. The Mumbai police file FIRs against Kamra and 20 Shiv Sena workers who vandalized the venue where the program was shot. Well, let's start with the market action. The Sensex and the Nifty gained for the 6th day. This is the longest winning streak since September of last year. And with this, the Nifty has turned positive for 2025, wiping out the losses so far this year. The Sensex added 1,000 points today. 77,984 is where it closed. The Nifty up 300 points. The mid-cap index bounced there, 670 odd points. And it's a 1,000-point gain for the Nifty Bank as well, closing about 2% higher. Surabhi is standing by to wrap up the market action. Surabhi, back in positive for 2025.
Well, the bull charge continued on the street with another very, very green day, with India outperforming most global markets. It's now gotten a lot of fierce momentum on the upside, almost equal to the momentum on the downside. The market's recoiling like a spring, and there's a deep shade of green across the board. The good news of this pullback is that it's very, very widespread, it's very deep, and it's not limited to just a few set of stocks. And I'll illustrate that as we go forward. By the way, the Nifty has now recovered 7.7 to 8% from the lowest levels that were hit. The lowest point of this correction happened on the 4th of March. And from then onwards, it's a nice, decent 8% pullback on the Nifty and an over 11-12% pullback on the mid-cap index. So let's talk about the recovery today. Like I said, widespread. Almost all Nifty sectors were in positive territory. Financials and PSUs obviously have been leading this charge, and that continued today as well. But even otherwise, I mean, look at IT stocks, look at the PSU index or the CPSE index, look at oil and gas, realty, energy, everything was up and about. If I talk about Nifty gainers, then you'll see this this diverse flavor playing out in the gainers list as well. Kotak Mahindra Bank, SBI, Axis Bank from the financials, NTPC, Tech Mahindra, Power Grid, a lot of PSU and capex related stocks, PSU stocks doing very well as well. HCL Tech had a good show for itself. Tech Mahindra was higher. BEL had a fair amount of green as well. The heavyweights have participated in a beautiful manner in the last couple of days. Today included L&T, HDFC Bank, ITC, Reliance, gains between 1% to 2%, depending on which stock you are picking up. The only real noticeable losers, two consumer names stand out over here. Titan was down, Trent was down. These were losses between 1% and 2%. And IndusInd Bank saw some weakness once again. Also, what did Mahindra & Mahindra? It did end slightly negative, about 1% down. But there's news around the company. Our sister network, Aawaz, picking up a lot of buzz that perhaps M&M could be looking to buy out the promoter's stake in SML Isuzu, which is why that stock, SML, was up almost 5-6% today. Let's talk about the mid-cap market now. Like I said, big, broad move here. The advance decline ratio was positive, almost 2 stocks advancing for every 1 declining. The index was in step with the Nifty. Some examples of the gainers included IRDA, RailTel, Federal Bank. A lot of the auto ancillary companies did very well today. So names like JBM Auto, Varroc Engineering, Olectra Greentech, lots of buying in these names. PowerMech, which announced some auto wins, Alkylamines. It's a long list of winners out there. Very positive day once again. Now, we're, of course, going to look out for U.S. markets. The futures, U.S. futures, were decisively higher by the time that we closed out. And there is some hope that perhaps, the U.S. president will show maybe some quote-unquote flexibility on those reciprocal tariffs come the 2nd of April. And that's what markets will track, along with the fact that there has been a return of FPI buying in the market. And if that continues, it could, of course, give a further boost to the bulls.
All right, Surbhi, many thanks. Well, speaking of the bulls, veteran investor Ramesh Tamani says the last 5 months have only been a correction in an ongoing bull market in India. He remains upbeat on the market trajectory from here on. Take a look.
In my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market. Okay. What happened was the first correction in 4 or 5 years, it was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market.
Well, that's Ramesh Tamani. You can catch more of that conversation right here on CNBC TV 18. Let's talk about the rupee also erasing its losses for 2025, and that's thanks to the strong dollar selling by foreign portfolio investors and by exporters. The currency is now close to a 3-month high. It's gained 2.5% since hitting all-time lows in the month of February. Latha is here with more. Latha, so the rupee also rebounding like the stock markets.
Oh, it's been a blistering set of records for the rupee. It's the 7th straight day of rally. It has erased all the losses of 2025. It is at a 3-month high, and it is up over 2.5% from the low that the rupee touched on February 10th, when it cost 87 rupees 95 paise to buy a dollar, and today at 85.50. It's a long way that the rupee has appreciated. Actually, it's twinning very nicely with the equity markets. The Nifty also has erased all its gain, all its losses for 2025, and the rupee has done much the same. So that explains the reasons. The big reason for the rupee's fall was the inexorable buying of dollars buy FPIs. They were selling shares, buying dollars and leaving the country. Now that's turned, and they have turned buyers of equities, which means they are selling dollars. And that's one big reason, of course, why the rupee is gaining in strength. The other reason is that a lot of people are caught long dollars. They are in the wrong side of the trade. A sizable chunk of that are exporters who have to book their profit by March 31st. And they were seeing visions of 87 and 87.5. Now you're barely getting 86 for the dollar. So people are selling out in a hurry. The arithmetic that people say for March 31st, it's called an LDFD. That is last day, first day. That's the day the trade expires, March 31st. If you have to make gains on your dollar positions, the dollar has to become expensive by at least 15 pice. And at the moment, that looks like a long shot. So there is quite a hurry to sell dollars. It's a very thin market, and there are hardly any buyers. RBI doesn't seem to be obliging.
All right, Lata, many thanks for joining us. Now, Assistant U.S. Trade Representative Brendan Lynch will visit India along with a team of U.S. government officials from the 25th to the 29th of March. This visit will be part of the ongoing bilateral trade discussions between both countries. This comes at a time when U.S. President Donald Trump is set to impose retaliatory tariffs on all countries from the 2nd of April. Now, speaking at the Oval Office last week, Trump hinted that he could take a flexible approach. He said, and I quote, "I don't change, but the word flexibility is an important word. Sometimes it is flexibility, so there will be flexibility, but basically it's reciprocal," end of quote. Now, a report by the Wall Street Journal suggests that Trump may implement a tailored approach with these tariffs and will focus on a group of nations that have been referred as the Dirty 15, and this may include India and China. Sectors like pharma, auto and semiconductors could also be spared. The term coined by U.S. Treasury Secretary Scott Bessent pertains to roughly 15 nations that have trade imbalances with the U.S. India currently ranks 11th on the list. The report has also highlighted that other nations may be subject to softer duties and individual tariff rates set on a country-by-country basis. So that is something to be watchful of. Now, the government has proposed to end the 6% equalization levy on online advertising in the finance bill. This move will benefit global tech giants like Google and Meta. Timsy is standing by with the details. Timsy, this has, of course, been a big bone of contention for a lot of the large tech companies, largely US-based tech companies. Take us through the proposed amendments.
Well, as you rightly said, Centre has moved amendments to the Finance Bill 2025. And as per the amendments, the proposal is to remove the 6% equalization levy under the direct taxes, which were being charged on online services, primarily online advertising. Remember, this is popularly known as Google tax, which was introduced in 2016. And now, as per the proposals, it implies that the 6% levy which was being charged to the consumers of online advertising will now be removed completely if the proposal gets the Parliament approval. Reduction in this tax burden is actually going to benefit sales of advertising space, especially by online giants such as Google and Meta. And just to remind our viewers, again, this is equalization levy which was introduced in 2016. And since then, US has been opposing this decision of India, seeking a reversal, a complete reversal of the levy. Experts claim that this move is part of India's piecemeal duty reduction commitment to the US post the recent bilateral talks. Now, what is to be seen is how do these global giants, especially Google and Meta, react to this move, and also what is the impact on India and US trade relationships. Back to you.
All right, many thanks, Timsy, for joining us. Outgoing Managing Director of Pidilite, Bharat Puri, believes growth will return to the consumer sector from Q2. Puri's tenure at the helm comes to an end this month, starting the 1st of April. Sudhanshu Vats will take over the reins at Pidilite. Both the outgoing and incoming MDs spoke with Mangalam on their outlook for the sector, along with some lessons in leadership. Take a look.
What we are beginning to see is a clear resurgence in the rural demand post the monsoon, a little bit. You know, albeit slow, but we are clearly seeing that pattern. As far as urban demand is concerned, I think in our sectors, Mangalam, and therefore now I'm talking about how we look at it, it has been when it comes to construction, when it comes to home improvement and so on and so forth, the demand has been quite steady. I'm saying the point is it could always be better, as Bharat was just saying. So I'm saying the point is we would want it to be a bit more better, a little bit more buoyancy. But having said that, I think we've been seeing steady this thing, and that's why we've been delivering steady returns as well, steady numbers as well.
Core is clear that, listen, I mean, the biggest mistake any company can make is
assume that the core is mature, and a lot of times fellows will say, okay, listen, oh, this is a mature category. Well, there are no mature categories, there are only tired managers.
And the focus, Mangalam, compared to many other companies, having had worked with many other very good organizations, I can tell you the focus is first and foremost on seeing what could we have done better. Because most of the time the tendency is, oh, this is not right, the market is sluggish, as we were just talking about, or the consumer is not ready. But the first question you have to ask is that, what have we not done right? So I think that philosophy keeps making.
And you can catch that very interesting conversation with the outgoing and the incoming MD of Pidilite, Bharat Puri and Sudhanshu Vats at 5:30 p.m. and 10:30 p.m. on CNBC TV 18. The Competition Commission has investigated 35 cases of cartelization in the last 5 years. The competition watchdog said that out of these cases, 5 were related to the health and pharma sector, 4 were linked to the railways. The CCI has also investigated cases pertaining to cartelization in the financial sector, coal, power and civil aviation. So those are the probes underway by the competition watchdog. China's premier has told global CEOs to resist protectionism and defend globalization at an annual summit. This as Beijing courted multinational corporations in a bid to attract more investment. The summit was attended by Apple's Tim Cook along with CEOs of Qualcomm, AstraZeneca and dozens of other companies. The corporate leaders have said that they are bullish on China and are doubling down on their investments.
The size of the population, excellent infrastructures that are second to none, investment power and a highly skilled workforce, great education and great work ethics. So all of those are extremely positive elements that will continue to make China a growth engine to the world economy.
China is one of the most important innovation markets. Meanwhile, we see genuine innovations happening in China. And that's what we are doubling down on. We continue in our investment in China.
While global CEOs there in China. Time for us to head to a break, but up next, civic authorities in Mumbai demolish alleged illegal structures at the Unicontinental Hotel. That's a day after stand-up comedian Kunal Kamra's video went viral. That and more when we return. The centre has notified a fatter paycheck for MPs with retrospective effect from the 1st of April 2023. Now, salaries for sitting MPs have been hiked by 24% from 1 lakh rupees to 1,24,000 rupees a month. The daily allowance has been hiked from 2,000 rupees to 2,500 rupees. Former MPs will draw a pension of 31,000 rupees instead of 25,000 rupees earlier. Now, several surveys have pegged India Inc.'s average salary hike in the range of 9 to 9.5% this year, so substantially higher there for our parliamentarians. The Delhi High Court has withdrawn judicial work from Justice Yashwant Verma after a large stash of cash was allegedly discovered at his official residence after a fire. Justice Verma has strongly denounced the allegations, has hinted at a conspiracy. A 3-member committee has also been constituted by the Chief Justice to probe the matter. Ashmit is standing by now with more. Ashmit, several unanswered questions still remain, especially on the initial statement released by the Delhi police. Ashmit, I was just asking you, there are several unanswered questions that remain, especially with regards to the statements made by the police.
Indeed, a number of questions still remain, Chief, amongst them being that who shot the video, where was this video shot, what was the location of this video that has been shot, that has been circulated. We were aware the Supreme Court, the Commissioner of Police shared this information, shared the video, but these details are not known as to who, when and where was this video shot. Also, another key question, what is the quantum of the money? Ever since the story got reported, we've been hearing figures ranging all the way from 1 crore to 50 crores. There has been no estimate. There was no effort made by the Delhi police to account for how much actual cash was lying there. The police said 4 to 5 gunny bags worth of Indian currency. No estimate given by the Delhi police. Number 3, where did the cash go? The police confirms that on March 14th, the night, the cash was there in 4 to 5 gunny bags. However, the police then also reports that on the morning of March 15th, cash had been removed along with other debris. Who took this cash? Where has it gone? Since then, since the morning of March 15th, no one has seen the half-burnt cash. So where exactly did it go? The Delhi police will have to give some answers. Also, questions with respect to who exactly can access the storeroom. There are different versions coming in from Justice Verma, from the Delhi High Court Chief Justice, as well as from the police. Who exactly can access these rooms? These are multiple questions that await clarity as to how this entire how this entire incident went about. And it is in pursuit of that the CJI has constituted a 3-judge bench to investigate this matter. That 3-judge committee will then be submitting its report to the Chief Justice, who then will take a call on whether or not to remove him or whether to impeach him. That's a decision that the CJI will take. And in the interim, the Delhi High Court has withdrawn all judicial work, has stripped him of all judicial duties. Meanwhile, there are statements coming out of the Allahabad Bar Association. They've already said we're not a trash bin. They're now saying that there should be an FIR lodged against Justice Yashwant Verma.
All right, Ashmit, many thanks for joining us. Now, the Mumbai civic body has demolished alleged illegal structures at the Unicontinental Hotel. This a day after stand-up comedian Kunal Kamra's video, which was supposedly aimed at Deputy Chief Minister Eknath Shinde. Mumbai police also filed FIRs against Kamra and 20 Shiv Sena workers who vandalized the venue where the program was shot. Santya joins us now with the latest. Santya.
A comedy show, a viral video and a political storm. Kunal Kamra's latest video has sparked an outrage in Maharashtra. On Sunday, Kunal Kamra's recent act went viral. In one of the clips, he joked about Maharashtra's Deputy Chief Minister Eknath Shinde, his rebellion and the split in Shiv Sena. Shiv Sena leaders and Shiv Sena workers took offense to this particular video. The video was also tweeted by Uddhav Thackeray faction's Sanjay Raut. Later, a video surfaced where a group of people who claimed to be from Shiv Sena were seen ransacking and vandalizing the habitat, the venue where reportedly the act took place. By Monday morning, Mumbai police detained over 10 people and an FIR was filed against 20 people, including Shiv Sena's Rahul Kanal, for trespassing, rioting and assault. Later, Mumbai police booked Kunal Kamra and accused him of making derogatory statements against Maharashtra's Deputy Chief Minister Eknath Shinde. In the meantime, the Habitat team, the place where the act reportedly took place, issued a statement that they are shutting down till the time they figure out a way to operate without putting their people and their property in jeopardy.
Santya, many thanks for joining us. In international news, at least 21 Palestinians have been killed after Israeli forces continue to bomb Gaza. The renewed assault has come hours after forces bombed the Nasser hospital in the enclave, killing at least 2 people. This included a Hamas leader. US and Russian officials held talks in Saudi Arabia to try and arrive at a broad ceasefire in Ukraine. Washington is eyeing a maritime ceasefire in the Black Sea. Ukraine and the US also held delegation-level talks yesterday. Kyiv has termed the discussions as constructive and meaningful. Protests across Turkey continue to intensify this after the main rival to the country's President Erdogan was formally arrested and charged with corruption. Tens of thousands of protesters taking to the streets for the 5th day. They were seen waving Turkish flags and chanting in front of police. Officers also fired water cannons at some protesters and used pepper spray. Canada's newly appointed Prime Minister Mark Carney has called for snap elections in the country on the 28th of April. Carney will now face Conservative leader Pierre Poilievre. Carney said he needed a clear, positive mandate to deal with Trump's tariffs and his threats to Canada's sovereignty. Pope Francis has returned to the Vatican after surviving a 5-week battle in hospital against double pneumonia. The 88-year-old Pope has also made his first public appearance since February the 14th before being discharged from Rome's Gemelli Hospital. Doctors have said the pontiff will need a further 2 months of rest at the Vatican. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Do stay tuned. We're back in a moment with more.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV 18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV 18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV 18 and CNBCTV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
The good news is, the bad news is that yes, it's under a cloud right now. It's under a very serious cloud. That's why I've told you the axis was changed. The good news that is.
Hello and welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. Here are the key headlines from the startup space. After PhonePe, fintech company Razorpay is all set to shift its domicile to India as it eyes a public listing. Co-founders Harshal Mathur and Shashank Kumar say the shift comes at a cost, but it is a small price to pay. That's an exclusive.
B2B manufacturing and supply chain enablement startup Groyo acquires US-based Awesome. The acquisition will help Groyo expand into the US market and will help grow its omni-channel retail presence for its private labels.
India's tech startups backed $2.5 billion in the first quarter of 2025, a 13.6% increase over the previous quarter, says Traction. Auto tech, enterprise applications and retail were the top performing sectors. Top investors in the first quarter include Bloom Ventures and Peak 15.
Indian government proposes to end the 6% equalization levy on online advertising in the finance bill. Move will benefit global tech giants like Google and Meta. The 6% levy has been in place since 2016.
Chinese smartphone and EV maker Xiaomi is raising up to $5.27 billion in a top-up placement, according to a term sheet seen by Reuters. The shares are being sold in a 52.80 to 54.60 Hong Kong dollars price range, the term sheet said. Well, those are the headlines that we've been tracking for you from the startup space. On what's brewing today, the Payments Council of India has made a submission to the Prime Minister's office requesting the reconsideration of zero MDR or merchant discount rate policy for UPI and RuPay debit cards. Now, this submission includes a proposal to introduce a controlled MDR framework that ensures there's continued digital payment adoption. For more on this development, I have with me Vishwas Patel, who is the chairman of the Payments Council of India and also the joint MD of Infobeam Avenues. Mr. Patel, thank you very much for your time here on CNBC TV 18. First, just to make it very clear to our viewers in very simple terms, when we're talking about this reconsideration of the zero MDR regime, who exactly will be impacted? Because from a customer's point of view, making UPI payments, whether on merchant outlets, e-commerce sites, through their debit cards, through UPI, they continue to remain unimpacted, right?
You're 100% right. Look, PCI always stands for the benefits of the consumers, right? And we want to make digital payments happen. How do we take it to the next 300 million UPI users is our core concern. So whatever we are proposing, there is absolutely nothing that the consumer has to pay more while paying through either a UPI or a RuPay debit card.
Got that. So with that clarified, tell us about what exactly PCI has proposed when it comes to reconsidering the zero MDR policy, and what was the reason behind selecting the 30 basis point MDR for large merchants? How did you arrive at this specific rate?
Okay, if you understand how the payment industry works, right, there is a cost of plastic that is issued for, say, a RuPay debit card. There's an ATM card which is used for. There is a cost for the entire program. Right, even on the acquiring side, when we go across in the next hinterland of the country, there's a cost of marketing it, putting it, training the merchant, getting him to use this cashless kind of a digital payments. So if you want to keep increasing, there has to be money. And when you see that almost 80% of the transactions are UPI, and then there is zero money to be made, So there is hardly any incentive for any of our members at Payment Council of India to have that motivation to go down into the hinterlands and deploy. Right? If we want this continuous growth, now we have already transgressed where 350 million people are already there on UPI, right? How do we take the next 350 million, right? And this is going to be a tough challenge because there will be language problems. There will be this next level of people to get them onto the digital payments ecosystem. So it's going to be increasingly difficult without any monetary rewards at the end of it, because anything free never works, right? So what we have requested the government is that, yeah. Okay, so what we have requested the government.
So tell us what exactly you've requested and how you arrived at the rate.
Okay, so what we have requested is that there are total 6 crore merchants who are accepting UPI across the country as of today, right? And out of the 6 crore, 90% or more constitutes the smaller merchants, right? And we are saying that we please continue this zero MDR and the incentives for the smaller merchants. And the next phase is also going to be adding more and more the smaller merchants. So out of 6 crore, almost 5.4 to 5.5 crores are the smaller merchants, which are not going to get affected if there is our suggested MDR. What we are suggesting is this 30 bips, very controlled MDR is for the large merchants. Large merchants as defined by RBI. Now today, this 10% of these large merchants which are there today, they are anyway accepting credit cards and debit cards. And for credit cards, they are paying 1.8% MDR. So if they were to pay 0.3%, right, on a 100 rupee transaction, they get back 99.7, right, rupees back. And they have to pay this 30 paisa or 30 bips on a transaction. I don't think so it will be a problem for these large merchants. Right, and whatever the incentives that government paid 3,600 crores last year, right, most of it was processing for zero MDR for these large merchants.
Okay, Mr. Patel, very briefly, since we're running out of time, the industry's talked about doing away with the zero MDR for the longest time. How real is the proposal this time around? What is the kind of timeline the industry understands that the government will come back on whether or not it will reconsider this? And to what extent will that 30 basis point MDR cover that 10,000 crore cost of maintaining UPI annually?
Look, there are huge costs that the payment industry endures to make this growth growing. If you look at global standards, right, today, this year we'll be crossing 50% of the world's real-time transaction happening in India. And for that, a lot of costs is required. There is innovation, there is acceptance and the servicing of these merchants across this country. Then there is cost of onboarding, following all the RBI compliance norms, which are increasing day to day, the cost of technology, cost of servicing, so many other operational related costs. And it cannot go on this zero MDR anymore. The push that has come to the serve right now is that the incentives the government has reduced this year from 3,600 crores, which was approx last year, to 1,500 crores. Now, and the volumes has grown more than 40% this year, right? So how will the whole industry survive and how are we to keep this growth going? We want to keep this growth momentum going, and the government has to understand that to sustain this growth, to sustain this kind of massive boost that the digital payments have, right? This kind of a small MDR, a control MDR on the bigger merchants, right? It will really help boost the ecosystem. And we are saying that for these large merchants, we don't need the incentives. Why should government pay taxpayers' money in incentivizing transactions for processing on these large merchants? Right? That's been our ask to the government. So we have written to the Prime Minister's office. We have written requesting the Prime Minister for his intervention in resolving this.
All right, Mr. Patel, we'll wait to hear more on, what the government decides in the matter, a key issue for the payments industry. Surely, thank you very much for your time here today.
Thank you. Appreciate it.
Moving on, All In Capital, a pre-seed venture capital firm founded by former Upgrad executive Kushal Bhagia, has announced the first close of its second venture capital fund with a target corpus of 200 crore rupees. The fund also includes a green shoe option of another 100 crore rupees, bringing its total capacity to 300 crore rupees. Joining me now to discuss the firm's growth plan is Kushal Bhagia, the founding partner of All In Capital. Kushal, thank you so much for taking time out and being here with us on Startup Street. You know, you've made this first close, like I said, of your second fund. You know, by when do you hope to close this round, and what's the kind of interest you're seeing from investors for Indian startups?
Thank you so much for having me here. It's my pleasure to do this. We expect to close the entire fund by end of this calendar year, and I think there's massive interest. People have seen companies that were started, 5, 10, 15 years ago that have gone public in the last couple of years, and family offices, fund of funds, HNIs, they all kind of realize that, if you want to get exposure to the future of what's going to come on the stock market, let's say, 5 or 10 years from now, those are investments that are happening in the private investment space. So as of now, there's massive interest in early stage AIFs that are doing startup investing.
Right, absolutely. So big interest there in early stage. I'm going to come to that in a little bit. But you're looking to invest in 50 companies over the course of the next 3 years, right? So you've already started deploying these funds. Take us through the firms you've already bet on and the ones you're in talks with. What's the investment strategy here?
Sure. So we typically see 400 companies every month, and we end up investing in 1, sometimes 2. And from this new vehicle, we've already invested in 8 companies. This is a mix of AI, consumer brands for India, consumer apps for India, and there's even a gaming studio we have back. We are quite wide and sector agnostic, but we have these frameworks that we use to identify founders in every domain that we go into. There are certain traits that we like, the founder market fit that we look for in each of these companies. From our last fund, we had done companies like Numi, which is a fast fashion platform, which is growing rapidly, opened up 10 stores. Their online app is one of the top shopping destinations in India. We had done a space tech company called PureSight Space, which is building satellites to track ships in real time. We had done Magma, which is a B2B marketplace for the ceramics industry. So we are quite wide. We have a wide network of sector experts who help us evaluate and understand domains, and that's kind of how we double click with them and go deeper before we invest. From this new fund, again, like I said, we've done 8 deals. Yeah, go on.
Yeah, so you've done 8 deals in these funds. Which are the companies that you've invested in?
Yeah, so we've backed a energy bar for mass market India called Takat. We've backed an AI company called Mixar, which is building tooling for the 3D animation industry and making it 10x more efficient with AI. We've backed a co-pilot for doctors in India called MedMitra. We've backed Curvy, which is a shapewear and innerwear brand for women in India. We've backed a company called Plaza, which is doing quick commerce for medicines. And we backed NPrep, which is a edtech platform for nurses in India. So those are some of the companies we've done.
Right, and you said you say that you're sector agnostic, but you focus largely on consumer tech, deep tech, fintech, and consumer brands, right? Even from the names that you've mentioned, that's what you're sort of focusing on.
Yes.
Why is it that you're betting big on these companies? What's the rationale here? And why do you find them so exciting?
So we really look for a why now, and when we go into a company, we look for what's changed in the world which makes this a great idea today. That could be a technological why now, that maybe AI lets you do things which you couldn't do earlier, or it could be a regulatory why now, or it could be a consumer behavior related why now, where consumers expect a new kind of service or product which they were not getting earlier. So we are quite that's kind of where we start. But in these particular spaces, I think AI for sure is a space where there's a big why now. Like there's this new technology on the block which is letting you do stuff which was just not possible till even 2-3 years back. It's reducing time that we used to, like a human would take to do certain tasks maybe in 3 hours, 4 hours. AI would do it in like minutes. So if you can design experiences for users where their day-to-day tasks can be cut short by that amount, a human can now do a lot more. So that is something we're very excited about. Then in terms of brands, I think there's a wide behavior in India now where young Indians don't want to use their dad's brands. So they buy brands which appeal to them and that are built for them. Their tastes are different. Like we've seen that with Numi, their audience is primarily Gen Z. And the way it's been built out, it's very different from the last generation of brands. So I think consumer in India is on a huge secular uptrend. consumption is increasing. People are catching on to global trends much faster because of Instagram. They're more discerning in what they are buying. Quick commerce is also fueling this. Whatever they are buying is also accessible to them at very, very easily and in a very impulse-driven manner. So that gives a huge platform for someone to launch a new brand, because you have discovery on Instagram and then you have fulfillment via quick commerce. So that's a deadly combination. And
Right.
yeah, that's the theme we are very, very bullish on.
Yeah, so very bullish on the consumer theme. All right, Kushal, we're completely out of time. But thank you so much for joining us on the show, and we wish you all the best on this journey going forward.
Thank you so much.
All right, on that note, we're going to take a short break. But up next, ice cream brand Go Zero has secured 30 crores in the Series A round. We'll speak to its founder on the other side, so stay tuned for that.
And my personal call that these are irreversible changes, that you could delay globalization by another 3 years or 4 years. I doubt if it's even that long. You can delay a world where, you know, the strong prey on the poor, which is what is happening now with the spheres of influence, as Donald Trump is calling it, that Russia controls Europe, we control North America and South America, and China controls Asia. So all that is being questioned as we speak right now. But I think it will delay globalization, it will delay international system. It cannot deny it, because the human arc works towards progress. And it's very hard for me to believe that we will go back to a mercantilist policy, a tariff-based policy, as Trump is advocating. Either he will change, or democracy and the people's aspirations will force him to change.
I've just requested that the Governor General dissolve Parliament and call an election for April 28th. And she has agreed. We are facing the most significant crisis of our lifetimes because of President Trump's unjustified trade actions and his threats to our sovereignty. Our response must be to build a strong economy and a more secure Canada. President Trump claims that Canada isn't a real country. He wants to break us so America can own us. We will not let that happen. We're over the shock of the betrayal, but we should never forget the lessons. We have to look out for ourselves.
Guilt-free ice cream brand Go Zero has secured 30 crore rupees in a Series A funding round from existing investors, DSG Consumer Partners, Sama Capital, V3 Ventures and others, taking its total funding to $6 million. Founded in 2022, Go Zero says it recorded its highest ever sales in January this year, crossing 5 crores in revenue, and claims to have a near 70% market share in this space in quick commerce platforms. For more on their plans ahead and how they will deploy this capital for growth, I have with me Kiran Shah, the founder and CEO of Go Zero, and with me also is my colleague Arundhati. Kiran, thank you very much for your time here on CNBC TV 18. But before we get to that funding round, start by telling us what really got you to start an ice cream brand, and what is this intensively competitive and crowded market with large players and deep pockets, and how consumer perception of guilt-free indulgence has evolved since you entered the market.
So I've come from a family of ice cream business, and since 1971, my family business has been in ice creams, and I've grown up having ice creams all my childhood. So I think when I started and wanted to become an entrepreneur, this was one category which was very, very close to my heart, and I've seen it up close. So that was one. Second, I think post the pandemic, I realized that a lot of consumers were seeking better for you options, healthier options. So when it came to desserts, they were seeking options which did not have sugar in it. If it was any other snacks, they were wanting option without any refined flour or palm oil. Also, I think during this time, there were already 3 or 4 brands which had already started better for you ice creams. But I think the taste was not up to the mark. And I think no matter what, at the end of the day, ice cream is an indulgent product. So you want to have it for the taste, for the indulgence. To crack that, I started Go Zero with our proprietary blend of sugar replacement, which gives you exactly the same taste, same texture and indulgence as a regular ice cream, but with 50% less calories. So with this, I started.
Right. Hi, Kiran. Arundhati here. You claim to have captured almost 70% of the market share in the guilt-free ice cream category on quick commerce platforms, right? So what are the factors that contributed to this, and how large is the market for this?
I think quick commerce in the past couple of years has completely taken all of India by storm. And there are certain categories which are really scaling very rapidly. Ice cream is one of them. So, for example, the second most searched keyword today on quick commerce is ice cream. The number one is milk. So there's a very clear product channel fit as far as quick commerce is concerned. And as soon as we realize that, we ensure that, number one, we double down on this channel because a consumer wants an indulgent product. They want it in 10 minutes. So you have to be available whenever they want. Second, I think from our innovation standpoint, we have given flavors and formats which consumers have grown up eating. For example, we launched our duets last year, and within 3 months, they became the bestseller on Blinkit, for example. So I think working very closely with quick commerce partners, understanding what the consumer wants, also the disposable income, especially in metros and tier 1, is rising. So all of these factors doubled down on quick commerce the last couple of months. And I think today we are not just the fastest growing ice cream brand, but we have 70% market share on quick commerce in the guilt-free ice cream category.
All right. So, now that you've got this 30 crores in your Series A round, how exactly are you going to deploy this to continue to grow at this kind of a pace?
So the 30 crore is actually our third round. And the good news is that while we have this money in the bank, we still have 50% of our round 2 with us, which means we've been building in a very capital efficient manner. So this summer is all about consolidating the kind of growth we've seen in the couple of seasons before this. Ice cream is a very seasonal business. So the months from March to June, we do almost 50% of our annual revenue. So with this capital, I think we are going to double down. We are going to launch some very interesting formats. For example, Cassata, which is a very classic, popular flavor, which everybody has grown up having. We are launching that in a guilt-free format for the very first time on Instamart. Along with that, we are also entering tier 1 and tier 2 cities. So, for example, now we are available in Jaipur or Surat or Baroda, along with, of course, all your major metros and tier 1 cities. As quick commerce scales, adds more dark stores, more aggressive in their penetration, I think it's a perfect launchpad for GoZero to kind of gain double-digit market share in this summer season. And of course, after that, we will kind of evaluate what other categories can we kind of extend our zero sugar proposition in. For example, shakes or chocolates could be next for us.
All right, so shakes or chocolates could be next for you. All right, Kiran, thank you so much for joining us on the show, but we're completely out of time.
No problem. Pleasure.
Moving on, e-scooter maker Ultraviolet plans to hit Dalal Street by 2027 with an aim to raise at least $500 million. The company plans to scale up its current footprint from 15 cities to 50 cities by the end of the year. My colleague Parikshit Luthra caught up with the company's CEO Narayan Subramaniam and began by asking him about the company's growth strategy. Here's a slice of that conversation.
As October 2024, we were operating only out of one city in Bangalore. And in the last 5 months or so, we've scaled from one city to today, 15 cities pan-India, from Chennai in the south to Delhi in the north, Patna in the east to, of course, multiple now showrooms in Gujarat as well on the west. So we've covered 15 cities across India. And by the end of 2025 calendar year, we should be in 50 plus cities across the country. And early 26 is when both of these products launch. So in the meantime, we will see active scale up of volumes for the F77 Mark II and the Super Street. We are going to see the new products launching in Q1 2026. Interestingly, 2025 is also going to be the first time that Ultraviolet gets into the export markets. Our vehicles are certified for Europe and homologated for Europe. And we should see the F77s made in India go across Europe, from Germany to Italy to Spain, France and UK.
In terms of your IPO strategy, we've been seeing reports about your plans to list sometime in the next 2 to 3 years. Could you give us a timeline, the target that the company has in mind, and how much would you like to raise from the market?
I think the timeline that you mentioned is accurate. We are looking at tentatively 2 to 3 years. The more important aspect is that we have a stable business with 4 different products or segments now open in the market, and multiple markets beyond India also having gone live. We are looking at Europe to begin with. We're looking at Latin America, where there's a lot of interest. We're also looking at parts of Asia. So these are key markets that we would focus on in the next 24 to 36 months. And of course, given our roadmap, we should have 4 different segments, including scooters, in the markets at that point. And I think that is the right time to look at an IPO scenario. And I think we'd look at raising between 400 to 500 million given our current plans for further scale up at that point.
All right, on that note, it's a wrap on this edition of Startup Street. From Arundhati and me, it's a goodbye, but stay tuned with CNBC TV 18. More news and updates will continue right here on the other side.
Out for each other.
fixated with the AI race and where India finds itself in the race at this point in time, what's happening globally. It really depends on what tweet you're looking at and how quickly the world is changing depends on the news feed that you're broadcasting. But I've got a very astute set of panelists here with me, and we have 40 minutes. So without further ado, we're going to get cracking and get right to it. Vinod Dham, first of all, congratulations on your Padma Bhushan. So a big round of applause for Mr. Dham here. But if I could get started by talking to you about this AI race that we seem to be talking about at this point in time. One, where does India find itself in the race? Are we in the race? Are we outside of the race? Are we at the middle of the race? Number two, what should we prioritize at this point in time from an Indian perspective as we talk about the AI landscape?
This is not the India I knew 15, 20 years ago. This is India where they are one step ahead of even the ideas the advisors are bringing from abroad, which is really a remarkable thing to be knowing. So anyway, I think what I would like to talk about is there are 4 things needed to really succeed. First, of course, is skills. Now, skills for AI, if you already have IT or software skills, are not that hard to transform to. The reason is, fundamentally, people who are in software and IT services have a computer science degree. And if you have learned linear algebra, you have learned statistics, you have learned calculus, you can very quickly learn how to build neural networks, learn about deep learning, do the backpropagation, and learn about transformers, which was a single seminary event that really created ChatGPT and this whole OpenAI phenomenon in November of 2022. So I think it's not that hard for our kids to learn this technology. And we have deep talent and very wide talent, and that's the biggest strength India has when it comes to AI today. Now, when it comes to models, of course, there are companies like OpenAI and now a host of other companies who are also creating models, Google being one of them. And then there are open source models like Llama and Mistral and Falcon. So
you didn't mention DeepSeek.
I'm sorry?
You didn't mention DeepSeek.
I will mention DeepSeek, and I'll take a second to... Let me first deal with DeepSeek, because it seems like it's a thing waiting to be talked about. I will let actually Ronnie talk about DeepSeek. He's an expert. But my view of DeepSeek, that I deeply studied, and all the paper they published, and everything that went on, and me personally losing 18% of my value of NVIDIA stock for a stupid reason, is really DeepSeek was built on top of OpenAI's training. So it's not like DeepSeek existed in vacuum and they just came up with $6 million investment and showed us how to do inference. And by the way, it was an inference step where they did some reasoning and they paused, and they, of course, it required a lot of calculations and compute at that time as well. But really, DeepSeek is built upon OpenAI technology. It's built upon US technology. So I don't think anyone should be misled to believe that by themselves, only with $6 million and 4 engineers, they came up with a thing like that.
Okay.
At least that's my view. I'll let Ronnie tell me whether I'm right or wrong.
Yeah, I'll get to Ronnie in just a second, but you want to finish your...
I want to. So I think India should approach models with a hybrid approach. That is, they should use open models. And since it's very expensive to build, by the way, models, LLMs. So we don't need to spend billions of dollars that Ronnie has spent already. We can just leverage that and then build models in our multilingual languages in a hybrid approach. So that's one thing. And we need those models for government, medical, military, defense, and they should be proprietary. We should not use Western models to do very confidential things that we need in this country.
Okay.
And the last 2 points are, you need lots of compute, and to run the compute, you need lots of energy. And lots of compute being, we need lots of GPUs. And one of my recommendations would be, beyond the government of India really doing some private-public partnerships, do an ISM-type funding. You know, the government of India, MITI, came up with $30 billion funding for semiconductor program. I think AI will need a similar kind of funding for next 3 years, $50, $100 billion type of investment to really run this marathon and stay competitive in this marathon. And energy is an important thing because these chips need a lot of power to run, and we will need to multiply our energy sources.
Well, thank you very much for setting the context for the conversation that we're about to have. So the big advantage really lies on the skills side. The big ask at this point in time is on infrastructure. Ronnie, I'll come to you in a second, but let me get Minister Vaishnav to respond to what we've just heard there from Vinod Dham. Minister Vaishnav, 1 year of the India AI mission, 14,000 GPUs on the table. You got a round of applause on that, but the ask now from Vinod Dham is we need the government to back this up with at least $20 to $30 billion of investment on the infrastructure side, do a semiconductor mission as far as the AI mission is concerned. Can you draw parallels with the experience that you've had on the semicon side? Can we expect you to replicate that on the AI side?
Absolutely, yes. And I thank Vinod for such a nice way of structuring the entire context. One, making GPUs available as a common compute facility. That's done. 14,000 GPUs already inaugurated. Two, the most important part of the entire AI journey is getting the data sets. So we have set up a common compute kind of structure called AI Kosh. That is also done. And today morning we signed an MOU, the India AI Mission and the Indian Parliament. We signed an MOU. So because Parliament has a very large data set in multiple languages over a period of time. So that will be a very good training resource for training our models. That's done. And many more other, like Doordarshan, All India Radio. There are many other sources of data which is available. Third, getting our own GPU chip. That's very, very important. And we have already started working on it, working with the industry, evaluating different options that we have. And we got really good, bright professors, bright startups who are willing to contribute to that journey. So that is also in place now. Hopefully, we should be able to finalize the best option very soon. Fourth, having our own LLM, because whatever the world says, if it's open source today, it may not remain open source tomorrow, which we have seen in the case of OpenAI. I think we should also change the name. So better to have our own LLM. I don't think we should be shying away from that. So I think we are taking the problem in a very methodical, very systematic way. The part on talent is very important. And that's where we have a major advantage. And we have a template in front of us. In case of 5G, we set up 100 labs in universities so that the students can actually learn it on the real 5G environment, real tools. In case of semiconductors, 240 universities and institutes combined, 240 institutes we gave the latest EDA tools so that the students can actually learn what is a chip, how to design it, and really get their hands, get the real experience. Similar approach we are following on AI also. So I think we'll be in a good shape, I would say.
On the GPU, Mr. Vaishnav, a broad timeline by when you expect to finalize who you choose to partner with, just give some color on what we should expect on that front.
In short, 3 to 5 years, 3 to 4 years, I would say, to get your good, reasonably good capability GPU up and running. The approaches, basically there are two approaches which we are evaluating seriously, two different types of instruction sets. Which one we will finalize, or will we take both the instruction sets and move forward? That is something which the expert...
Ronnie, let me come to you now. Number one, are we likely to see a name change anytime soon? But more importantly, I want you to put on your OpenAI hat, but I also want you to put on your former White House CHIPS Act coordinator hat and tell us what you believe the future holds as far as public-private partnership is concerned, and how do you believe it's likely to play out for an emerging economy like India? How important will that be?
Well, Shireen, first, thanks for having me, and it's an honor to be on a panel with Vinod, who's the father of the Pentium chip, one of the greatest innovators and investors, and the Honorable Minister, who's really leading the way around technology transformation in India. We've been here basically to listen, to understand what's going on in this market, and it's incredibly impressive. So when you think about the meetings we've had over the last couple of days, one, the Honorable Minister mentioned data sets, huge ingredient to building large language models. And India, and the government in particular, has done a fantastic job in terms of making those data sets, public data sets, more available, which is going to be really important to the future of AI. Two, people. I mean, I heard a statistic today that India graduates about 1 million or more STEM graduates every year, depending on how you identify STEM. And when you think about the talent base and their ability to adjust to what's hot in the market, that's an amazing advantage. Even when we talk about the transitions that are going to happen around the world because of AI, if you have 1 million people coming out every year with a new set of skills and a population of 30 years old or younger for the next 30 years, it's a huge opportunity for India to stay on the cutting edge. So you have that ingredient too. And now these investments in AI infrastructure, which is such an important piece of it, the data centers, the GPUs, the energy hookup. I mean, even on the stage, we've now launched a new AI infrastructure initiative. So we're making good progress. Here's the things I think are really interesting in India. One is, what are those killer applications going to be? When you think about the impact of AI on the economy, us economists, I'm very sorry, we're all over the place. We predict it'll be 1% of GDP, 30% of GDP. People have tons of different estimates. Why is that? Because we're still figuring out how this is being used in organizations. We're still seeing frictions to adoption in government, in business, into SMEs. But over time, you'll see a convergence on a huge economic impact. The question is, what are those applications and key verticals going to be? In India, it could be in education, it could be in defense or healthcare. It's going to be up to the people in the Raisina Dialogue audience and around the country to figure that out. As someone who led the implementation of the CHIPS Act in the last administration in the United States, I can tell you I see a focus around the world, not just the United States and India, around investments in critical technologies, supply chains, infrastructure. And I think it's reflective of a world where national security and the subject of this conference, geoeconomics, is becoming predominant. When I did my PhD, we lived in a world that was very globalized, where everything was about sort of knocking down barriers, trading, right, and assuming the best intents of countries around the world. Now we're entering into an era of more contention, nationalism, populism, and you're seeing countries around the world adjust accordingly. It doesn't mean to me, though, that the US and India can't have a very strong relationship and that OpenAI can't be a good part of it. I don't expect any name change for OpenAI, but ChatGPT might be called Chatterjee GPT. But that is what I will promise the Honorable Minister, okay? That's my own.
Well, we look forward to that. But Mr. Vaishnav, that's a very important point that Ronnie mentioned there. You know, in the world that we live in today, when we're talking about the escalation of tariff wars, we're talking about export controls, and which is why Mr. Dham is suggesting that you need to focus on proprietary technology, proprietary models. I want to understand from you, you know, the partnership between India and the US, how do we build on that? We've had a partnership which is, of course, but in an AI era, in an AI age, what can India and the US do together? What do you foresee on that front?
I think we have very complementary strengths between India and US. If you look at it, today Stanford University ranks India as the biggest talent concentration in terms of AI. Every country needs the talent. Second, the diversity that we have, the kind of rich data we have, that would be one of the greatest resource for any country which wants to be in the race of AI. Two. Third, the way we have developed our relationship with the US, where the foundation of the relationship is trust. The foundation of the relationship is respect for IP rights. The foundation of relationship is to co-create and co-develop technologies. That thing is something which has happened over a period of last 10 years, and that is a very big strength for both the countries. I think the two of us will do a lot of things together. I think that will be a good win-win for the entire world.
But you don't believe that Make America Great Again could overshadow this partnership that you speak of?
See, I think today's world is quite different from the past, when it was win-lose kind of situation. In the world of technology, I think it's more of win-win, and the pragmatism with which we are approaching our foreign policy, our Prime Minister is very clear in his mind. And our External Affairs Minister has a very practical approach. So with those two major ingredients, where we are looking at what can, how both the countries can really win and create things which are good for the humanity, good for the two countries, and they are following some of the most basic principles which in the world of technology are very important.
Let's talk about the capital that's going in. And I think, Ronnie, the question that's being asked today, and it's being asked by corporations, it's being asked by governments, is what is the return on investment? You know, Stargate, $500 billion. What is going to be the timeline before we start to see a return on investments? How do you respond to the in-between phase of where you've got to put the capital in the hope of being able to see returns at the end of it?
So, I mean, the first thing I did when I took the job as the chief economist, I'm the first chief economist at OpenAI, so there wasn't really a predecessor. I spent time talking to the technologists and the people who are building these large language models. And those folks, they live in the future. You have to do that work, you have to live in the future and see the future in some ways. And when you understand the revolution that's happened over the last 2 or 3 years, where the capabilities of our models have grown so fast, things that people thought were impossible in the models are now possible. You start to understand that, you know, the laws of scaling, as they're referred to, are going to require more compute. And that's why, as a company, right, we believe that infrastructure is destiny, and the investments in Stargate, properly calibrated with milestones in the right places at the right time, will make good sense. Now, there's been lots of challenges to these scaling laws over time, and you mentioned before, of course, the DeepSeek example. But even with our new models, our reasoning models, and you're seeing this rise of test time compute and the power of inference, which is also going to use a lot of compute. To me, just as Vinod said, I'm actually not too worried about these challenges to compute, because I think, as an economist, the cost of intelligence going down, the cost of compute going down is a good thing. And in fact, we're going to have so many applications to use it. Think about the applications that were already mentioned. I'll give you one more. In villages in India, when a child is born, we heard about this earlier today, there's often a question about low birth weight. But nobody knows exactly what the cutoff is and how to properly weigh the child. And you all know, if you're from India, some of the superstitions around handling children in that stage or having strangers handle a child. Well, now you can take a picture of that child, right, in a privacy-controlled way, and estimate the weight very precisely, which allows a healthcare worker, without visiting that village, to figure out whether the child is underweight and needs further medical attention. It's those kinds of innovations that can make the impact you're talking about. They don't require massive infrastructure investments yet, but they can be really useful. So this is kind of where I see a lot of opportunity here. If India decides also that this AI infrastructure bet is one they want to make, that's fantastic as well. But in the US, as we saw it, based on where the models are going, we think the return on investment is going to be very positive in the next 5 years.
Yeah, just like to add, I mean, the talk in the media on the ROI is that if you just imagine the next move in AI is agentic models. Yeah. And that's, agent is like a human, just think of it like that. And if you have 10 agents working together, there are 10 humans working together. If they can create an output which can save, let's say at the minimum, one head count. One head count is like, in American terms, they talk about $10,000 a year, which is a reasonable number, right? If you save $10,000 a year for a company, and you charge them $2,000 instead, which is a 5x saving for them, which is Microsoft charging its Copilot $250 a month. Suddenly their revenues and profitability will skyrocket. So this is the kind of thinking. I'm not saying it's going to come to fruition, but at least there is a thinking going on ROI as to how you're going to get there.
That's the assumption. Mr. Vaishnav, let me come to you, sir, to really get a summation, so to speak, of what you've heard from these two gentlemen here, but more importantly also, your vision as far as the next year of the AI mission is concerned. What should we expect as the short-term milestones? What should we expect as the medium-term milestones? What should we expect as the long-term milestones?
For summary, go to OpenAI, ChatGPT.
We need a proprietary vision, sir.
Immediate term, we must get our startups and academia and researchers and students the right tools, the right skill sets, making sure that our IT industry is geared up for taking it up as an opportunity, rather than thinking of it as a big challenge. That is the immediate term goal. Mid-term focuses on getting the LLM in place, making sure that our GPU strategy is progressing well, making sure that our universities have changed their course curriculums so that they are able to generate a continuous stream of well-trained, great talent. That is the midterm. Long-term, of course, we need to keep our eyes focused on our goal of 2047. We definitely want to take lead in some of the most important technologies.
You know, and again, I want to just go back to that 2047 goal as well and link that to what we heard there from Ronnie in terms of economic impact. There are assumptions that, you know, economists are working with. What's the assumption that you're working with on how much AI and the transformative impact of AI you can harness to be able to get to the 2047 goals?
See, when new technologies come, getting the ROI equation solved for it, I don't think that's the absolutely the right approach. I think when new technology comes, we must invest in it. We may not know what exactly the returns would be, but for a country or for a company or for an organization to be able to compete ahead, that investment in technology must be continuous, for sure. How AI will play out in the next 20-30 years, I think it will be something that we'll have to kind of modulate our approach. We'll have to see how it plays out. As I said, this is just the chapter 1. And as AI evolves, and there's going to be a lot of mathematical innovation which will go into this. I remember my IIT days where I built the first text-to-sound transformer, that T in GPT, right? So that transformer which I built, from those days things have changed a lot. But some of the fundamental math behind neural networks, some of the fundamental math behind AI, that remains constant. So that math, when it gets applied into the newer AI models, that's going to bring about changes which we, at this point of time, we can't even imagine. What I would say is embrace technology, use it properly, make sure that it is good for society, and make sure that the harms which can come from it are also controlled.
I'm going to end by asking you, because I know the minister has a hard stop at 6:40. Are we in the race? Are we at the starting point? Where are we today?
We are very much in the race. We are in the first inning of the race, not at the starting point. And like Ashwini said, it's a multi-inning race. This will go on for a long time. And we need to just stay there and continue to invest appropriately and make sure we don't fall too far behind.
I'm glad that you've moved from race to cricket, which is probably appropriate of an analogy to close the conversation when we talk about where India finds itself, the role and relevance of AI. Ronnie, I'll give you the final word.
Well, first, just thank you. And I think going back to the IIT Energy, the students and young people in India are really the future in a big way. And I think leveraging the universities to produce cutting-edge innovation, to improve on this is something that's worked in other parts of the world. And I think that's another opportunity here with India, given how many people are going to university and the kind of research happening at institutions all around the country. So I'm just excited to watch and support however I can.
All right, gentlemen, thank you very, very much for joining us here.
Hello and welcome to On the Record with me, Shireen Bhan. Vedanta is gearing up for a demerger that will create 4 independent entities with a focus on aluminum, oil and gas, power, iron and steel and base metals. Vedanta's shareholders as well as creditors have already approved the plan, and the demerger process could be completed by the first quarter of the next fiscal. Chairman Anil Agarwal, in a letter to investors, said that each of the new companies has the potential to grow into a $100 billion company. He also compared Vedanta to a banyan tree while advocating for the demerger. He said, and I quote, "I've always found that trees that grow under the shade of a giant banyan tree often find it difficult to grow, but once you take them out and allow them to grow under the sun. They show remarkable growth and progress. End of quote. Chairman Anil Agarwal joins me now on the record. Mr. Agarwal, always a pleasure. Many thanks for joining us here on the program. So let me start by using your analogy of the banyan tree. As you go about this demerger process, Mr. Agarwal, do you believe that each of these businesses has strong enough roots to exist outside of the shade of the big banyan tree?
Absolutely. Because if you see all our business, whether you talk oil and gas, tremendous potential in India, and we have a best anchorage. If you look at the aluminium, we completing 30 lakhs ton production, adding 30 lakhs ton more, huge potential. Zinc, if you look at zinc, which will be part of our main company, we are producing 1.2 million ton, going to produce 3 million ton. Copper is such an important metal. We are going to produce almost 500,000 ton copper. The growth on this, any country which developing to developed country goes, it all goes fundamental. We have seen is all about below the ground. Below the ground, we have a tremendous geology. I always say that. And today, the way the government is working on below the ground, because we need it, this is a transition material. To create the world better, you need this metal. Without this, world can't work, especially India. India is a developing country. So we are very excited about this growth and making these 4 companies separate, making a very professional management. They will take this company forward at a different level.
Well, speaking about taking these companies forward, sir, let me break up each of these businesses, and let's start by talking about the aluminum business, because that is a lion's share as far as your EBITDA is concerned. You talked about adding 30 lakh tons. By when do we expect this capacity expansion to take place? What's the time period? If you can share that with us.
The good news is, the bad news is that yes, it's under a cloud right now. It's under a very serious cloud. That's why I've told you the axis was changed. The good news that is my personal belief and my personal call that these are irreversible changes. That you could delay globalization by another 3 years or 4 years. I doubt if it's even that long. You can delay a world where the strong prey on the poor, which is what is happening now with the spheres of influence, as Donald Trump is calling it. That Russia controls Europe, we control North America and South America, and China controls Asia. So all that is being questioned as we speak right now. But I think it will delay globalization, it will delay international system. It cannot deny it, because the human arc works towards progress. And it's very hard for me to believe that we will go back to a mercantilist policy, a tariff-based policy, as Trump is advocating. Either he will change, or democracy and the people's aspirations will force him to change.
It's a company that has created wealth for investors. It's created a lot of respect for clients. It's created a lot of fear among competitors, and it's a company that has created a lot of awe amongst all the other corporates as well. Yes, we are talking about Fevicol Ka Jod, Pidilite, and who better than the outgoing MD and the incoming MD to join us? Bharat Puri, a legend, and Sudhanshu Vats, a legend in the making, if one must. Thank you so much, gentlemen, for agreeing to do this. 40 years in the industry, you've had a couple of decades as well. What a moment this is.
Absolutely. It's just time passes much more quickly than you think it does. But yes, it's a time to look back, but also, as I always believe, look forward.
So what are you looking forward to right now?
I will obviously continue to be involved with the corporate sector. I'll continue to be involved with Pidilite itself, but in a advisory, just seeing that we're on the right course and just gently whispering in Sudhanshu's ear on what needs to be done. But outside that, I'm on a couple of boards, and of course, one is a constant learner. So there is much on the plate. My wife, of course, believes that, listen, when you have that free time and I see more of you, I'll really believe that, you have moved on. But I think I will.
That's for you. How about you? 10% volume growth year on year with 20 to 24% margin band, growth categories, core categories, and pioneer categories. That's what you have to do for the next foreseeable future.
Yes, Manglam. I think, first of all, I think it's indeed an honor, and I'm humbled and honored to actually take over from Bharat. Bharat has had an outstanding innings, as you know, in Pidilite, and of course, 4 decades plus of corporate career. I think, as you rightly described him, he's a legendary leader. And as you rightly pointed out, Manglam, I think for me, I look forward to having the continuity as we go forward, because big companies are built on consistency and having continued strength in their strategy and execution. But at the same time, bringing in the right level of change. And, in running parlance on a treadmill, it's now changing the gear or changing the speed, one up, and maybe even the incline half up. So let's see how that so that's the work and I'm very excited and I look forward to.
You spoke about his tenure. I was just looking at some of the numbers. The last time we spoke versus now, the time you took over, Pidilite, from there, the revenue has quadrupled. The EBITDA margins have increased by about 600 basis points. By that measure, the EBITDA has grown 6 times. The net profit has grown by about 8 times, and the market cap has actually grown by 10 times. So 10 years ago, if one bought a Pidilite share, it was for 280 rupees. Now it's close to 2,800 rupees. Which implies the market cap addition has been close to 1,30,000 crores. That's some boots to fill.
Thank you for all those kind words, but really remember, this is actually a wonderful Pidilite team that has delivered all of this. I've been fortunate to be the orchestra conductor and just made sure that people play in tune. But really, this is also a very strong foundation provided by the family. B, wonderful team to work with. And C, of course, somebody up there likes us.
Curiosity, how is it that you decide what will be the category which will be a category, a pioneer category? How do you decide upon where to go? At what level do you decide that, okay, now this becomes a growth category, now growth becomes a core category? How do you do that? What are the thresholds?
As far as pioneer categories are concerned, we have a very simple 2x2, which is A, channel, and B, consumer. On the other side, the right to win and the customer. When we have at least 3 of the 4 ticked, then it's a shortlisted category. I have 2 of my most senior managers who actually were pulled out of CEO jobs at Pidilite and who actually scour the world, look at affinity markets a few years ahead of us, so on what could be emerging categories in the home improvement space. Right. They will come with a long list. We will then look and see, listen, this makes sense. Yes, here we have a chance to, for example, create the category. We will then put in a mix and pilot. Normally test product first, then pilot. The wonderful thing is, as you and me speak, we have at least 10 pilots on the market. Okay. But those happen below the radar. Once it reaches a certain meets a certain set of action standards, we then say, okay, ready to be pioneer category. Now the button is pressed. It should be approximately 100 crores in 3 years. It then becomes a growth category. Fortunately, India is a lovely growth market. So for a growth category to become a core category is a much longer runway, because then you have to say that, listen, largely the category creation task is done. It's about now growing the category via innovation or via premiumization or via sales and distribution. Core is clear that, listen, I mean, the biggest mistake any company can make is assume that the core is mature, and a lot of times fellows will say, okay, listen, oh, this is a mature category. Well, there are no mature categories, there are only tired managers, right?
That's a good one.
So as far as we're concerned, core categories must lead the growth. You must grow 1 to 2 times GDP. Premiumization, whether they're at sales and distribution, should give you that further multiplier. And when we look back over our last 10 years, I think that's been one of our formulas where from 80-20, core 80-20 to growth and pioneer, we're now pretty much 55-45, 52-40, let's just say 55-45. That itself has given us a flywheel for growth. So every quarter when you come and harass me and ask me, there's double-digit volume growth, why are you guys doing it, the others not? And I said, probably the portfolio and the sector that we're in makes a lot of difference.
Now I'll be harassing him a lot more. What has been the success ratio from, piloting to pioneer, from pioneer to, growth, and from growth to core?
Yeah, so Mangalam, it's a great question. While I may not be able to put a number to it, but I'll tell you how we look at this at Pidilite. I think one is that we have enormous patience during the piloting stage as well, where we keep doing do, learn, do. So we are never in a hurry to say, okay, this is not working, shut it. Does that mean that everything which we do succeeds? No. But the point is that we are enormously patient. We do a lot of do, learn, do. We take a lot of feedback. So one of the strengths of Pidilite, actually, and not only in developing pioneering, I think that philosophy keeps making. You would see that a lot of our pioneering categories have got into growth. The latest example I could share with you is that of Roff, yes. and it is a very promising growth category, continuing to do very well. But I think we've had many such examples as we go forward.
And what about paints? You call it a growth category for yourself. What's your strategy here? Because you kept saying that you'll take some time, you'll understand it, you'll understand the market, etc. Haisha, now you've identified it as a pioneer category. What's your strategy here?
Well, simple. Mangalam, that hasn't changed. We believe we have a right to win in small town and rural India. That's exactly what we're doing. We're steadily making progress, getting our model right. We're still in the southern states, the 4 southern states. We haven't expanded beyond. And we'll get the model right, be clear that this pilot works before we cut, copy, paste to the rest. But as we've always said, listen, paints today is anywhere between 60 and 80,000 crores, depending on who estimates the category. 30% of that is small town and rural. If you're a top 3 player, and frankly, when you go to these markets, there are not more than 3 players there anyway, that itself is a substantial driver of growth for us, and also is a much better profit pool than the urban markets.
It took you all so long, one, in entering this category, because the obvious correlation was there until then. And what have your learnings about this industry been through the pilot that you've come up with?
So I tell you, from the timing perspective, I think one thing which is happening in paints now, and that's why you're seeing so much action, Mangalam. I think it is one of the large consumer categories of India, which has also got a promise of growing in double digits. So I think that's a given, whether urban or rural. Yeah. Now, within that also, to Bharat's point, I think our belief is, and that to the timing there, our belief is that the small town India and rural India, which traditionally had much lower per capita incomes and therefore was traditionally a smaller market, and if I could use the word, marginally ignored market by the existing traditional players, because the market was largely urban, was not perhaps ready that much. Our belief is, and you can see that, Mangalam, in many categories, I believe the action is now shifting a lot more to small town and rural India. We believe while this is a smaller pie of the market, as Bharat just told you, 30%, but it may arguably grow faster. Per capita incomes are also uniformly growing now, and therefore there will be more income in the hands of the consumer to be able to indulge in some of these things and to do some of this, more new houses, more areas to paint. So we feel the timing is correct.
What do you believe is your right to win here, apart from the distribution that is there? I mean, is it the promise of a Pidilite brand? Is it Haisha? We're just trying to figure out why.
Pidilite, we always start with a better product. So go, and the wonderful thing is, the moment you say it's a Pidilite product, the acceptance, this whole thing on from the makers of Fevicol, we've had very little resistance. Therefore, I mean, there is a strong equity to start from. I think all of this gives you enough of a right to win. I mean, forget, I can keep adding on other elements of the Pidilite secret sauce, but some of them should remain secret.
Again, it's a larger total addressable market, but it's also margin dilutive, right? The lira does slightly high teens, and that also under threat right now. You have a margin guided band of 20 to 24%. Chances are that it might be margin dilutive.
Let's wait and watch. That's exactly why do you pilot things? To exactly determine all of this. So give us another, by this summer, we will come back to you and tell you, okay, listen, what's exactly what we believe is the paint model, how it should go forward.
You have a fairly healthy cash balance. You are aggressive acquirers. AkzoNobel is on the block. You are one of the people who've bid for it. There are a lot who've fallen out of the bid because of valuations. Where do you stand on that?
We have no knowledge of any such bid. I read about it in the papers just as you do.
After you've made the bid.
On AkzoNobel, when we have something to report, we will. But as we said, listen, Pidilite is a conservative, very clear, value-based investor. We never flex our balance sheet. Just because we are cash-rich, debt-free, doesn't mean that we will ever splurge money. So when the right time comes, we will talk about it. But right now, we have nothing to talk about.
As an asset, what do you think of it?
I see what I'm saying is that there could be a personal view, so on and so forth, etc. So at the moment, there are enough interested fellows who have lots of thoughts about the assets. Let them give their thoughts.
And about the very near term, the consumer environment that we're in. Obviously, you guys have done your internal assessment of where Pidilite can be better, etc. But from an environment standpoint, what do you think needs to happen for growth to return, according to you?
See, in our view, growth will return. I think people have underestimated the impact of last year's elections and therefore the slowdown and the amount of time it took for the whole system to crank up, so on. For example, if you look at the first 3 quarters, which is what we've published, we're close to double-digit underlying volume growth, which is what we've always promised. So, I can crib and say that, listen, life could be better, urban could be, of course. But remember, in a country as large as this, there will be ups and downs. But now with this, recent budget announcements where consumers are seeing money in their hands, you're also seeing that the monsoon has been good, so April onwards money will come. Maybe the first quarter will not be a bumper quarter, but I think the India growth story is not going to go away.
The high-frequency data that you see on a regular basis for your company, what does that tell you about the consumer sentiment here and now?
So, Mangalam, I think we've spoken about this earlier as well. What we are beginning to see is a clear resurgence in the rural demand post the monsoon, a little bit. Albeit slow, but we are clearly seeing that pattern. As far as urban demand is concerned, I think in our sectors, Mangalam, and therefore now I'm talking about how we look at it, it has been when it comes to construction, when it comes to home improvement and so on and so forth, the demand has been quite steady. I'm saying the point is it could always be better, as Bharat was just saying. So I'm saying the point is we would want it to be a bit more better, a little bit more buoyancy. But having said that, I think we've been seeing steady this thing, and that's why we've been delivering steady returns as well, steady numbers as well.
And plus, if you look at it, the one thing that makes us also a little more hopeful is the real estate sector turned about 3 years back, at best 4 years back, but mainly 3 years back when you had a lot of things getting completed. We find that we get the maximum benefit of that in T+3, T+4. So a lot of the construction that has happened in urban India, etc., is all going to now come up for what you would call completion of interiors. And that's always, while even now repair and renovation is a larger part of our business than is new construction, this is a good multiplier.
Right. So, final question before we take a break. Final question on the business side of things. You have earmarked your growth targets, 10% volume growth year on year, along with the margin band that you've spoken about, growth coming in from core categories, growth categories, pioneer categories as well. When I look at your business, say 5 years from now, and I'm speaking to Sudhanshu, what would you see as the revenue mix of the company? How much of that would come from international? It's 55 core, 45 growth and pioneer right now. How does the revenue mix of the business Pidilite look like?
So I think, when we started this journey, and Bharat spoke about it, 20-80, and now we are close to about 55 core or 80-20, 80 core, 20 growth and pioneer. Now we are 55 core and 45 growth and pioneer. Our sense is this is a near equilibrium. So therefore, because to the question you would ask some time back, which is that, what happens is Pioneer becomes core and then, growth and growth becomes core. Right. So therefore, there will be a mix of that which will be happening, and we are at a pretty healthy equilibrium, in my opinion. And I think from the point of view of the second thing you said, 5 years out, on the international piece, yes. I think the second part of your question, see, we are currently 10% plus on our international composition. Our thinking is that we will continue to remain focused in emerging markets where we can replicate the success of India and the model of India onto those markets. So I think we will continue to build and strengthen our presence in these markets, drive these markets further, and therefore the ratios will keep inching upwards. We will be an emerging markets multinational company, which is something we have stated. We are steadfast on that journey.
And how much comes in from paints?
That only astrologers can tell me.
What we'll do is we'll take a short break on that note, come back. We'll have a more fun conversation with Bharat and Sudhanshu.
I've just requested that the Governor General dissolve Parliament and call an election for April 28th. And she has agreed. We are facing the most significant crisis of our lifetimes because of President Trump's unjustified trade actions and his threats to our sovereignty. Our response must be to build a strong economy and a more secure Canada. President Trump claims that Canada isn't a real country. He wants to break us so America can own us. We will not let that happen. We're over the shock of the betrayal, but we should never forget the lessons. We have to look out for ourselves. We have to look out for each other.